The whole day passes like a blur. The news just whizzes past. And you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Hi, thanks so much for joining in. You're watching All You Need to Know on NDTV Profit, and my name is Alex Matthew. This show gets you the latest updates on everything that you need to know before you start your day. And in fact, let's start with the headlines this morning. US Fed cuts interest rates by 25 basis points in line with street expectations. Powell says that the labor market conditions generally eased and inflation has made progress towards its 2% objective but remains elevated. US markets see cross-asset rally. Stocks, treasuries and commodities gain after Fed rate cut. Powell says will not step aside even if asked by Trump. His term ends in 2026. Asian markets open high on the back of US market gains. Traders eye the outcome from China's NPC meet for further stimulus to boost economy. The Nifty and Sensex give up all Wednesday gains as traders book profit from the Trump trade. Earnings disappointment and consumption slowdown, as well as rising inflation, are seen as worries. RBI Governor Shaktikanta Das expects October inflation to be higher than September, pushing rate cut further into 2025. Foreign investors continue to be net sellers in the Indian equity markets for the 29th straight session. They net sell 1.42 lakh crore in that time. The rupee continues to remain under pressure, ending Thursday at an all-time low of 84.37 to a dollar, as the central bank is seen in a wait-and-watch mode. Japan's household spending declines for a second straight month as inflation inches higher and the yen continues to weaken. That could advance the next rate hike to December. And crude oil is set for a weekly advance even as traders assess the impact of a Trump presidency on oil. Brent closes below $76 to the barrel. Finally, retail investors weigh listing gains as Swiggy and Acme IPOs still undersubscribed heading into their last day of subscription. Sagility IPO, meanwhile, is subscribed 3 times at the close. Now, the big story overnight is the result of the Federal Reserve Open Market Committee meeting, and it in fact closed on the heels of Donald Trump's victory in the US presidential election. The FOMC cut the federal funds rate by 25 basis points to between 4.5 and 4.75%, and that decision was based on consensus expectations. In fact, in its statement, it said that the Fed had made its decision because the US labor market conditions have generally eased since earlier in the year, and the unemployment rate has moved up but remains low. Also, inflation has made progress towards the committee's 2% objective but remains somewhat elevated. In his post-policy address, Fed Chair Jerome Powell said that the inflation data was not terrible but higher than expected, despite moving closer to the 2% target. He also acknowledged that lowering rates too quickly could hinder progress in getting inflation in the US down. Similarly, cutting rates too slowly could unduly weaken economic activity and employment, and instead he asserted that the Fed is not on a preset course. There was quite a bit of action in the markets overnight after the Fed decision. Equity markets in the US mostly climbed, the S&P 500 and the Nasdaq gaining about 0.7 and 1.5% respectively, and simultaneously bond yields, which had spiked earlier in the week, fell. The 10-year Treasury yield dropped about 10 basis points to 4.35%. And in his first major appointment since winning the US election, Donald Trump named his campaign manager Susan Summerall Wiles as the Chief of Staff. That was another piece of international news. Her appointment was confirmed by U.S. Vice President J.D. Vance. Let's talk about. Let's continue to talk about what this means, what we've talked about so far, and Katrina L., who is Director of Economic Research at Moody's Analytics, is joining us this morning. Katrina, thanks so much for taking the time. We've spoken at length about what the Fed did, but I'd like to talk to you about how you see this progressing heading into the end of this year and starting off next year. What do you make of the move? It was largely along expected lines. What else happens towards the end of the year, though?
So that's exactly right. The decision overnight was exactly as expected with that 25 basis point cut. And our baseline still assumes that we do get another 25 basis point cut from the Fed in their December meeting. So that brings cumulative easing this year to 100 basis points. It's quite substantial, but it also goes to show the fact that, the inflation data, the labor market is all moving in the right direction to make sure that the Fed really has that comfort in terms of taking rates out of restrictive territory and moving them eventually back into more of a neutral range. But I think what we've seen coming out of the US election result is that it does throw a lot more uncertainty into the ring for 2025 monetary policy and particular fiscal policy as well. We just don't know at this stage how aggressive Trump is going to be with his stated policy agenda, what the priorities will be, what the timing of those policies will be. And so I think, members of the Federal Reserve, as well as economists, as well as everyone else, will be watching closely for what his, policy moves and what his kind of statements will be for just some guidance of what we're going to expect for the economy, not just the US economy, but how it's going to influence the global economy next year.
Okay. So would you say, given that we've just had this major event of the US president being elected, do you think that his policies could govern the way that the economy functions? Of course it will, but does that change your baseline projections heading into next year as well?
It does, but at this stage, we just don't have the clarity on exactly what they should be changed to, because that, the direction of policy that he's, stated previously in the campaign trail that will be his priority. We just don't know how around implementation it's going to turn out in practice. So we're really hoping over the next couple of weeks, we'll get a lot more clarity on that, and whether it's going to influence Fed decisions or not, we just don't know at this point. So I think it's really important at this point to just be like, we don't have that sort of clarity yet. But I think at this point, the strong financial market reaction is, particularly in the US, is indicative of the fact that Trump has promised corporate and household tax cuts. So at least in the near term, we do know that there will likely be more of a fiscal stimulus in the US. So we are most likely going to be looking at stronger US GDP growth next year and slightly beyond that as well.
Okay. Katrina, the other moving part that we've not addressed yet, and we haven't heard yet, of course, we're waiting for the update from the China NPC this morning. What's expected on that front, and how could a slower than expected growth in China, how could that affect the globe as a whole? Where do commodities move, in your opinion, based on that expectation? And do you have any specific expectations for India?
So our expectation is that, of course, we know that China is a target of the trade policies, and it's likely going to be impacted by tariffs coming under a Trump administration. And so we do expect that China will continue on its current path and probably ramp up a bit of the fiscal and monetary stimulus that it's been delivering, particularly over the past couple of months, to increasingly try and support its industries in a global environment that's going to be much less supportive. And so that's our expectation going forward. When it comes to India's growth outlook, India it doesn't seem at this point as vulnerable to a Trump administration on the negative side as what China has been. India is much more exposed on the service export side, and Trump has really made it clear that manufacturing, particular higher value add manufacturing, is a target of his administration. So that's a positive for India. And, if we're going to be making downward revisions to any economy, China would certainly be one of those that's experiencing more downward revisions, much more so than India, which is also less export oriented. It is more domestic focused economy, which is potentially going to be working in its favor as well.
Katrina, thanks so much for taking the time. It's a great pleasure speaking with you this morning, and thanks so much for the perspective you gave us.
Thank you so much.
All right, now, the one thing that I did not mention is that of course, is that there was a question about whether or not Fed Chair Jerome Powell would step down if Trump asked him to. Remember that there have been statements by Trump against the Fed Chair in the past, and so that was a natural question to ask, and here's what he had to say.
The FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by 0.25 percentage point.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Okay, so a monosyllabic answer to both of those questions, making his stance very, very clear. All right, let's turn to the Indian equity markets now and tell you what to expect based on the latest cues from the F&O side. Agam is standing by to tell you about that. Agam, we saw an erasing of all of the gains that you saw earlier in the week yesterday. How do we start today?
Was going to be confusing from here on, Alex, because all the stories that we were looking forward to have played out. Of course, today we will see markets react to the Fed rate cuts, and of course whatever we could have from China coming in, which we're expecting the news to come through over the next half an hour, 1 hour, couple of hours. Implied open is indicating relatively weak start, but these days it's becoming a little bit inconsequential. As far as the Nifty is concerned, we saw a 1% cut for the index and 3% added towards shorts. The bank Nifty as well was under a little bit of pressure yesterday, down around 0.8% with nearly 2% added towards shorts. We are looking at a new week, and based on that, in terms of the options market, of course, do remember that this is going to be the last weekly options expiry for the Bank Nifty and the Fin Nifty, along with several others from the Sensex, the BSE as well. But as far as the Nifty is concerned, now 24,500 once again becomes a mark where we're going to see some amount of resistance, support at around 24,500 point range for the Nifty 50. And in terms of stocks, again, a lot of traction with respect to earnings, but Hindalco down around 8.5% on account of Novelis earnings coming through. Apollo Hospitals, on the other hand, advancing again on the back of earnings. So longs there. Among stocks which are seeing unwinding, a lot of long unwinding for Persistent Systems, Alchem Labs, L&T Tech, as well as Aisha. A mixture of trade even in terms of fund flows. One might expect that we'd see a positive FII number, but that wasn't the case. In fact, we saw a selling of well over 4,000 crores, and DIs, on the other hand, didn't come through by as much. So on a net institutional basis, we actually did see an outflow. Again, continuing to keep an eye on what the Fed rate decision means for our Indian markets.
Agam, for getting us those details. 29 days now in a row that you've seen selling by foreign institutional investors. Let's talk about earnings, and there were quite a few of them to talk about. Cummins, as well as Indian Hotels and ITD Cementation to talk about at the start. Anushi is joining in to tell you about that. Anushi, morning. What are you picking up?
Hey Alex, good morning. First on the list is Cummins, a very strong set of numbers that we are looking at. Revenue about a 31% of growth at 2,509 crore, beating the Bloomberg estimates which were there. Margins also have expanded to 19.33% as compared to 18.01%, and net profit about a 37% of a growth number that they're looking at. All the key operational metrics have beat Bloomberg estimates. Now this was led by the domestic growth that we are seeing, 47% of a domestic growth, offsetting the weakness that continues to continues to bring down the revenue growth down from the export side. Exports have seen about a 13% of a decline on a YOY basis, but there has been some recovery if you take the sequential numbers in consideration. On the demand side, however, the company remains cautiously optimistic for the near term, but for long term it remains optimistic on the demand. Coming to Indian hotels, another strong set of numbers that we are looking at. This is after the company reported a comparatively weaker set of numbers in the Q1. So if you look at Q2, 27% of a revenue growth that we are looking at. Margins have expanded to 27.4% as compared to 24.7%, and net profits are about a 225% growth. But do note that this net profit growth that we are looking at is on an exceptional gain of rupees 307 crore which took place in this quarter. This is after the Taj Sats consolidation which took place, which resulted in this exceptional gain that we are looking at. But in other key highlights also, the occupancy levels have increased to 78% as compared to 76.5%. Average room rates recording about a double-digit growth, 10% over year, and RevPAR seeing a 13% growth. Onto the outlook forward, the management has maintained their double-digit revenue growth guidance and seeing 2 hotels a month opening, continuing for the next half as well. Last one on the list is ITD Cementations, revenue about a 24% growth, but still lower than the estimates of 2,000 crore of revenue which was pegged. Margins at 9.1%, they have come down from 9.8%. The expectation was for 9.4%, and net profit about a 34% growth that we are looking at. But coming to the order book of the company, the order books, consolidated order book stood at about 17,986 crore, while they've secured orders worth about 3,850 crore in FY25. Do note that there was some important announcement in ITD Cementation wherein Adani Group firm is set to acquire majority stake in the company as we move forward. So these are the 3 stocks which are in focus for trade today.
Absolutely. Thanks so much for that, Anushi. Let's talk about more earnings then, and we've got Lupin as well as Emcure, Yatharth and Sanofi India to talk about, and to tell you about those, we've got Varsha joining. And Varsha, what are you picking up? Morning.
Good morning, Alex. So let's start with Lupin, wherein good set of numbers. Net profit was up 74%, which beat the estimates. Now let's see what the growth drivers were. If you see the North America business, sales was up 5.6%, making almost 36% of the global sales. They received 10 approvals from the FDA and they launched 2 products. If you see the US generic portfolio now includes almost 162 products. If you see India growth, pretty good growth. Sales grew 19%, making almost 37% of the Lupin's global sales. In H1 FY25, they launched 5 brands across diabetes, neuro, gastrointestinal, and cardiac and gynec therapies. If you see that Asia Pacific and Latin America market grew 12%, making 9% of the global sales. Next on the list, I have Emcure Pharmaceuticals, wherein the revenue was up 20%, EBITDA was up 16%, but if you see net profit was up almost 40%. Now this is due to higher other income of 36 crore. If you see the key highlights for the business, international business grew 25% and 18% quarter on quarter. The Canadian business grew almost 51% due to strong base business and because of their subsidiary company. And the rest of the world market grew almost 29%. Then we have Sanofi India, wherein revenue was up 6.8%, even margin were 22% versus 23%. But if you see the net profit, it was down 46%. Now this is on the back of exceptional item of 71 crore, which company had in Q2 FY20. If you see the key highlights for the business, diabetes portfolio achieved high single-digit growth. That new CNS and CV partnership provides strong foundation for the growth. And lastly, it is Yatharth Hospital, where revenue was up almost 28%, EBITDA was up 20%, net profit was up 12%. Now, if you see the bed capacity expanded to 2,300 beds with strategic acquisition in Delhi and Faridabad. Occupancy were at 60%, which grew 3% year on year, and ARPOB, that is average revenue per occupied bed, was at 30,645, which was up 11% year on year.
All right, thanks so much, Varsha, for getting us those details. More earnings to talk about, SAIL as well as NHPC, Gujarat Petronet as well. NHPC had a bit of a tough quarter. Meeka joining to tell you about all of those. Meeka, let's start with SAIL. Morning.
Morning, Alex. Actually, all of these 3 companies didn't do so well this quarter. I'll start off with SAIL, a weak quarter impacted by lower steel prices as well as lower volumes. Revenues were down 17%, EBITDA took a hit of 24%, and net profit was down 31% on a year-on-year basis. Now, when you talk about their volumes, well, crude steel production was flat at 4.76 million ton, and sales volume was down 14% to 4.1 million ton. When you talk about the key highlights, well, weak steel pricing had a trickle-down effect on its earnings volumes, revenues fell annually at 7 major steel plants of the company, and there were losses at the Rourkela Alloy Steel, Salam Steel and Visvesvaraya's iron and steel plants, which impacted the bottom line further. And profits were also impacted by a 1,173 crore exceptional item in an already weak quarter. Then we have NHBC, revenues were up for 4.1%, but did miss estimates. EBITDA up 2%. Margins narrowed by 150 basis points, and net profits took hit of 37%, missing estimates. Margins were impacted by a 37% year-on-year increase in other expenses, and profits impacted by higher taxes payable than what was a year ago because of deferred tax liability. And lastly, we have Gujarat State Petronet. Revenues and EBITDA down 15%, net profit down 19%. The major driver of this was lower volumes, which was down 18% on a quarter-on-quarter to 29 MS SCMD. Now, the volumes were affected by lower power and CGD sector demand. Power demand was weak because of the peak summer demand coming off, and CGD demand suffered due to the decline in Gujarat Gas's volumes. When you talk about what impacted EBITDA, 47% sharp tariff cut by the regulator impacted the top line. There was also 6% uptick in gas transmission expenses, and like I said, the volumes. Lastly, Novama has maintained its hold rating, cut the target price to 416, which implies a 6% downside. They do say that the long-term volume potential does remain intact, but the tariff cut could impact cash flows. This could partially be offset by volumes. Lastly, they've raised the FY25 consolidated EBITDA by 5%, but cut the FY26 EBITDA estimates by 2%.
Got it. Thanks so much, Mika, for getting us those details. Still more earnings to talk about. Astral as well as NRB Bearings and RVNL as well as Ircon to talk about, and Puneet has got that list for you. Puneet, what stands out here? Morning.
Hi Alex, good morning. So definitely a weak set of numbers for Astral. Revenue was almost flat compared to the same time last year, but coming in at roughly about 1370 odd crores versus estimates of 1489 crores. So definitely a miss there. EBITDA was also down 4%, with EBITDA margins coming in at 15.32%, down about 73 basis points compared to last year. Net profit was down 17% to come in at 109 crores versus estimates of about 135 crores. So it has two divisions, which is the plumbing and piping business, which is the main business, which had flat revenue growth, and that's how the revenue has been impacted, and margins have been impacted because of the paints and adhesives business, which was down about 4% compared to last year. So that's a key negative. Watch out for this stock. The other one's NRB Bearings. Now they reported a decent set of numbers, 8% revenue growth for this auto ancillary company. EBITDA is also up 14%, with margins, going to 17.2% now versus 16.3% in a seasonally soft quarter. So that's a very for the industry. So definitely a big beat. Profits also up 46% compared to last year. RVNL, another, not a decent numbers, 1% revenue down compared to last year. EBITDA was also down 9%, with margins narrowing by 50 basis points to come in at roughly 5.6%. Net profit was also down 27% to 286 crore versus estimates of 356 crores. So that's another miss here. And finally, Ircon, another weak set of numbers for the company, 19% down in this particular quarter in terms of revenue, while EBITDA was down 23%. Margins has largely stayed flat in the 8% range, but net profit is down 18%, coming in at 206 crores versus 251 crores in the same time last year. So watch out for these stocks in trade today.
Got it. Thanks so much, Puneet, for getting us those details. Now, more stocks to watch out for, not on the earnings front, but otherwise, we've got the likes of Brigade Enterprises as well as Vedanta and RB Infra, as well as Borosil Renewables to talk about, and Rucha is here to tell you about why that's in focus. Morning, Rucha.
Thanks, Alex. Good morning. Starting with Brigade Enterprises, well, the company has signed a JD to develop a residential project of 1 million square feet in Chennai. Now, this project has a gross development value of 800 crore rupees. Now, remember that the company receives 65% of its revenue from residential projects, and 24% of its total land acre comes from Chennai. Well, the company is set to announce its second quarter FY25 earnings on 13th of November. Moving on to Vedanta, the company has emerged as the preferred bidder for 2 blocks in Arunachal Pradesh, that is in Karnataka. The company will report its second quarter results on 8th of November. Moving on to IRB Infra, well, the October toll collection number is out, which came up by 20.5% at 540 crores. So this one is a positive for IRB Infra, and 20.5% uptick is on a YOY basis. Now, second quarter revenue was down 9.12% because of lower execution in the construction business. Order book, the latest order book, that is as on first quarter, stands at 32,600 crore. Lastly, talking talking about Borosil Renewables. Now, this one is a positive for the company because the company has said that the government has initiated anti-dumping investigation into alleged dumping of solar gas from China. Now, the company had sent an application to government for consideration of the same, and the Ministry of Commerce and Industry has now recommended imposition of such anti-dumping duty. And now this case lies with Ministry of Finance, and the final completion of the investigation is still pending. Second quarter results to happen on 11th of November.
Got it. Thanks so much for getting us those details. Let's talk about earnings, and a couple of major earnings to talk about today, and State Bank of India is one of them. Let's take you through what's expected. Agam's joining in to tell you about the key numbers to watch. Agam?
Well, when it comes to SBI, it's going to be a mixed quarter, but we are looking at and expecting a higher net profit number. So coming down to your net interest income, we're expecting a 5% uptick on a year-on-year basis. We're also expecting 15% growth in its profit year-on-year. In terms of your provisions, they're expected to come in slightly higher sequentially by around 7%. Now, we do know that the advances have moved up 16% and deposits have also moved up 8% on a year-on-year basis. What we are keeping an eye on is net interest margins. We're expected to remain flat. Also, credit costs are expected to remain muted for this particular quarter. Loan deposit ratio is likely to be flat as well sequentially, and asset quality is likely to improve going forward. So perhaps a better quarter as compared to several other PSU banks so far.
All right. Thanks so much, Agam, for getting us those details. One more stock to talk about, and that's Tata Motors. The results are out later today, and the consolidated revenue is expected to rise about 2% or so, likely going to be dented by lower volumes from Jaguar Land Rover, which saw its volumes down about 10% during that period. The PAT number, the net profit number, is expected to rise as much as 26% in the quarter, and that's on account of an expectation of an improvement in the EBITDA margin by as much as 120 basis points to 14.2%. Any guidance on Jaguar Land Rover business as well as the domestic business that has been a little bit soft in the recent past is going to be very keenly watched. All right, and that brings us to the end of this particular edition of All You Need to Know. Lots to talk about before the start of trade, and all of that and more you'll find on India Market Open. That comes up next. Do stay tuned. This is NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news
Welcome. You're watching India Market Open. It's finally Friday and it's been an interesting week in so many ways. Post-election rally continues on Wall Street. Asia is looking good. Fed gives us what we want. And I think we're setting ourselves up for a pleasant morning. Yesterday was no surprises, I'd imagine, on correction, but today should be good.
Yeah, you can say 2 days on a trot, you told me.
Three days on a trot.
Yeah.
I'm getting ahead of myself now. Like, this is it?
No, this is great stuff. But it's interesting, the tone, and I'm sure you'll talk about it in detail, but the tone from Jerome Powell was quite something. I mean, I'm in defiance.
I liked when he said, the president cannot fire me.
Yeah, so to quote specifically, the question asked to him was that, will you leave if Trump asks you to step down? And his answer was no.
I'm staying.
And then he was asked, but what if you're fired? He said that is not permitted by the law. In fact, we'll get you a detailed report on what the law actually says, because this is turning out to be quite something. But, you know, that's perhaps a bit of a sideshow, because what he says is part one, but then look at what has been done. And that is important as well. So let's start with the global cues. The post-election rally continues to some extent on Wall Street. All indices have hit record highs, but let's see where they closed off. So the Dow completely flat in that sense, but the Nasdaq, S&P 500 were up. The Nasdaq up 1.5%. Dow futures are flat right now. In terms of bond action, the 10-year Treasury yield slid to 4.32% on Fed cut rates, as the 25 basis point cut, of course, was expected. So what exactly has Fed done? They've cut interest rates by 25 basis points. This was penciled in. Fed Chair Powell has raised concerns on the fiscal path. I thought this was important. And, you know, even while he is saying that he feels good about the economy, he also says, I won't leave if asked to. Trump can't fire him under the law. But this one quote I thought was important, where Jerome Powell says that the federal government's fiscal path and fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not sustainable. The path is unsustainable. I thought this was very, very important, because this is a problem that any president would have had to deal with. America is spending more than it can afford, and that does not change. In fact, I think we should just quickly play out what the Fed chair said when asked about whether he will leave, because the future of what happens next is important as far as the Fed is concerned. Yes, they've cut the 25 basis points, but what next? Listen in.
The FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by 0.25 percentage point.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
No, he says. Well, we'll see what happens there. But anyway, oil prices rose a bit after the Fed rate cut. That generally is what you would expect to happen, because Fed rate cut would expect economic boost, more demand. NYMEX crude futures, though, down about 0.5% now. Brent above 75 levels. Asian markets is going to be a lot of cues. Of course, overall, the Fed rate cut is positive, but all eyes on the China National People Conference meet outcome. So let's just pull up Asian markets for a second if we can. All in the green, the Hang Seng in the green. And over the next couple of hours, what the National People's Congress says becomes very, very crucial. Remember, it was a week-long meeting in China to decide on what fiscal boost, what measures the government will take to improve the Chinese economy, and that becomes key. So that we'll watch out for. Fund flows, meanwhile, from yesterday's trade also become important because you are seeing foreign investors continuing to sell. The reason that you saw the kind of hit in markets yesterday perhaps is that domestic investors, including large mutual funds, came in and bought, but not as much as foreign investors. 1,787 crores net buys, but on the selling side, foreign investors sold 4,889 crores. So that's the broad setup, but does China now become the big question? We'll just pull up the implied open before we go to our first speaker this morning, giving us that view. Mildly in the red is what we're seeing right now, just about flat, I would say. Khun Go, head of Asia Research at ANZ Research, joins us this morning. Khun, very, very warm welcome to NDTV Profit. Great to speak with you as always. First comment on what next for the Fed? We know that the 25 basis points have come in. From all the commentary that came in from Chair Powell, do you think we need to re-look at whether you will see another 25 basis points in December?
Well, I'm expecting another 25 cut in December. And the reason, and I think Fed Chair Powell made it very clear, while we know who the next president of the United States is, we really don't know what particular policies and the timeline of the tax cuts or tariffs and what shape or form is going to be implemented for a while. And therefore, it's very difficult for the Fed to preempt or second guess those policies. What they know, based on the current information at hand, is that inflation continues to track and will head towards their target. Rates are still restrictive, so they continue to move to a less restrictive stance. So even with the 25 basis point cut that they have just done on top of the 50 they did in September, rates are still restrictive. So from that simple point of view, I think they will continue to cut by 25 in December. Now for 2025, that's where I think things might get more interesting, because as they get closer to neutral, that's where they might maybe start to slow down the pace of rate cuts, which means they might not necessarily move at every single meeting. They might take pause from time to time. But the trajectory for rates in terms of the Fed funds is still lower from here.
Good morning, it's Amina as well joining in. Sure, we take your point, but on one hand, the Fed chief has indicated that the economy is in good stead. And more importantly, the president says his favorite word is tariffs and taxes, from what we understand. If he does get on to cutting taxes and creating an inflationary setup, or at least early signs of that, do you think the Fed chief will still stay the course with rate cuts in December?
I think if they are faced with a greater certainty around what kind of policy parameters are going to get implemented, and timing is very important, because you don't want to try and preempt something that you don't really know might happen, or it might be some time away, and you have to really make a determination of what kind of inflationary impacts that might have, and the timing is important. So that's why I think in 2025, once the Fed gets the Fed funds rates closer to neutral, that's when they can slow down the pace and maybe start to pause at some point. And then once we have more clarity around Trump's policies, then they will, respond in kind. And if it becomes clear that policies, if indeed they are inflationary and will start to push inflation higher, and at that stage, the Fed will be in a position to respond appropriately. But we just can't make that determination right now. And I think Powell was very clear about that in his press conference.
Khun, the other thing is this China NPC meet, right? And just wondering do you reckon that China has the wherewithal to give out a stronger stimulus in this meet, considering that Donald Trump is now at the helm of affairs in the US? And can that trigger any kind of an uptick in commodities?
Look, I think it is no coincidence that the Chinese government decided to hold their NPC this week. and only wait until the US election before announcing the size of the stimulus package. Because there's no doubt the outcome of the US election will, in some part, go into their consideration of the size of their stimulus package. So we're still waiting for the announcement, but at the minimum, I'm expecting at least 10 trillion yuan in terms of new additional debt, basically additional fiscal stimulus. And with the with the certainty with Trump back from 20th of January onwards, that might probe them into potentially a much bigger fiscal stimulus package, because now they're faced with the real possibility of additional tariffs, which will have a significant impact on their exports. And therefore, there's a need to really start to boost domestic demand right now in order to provide at least some kind of a buffer or offset in case exports do take a hit next year. Hence, I think there's more urgency, I feel, to impart a bigger fiscal stimulus package. And hopefully, that will be what they will announce today.
Just very quickly, there was a report by Macquarie yesterday, actually, where they said at face value, Trump's election victory is bad news for Asia. They also go on to say that the region, though, is better prepared than they were in 2016. When we talk about the Asia bloc, is this bad news for India specifically, or are we referring to more of the Southeast Asia bloc?
Look, if Trump were to implement the tariffs that he's talked about at face value, 60% against China, 10 to 20% against the rest of the world, it won't be just Asia that will be hit. I think most other economies, particularly Mexico, will also be similarly negatively impacted. But this is where we don't really know for sure whether those tariffs will be implemented or there's just threats in order to get countries to start negotiating with the US and come up with some kind of trade deal. So at this stage, the only certainty we know is who's going to be in charge of the White House and the Senate. We're still waiting to see whether there's a clean sweep by the Republicans. But I think I do agree that definitely Asia and the governments are probably better prepared in order to deal with it. And I think there's something we have to also remember, that businesses, multinationals, are very quick to adapt. When the first trade war started in 2018, 2019, there were similar, I think, negative forecasts about what kind of impact that might have on China and the rest of the region. There was some impact, but ultimately it wasn't as bad, and businesses adapted. Trade patterns shifted to accommodate the new reality, and I'm sure that's going to be the same. So I don't necessarily think the negative hit probably will be as bad as what most people fear in the end.
Thank you so much, Khun Go there. Lots to look out for. Maybe another rate cut in December. Does Powell, continue or not is the question. It's interesting when he says that the law does not allow a summarily dismissal, and that's true. Trump can't, quite like his old reality show, say you're fired. He has to give cause. There has to be a whole hearing process, but with the kind of overwhelming political support he has now got from the people of America, it doesn't seem out of the realm of possibility that Jerome Powell might not hang on or be there till the December meet. So it's a wait and watch. Let's see what Trump does, kind of a trade. But let's come back to what to expect in India. And by all measures, yesterday's trade was a painful one. Right from the get-go, you had selling pressure coming in across the board. IT stocks, which were the darling of the market day before yesterday, Samina, just did not hold up. And there seems to be now a differing view on whether the Trump administration is actually good for IT or not. And I think it'll be more specific to each company rather than a one-way flow.
I agree. In fact, we spoke to Datamatics yesterday, and they said what you're seeing in the IT pack over the last day was largely euphoric. Whether or not this is going to impact the sector is still far out. It's still 2 to 3 quarters out. But I do think that as we go into trade today, IT could start seeing a recovery again. Towards the close, Most of your IT stocks recovered after that early selling. TCS, in fact, was struggling between gains and losses. Finally went home flat. But it could be a day when IT once again comes to the rescue of the markets at whole. But just quickly on the Nifty pulled back on expected lines after rebounding for the last 2 days. We closed around 24,200. Remember, this has been an important level along with 24,000 in terms of support for the market. And that's exactly how it played out in trade yesterday as well. We did make a very brief intraday high at 24,500, but couldn't sustain at those levels and sold off pretty quickly post that move. Remember what we'd seen in the early part of this week, the recovery was short covering led. There was no fresh long built up that the index had witnessed, and that explains why you sold off in trade yesterday. Well, make America great again. I think that seems to be a little bit of a disappointment in terms of Indian markets. So we're still trying to navigate through what Trump's win really means for Indian equity markets. But like we've been maintaining, we've been living in our own little cocoon, and there's some amount of decoupling that the markets have seen, at least over the period of October and early November. Immediate downside risk, though, on the Nifty is placed at 23,816. So if we do have a day of weakness, we could be headed to 23,816 if 24,000 gets taken out, even though I strongly think that it could be a morning where you would consolidate with a very clear positive bias in early trade. Metals were down and out, 3% lower across the board. There was pressure on metals. Hindalco, of course, led the losses on back of Novelis's guidance cut. Bank Nifty, healthy profit taking, I would call it, but 52,000 was breached in trade yesterday. Despite HDFC's expectation of gaining in trade, it didn't actually play out as we'd have liked, and none of those banks could do well in trade yesterday. They sold off pretty much from the get-go in early trade. Trent caught my attention. The stock was witnessed a big fall. Numbers on the face of it were good, but retrospectively, I think everybody commented on how the numbers missed street expectations. What you want to be notified about is that Siddhartha Yog, a marquee investor, picked up 0.38% stake in Trent yesterday. So while everybody was dumping the counter, there was some very smart hands then came and invested in the stock. The counter is down 22% from its recent highs. Apart from that, was also interesting what happened to Vari Energies. The stock is up 150% from its subscription price, its IPO price. It was the first day of losses that came in on Vari Energies after 8 straight days of gains. In fact, since its listing, the stock has been on an upward trajectory. So first day of profit taking on Vari Energies despite a pretty significant order win. So Neeraj, I do think we're setting ourselves up for a morning of consolidation with positive bias, and I feel like IT could come back in trade today because towards the second half, your stocks like TCS, Wipro, which were down 2 to 3% in the first half of trade, had recovered quite well. They didn't go home with gains, but they attempted a recovery.
Yeah, let's see from a trading perspective that comes back or no. But today I've just thought do a slight bit of a difference since it's becoming so difficult to call in. I mean, except for Samina, for everybody else to call in trades. But I just thought, one of the reasons why trade could be sulking at any given point of time, it looks like a sell on rise market, is because of the rate growth and inflation trilemma instead of a dilemma that the RBI or the government has. Now, the RBI governor in one of the events has said that the October inflation will be higher than September. So we are looking at a number of over 6%. It may be temporary, it may be a one-off, but over 6% for the month of October. And therefore, it puts the question of whether the Q4 RBI inflation number of 4.2% is optimistic or no. US inflation, if it stays firm, may play on the RBI's mind as well, and therefore the RBI may decide against any rate action and focus on liquidity management alone. In fact, HSBC, which has been very vocal about a rate cut coming in soon, just last evening has pushed back their rate cut projection from December to February. So we're probably seeing a postponement of rate cut. We're probably seeing GDP numbers not looking all that great. At least Nomura seemed to suggest that. And if all of those factors come into play, then the very near term, we have some tough macro, and that may play on the market's minds. So that was one. And guys, I mean, much as thankfully, we've not said that all the flows from India are going to China, but look at the note from Citi on fund flows, and their insights are quite staggering. Developed market funds saw very strong inflows led by US. Last week, the US bond and equity funds saw inflows of 14.5 billion, and $36 billion in the week ended November 6. That's a staggering $41 billion of inflows into US funds alone. And most of it went into ETFs. So no wonder that all emerging markets and Asian markets are seeing outflows, and 29 straight days of outflows out of India. You know, it's that the index is trading at 24,500 is a miracle in itself, because had it not been for the strong domestic flows, we might have been at 23,000 at the very least.
So if you recall, Neeraj, when we've been breaking down what Trump means for India, flows was a big part of it, because if you have a president whose entire push is make America great again, increase investments into America, then that money is going to flow back from emerging markets, US dollar. So thus far our biggest problem was flows going to China, but now it's become China plus US as a double whammy in that sense.
Well, I know there's a lot working against us, but I think Neeraj just said this from the start. Mr. Market knows it before the economy. So maybe October sell-off, for whatever it's worth, could be ahead of what these macro triggers are pointing to. But yeah, it looks like, I mean, I'm still biased on hoping it's a positive up move, but we'll go with, let's see what happens in early trade. There have been a bunch of good earnings, so I think we'll take heart from that too. Yesterday, remember, the day belonged to Apollo Hospitals. What a sweet move, right? Strong earnings, strong commentary, all that led to the counter actually doing well. Today, we have a bunch of counters who may get the same sort of a reaction post-earnings. Lupin on top of that list, very, very good earnings. Revenues were up, so they've actually sold quite well, 12% higher at 5,672 crores. Profits are up significantly higher at 74% rise at 853 crores versus 490 crores. Remember, the expectation was also 700 odd crores. So they're in line with what the expectation was. But if you do a year-on-year comparison, it seems like an extremely healthy number that we have. Margins have expanded 473 basis points at 23.06 versus 18.32. What you want to remember is for Lupin, all of their geographies have done well. So international business is up 25%, which is fantastic. It's up 18% Q on Q. So they're clearly seeing growth across their international businesses. Canada saw big growth, 51%, driven by strong base and their subsidiary Mantra. India also had a good sort of quarter. Europe grew 6%, supported by the base growing business. So all in all, good going for Lupin. The stock should be one you want to track this morning. Earnings were solid. The stock should get a positive reaction. Indian hotels, this is another one that's done quite well. Impressive earnings. Brokerage has also seemed quite pleased. Revenues were up 27%. EBITDA was up almost 42%. Margins were up at 27.43 versus 24.7. And net profit was up significantly on back of an exceptional gain, coming in at 583 crores versus 179. So you got to take that into consideration, that big jump you're seeing on net profits is also because of an exceptional item in that. If you keep that out, the numbers are still looking pretty solid. Well, what stood out, occupancy has improved. Average room rates are also up 10%, and revenues per room are also up. So again, they've done well operationally on pretty much every single parameter in the quarter gone by. Going ahead, the management has talked about how they are expecting double-digit growth, and their market guidance of opening 2 hotels a month still remains. So all in all, increase in market share, improvement in earnings, better than expected margins is all what sets up Indian hotels for a good day in trade today. Cummins India, again, solid numbers. Revenues were up 31%. EBITDA was up. Margins have also improved. Net profit is up 37% at 450 crores versus 329 crores. Now, what worked for them? Domestic sales were up nearly, or rather were up 47% YOY at 2,008 crores. Export sales were down, though, 13%. So they've done well despite the fact that exports haven't done as well as they did last year. And they do maintain that they're cautious. And that, of course, is the outlook coming in, because demand for the near term may look a little more volatile than they would have liked. So all in all, for a change, I've got 3 earnings and all 3 are good.
Wow. So, you know, I think it would have been tough to find 3 more, because overall it's a mixed kind of an outlook for corporate earnings. And frankly, we are now towards the fag end of results season, so it's not going to be the biggest driver after a few days, except for 1 or 2 exceptions, and I think SBI is definitely one of them. So I'm starting with State Bank of India, India's largest bank, of course largest public sector bank. Now the reason we're giving it a thumbs up is because look at the last 5 trading days for SBI, State Bank of India. The stock has been up up about 5% in the last 5 trading sessions. Numbers are expected this afternoon for the second quarter. So here is what we have put together in terms of what you can see from State Bank of India. Net interest income could be up 5% at 41,500 crores. Operating profit expected at 25,000 crores, up close to 30%. Provisions are expected to go up 7% Q on Q, and profit after tax is expected to go up 15% at 16,500 crores. Deposits could also grow by 8% year on year. That would be seen as a positive, and advances are expected to grow by about 16%. What should you monitor? Margins are expected to be flat quarter on quarter. So anything beyond that would be a big pump up or a positive for the stock. Commentary on capital adequacy will be something you should watch out for, and credit costs are expected to be fairly muted. Nothing major expected to happen there. Loan to deposit ratio could also be flat. Asset quality is expected to improve further, and loan book growth and return ratios should be watched. But overall, I would say key stock to watch this morning would be State Bank of India. RVNL as well. Numbers have come, and I mean, revenues have been flat, down about 1%, but their earnings are down 9%. So the EBITDA parameter which we count, which is earnings before tax, etc., is down 9% to 271 crores. Their margins have come down from 6% to 5.6%, and net profit is down about 27%, which is why RVNL is a thumbs down this morning. Not so much for Borosil Renewables. Now, remember that the government has initiated an anti-dumping dumping duty investigation. This is alleged dumping of solar glass from China, Vietnam. Now, Borosil Renewable is one of the few companies which make solar glass in India, keeps complaining about dumping from China and Vietnam. What's different this time is that after the company has sent an application to the government, the ministry, the relevant ministry, has recommended an imposition of provisional anti-dumping duty. So this is why this is important for Borosil Renewable. The investigation is still underway, but it now rests with the finance ministry. So that's one step further. Their earnings also will be out on 11th of November. So this could be a boost for the stock. I want to talk about Cochin Shipyard, but then if you want to just go with your top 3 first.
Okay, so not the best of news, unfortunately, for the first 2 that I have on my radar. One of them is Astral. We're talking to the management at 10 a.m., but the quarter 2 numbers, revenues were flat, 1370 crores versus 1363. The expectations were 1489 crores, so lower than estimated. EBITDA margin at 15.32 versus estimated 15.9. So there too a miss, and the net profit was down 17% at 109 crores. The estimates were 135 crores. Now, the interesting thing is Astral and the pipe segment, high growth space per se, but I took a look back at Astral's performance over the last 3 years. The operating profit is at the same level as it was in September 2021. So 3 years on a trot now, they haven't moved on that operating profit line higher, or even if they did, they have come back here. So that is the problem. In fact, the profit after tax number is 30% lower than the profit after tax number clocked in the September 2021 quarter, July, August, September 2021. So, you know, I mean, for a company which is priced fairly well, growth isn't quite there, and this should worry the street and maybe worry investors. I reckon the stock may see a bit of a correction today, so do watch out for this one. And actually similar for GMM Pfaudler, that's the second stock on my radar, a bit of a thumbs down there, that on GMM Pfaudler as well. That revenues were down 14% at 805 crores. EBITDA margin was down 372 basis points at 11.42 versus 15.15%. Net profit down 74% at 17 crores. The Bloomberg estimates were 56 crores. So look at the dip in performance. And again, for them, operating profit at the same level as September 2021, and profit after tax down by over 50%. So the first 2, a clear thumbs down, both Astral as well as GMM Pfaudler. The one which is might do okay is ITI. So ITI has, in a consortium with a company with the consortium partner, has emerged as an L1 for 3,022 crore BharatNet project. Do watch out for this one. May react well. So top 3 on my radar.
Just Cochin Shipyard, I wanted to add because you know it's a stock that is watched very, very closely, and decent set of numbers except for one parameter. So revenue up about 15%, earnings up about 0.5%. Margins got squeezed a fair bit from 20.42% to 17.87%. But net profit was flat. So I think Cochin Shipyard will have to wait and see. I'm not sure if it will be a positive or not in this market right now, but numbers, all right, not too hard.
Yeah, we've also got a few more, not so great or great, you might want to call it. NRB Bearings for me was a good set of earnings. They reported solid numbers. Revenues were up 8% to 301 crores. EBITDA was up 14%, and margins have also seen an improvement. So smaller company, but it could be one that's quite active in trade today at 17.2 versus 16.3, and profits were up 46% at 36 crores. You can see Neeraj making that face.
No, good numbers. Good to see good numbers. No, not at all.
So I think that was solid, and apart from that, there were a whole bunch of smaller companies. Emami as well did okay this quarter, I think. Profits up 18%, revenues are up marginally, EBITDA has grown, and margins have expanded. I think margin expansion in a tough quarter like this does stand out for me, even though they might not have seen a volume increase. But if you've managed to increase prices or keep operational efficiency intact, deserves a mention.
Yeah, just very quickly, before we get to Mihika, 2 or 3 other numbers which might react. So I thought Innova CapTab was a decent set of numbers. Revenues were up 12.5%. Margins at 15.6 versus 14.3, so a bit of a margin expansion there. And net profit up 53%, so do watch out for that one. Brigade has signed a JD pack to develop a 1 million square feet residential apartment in Chennai, 800 crores. So that could be interesting. And lastly, we haven't quite, the graphics may not be there, and we'll talk about it in detail, but yesterday's key mover, aside of Apollo on the large caps, was Avalon Tech in the mid cap space. Now Motilal Oswal has gone ahead and hiked the target price to over 900 after yesterday's move in the con call. They anticipate, guys, they anticipate a CAGR over 3 years of 87% on the bottom line. I mean, that's mammoth for any company to do. So could be interesting to see what Avalon does today after the 20% up move yesterday.
Oof, and how much more is left to go?
Just very quickly, 1 second, just an update on Swiggy, because we've talked about this so much. The subscription numbers are anything but disappointing, right? You've had a very low subscription coming in on day 2 at 0.35 times. Remember, the euphoria and excitement before Swiggy was launching was so much more than what the response has been from the retail audience. And a clear digression from what institutions thought about Swiggy and entered through the anchor investment versus what the retail audience is doing. Also, what surprised me was Sagility, I don't know if I get the pronunciation correct, has actually done so much better. They've been oversubscribed 3 times. Now, of course, this is a smaller IPO, and hence the numbers may not be comparable, but I am truly surprised by the fact that the numbers on Swiggy are not as good as I'd have thought. We talked about trend, but again, I mentioned this is a counter to watch and trade because you had Siddhartha Yog acquiring 0.38% stake in the company yesterday when most participants in the market were dumping this counter. So that's what we have, and I think that pretty much covers, and we'll add more stocks as we go along with our analyst and our research team. But Agam, we on expected lines sold off, I'd like to believe, in trade yesterday. It was short covering, so no surprises. But I feel like we're setting ourselves up for a positive, consolidative move today, or am I getting ahead of myself?
It's going to be a wait and watch, to be honest. It's very hard to call markets these days, especially when you have such sharp moves in either direction. But of course, yesterday was one of those days where we once again rather saw the indices take a step back. A 1% cut for the Nifty 50, another 0.8% cut for the Bank Nifty as well. And even as we move into a new week when it comes to the weekly options expiry, do remember that this is the last week in which you will have the availability of the Bank Nifty weekly options as well as several others. After that, of course, you will no longer have them, and only the Nifty 50 will be available for weekly option expiries. What we're looking at right now is a lot more writing around the 24,500 call. On the lower end, some amount of writing is at the 24,000 put, and of course, a lot can change over the course of the next few days. But this is the 500-point range roughly that option writers are working with. But moving on, it was a mixture of trade when it comes to stocks. We did see shorts for Hindalco, longs on the other hand for Apollo Hospitals. We're also keeping an eye on Granules, Abbott and Divi's Laboratories. Of course, on the other hand, a lot of long unwinding for Persistent Systems, Alchem Lab, as well as L&T Tech, along with Eicher Motors. But let's take this conversation forward and let's get in Rahul Ghosh of Hedge.in, who now joins us on the show. Good morning to you, Rahul, and thanks for joining in. A lot of volatility after we've seen a little bit of a price correction in the benchmarks as well. How are you looking at trade here?
Good morning and thank you for having me. So in terms of index levels, I'll start by saying that until 25,000 is taken out on the upside, we will not have any comfort to go long. So even if you see Nifty having a short covering move up to 24,500, 24,700, etc., that does not give us comfort to go long. Yesterday's move is actually textbook to corroborate that hypothesis, where there was a sharp move because of in-the-money put writing. I believe 24,300, 24,400 and 24,500 puts of the November end expiry were being written. That's why you saw that big bump of 300 points, but the ferocity of the selling that happened yesterday, I believe the up move was day before yesterday, the ferocity of the up move that happened, down move that happened yesterday says that at every rally, there are enough and more hands to sell the index. Keeping that view of downside in mind for the November series, we've planned a structure that way.
Well, based on that, what sort of an option structure are you deploying at the moment, Rahul?
So what we're going to do, and this is something different from what I've presented in your show, where it's a bearish side structure and it's a combination between a calendar spread and a butterfly. What we're doing is we are buying the 24,000 put of end November expiry, and we are selling 2 lots of 23,700 put of again end November expiry. So 1:2 ratio in this case. But the offset unit for the extra sold put, which generally you would notice we would take the 28th November expiry, the offset unit, we have used that of 23,500 of 5th December. Now, the advantage of doing this is that if you notice, the 2 sold units completely encompass the premium of the bought put unit. I repeat, the 23,700 2 sold put units completely encompass the premium of the bought put unit. In fact, it encompasses 40 rupees more, and that 40 rupees acts to be as credit in the first 2 legs. So if Nifty was to not move up and remain, not move down and remain sideways or move towards the upside, that extra credit will help compensate some part of the premium of the 23,500 of 5th December. If markets decide to move down straight through, or if markets decide to move down even a little bit, this strategy will start paying you dividends. The max reward you can make, I believe, is between 3,500 and 4,000 rupees, depending on where premiums open today. The risk, it's a very, it's a curtail strategy and a low risk strategy. So 1,750 is the maximum risk you can have. There's one possible modification also that can be done. Let's assume Nifty does not move down, or Nifty moves on the contrary on the upside in the month of November. The first 2 legs, which is the 23,500, 23,700 and the 24,000 would expire. What one can do in that case is also have 24,000 and 23,700 of 5th December taken once again. So you would buy the 24,000 put of 5th December and sell 2 lots of 23,700 of 5th December. This would give you an additional 20-30 points of credit, which would further reduce your risk in this strategy.
Okay, fair enough. Well, just to break this down, you basically are working with a spread at the moment where you buy the 24,000 put and sell the 23,700 put as well. And this is the November end. And well, to take things forward, we also have Rahul who's suggesting buying the 23,500 put, but this is the 5th December one. And of course, to remember that the Nifty weekly options expiries continue to be in play. And based on that, as you can see, the risk and the reward is already being flashed over for you on your screen. But Rahul, on that note, thank you for joining us and taking us through your views, as well as giving us this particular option structure to work around with. Of course, don't forget to write to us on the WhatsApp number which has been flashed for you on your screen, and we'll surely take up your queries with respect to any positions that you have on the F&O show at 10:30 today. With that, it's back to you all.
Right, thank you for that, Agam. Meanwhile, the big story that you're seeing on your screen, and we'll talk a bit about this. Remember the huge hit for companies like Tata Steel sale, JSW Steel, Coal India, because of the mining royalty. Now, this was a high court which had said that you will have to come in with royalties and predated royalties. So, with retrospective effect, mining companies had to give royalties. What is coming as a relief is that the Supreme Court has given more time to the central government to take a final call in regarding to the cascading impact of royalty compounding. Now, as complex as that sounds, let me go across to Varun. Varun, please try and simplify this for us. Is this a change in stance from the top court? Why is this being seen as, some hope for companies which would have had to pay these mining royalties?
Yeah, hi. So in essence, the Supreme Court has given the government 2 months to take a final call with regards to the cascading impact of royalty compounding for the calculation of the average sale price. Now, in 2016, the government revamped the entire mechanism for the calculation of royalty on minerals and grants of concessions. And these 2016 rules provided that royalty would be calculated as a percentage of the average of the sale value. Now, mining companies have contended that royalty which has already been paid in the previous months is again being factored in for the purpose of computation of royalty paid for the subsequent months. Now, in effect, what they're saying is that it is leading to a cascading effect. Now, Supreme Court recognized this and said that this is foul of Article 14, and government has already cured this anomaly for coal, and the Supreme Court has said that such an anomaly for minerals such as iron ore has not been cured yet. So for this, the Supreme Court has given the government 2 months to take a final call in this decision, when they should submit the report to the top court, and when this case will be taken up again.
Okay, Varun, thanks for bringing this up. The timelines are 2 months, right, Varun? You said 2 months given to the companies or given to the government to figure out the fresh.
Yeah, it's 2 months.
Okay, perfect. Thank you so much for that. And guys, I mean, you can argue that the stocks have already recovered from that hit, but in the P&L, some of the companies took part of that hit already, right? And therefore, if this changes in a couple of months, it'll be really interesting to see what the numbers of either the OND quarter or the Jan, Feb, March quarter look like, because let's assume that 2 months and then some to and fro, and maybe the decisions come back in Jan, Feb and March. It'll be really interesting to see what happens to for numbers per se.
Could this trigger a rally on the stocks today? Because you had the NPC that we're awaiting in our local good news. Could be enough reason to...
But only thing, if the NPC doesn't come out with a large stimulus, then that's a big negative for metal companies. But this by itself...
Stick your neck out, Neeraj.
No, you can't, no, because...
So there you wouldn't...
No, let's be...
It's not a trading rally, can't be expected.
No, I'm saying just on the back of this news, if the NPC is not negative, this is a positive. Right. But if the NPC doesn't give out a stimulus...
It will outweigh. It will outweigh, and also, I mean, think of it this way, up to 70,000 crore rupees was the hit which was penciled in for the industry. Those were the kind of estimates. But Mihika is joining us to give us a more stock-specific, blow-by-blow account of who this could benefit. Now, Mihika, this is something that we will know in another 2 months whether it plays out or not, but sentimentally what has changed is that at least it's under consideration. If it does come through, and we know now that the government is now reviewing it, who does it benefit?
Yeah. So we have a host of metal as well as mining companies, because some of the metal companies do have their mining operations. Now the change in the calculation method for royalties is positive for these companies, and it was, when the judgment was passed, it was expected to impact EBITDAs of companies by 2 to 3%. The change in the method would help companies like Tata Steel, Steel Authority of India, JSW Steel and Hindustan Zinc. Now when the actual judgment came by, Nuvama Research had actually put in the potential impact of the retrospective mining royalty tax application. Tata Steel had a potential liability impact, was expected at over 17,000 crores, 347 crores, and this was stated by the company's management itself in one of their con calls. Steel Authority of India had a potential liability impact of 2,980 crores. JSW Steel was pegged at around 4,800 crores as per Nuvama Research. Now, Coal India and NMDC, Coal India had 36,000 crores, but because of the nature of contracts that Coal India has with its customers, Nuvama had stated that Coal India, the liability was not that much of a headwind because it would pass on all of this to its customers. The same goes for NMDC, where the potential liability impact was pegged at 2,700 crores. And lastly was Hindustan Zinc, where the potential liability impact was expected at 150 to 200 crores.
All right, thank you for that, Mihika. All right, Kush Bora with us this morning in studio of kushbora.com. Very good morning to you. Sudeep Shah of SBI Cap Securities with us, as is Avinash Gorakshakar of Profit Mart Securities. Avinash, really, really great to see you back on the show and speak with you today. But I'm going to start with the technical view.
On metals?
On metals, no. Let's talk about Nifty.
Okay,
let's
so
talk about Nifty.
just rounding off this conversation then, just one thing. So I was talking to a few people about what the potential impact of this could be. Mihika has outlined the earnings thing. Somebody in the know says that all miners benefit, but the bigger benefits come to those who don't have legacy mines and are paying a very large premium for auction mines currently. And therefore, the names like JSPL, JSW, amongst others, stand out. So watch out for those duo in particular. But all steel companies likely could benefit, but these might have a better benefit.
JSW Steel on the charts also was looking very, very well placed. Kush, you agree? Because 2 days ago, I think it was showing serious strength. So if you've got positive news flow, China, and a technically strong looking stock, would you stick your neck out and say buy JSW Steel today?
In a word, yes.
Okay, good.
First up, TGIF, thank God it's a Friday. Right?
We can still call you, you know that, no, on Saturday and say you said this.
Of course you can, of course. It's just that from a market perspective also, I think, just to come back to, the Nifty question first, and I'll come to JSW as well. I think the bigger concern that the market is having right now, I don't know if I should call it a concern also, is that the intraday volatility is far too high. You're seeing, 100, 150 points up move on one day and then about, 200 points down move on the next day. I think that's a bigger concern. What I take heart from the fact is now Nifty is also starting to have a similar pattern as the bank Nifty, which is, it may not appear like that, but from a broad perspective, if you just take a step back, we're starting to see a range play on the Nifty, where 24,000 on the downside and 24,500 on the upside is starting to act as a range. Now, that is where, you perhaps consider, playing the range. Closer to 24,000, you go long, 24,500, you book your profits, perhaps even consider going short. That's the kind of levels that we're looking at. 24,200 at the moment is seeing a very strong call and a put base. So perhaps for the next couple of days, including today as well, that could be the pivotal range. If I want to err right now, I might err on the slightly bearish side, given the kind of momentum that we saw yesterday on the downside. And perhaps a short trade is warranted, but only till levels of 24,000. This market is not willing to give up the 24,000 level in any bit of hurry. Now, just to round off the discussion on JSW Steel, I was looking at a lot of stocks, when Mihika was speaking about them, and when you were having a discussion. The only stock that stood out actually was JSW Steel. On the back of good news, if you see a kind of a positive up move, it could perhaps be on JSW Steel, because a lot of other stocks are trading below some of the key resistance levels. This is the only one that is above the near-term support zones. So this could perhaps see a positive reaction. A move towards 1,020, perhaps even 1,050 could not be ruled out.
Okay. Well, it's 8:45, so we deal with stocks at this hour. So let's get some stock ideas out of the way before we do anything else. So I'm going to come back to you for your stock recommendations for the morning.
So again, despite the kind of mild bearish outlook that I have on Nifty today, my stock picks, both of them are positive. I'm looking at a Persistent and a Jubilant Pharmova. Interesting moves yesterday. On Persistent, we're seeing some sort of consolidation with a positive bias. IT could see some sort of a rally, and Persistent has been one of our top picks in the IT space for a while now. So 5,900, 6,150 are the targets, and 5,990, 5,590 is where you place your stop loss. Jubilant Pharmova was our pick for a while, has crossed that 1230 resistance zone, is trading above that for some time, and could continue to hold. Volumes are also fairly decent on this one. Positionally, 1310, 1370 are your targets, and 1190 is where you place that stop loss.
Well, the good news is GIFT Nifty's also turned positive, slightly positive. And that's what we are doing as we're gearing up for trade this morning. Avinash, how are you feeling about the markets? Are you circumspect? Are you avoiding any fundamental buy calls? Or are you acquiring at every dip in this market?
Yeah, good morning. See, I think we are looking at selective, sectors like hospitality, hotels, capital goods. And I think within this basket, yesterday, I believe Indian hotels reported their numbers. I think fairly strong numbers, and I think my sense is that the second half is definitely going to be much better than the first half. Typically, the second half is supposed to be a much more remunerative period for most of the hotel companies. And our discussions with some of the hotel companies indicate that on the ground level, supply crunch continues. The ARR realizations have been pretty solid. So I think Indian hotels, even at the current odd levels, if somebody has a slightly medium-term view, can obviously accumulate. We are looking at a fair value of 800 rupees plus. And the second stock would be Larsen and Toubro. See, in this kind of volatile market, as Kush mentioned, I think, this stock has held on very strongly, very strong order book, good execution. Their working capital crunch has also eased a lot. And I think the markets would definitely like to bet on, larger companies now. Even the small and mid-cap companies, I think the volatility will be much more. Because, although the Nifty has, corrected by 9-10%, the broader market has seen corrections of almost 25-30% for some of the smaller mid-cap, companies. So I think L&T definitely deserves a second look. And I think the second half will be much better in terms of revenue, in terms of profitability. So L&T, even at the current levels, can be a good kind of buy at around 36,840, 36,50. We are looking at around 3,800 plus odd levels over the next 12 to 15 months.
Okay, so that is some of the recommendations that Avinash has come in. But let's talk about a special segment on NDTV Profit, which is Deep Dive. We pick one stock, one company, and tell you what you need to look at on it. And Hindalco in focus, helping us with that is Hiral, back after her maternity break. Hiral, great to have you back on NDTV Profit, and with a new addition to the NDTV Profit family. So take it away.
Absolutely. Thank you, Tamanna, so much for this, and it feels great. But clearly, all of us know actually what's gone wrong yesterday, and it is clearly Novelis. Now, because of which, let's quickly look at what happened to the stock. 8% fall in trade, and if you see from its peak, a 14% dive is what we've seen from the recent highs. Now, I'm sure it's important to understand what is next in store as well, but why the fall? Now, firstly, a weak set of numbers that have been reported, and secondly, they have suspended the guidance. And the management commentary also with regards to the future outlook has been absolutely disappointing. These have been the major reasons as to why we've seen this kind of fall, and almost 55 to 60% of Hindalco is coming in from Novelis at the EBITDA level and revenue level. So that's the reason why Novelis becomes as important as this. Now, what has gone wrong? We've already seen the suspension of guidance, which is around $525 per ton. This is EBITDA per ton suspension. And what the firm had expected was a steep EBITDA per ton improvement. That was the trajectory in the medium term, and that's where they have absolutely faltered. Moving on, if you go to the next point, now what has led to this decline? A couple of reasons. One is the increase in aluminium scrap prices, and the reason why they have increased is on the back of the China's policy change. Secondly, 60% of recycled content is what Novelis's products have, right? So that's the absolute correlation. Secondly, the product mix has been unfavorable, specifically from the auto segment. That has been dismal. So that has also been leading to this. And there has been a $25 million impact as well on the back of the floods. Going ahead, what the peers are saying, they are expecting, downstream companies are expecting a 25 to 30% EBITDA impact. Now, this is important. Why? Because Novelis and Hindalco have really not called out for this. It's the peers. So you have to take this in mind for the future. Moving ahead, Let's see the next slide as well. What next now? The Inflation Reduction Act program, now that is expected to be scrapped as well under the new US government that has come in, and because of which, you know, the financial support for the Bay Minette, that could be unlikely. They are looking at a capex of around $1.1 billion for this. This is what was allocated in the second quarter. And if you see in terms of, I think, second half of FY26 or 27 is where this project was expected to come on stream. And lastly, you have the December quarter, which is a seasonally weak quarter. If you put all of this into consideration, clearly you are seeing headwinds. The management has indicated that at least till the March quarter, they are seeing headwinds. So the future is what is important. That's what the peers are calling out. That's what the management is calling out. So I think the next 2 to 3 quarters, absolutely dismal numbers is what could be in store, and there could be pressure. And brokerages are also pulling out at cuts.
For that, Hiral. So even the Chinese NPC can't come to their rescue from the sound of it. It's going to be tough. At least that's what it seems like. Brokerage is also circumspect on the outlook for Novelis and Hindalco for the next 2 to 3 quarters. There are a whole bunch of stocks we'll be tracking in trade today. Technically, of course, Kush has told us what he likes. We also believe that there could be some more that would be reacting to their earnings this morning. First up is Lupin on our watch list. Very strong set of earnings across all parameters. Margins have also seen a big beat. Indian Hotels reported strong earnings. Outlook sounds positive. There's an improvement in all operational efficiencies in terms of the company. Cummins reported numbers that were better than what the street would have expected. All in all, a thumbs up on Cummins as well. ITI, it was selected as an L1 for a 3,022 crore rupee project. The counter will react to that news today. You also have metal stocks. Watch out for them today. There's Chinese NPC and, of course, a change in calculating royalties. So this could be a positive trigger, at least in terms of a reaction sentimentally on these metal stocks. TBO Tech, Jeffrey sees a 24% upside. The counter could react on an upgrade and an increase in target price.
All right, not everything is good news today. A fair number of weak quarterly results. Ircon RVNL in that week top line has impacted PAT. Astral revenue is flat, but PAT has fallen. Gujarat Petro volumes miss has led to miss on all estimates on Q2. So those could be some of the pain points. All right, let's get back to conversations this morning. We did a deep dive on Hindalco. Avinash, I just wanted to get your view on how you are seeing Hindalco and the impact of Novelis. Hiral put it through very thoroughly, but what would be your outlook on the stock?
Well, I think in the very near term, Tamanna, I think the kind of performance which Novelis has put out clearly indicates that there could be some pressure for a couple of quarters. And I think, maybe the December quarter could also be equally bad. Our sense is that we could see a little more deeper correction on the stock, and despite the fact that today some positive news has come in for metal and mining companies, I think over the medium term, I think unless and until we see a very strong kind of demand revival, I would not be surprised that there could be a lot of earnings cuts, which most of the analysts would put out on Hindalco. So I think as of now, we would not suggest to buy at the current odd levels. We would wait for the stock to correct, but I think clearly it looks as if the next couple of quarters are going to be extremely challenging for Hindalco, considering that Novelis is unlikely to make a bounce back, in the short term. It could take at least a couple of quarters before we could see some sort of normalcy happening there. So I think Hindalco is an avoid as of now from our side.
That's an avoid coming in on Hindalco for now, at least, fundamentally. We'll take a break. We'll come back. We're gearing up for pre-open trade, which is now expected to see a slight positive up move in early minutes of trade. We'll take a break, so stay with us.
When the whole day passes like a blur, the news just whizzes past. and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Back with India Market Open right here on NDTV Profit, and let's get the implied open up on the screen. And well, from being negative, we are now flat, which is not a bad thing. The question only is, there are a couple of events waiting by, including the Chinese NPC meet outcome, and that will have a bearing on metals. But metals anyways, as we discussed, might have a bit of a run anyways today. A few stocks which cracked yesterday, Avinash, would love to understand from you. You've spoken about Hindalco. Trent is the other big one, right? So many people invested, off about 20-22% from its recent highs, or maybe more than that. Is this a level that you get into a stock which has performed so well all these quarters? Could this quarter be a one-off, because the management in its call has said that they are still confident about growth?
I think, Neeraj, I think in case of companies like Trent, my sense is that one quarter is not going to alter the long-term story. Of course, it creates a little bit of disappointment with investors who have actually invested at slightly higher levels. But I think, if you look at Trent, you need to give a time frame of at least a couple of years to get the kind of risk reward one expects from a stock like Trent. So I think business is strong. As you rightly mentioned, the management commentary was pretty positive. They're confident that growth would come in very strongly in the second half. And typically October to March is supposed to be a much more remunerative period. So I would say that, somebody who's looking at to accumulate the stock from a long-term perspective should use the weakness to get into it. One should not get worried by just one quarter numbers, because the management call was pretty positive. And I think you could possibly see a good amount of buying interest coming in later on. So this is not a stock where one quarter is going to decide the trajectory over the longer term. So I think we are positive. We have been telling our clients to buy this stock on every decline, but keeping it at least a 2 to 3 year kind of time frame.
That is fundamental view coming in on trend. Avinash, thanks for that. The stock has corrected sharply from its recent record high, down about 22%. There was some buying that came in from an investor yesterday. This morning, unchanged in pre-open at least. Kush, do you think a trader could play this for just a recovery today, just after a 7% decline, a dead cat bounce, if that, today likely? So long trade on trend, would you say?
I'd wait out, and the reason for that is that the stock is in a near-term downtrend, and I suppose fundamentals and technicals like karma, eventually catch up, right?
Karma. Okay,
yeah,
not karma for Trent. You mean in general?
In general, as the saying goes, right? The stock was overvalued, overstretched. On fundamentals, we know it was overvalued. On technicals, we've seen it trade in the overheated territories for a long time, and hence I think the correction, when the overall market is correcting, is perhaps par for the course and healthy. Now, to Samina's question, do you buy right now? I would perhaps wait out, and the only reason for that is, despite the kind of recovery that it saw yesterday from the day's low, The near-term trend is still bearish. You're looking at support zones close to 6,300, and if that is taken out, perhaps a 5,900 as well. So once the stock finds its feet, that's when you perhaps play for that long trade. But as Avinash said, I do concur that if you're looking for a medium to a long-term kind of an investment in a staggered manner, these dips are perhaps a good time to start accumulating.
Expected to see a flat start, at least what pre-open is indicating, to marginally higher if that. Sudeep, how are you feeling about the index this morning? 24,000 has been critical in terms of giving support to the Nifty. Pre-open is all over the place, but what are you feeling? Do you feel like it could be an up move and hence a long trade, or would you avoid the index completely and maybe look at a bank Nifty in that case?
Yeah, good morning. See, what I feel is from the Nifty standpoint, this 24,350, 24,370 mark is not being able to cross, and every effort or every short covering move to that zone is being met with selling pressure. So even if we see a flat to positive open today, my sense is that first 1 hour or so we should be waiting, and we should just see whether this zone initially 24,130, 24,100 zone is being guarded, and is the market trying, is Reliance or HDFC Bank or ICICI Bank moving? Because these three stocks now hold the key for the Nifty and Bank Nifty to move up. So overall, from a levels perspective, 24,350 I feel is very critical for the indices to cross. On the downside, the first support zone would be closer to 24,130, followed by 24,050 levels.
Top trades this morning. We're getting into market open soon. So you want to tell our viewers what you're buying or selling and what you're recommending?
Yeah, there are a couple of names which are there on my mind, and see, well, the stocks in the last 6 to 7 days which have outperformed, I guess still warrant a decent attention. And the first amongst them is Coromandel International. Now, what we've seen that after a big up move from April till August, stock slid into a period of consolidation, and in the last 2 to 3 sessions, we have seen the stock once again giving a decent breakout on the upside. The stock is well placed on the daily, weekly, and the monthly charts. So I feel this could be bought with a stop loss of closer to 1730 on the downside and a target of 1850 on the upside. The second stock on my radar is from the energy space, from the power space. SBI Energy. Now, similar story, similar structure, a long-term uptrend, short-term correction, and once again the stock is trying to rebound from support zone. So I feel from the current levels, SBI Energy also could be bought with a stop loss of 698 on the downside and a potential target of 745 and 760 on the upside.
In fact, Coromandel and Chambal both were showing significant strength yesterday as well. So, in fact, on our channel, we had an aggressive buy call on both those counters on the F&O show. Kush, you want to elaborate on those stocks? Because I'm trying to build a consensus view, right? Just make it easier for the viewer if they have to buy one stock this morning. Coromandel, Chambal, which looked good yesterday, as per Sudeep, look good even this morning. Would you buy?
I wouldn't bet against Sudeep's view for sure. So yes, no, Coromandel is consensus. My only hitch is at that 1800 mark, and I've maintained that before. These round figure marks, especially for F&O counters, do act as a minor resistance. So I'll be more constructive once 1800 is taken out, but the setup for sure looks very positive. Chambal also very positive. There's been a consolidation, a range play on this one, but the range on the downside is 480, and on the upside you're looking at a 540 kind of, the resistance band, which means there is still a lot of room to be played on the upside. Yesterday also good move on the back of good volume, so I think Chambal is a good play for the target of 540. And on the downside, your stop loss comes to close to 500 odd levels. Just to add to that list, Deepak Fertilizers was one of our picks about 2 maybe 3 days ago. The second target on that one was hit close to 1400. We saw a bit of a dip yesterday, so that is something that you might want to keep on radar from the fertilizer pack if you're looking for a long trade. But that's in the cash segment.
No, but buy it at the current levels or buy it at a dip.
So again, Neeraj, yesterday it closed at the low point of the day. So just putting it on the radar, if there is a buy call, we might initiate it and put it up there for your viewers to initiate.
This space.
Watch this space.
Fair call. Okay.
Look at Hindalco seeing a bit of a rebound trade in pre-open. Kush, we got the fundamental view from Avinash. Would you stick your neck out on a Hindalco this morning?
Maybe for a short trade, my only concern here is that you've got multiple support zones at the lower end. So first you've got the 200-day moving average at 640, then a buy zone at 625, and then eventual medium support at 610. So I am not very constructive on Hindalco just yet. I'm actually very skeptical about the entire metal space. Let me see how they shape up today, despite the kind of, or rather, because of the kind of news that came out today. But Hindalco not very constructive just yet. I'll probably be a little skeptical. Let me see how it settles. My eventual target on this one from a support zone perspective is 610.
Okay, 9:05. So that time of the day when we get you the big brokerage call, and we've chosen, Harsh has chosen a note from Motilal Oswal. Harsh, this is on a stock which was up 20% yesterday.
A further 30% upside to that is what Motilal Oswal has done in terms of upping the target price. They've reiterated their buy call, 920 being the target price on Avalon Tech. Of course, 20% up yesterday. A further 30% from there is what Motilal sees. And two key levers which have really started to unwind in this quarter is what Motilal seems to suggest. One is top line growth being extremely strong, and second is operational efficiency starting to kick through. With regard to top line, they believe the US lever is doing very well for the company. India, of course, continues to be robust, and therefore there's good support domestically as well. But the US business pickup and continued through H2 is the expectation for the company. The other piece is, of course, operating leverage at play. OPEX continues to remain steady, and therefore OPEX to revenue has come off quite sharply, especially where employee costs are concerned. And that's why your EBITDA margins have seen a surge. They expect that trend to continue. In fact, they've upped their EPS estimates 36% for FY25, 10% for FY26. The company has maintained its top line guidance, and despite that, this huge increase with regard to earnings estimates by Motilal, clearly signaling the bullishness on the stock.
Thanks for that.
Okay, so Avalon Tech, another 30% down, 1% in pre-open. I don't know if it has that much steam left. Avinash, quick view on Avalon?
I think from a longer term perspective, the EMS space in which it operates, I think clearly has very strong potential. And I think once, now with Donald Trump, getting back into as the president, I think you could obviously expect a lot of US exports getting fueled, and benefiting the company. They already have a US facility. So my sense is, I think from a medium to long term perspective, Tamanna, this definitely looks an interesting bet. But I think you need to give a time frame of at least next 12 to 18 months for numbers to get reflected.
Just want to talk about Indian hotels for a second. Strong set of numbers. We are seeing the stock doing well in the pre-open session, about 4% up. Sudeep, very good morning. How are you feeling about Indian hotels?
Indian hotels yesterday itself, while it was closing, it showed some kind of a positive momentum. And while it's opening 3% up, I feel it's opening closer to its previous highs, which were registered in the month of September. And the trend clearly is on the long side. If you see the weekly as well as the monthly charts, the larger structure shows that post some consolidation, the stock is ready to move up towards 750, 770 in the coming few weeks. So post this gap up, any dip towards 700 or slight cool off towards that zone 695, 700 should be used to go long. And I feel overall the support zone for this now could be closer to 680, which is in that consolidation band that the stock was in the last 6 to 7 sessions. Overall constructive buy on dips 680 should act as a stop loss, and on the upside 750, 770 levels could be seen in the next couple of weeks.
Deep, very quickly, you want to tell us what you feel about M&M? Again, very strong numbers from M&M and Lupin. Would those counters be good stocks to buy today?
Yeah, see, M&M, if we see in the last 6 to 7 sessions from the lows of 2650, 2670 thereabouts, the stock has made a triple bottom if we see from the month of August, September and October now. All these lows are in the zone of 2650 and this zone has been guarded. So with the kind of numbers that the stock has delivered, I feel the positivity could continue here, and 2850 could act as an important support now, and the stock could head up towards 3020 levels. And coming to Lupin, important levels here. See, in the last few days, we have seen some kind of a profit booking from higher levels in Lupin. But 2175, 2180 levels now need to cross on Lupin, and then only we could see some kind of a structural up move continuing in this counter. So 2190 is that important level that I am looking out for in Lupin for a structural long trade.
Okay. Some mid caps which have done well. I mean, we spoke about Avalon, etc. Look at the 3-day chart of Praveg. We marked this yesterday in the closing show as well, was very active. It's starting of the pre-open session, Praveg, with a couple of 2-3% gains. This is on the BSE, PRAVEG. Kush Bora, Praveg on the charts. 3 days on a trot, has done very well.
Very interesting move. It had practically, a fall off the cliff kind of a down, down move, and the recovery has actually been quite stellar in the last, as you said, 2 to 3 sessions on the back of good volumes and also crossing the falling trendline resistance. I won't be surprised, that the stock actually makes a move towards the 775 mark, which is the first resistance, also the 50-day moving average, and once that is taken out, you're looking at an 820. So this recovery could actually take it back to those, 800, 820 levels where it consolidated for some time before breaking down. On the downside, you can keep a stop loss close to the 690 mark.
Right, that's Praveg. The stock is up 3% in early trade, pre-open trade actually. A quick check on how Cummins India is doing. Remember, they've also reported numbers that beat street expectation. NRB bearings being the other few ones, 2% higher. So these are stocks that you want to keep on your radar this morning on back of earnings that have beaten street expectations. Avinash, from everything that you saw, NRB is up 7% in pre-open trade. So this actually, you know what, let's talk about this. Avinash, you want to give us a fundamental view on NRB bearings? It's a small company, but very solid numbers. So maybe you can tell us what you think if the stock looks like a good buy, and then I can get a technical view from Sudeep as well.
No, I think NRB definitely looks interesting because, Samira, I think, the biggest plus point for the company is that it's got a very large exposure on the two-wheeler segment. And I think the two-wheeler market has been doing quite well. And most importantly, it's a well-managed company, has been supplying to most of the OEM players for a very long time. And I think the bearing market is a very well-structured, supply-driven market. So clearly, I think, they've got marquee customers. Most importantly, volumes have gone up significantly now in the last 1 to 2 quarters. And I think somebody who's got a longer term view can definitely look at accumulating the stock. Although one point which goes against the stock is that the stock is thinly traded, not high volumes on this counter. But yes, from a delivery point of view, definitely around 275, 280 would be good levels to enter. And I think clearly, we could expect at least a 18-20% upside, considering the fact that, they are large players in the two-wheeler market, and two-wheeler volumes in the current financial year are going to be extremely robust. So that helps them, as new models get launched, existing models volumes go up. So obviously, OEM players like NRB who supply to them would obviously benefit.
Okay, very quickly. Now I'm going to make it a rapid fire. Sudeep, to you. NRB bearings and your top call. 20 seconds. Okay, Sudeep is missing it. Kush, I'll ask you. NRB bearing, Kush, and your top call for the morning.
So the top call is FSL, targets 390 and 400 and a stop loss at 370. NRB bearings. After the gap up, you might want to perhaps hold up that purchase.
Okay, so after the gap up, hold on to the purchase of NRB bearings. On First Source, or FSL, is Kush Bora's top call for this morning. Here's how the markets are starting off this Friday morning. Are we in the green? Yes, okay, bobbing between the red and the green. Let's put it that way. Prompt came a Samina, no. But Nifty Bank about 0.17% lower. Nifty IT is the interesting one. Let's see, because it kind of revved up a little bit towards close and in the green for now. So not bad a start for the IT space, thwarting some of the negatives of the bank Nifty, but banks of course hold center stage. Mid caps and small caps very quickly, flat for both of those. Okay, let's get the heat map up on the screen. I wonder if IT stocks are right at the top where they are. Infi, Techem, both of them doing well. Wipro. Then Mahindra and Mahindra, results reaction. Yesterday was absolutely flat, by the way, after results. Maybe a brokerage call reaction, if you will, but nothing dramatic, just about 0.25%. But aside of that, not too much. HDFC Bank in the green, but a lot of red, really. Reddy's, RIL, BPCL, ICICI Bank, Maruti. Well, that sums up. It's just all over the place. A lot of red, nothing too dramatic, and which is why it's unlike yesterday. We don't have a Hindalco and a Trent thankfully today in terms of percentage losers, and which is why just about 0.3%. But somewhere on the show today, by the way, we need to talk about Reliance. The big boy for the last few days has really been struggling on the upside, more down days than up days. Need to figure out what's happening here, but more red than green, but nothing alarming, Tamanna.
Nothing alarming, but nothing too positive either. I mean, it's almost as if markets are looking for the next direction, and that kind of confidence not coming in, and that's clear from the Nifty as well. But let's pull up the sectoral indices heat map for a second before we get to specifically once more what the mid cap and small cap are doing. Yeah, Nifty IT is that outlier in a market like this. 0.5% up is looking good. Metals struggling there one way or the other. What is really down? The CPSE, which is the public sector companies, oil and gas. Look at what's happening to BPCL. Between RIL and BPCL, the energy index dragging down. Nifty Realty having a bad day as well. Market breadth clearly weak, and Bank Nifty not contributing at all. Results in focus as far as stock-specific news is concerned. So let's see what some of those counters are doing. Let's look at Lupin. Let's look at RVNL. Let's look at Astral and Ircon. Lupin, decent set of numbers actually, but stock is 1% down. RVNL, we told you, was a bad set of numbers. We marked it as a thumbs down, 6% down on that stock. Astral this morning also looking fairly weak, and they were a bad set of numbers. So was Ircon. Ircon and RVNL, the biggest hits, about 6% down on both those counters. Indian Hotels, Imami are the other two that we want to look at. Indian Hotels actually good set of numbers, stock about 2% up, so was Imami. M&M consolidated numbers were pretty decent, but stock is about 0.5% down at open. Cummins, good numbers, brokerage upgrades as well. What's happening with Cummins? Completely flat. Difficult for stocks to really get an up move this morning, frankly. Avalon Tech, the other one, after a 20% run up, again a brokerage upgrade, well, at least 5% up right now. And remember, they had a good set of numbers as well. ITI is the other one that I want to quickly look at. ITI had an order win and was on our radar this morning, 6% up on the stock. Cochin Shipyard has missed estimates on all fronts. What's happened with the Cochin Shipyard, we'll just wait and see, because results weren't great, about 4.5% down. So specific pockets of activity, but overall breadth fairly negative, Samina, this morning.
The markets are trading lower. So yesterday was a day when they outperformed the benchmark. This time around, they are trading worse than the benchmark. So 24,107, mid cap, small cap down about 0.5%. And surprising, what is disappointing is that some of the quarter earnings that were good, so Cummins case in point, which Tamanna highlighted, very strong set of numbers, but the markets don't seem to be rewarding it the way we would have expected on any other morning. In fact, it's trading lower despite reporting numbers that were much better than what the street was expecting. And I think it's a similar setup for Lupin as well. If you can get Lupin up on the screen, it should be helpful to see how they are being rewarded. See, they're not looking good despite earnings being a clear beat on pretty much every single parameter. Well, what we have moving though, you've got ITI, good numbers, L1, all that means that the stock is trading firm. 6% up move on ITI is what we have. NRP bearings, that's where the action is. Good earnings, markets seem pleased. Well, they were as good as some other companies, you may argue, but this one is up 10% in market open. So very, very solid up move on that stock. Inox India is up 5%. Indian Hotels, which has already been highlighted. TBO Tech is up 3%. Nalco is not doing too badly. Aditya Birla Fashion numbers were actually disappointing. Their losses have expanded in this quarter, but despite that, the stock is trading higher by nearly 2%. Procter & Gamble reported numbers early this week. Counters looking good. Apollo Hospital continues with its upward journey after a sharp up move yesterday, is higher this morning as well. We already mentioned Rail Vikas, but Great Eastern Shipping, GE Shipping, on back of numbers is down 7%. Ircon International trading lower. Torrent Powers, Chennai Petroleum, Balrampur Chini, even fertilizer counters are looking soft this morning. So that's what we have. It's not an ideal morning. You will see, in fact, can I quickly get Vari Energies as well? Yesterday was the first day the stock corrected after a very sharp up move since its listing. After an 8% cut, it's down another 4% as we see it. So, tough morning. There's no real opportunity. But Sudeep, have you spotted anything in the first 5 minutes? The opening is not gone as I think the bulls would have liked. Even good earnings are not getting rewarded in early trade.
Yeah, see, I feel stocks such as CAMS or CDSL, they are still holding out. And specifically coming to CAMS, the stock in the last few sessions has steadily inched up from 4,400 to closer to 4,700. And I feel till the time this 20-day exponential moving average of 45.70, which it has guarded a lot of times. Now, till this holds, the stock could head up higher, closer to 48.50, 4900. And this being a quality stock, I feel can be added on dips in case the market even turns more volatile.
Avinash, just want to get a take from you on RIL right now, deepening in the red, nearly 2% down here. What in your view are the key concerns? What would you do if you own the stock?
I think in the very near term, Tamanna, I think earning triggers are lacking, and I think in terms of the value unlocking kind of initiatives, also I think markets are not looking at least anything happening in the very near term, both for the telecom and the retail business. I think markets were fairly disappointed with the numbers presented by the company. Hopefully, I think the second half should be better than the first half, and I think at least levels of 1200 or maybe 1150 should be maintained. This is a stock where I think you could possibly expect a surprise very soon. I would not be surprised at around 1100, 1150 odd level. There could be good buying, and I think this is a company where you need to have a lot of patience and conviction. Lot of value in the company, provided you have at least a 12 to 18 month time frame. So I think we have been telling our investors to actually accumulate the stock with a 2-year time frame. Whenever the stock underperforms, that's a good opportunity to buy the stock, because whenever the stock starts performing, it performs exactly opposite to what the market does. So I think good long-term portfolio entry at this point of time, provided you got a long-term kind of time frame.
RIL important to highlight this morning because it's contributing nearly a 40-point fall to the Nifty. If you pull up the Nifty contributors, it's RIL which is hurting, and you're seeing a bit of a slide there now, deepening to % down. Kush, you want to come in on RIL, and then of course, what would you do with the Nifty this morning?
So on RIL, the 1270, 1275 support zone should start acting up now. If that doesn't, then you're looking at a fall towards the levels that, Avinash mentioned, perhaps even 1150, kind of levels. I know the gap is quite a bit, but that's where the meaningful support comes in. So I believe around these levels there could be some sort of meaningful support that comes in, and RIL could steady the ship for at least the near term. The medium term outlook is still a little bearish on RIL. Now, as far as Nifty goes, I think it's time to at least partially book profits on those shorts that we discussed this morning. 24,000 is a support zone. If you look at the monthly option setup, then even there you haven't seen any kind of shake up on the put side. So I think that should act up. Usually what you see is after the BTST trade is over, in this case it would have been an STBT, considering the kind of move we saw yesterday on the Nifty, even that has been sold into. So not a bad idea to book partially right now and hold the rest of the short quantity for targets of 24,000. But that's where I think for once, all shorts should be covered, because until that is breached, you might not see further downside, and we've seen that being respected in the past 10 or 15 days.
This is on the Nifty?
On the Nifty.
So at 2481, you're not shorting?
No, you can't go short because the risk-reward ratio is not
So again, it's a no
favorable.
trade zone. Just very quickly, taking a cue from IT, Infi, Tech Mahindra and Wipro are trading, and HCL Tech has also turned positive. TCS is the only one that is still looking a little confused. I'm just literally, it's a good trading call, you think, TCS, because it's still on the edge of turning higher?
TCS, again, the moves have not been sustainable. What I prefer, from the pack is still perhaps the like of, HCL Tech, even Infosys for that matter. HCL Tech, if you see, has been trading above all of its, key averages, even though there is a bit of a resistance, but there is still very clear outperformance on this one. TCS makes a good trade from a risk-reward perspective. The only thing is that it's not able to find its feet, despite the kind of moves we saw 2 days ago. So perhaps, you might want to consider TCS from a medium-term perspective. Trading bounce, I'm still positive on Persistent. It was a call that we had this morning, despite the kind of things, that the market is doing, the stock is still about almost about 1% up. So that's where you want to be in the IT space, and among the large cap names, HCL Tech.
Sudeep, one topic for you and any view on Apollo Hospitals. Apollo Hospitals climbing up the charts this morning on what is looking like a pretty tough day.
Apollo Hospital posted those good numbers yesterday. It's getting follow-up buying also. I feel it's more than a buying. The kind of breakout that is there on the weekly charts. This stock till the time it holds 73.50 on the downside could head up further up to 77.50 and 7800 also in the next couple of weeks. I guess this is a good trade to hold on to if someone has bought, or on dips also, it would be worth entering this stock rather than any other stock where we could see more volatility. And I go with Kush. I feel HCL Tech could outperform from here. Even Infosys from lower levels is finding buyers. So I feel both HCL Tech and Infosys look good from a positional perspective from the current levels.
All right, thank you so much, Sudeep. Thank you, Kush and Avinash, for joining us today. We'll focus on earnings for a bit in an exclusive conversation on a company that has been very closely tracked. We're talking about J&K Bank. This quarter was a flattish growth despite having a healthy loan-to-deposit ratio. We caught up with the chairman and MD, Baldev Prakash, on the quarter gone by. Listen in.
Q2, as far as business is concerned, yes, it was little subdued. But in all other parameters, we have done fantastically well.
Right.
The growth in deposits has been around 10%, advances also around 10%.
Right.
But there were some reasons for this because of the subdued growth in business. One was relating to actually the elections. First, the Lok Sabha elections came, and then the assembly elections also happened.
Right.
So both these elections, our people remained quite busy in the process, entire process. Similarly, the customers were also a little bit because of the model code of conduct.
Right.
So, that around 5-6 months have gone in these activities, but that is past us now.
Right.
We have a popular government, and the business is doing well. I'm sure that whatever shortfall is there in the first half year will be met well in the second half year.
So where do you intend to grow full year? Is it mid-teens? Is it 20%? What can we expect from FY25 and thereafter? Maybe the FY26 and 27 being more normalized years, what can we expect then?
So we have given our guidance of mid-teen growth in advances.
Yes.
And around 12% growth in deposits.
Right.
And we are maintaining that guidance, and we are confident that we will be able to meet our guidance both in deposit advances as well as in the quality of assets also.
Got your point. So advances to grow faster at a faster rate than deposits, and therefore margins likely to get better.
Yes.
Of course, rate cuts may see some temporary fall in margins, but overall, where do you expect margins to be at? 4.2, 4.3%?
So we are maintaining the margins above 3.9, around 3.86 to 3.9. This time we are around 3.9.
Correct.
And our guidance is between 3.75 to 3.85.
Right.
And
but that is current, sir. So
going forward also, when we have the good LDR, we are definitely looking for the good opportunities where we should be able to maintain the margins in the upper band of our guidance.
Got it. So, sir, also with regard to growth, you're guiding for mid-teens. Just talk us through where that growth is going to come from. Is it going to be predominantly J&K where you're going to be focusing? Is it the larger country because you're opening branches all over the place? I've been watching that quietly. So just talk us through some of those trends.
So, of course, 70% of my portfolio is retail portfolio, and retail is mainly coming from the local territory of Jammu and Kashmir and Ladakh. That will continue to be in this range, but the rest of the country, we are mainly focused on the corporate growth. And now that corporate growth is supported by the home loan growth also. Because home loans, a lot of processes we have changed, and we are now confident that we can scale up the home loan portfolio.
Okay.
That we have already started doing it.
Okay, so, and this is rest of the country as well? You're
rest
doing
of
home
the
loan.
country as well as the local also.
Got
so
it.
Home loan will be entire country. Corporate will be rest of India mainly. Retail will be J&K. I think we have very well calibrated and defined strategy.
Understood. Okay, so very interesting. where are you sourcing your clients from for home loans? Of course, deposits likely one of the sources from where you're getting clients, and therefore is that one of the ways in which you're sourcing clients for home loans?
So actually it is both the retail individual customers as well as the corporate customers through the corporate salary package. So we have a lot of salary accounts, and those salaried customers, whenever they need car, home or education, the first port of call is J&K Bank.
Right.
And we also keep telling them that this is something, new campaign has come, please avail this opportunity. So like that we are getting the home loans and other retail businesses through these customers also. And then parallelly now we are aggressively going for appointment of DSAs. So through that channel also, lot of home loans are being sourced. Over and above, we have the specified marketing teams. Those are the permanent people, staff. They are also doing their job.
And any specific geography that you're targeting for home loans, especially because corporate can be a corporate sitting out of Calcutta and you providing the loan, so that shouldn't be a problem. But any specific geography you're targeting for home loan?
Home loan, of course, we want to remain the market leader in our home territories, both J&K and Ladakh. There we want to maintain the share, which we are rather improve it. But the focus has now shifted to the territories like Gurgaon, Pune, Bangalore, Mumbai, etc. So here also we are looking, and we are seeing that good response is coming. The scheme is good, the teams are ready. I think we have prepared the ground first, then we have started this business.
And what's the yield on some of these home loans, if you can tell us?
So on an average, around 8% is the interest rate.
Okay.
So around 8.5% on an average, because it depends upon the CIBIL score of the customer.
Of course.
So sometime it could be 9%, sometime it could be even less than 8%. But on an average, you can see that around 8% is the average return on home loans.
Understood. It's interesting because it's a totally new segment for you. So you're currently sitting on a book size of around 1 lakh crore where your loans are concerned.
Yeah.
In 3 years from now, what do you believe the home loan component will be? You'll grow at 15% roughly, which is 1.5 lakh crore is where you'll be at roughly.
Yeah.
What will be the home loan component of your portfolio?
So if you see my last year growth in home loan, it was about 20%. So this year also we are, though the first half has not been great for us, but we are definitely growing around 16-17% in home loan even this year. We want to maintain this tempo of around 16-17%. Trying to bring it around 20%, but definitely around 16-17% is our target.
Got it. So great perspective on the loans front. I want to switch focus to the deposits. What's the strategy there?
Yeah.
Is it going to be J&K focused deposits? You're opening branches all over. Is there a specific target geography you're looking at? And how are you differentiating if all over India is your strategy?
Yeah. So both territories are important for us as far as liabilities is concerned. In fact, if you see my opening of new branches in the rest of the country, the main focus is to mobilize the deposits. Because deposits, the customers still want to see the brick and mortar branch, want to interact with you, want to take some financial advice, then only they commit the deposits to you. So that we understand it and we are doing it accordingly. We are getting good response as far as the rest of India is concerned. My home territory, actually we are the first preference for the customers of J&K and Ladakh.
Right.
And there's a lot of investment in getting, that type of loyalty, which we have done over the years. And that investment is paying rich dividend even today, and it will continue paying the rich dividend in future also. Our responsibility is that we must continue serving the customer the best possible manner, coming up to their expectations, and see that the interest rates and other facilities are at par or better than the industry players. And the expectations of the customers are met in a time-bound manner, a regular connect with the customer centricity. I think these are the few things which are the basics, but remains very, very relevant as far as the liabilities is concerned.
No, absolutely. I want to understand, therefore, your cost of funds. They moved up. Is the differentiator rates for you? How are you standing out?
So,
how is a J&K bank competing with a peer bank in a tier 1 city like Mumbai?
Again, two responses to your question. As far as my home territory is concerned, service, loyalty, connect is the main differentiator.
Got it.
When we are talking about a city like Mumbai or any metro city, besides the service, it is the interest rate also.
Got it.
So here I have to be better in both aspects. There I have to be actually giving the interest rate at least at par with the market, but excelling in the service and connect with my customers.
Well, that's the manager of J&K Bank talking about the outlook. The markets in the meantime are pretty much at the day's high point, so we are swinging between gains and losses, but it's a 300-point recovery from the day's low in literally the first 15 minutes of opening. But of course, one stock that technically has also seen so much action, fundamentally the news flow has been positive, earnings have been solid, is the M&M. We have first up Puneet, who's joining by with a quick link on the uptick and the strong earnings trajectory that we've seen on M&M. Puneet, over to you. It's been a strong quarter. I think they seem to be firing from all cylinders right now.
Well, definitely, Samina, it was a strong quarter, and also in context of other peers as well. So definitely a 13% revenue growth reported by the company. EBITDA was also up about 30% compared to the same time last year, with margins coming in at roughly about 14.2%. Net profit also gaining 13% in this particular quarter as well. Now, when you look at the volume guidance, volume in this particular quarter was very strong. The passenger vehicle volumes have grown by 18% in this particular quarter, with the farm equipment also showing 3 to 4% growth, a very slower industry growth in the farm equipment space. Now, when you look at the guidance, the company has maintained its mid to high teens guidance, with inventory also way below the 30-day period is what the company has said in its media briefing as well yesterday. When you look at the standalone revenue and the segmental performance, the automotive revenue grew by roughly about 15% in this particular quarter, coming at roughly 21,750 odd crores, with farm equipment business being largely flat in terms of revenue, but the farm equipment margins have grown by 90 basis points in this particular quarter. The automotive margins also grew by 140 basis points to come in at roughly about 9% in this particular quarter, and farm equipment at 13.6%. Finally, just to end this link, a brokerage call, Citi has maintained, a buy on Mahindra & Mahindra. Target price is 3,520 rupees per share, and they've said that, while near-term margin might be under pressure because of, new launches by the company, they are increasing their revenue as well as EBITDA estimates going into H2 as well. They're also incorporating the shares, the listed share prices of the subsidiaries as well. Nuvama as well has a target price of 3,700 at 27% upside from the previous close, and they've said that the result was a beat on realizations, and they said that a strong demand was led by models such as the 3XO. They also are estimating a revenue growth of about 15 to 18% over the next 2 to 3 years.
That, and we have with us Amarjyoti Barua, President and Group CFO of Mahindra Group, in the studios. Mr. Barua, it's always good having you in the studios with us, and interestingly, quarter on quarter, you deliver more than the street has expected. Revenues have grown. Segment-wise, the auto segment has seen improved margins, and for your farm equipment sector, you've improved your guidance. So, I mean, those are three big, solid positives, but let's take them one at a time. Tell me about why and how has the quarter been good? Margins have improved. What's working for you? Because some of your peers seem to be struggling at this stage.
I think in general, the execution across all the segments has been very strong. Even in the first half, when the industry was up only 0.6% in farm, the farm segment has gained share, and it's done it without giving away price. So I think that strength of each of the segments where they are operating. Auto, of course, has been standout for most of the last year and this year as well. And then if you look at some of the other businesses, they've started firing as well. So both Mahindra Finance and TechM year over year did quite much better than what we had expected. Yeah. So I think that all of that has given a lot of momentum to the group.
Let's take it one at a time, and with the auto segment, of course, we'll take it farm and auto separately. Yeah. You did indicate that it's been looking good for the last few quarters. Now you've gone out and raised your guidance from 5 to 6 to 7%. What makes you so much more constructive now than you were, may say, previous quarter or previous few quarters? And do you feel the momentum of growth will continue because you've maintained guidance apart from on-farm equipment, which is an increase, everywhere else as well?
Yeah, so the big driver for farm always is monsoons reservoir. The MSPs have been quite supportive for farmers, and they've only continued to be supportive. So I think the two external factors which were the reason why we were guarded was seeing what the trend of monsoons is going to be and how the reservoir levels are going to be.
Fair for us to assume that second half of the year growth will be in the range of 13 to 14%, because if you've got to balance that out.
Yes.
Oh,
so that's the guidance we gave, 13 to 15%,
Yes.
Which is why, based on that 0.6% in the first half, we believe that
Raise it
6
up.
to 7% is where the industry is
And
going to be.
market share is at about, what, 42.5 in the second quarter? Do you expect that to move up as well and gradually go up?
So actually, October was really good for farm. It's taken up the share to above 43%.
Wow.
So I think what's going to happen is there is going to be more competitive intensity in the second half as people do come out of, now some of the traction is back in the market, so everybody is going to go more aggressive. We hope to maintain that share, but there's always a little bit of plus and minus that will have to contend with.
Mr. Barua, congrats, of course, on a very good set of numbers. The question is two-pronged. One, a lot of notes seem to suggest that after a really long time, tractors are entering an up cycle, which could last between 12 to 18 months. Is your sense the same? Is that the typical length? And are we at the start of an up cycle?
So why we believe that last year was going to be tough is because the reservoir levels had dropped quite a bit. Now with the reservoir levels being high, and then also seeing some of the output come out in the mandis, we talked about it yesterday, 20% increase in October in mandi kind of inflows. That indicates that the farmer is feeling good about what's happening. And that's always, we've seen is a 12 to 18 month momentum. That's why we're feeling good that this should carry into F26.
So we are at the start and it could last for at least 5 quarters, right?
Yes.
And this is great for M&M Financial too, because typically that tends to do well when the rural side is doing well.
That is correct.
Okay. The second one that I have is, again, auto-based. Because farms are entering an upcycle, but you're doing very well on the PV side. Somehow the country is obsessed with SUVs. Even if cars are not doing well, SUVs are. Are you more confident on an upswing in farm equipment driving the growth for the next 4 quarters, or will PVs still hold, or in your case SUVs will still hold center stage?
I think both are going to be quite strong in our view, and the reason for that is the SUV story was all about production being a constraint. Now with that constraint out of the picture and us having 54,000 production capacity, we should be in a good spot for the second half as well, because we have very strong launches. The Thar Roxx has done very well. The 3XO continues to do well. And then the 700 is back as well.
You're looking at EVs too.
Well, there is some stress in the Bolero market, for example, right? So it's not all roses.
All well.
Yeah.
Then we'd have to worry.
No, I think the momentum of these 4 brands will carry, and Scorpio N has continued to be just such a strong workhorse, right? So I think that's what gives us confidence that auto will also. But farm, of course, should be better than what it was last year, second half, right?
Also, let's talk about this rural-urban debate, right? And it's we've seen this across your sector, across consumption, FMCG. Rural is doing okay and giving the much needed support to the consumption space as well. But urban has started faltering. Do you feel the same? Are you feeling the same heat where rural is picking up for reasons that you mentioned? Urban is still not at its best. And going into the second half of the year, how do you see the dynamic shape up?
See, we are still not seeing like a sustained downturn in urban, okay? We did see July and August being challenging.
But is that only because of the nature of the product?
I think it's more than that, because the festive won't have been good across the board if it was really,
so
if
was
urban was
festive
really
amazing this quarter for you?
Festive was actually very strong. very strong for us, and as we understand, for the industry in general. And that should give some indication that July and August were an aberration. But even if it isn't, and even if there is an urban slowdown, I think we feel good that because the premium segment continues, and that's what we were talking about before, that the premium segment is still it's doing very well. Spot. And because we are positioned there, we believe that we are still in a good spot in the urban market.
Just a quick one. In fact, we've talked to a lot of players like yourself, and what we understood from them is that the festive season has also worked out because of those heavy discounts going out. Is that the case with you as well, or have you managed to sell at a good price without aggressively undercutting price?
We haven't given anything outside of the three-door for very different reason. The rocks became such a big hit that the three-door, of course, a lot of people who had purchased the three-door basically said, I want to wait for the 5. So we had to, just for that. But other than that, no other models have we given any kind of major discounts during the festive. So it's actually been a good run without discounts.
Can I just squeeze in a question there? I mean,
yes.
And again, just trying to understand, I'm not asking you to comment on specific competitors, but we saw this happening wherein a new entrant priced their electric vehicle at circa 10 lakh rupees, and it forced an existing one which was priced much higher to cut down quite drastically on their numbers. Now, we're seeing the price war in electric SUVs, if you will, and available across price points. And if that continues when you make newer launches, will it force you to price your launches more competitively than you would have otherwise hoped for, and will there squeeze margins?
So I think in a mature segment, you could say that. In what is a market to be developed, I still believe strongly that you don't have to get into a price war to spur demand, right? I think it would indicate that your product, which we are hoping is differentiated, hasn't really hit the mark with the consumer more than price. Because most of the segments we are going to be entering on the EV side are not necessarily the price conscious consumer, right? It's really the premium segment. So there we are hoping it's all about features, it's about differentiated experience, it's not about price. And if we are having to fight on price, then we are doing something wrong in our positioning.
Just talking about looking ahead and everything that is lined up for you and the company, and of course, as a group CFO, this becomes even more pertaining. Higher launch and marketing expenses are anticipated in the coming up quarter. Could you share some details on what we should be expecting? How is that going to impact operational efficiency? Just give us a sense so we know what to expect going into the next half.
Sure. So the third quarter is where we've got both the ROCs and the EV launches all coming and those are big launches, right? The EVs are a global launch. Thar ROCs was a huge launch across the country. So those are expenses, nothing out of the ordinary from what we have incurred with prior launches, so I would expect some bips of pressure on auto margins, but as I've said yesterday as well, it's going to be a temporary thing. It's not something that is a fundamental operating leverage, pressure.
Okay, just broadening the bucket a little bit. Now, you've been consistently talking about I'm forgetting the terminology, but the newer gems or the
growth gems.
Yeah, growth gems, right? So growth gems is one aspect. TechM is doing what it is doing, and hopefully, if the US spend moves up, that spurs that too. I heard yesterday that you guys, I think Dr. Anisha was saying that the hotels business in the European side is probably encountering a bit of an issue, but otherwise most other things are doing okay.
Yes.
So what leads growth for the console entity? Is it tractors and PVs majorly because that's such a bulwark of your overall numbers, or some of the others also stand up and make their presence felt in the overall console numbers?
Okay. So we had 10% revenue growth in console. 15% of that was auto, 12% was services, and farm was flat. So it's actually services which has contributed as much as auto this past quarter, and we expect that to continue. And when you think about services, TechM is of course one factor, but Mahindra Finance also has grown revenue, and the growth gems collectively also have grown revenue. Within the growth gems, the logistics business and Accelo have been outliers. They've done really well year over year, and we expect that momentum will only carry forward to the other growth gems for the rest of the year. For example, in our aero business, we've had some big orders come in, and so we expect some growth towards the end of this year going into next year. So in general, the services part of our business is starting to fire in a meaningful way, which is what our strategy was aimed at.
Well, let's spend some time talking about Tech Mahindra, because I think it's been a good quarter. Most people have generally seemed quite impressed by how well it's worked out for the company. Margin expansion is currently underway. I mean, your target is what, 15% in FY27. Given what we've seen in the US only literally 48 hours ago, do you feel there's an upside risk to doing better than what was initially anticipated maybe a week ago? Because like we discussed, with Republican at the center, it's great for business. And you elaborated too on this, saying manufacturing, comms are sectors that may do well. What does that mean for Tech M in the next 1 to 2 years?
So I hope it is upside for us. Yes, we would love it, because the business is heavily focused on operating efficiency right now. So revenue can only give us positive momentum, right, on the operating efficiency that comes in. If you look at where TechChem is focused on today, BFSI and manufacturing are two big focus areas. We are already very strong in telecom. So hopefully, if telecom recovers, that can help us. But on BFSI, we've continued to see,
earnings have been
so it's really manufacturing that needs to fire in a meaningful way. Hopefully, with some of the focus that is going to be put in the US around manufacturing strength and getting competitiveness into the domestic industry, that should only mean more discretionary spend, which in turn should help IT services.
So have you gone back to the drawing room with your team and said, look, change of strategy. Now that the Republicans are there, maybe we want to reduce focus on BFSI. Maybe we want to not talk so much about cost optimization. We now talk discretionary. We now talk manufacturing. Is that what's happening, or it's all status quo as we see it?
No, because the way the business is organized is already organized by sectors. So it is very heavily focused on manufacturing today. So I think the idea here is going to be have enough people out there who are in touch with the customer, so when the spend happens, they are
So we know key beneficiary of Trump for the street potentially could be Tech Mahindra.
Well,
you know, we've been trying to find, in fact, Neeraj and we've been talking about this, we've been trying to, everyone says tech positive, but we don't really know what tech positive, right? So this is great perspective. It's manufacturing. Companies that have a big contribution coming from manufacturing stand to gain a little bit more than the ones that have BFSI.
And then we talked about energy when we were just talking before. Energy should also benefit, especially in the US, and that's a sector which has been languishing for some time now. So I think both of those should be net positive for the tech sector.
I have one final question, and that is on capex per se, India Inc., if not just M&M. The government also in the first 6 months has spent subpar. Now, when does not sectoral private capex, but overall broad animal spirits in private capex come up? Does the government still need to do the heavy lifting for the next few months in the global uncertain period, or would private capex come back? And what is M&M's thought on capacity expansion and capex money being put up?
See, we've said this. Private sector has to contribute to the nation's, to building the nation, and capex is a big part of it. And if we believe the India growth story, we have to invest today to capitalize on that. So that's why, from a group standpoint, we have already earmarked significant spend over the next 2-3 years, and we'll only keep that going.
Is it starting though, Mr. Barua? Is the question, is this starting in a meaningful way, or will it start maybe with a 6-month lag? I mean, there could be idiosyncratic factors. In your case, utilizations may not be as high, what have you. So just trying to understand that.
From the group standpoint, it's already underway. If you look at our cash flow this time, you'll see our capex is almost doubled versus the same time last year, right? So I think we do believe that we are going to see capex increase, not just for our sector, but across.
So, Barua, just one final question here. We've already talked about everything that seems to be working for the group. Is there any vertical, any business that you're a little circumspect on as we go into the second half of the year?
I think we've got to do better internationally. That's been a drag on the farm sector for some time now. A lot of it was market, but some of it is also our own performance in certain markets, so we'll have to keep doing better there. That's one area that we are putting a lot of focus on in the second half.
So pick up on that would also mean just better numbers coming in from their stable.
Well, it is a drag today, so yes, if we can fix some of it, then it should help. It should help.
Great. Mr. Barua, appreciate you being here, and to you and yours, a very great new Samvat.
Thank you so much.
Yeah,
Thanks for having
such
me.
a pleasure to talk to you. Thank you very much.
All right. Thank you.
And with that, it's a wrap on this leg of India Markets Open. Thanks so much for tuning in, viewers. When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with...
Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. Astral is in focus today after the company came out with the second quarter numbers, wherein the numbers were below estimates. But can the things change with polymer prices reviving and the government capex coming through? Hiranand Savlani spoke to us. Here are the slice of that conversation.
It was below the estimation. But at the same time, you have to understand how the industry is faring. If you see the industry was degrown by 5%. Again, that we are doing fairly well. Our first half performance is fantastic. Looking to the industry, I'm telling you, it is 6.5% kind of volume growth. And top line was eroded mainly because of the polymer price were downward trend. In this quarter alone, if you see the PVC price down by 13.5%. So now when the polymer price on the downward side, there are two effects. One is the inventory losses. Secondly, the top line get eroded. And the third thing is, you in the initial remarks said that the dealer and distributor will do the destocking. Because no street people have a confidence why they will hold the inventory when the prices are continuously going down. So because of that also the demand pressure come. Now with this initiation of the anti-dumping duty by the government of India in this week, 4% price rise have taken place within a 1 week time. So now we are expecting there will be a rush to restock that thing. So we are expecting that the demand should come back. Otherwise, I don't see any challenge to this industry for the growth.
Okay. So let's split it between value and volume. What were volume numbers like? I mean, did monsoon, we also hear that the government capex has been fairly soft in the first 6 months. Did all of that play on the volumes for the first half and the second quarter? And has the festive demand started off on a positive note?
So you rightly said that the infra spending of the government was low. So because of that, the demand was very low. Secondly, monsoon was extended this time. So many part of the countries were under the flood. So that also affected the demand. But I think all these things are now past. Now post Diwali, we don't see next 5 months there is any challenge. So now from here on, we are expecting the construction activity should boost up. And that is going to convert into the number for the industry and Astral per se. So we are of the view that these kind of things happen in the industry whenever some particular region things get affected. But when you look at the number on a 12-month basis, I don't think any challenge. The biggest achievement during this last 6 months was that Astral had done a lot of new initiatives. That is very important for the future growth. Whatever happened in the past, that was the history. But now what in this last 6 months Astral has done, which can give the extra revenue to the Astral. The number one thing, our Hyderabad plant has started commissioning. So that is going to give us the extra revenue in the southern region. Secondly, paint, we started launch of Astral brand in the state of Karnataka and Maharashtra. In Gujarat. Then last quarter we started in Maharashtra. This quarter we are going to start in Rajasthan. So we are going to stop with this 4 states initially. So that is going to give us the revenue in the coming time. Thirdly, bathware business has started performing very well. We also launched few new items into that also. So first half, the bathware performance was 75 crore. Of course, the base is still very low. So our expectation graph is very high. So in the coming time, we are seeing a very good response from the bathware, because once your brand will be known in the market, then only you can expect the top line to grow very fast. So we are expecting that to grow very fast. And the best part of the bathware, that so far we have not received any complaint from any of the consumer. So that is giving us more confidence. Thirdly, we have taken an initiative of New Bharat in adhesive. So we are now moving into the rural India, into the adhesive side. So that is also going to give us the extra revenue. As far as our overseas operations are concerned, our UK subsidiary has developed a few products which is successfully completed in the R&D. Now trial productions are going on, and hopefully we will be able to launch it commercially in the market by December. And that product has a very high potential, and we are going to bring that product into the India also, and that will be first time in the country for this kind of adhesive. So that is also going to help us. And lastly but not least, the OPVC. We already started, I can say, the trial production of OPVC. We have given the pipe for the ISI approval, because ISI is must in OPVC. We are expecting that by next month we should get the ISI. So by December end, we will be able to launch. So you'll see the revenue from Q4 onward. So these all steps we have taken in the last 6 months. Though little bit demand was affected, that's fine. But we are confident that because of all these steps, the coming period, we are going to deliver the excellent number.
Got it. So one is capacities having been there. The other is demand. What gives you the confidence about demand, Mr. Savlani?
So demand, I think normally whenever there is an extra monsoon or maybe some spending curtailed by the government, so that is going to affect the demand. But that cannot be a permanent. If you see the government collection, the revenue front, whether it's a GST number, whether it's a direct tax number, or whether you can consider the other side, all are robust. So there is no reason that the government is not going to spend money in the coming time. Temporary, what is the reason? I don't know what is the reason why it's a little bit slow, but it is going to come back ultimately. They have to spend the money into the capex.
Got it. Okay, now, Mr. Savlani, on the growth numbers, right? You've cut the growth guidance from 15% to a band of 10 to 15%. But because your H1 volume growth was, I think, about 6.5%, if my numbers are wrong, if I'm not wrong, that implies that you have to grow out about 15% over the next 5 months to hit, or 13% over a 6-month period, right? To hit the lower end of the volume growth guidance. You think that will happen? And is that a volume and value mixed growth, or do you believe you will be able to clock in about 13% volume growth itself?
So right now we are considering we will be hit the volume. Value will be now better because now the polymers have started inching up. Just 4% price rise had taken place, and another we are expecting 4 to 6% yet to come in the coming time. So value will also come back. The reason why we are saying that infra spending will come back, that is what the assumption we have taken. Second, we are of the view that the restocking will start from November onward. In last couple of days, you will be surprised to know the kind of order flow we have got it in the company, because now we are going to increase the price. So because of that, dealer and distributors are going to complete the inventory, whatever cash flow they have. So that is giving us the confidence that this will come back. There is no reason that dealer and distributor will remain permanently with the lean inventory. The reason why I'm saying that now it's a seasonal one going to start. If you see the coming season, plumbing season normally start from October to March will be the peak. But unfortunately this time festive season was there, monsoon was there, so October was not that great. But now from November onward, everybody has to keep, otherwise they will be missing the business, because now it's peak season. So these are the assumptions we have taken while considering this growth. And we are of the view that we should not be wrong in our assessment.
Got it. So plus destocking has happened. So in some sense, some restocking might happen too. But so you reckon 13% odd volume growth to meet the lower end is distinctly possible. Can you do more? Is it possible that you hit a number for the whole year between 10 and 15%, and therefore could you actually do maybe 16, 17% volume growth as well?
So it is possible, provided the restocking take place in a very aggressive manner. If the price rise will be 10% kind of level, then there are high probability that the dealer and distributor will be overbought. And in that case, we will be able to even hit more than 10% also, or we even 15% can also be possible. And last year also, if you see, Niraj, we have guided the street 15% volume growth. And then midway, we revised our guidance to 20%. And we completed the year with the 25% kind of growth. So if the demand will be there in the system, Astral is not going to be stacked back. We are ready. We have the capacity ready with us. We have infrastructure ready with us. Now we have a new plants ready. So I think all this going to definitely help for the growth. Only thing is that we are waiting for the things to settle down, and which we are seeing in last 2-3 days. We are seeing that the demand has already started picking up.
Okay. My final question is on margins, Mr. Savlani. Where do you expect margins to stabilize?
And the best part of this half is that whatever we have guided, we have delivered in margin. We have communicated that we will be between 16 to 18% kind of range in plumbing business. We have delivered that thing. We are at close to about 18%. So we are on the higher end. Now with the inventory gain, and that can come in the second half, there are probability that it can be even more also. Okay. So that side, we don't see any problem. Our India operation margins, we have guided 14 to 16% adhesive. We have delivered 15.5% kind of margin. So we are very well within the range. The only little challenge which we have faced, that is in the paint and the UK operation. There I already explained to you that in both the businesses, we have taken the judicious call that we are going to expand the paint business. So that's why temporary hit we have to take. So, but that base is very low. So it's not going to affect the company overall basis. Similarly, UK, when the Q4, this new product launch will be there. And now in US also, our 12 new product launch will be there. There are high probability that we will again back to the double-digit margin in the UK. Right now, minus 2% is there. So we are forecasting double-digit margin next year. So I am confident that with this all initiative which management has taken, little bit delay is there, but we are confident that now everything is done. So hopefully things will start turning up, and our overall margin guidance of 15 to 16%, we are definitely going to deliver, and even today also we are able to deliver.
Well, That's Astral for you, and confident about volume growth and polymer prices or PVC prices upcycle of sorts that he spoke about, which may lead to restocking. Let's see. Expensive stock hasn't done too much in the recent past, but the numbers too have been disappointing. Maybe H2 turns out better. The management is very confident of that. Well, somebody and you know, both Astral and M&M that we spoke to earlier spoke about some telltale signs of corporate capex also coming back or starting to come back. Somebody who looks at this and more very closely joins me right now on the show. Absolute delight to talk to Kenneth Andrade, founder and CIO of Old Bridge Mutual Fund. Kenneth, so good having you. Thanks for taking the time out and being with us, and I hope all is well.
All is well, Neeraj. Thank you very much. Hope you had a nice festive season.
Yeah, it was fantastic, Kenneth, must say, to say the least. Hopefully it's fantastic in terms of earnings which come out in the December quarter, because Kenneth, this quarter left a bit to be wanting. I mean, in some sense, the earnings season has not been that great, and coupled with all that's happening on rates, etc., it's not been a happy hunting ground for the markets. How have you looked at the landscape?
Well, when you stepped out of 2024, and if you look at corporate earnings at that point in time, you were at an all-time high margin, you were at an all-time high sales growth, you were all-time low leverage. Everything was like optimal as far as corporate India's profit and loss account and balance sheet was concerned. Now, to have a repeat of something like that again in 2025, I think we were all waiting for a breather, and that breather has come. I mean, corporate, while there's a lot of activity happening on the ground, I think it will be a little bit slow for 2025 and maybe some part of 2026 going forward, because the percentage growth may not be very high, but volume growth will be available. So take a breather for the rest of the year. I think what has happened in the first half, we have a little bit of a repeat in the second half. We've also come out of multiple events. I think the election was one of the big ones that were there. And towards the fag end of this, and you had, of course, a very good monsoon, which has slowed down stuff a bit. So the next quarter should be okay, and the March quarter, at least, it's the biggest quarter for corporate India in that season. So we should make up some part of the gain out there, but I wouldn't expect significant amount of surprises coming in at that for the rest of 2025.
So, Kenneth, sorry, before I get to global, so am I understanding this correctly, that you believe that there is not, or there won't be too much of uptick in activity in the second half too? Take a breather, bide your time, maybe things change in FY26.
Yes. So things do take a pause when you have a general election. You will, I mean, the economic activity does does slow down. The order intakes, as you've seen, had slowed down, but now there are talks of all of this restarting all over again. So I think that's where we are. We had good monsoons, so which is why you're seeing a little vibrancy that's coming back into rural India. If that's followed up next year with another reasonable good monsoons and good commodity prices, that part of the economy should hold up. But it's going to be a volume game, not so much of a margin game in profitability, in earnings. So my sense is look at a lower band of earnings that India will go through in 2025 and 2026, somewhere closer to a low double digit or maybe a high single digit number that could come through over the next 2 years.
Over the next 2 years. So, sorry, you're talking about FY25 and 26.
Yeah, that's right.
FY25, 26. So high single digits or low double digits. Is that a recipe for bringing down the multiples as well, Kenneth? I mean, we've come off a little bit. So trading at what, 20, 21 times, give or take, or if the earnings are lower, then maybe higher in terms of multiples. But can P multiples come down further for Indian markets?
So the correlation of earning multiples, at least we've seen just one cycle in correlation of earning cycle to corporate balance sheets, is that when corporate India doesn't leverage, okay, price earning multiples tend to remain elevated.
Okay.
Right, and I don't see the corporate leverage coming back at least for a year or two. So to say that valuation risks exist, while they exist, we are at the top end of the band of valuations. To see a significant sell-off just because valuations are high, I may not subscribe to that thought.
Okay, okay, no, but what? Okay, so but if earnings growth comes off, even then you believe this 21 odd multiple will stay on, will sustain.
It will sustain. It will sustain. It will sustain simply because there is cash accumulation on balance sheets.
Got it. Okay. And can I, the other part of my question therefore is that at some point of time, if the private capex cycle, not sporadically in specific pockets, but broad private capex cycle does begin, it will drain some of the cash, it will bring in some leverage. But I've heard you now for the last 2 years or 3 years talk about how corporate India balance sheet is in pristine shape. I mean, the debt equity levels are great. So even if that worsens a little bit in lieu of capex, will that be considered a big negative for multiples, or you think it'll be digested?
The normal correlation is if net on corporate balance sheets increase, price earning multiples do tend to come off.
You see that happening?
No, I don't see that happening. Unfortunately, while we've been looking at corporate capex or expecting corporate capex to come back, it is not happening to the extent that any corporate or any investor should be actually worried about.
Okay.
Okay. So if I give an analogy of this to a very large sector which is very mature in India, and if you take IT services, okay, for mid single-digit growth levels, they tend to trade between 20 times earnings or between 17 times earnings to 23 times earnings. This is very close to their cash flow yield or even to their dividend yields of about 4%. Now that's a bottom that you will have to look at it from a valuation standpoint. So our common methodology of looking at valuations is price earning multiples. But if you look at this one large industry, because of its cash generation and its payout policies, it trades somewhere at a 4% cash flow yield, which is reasonably good. So that should be a floor for how you should look at valuations in today's perspective.
Got it. Okay. When 2 months may be too short a comparison, but when I look at some of the comparisons that I managed to do between what Old Bridge as a house did in October versus what they had in September, and just to get an indication of how you might be thinking. You made some investments or added some investments into a major steel maker, into a road construction company or a construction company, etc. Is the thesis behind some construction activity beginning, which leads to demand and order flows, or what is it?
So if I could reconstruct a little bit of our thought process as we've built into the fag end of 2024 calendar year. While these are isolated cases of metals and a contractor, a broader thought process is if you have to look for growth at reasonable valuations, because there's nothing that is cheap out there. You will have to look at franchises that are building or companies that are building franchises across the world. Okay. Now, why are our thought processes in alignment with something like that? Now, if you take any business that is there in India, look at the commentary that they're talking about, right? Everyone started focusing on what they call the export market, and that's and that is where I think if you have to get growth and a reasonable amount of growth, you would have to go outside the country to drive that. So India remains for all of these companies, India remains a very strong base for cash flows and profitability. But if you have to get that incremental amount of growth and maintain and start your capex cycle, you would have to start dominating some segments of industry which is more global facing. Okay, it's more global facing. So if you, I go back to the analogy of IT services, and if you look at those companies' cash flows, they're stupendous. I mean, even the fourth largest company in IT services does cash flows equivalent to probably within the top 10 of corporate India. right? So that's the linkages that India as an economy or corporates have to find with customers beyond the shores of their domestic market. Look at India for cash flows. Take those cash flows, invest in market shares that come from from the rest of the world, and continue to grow those franchises and become reasonably large. This is a developing this is an economy which is developing, and any economy that moves from a developing economy to a developed economy has to earn its has to cut its teeth by getting international market shares and going abroad. So I think that's where our focus is. So the one individual contractor, one individual steel company, those are businesses that are that exist on our portfolio, but they're isolated cases. But the broader structure is that how much of India is investing in growth capex, and how much of that capex is outbound in terms of sales, and how much of that is facing the global market. I think that's the way we will be constructing our thought process into say the end of this decade.
What's the overarching strength there? Is it IT services, chemicals, pharmaceuticals? Is that the bucket? Maybe auto ancillaries? I'm just trying to think at the top of my head.
So look at India's largest car company and look at the commentary. They do expect exports to be a large leg of the marketplace. You look at India's largest aviation business and look at the entire fleet expansion. It is all the international business. You look at pharmaceuticals, and we're having a patent peak coming up between 2025 to 2028. Very difficult to quantify which company is going to benefit out of all of this, but this is a significant opportunity that is sitting for all of these companies out there. So contract manufacturing, whether it is chemicals, whether it is pharmaceuticals, I think we set up one of the largest manufacturing bases in pharmaceuticals that is out there. So largest manufacturing bases out there. So it's a variety of industries. I don't think I can pick and choose. I mean, one of the recent commentary by one of the entire companies also said that exports is a focus area, and all incremental capex is going to address that part of the world. So that's where we come from, right? And that's how we're building it out. So if I look at our portfolio, and I had to say that how much of our total, how much of the basket of companies that we own have very strong dollar-denominated earnings, it would easily come up to about between 55 and 60% of our portfolio have dollar-denominated earnings, and I think that's where we think our strength would lie in this economy between now and the end of the decade.
And Kenneth, for the last 3-4 years, has said that if you're catering to India, you're catering to 3% of the world. Try and look at companies which cater to the remaining 97% as well. Kenneth, I have 2 minutes on the show. Just very quickly, so I'm maybe trying to focus on the remainder 40% because I've got the answer for the 60% of your portfolio. An exchange, an appliance distributor, a steel company, a gas distribution company, all of these, therefore, are the domestic-centric businesses that you're bullish on, because that's a set of additions that you've done in the month of October.
Yeah. So on the energy space, the things are very simple. There's an incremental amount of energy demand that is coming in because once the capex of all of these companies come through will exist. So it's just a value chain building out. If you look at a city like Bangalore, construction or real estate wouldn't exist if IT didn't exist. So it's a very model economy to say that exports are driven. Exports or the India economy, because of its low cost of supply of a talented pool, has created the entire infrastructure out there and created the real estate market out there. So we're all piecing it together to say that these are ancillaries of a much larger trend that is playing out. 3% of the economy is going to go to 5% of the global economy. What's going to build out in this 5% of the global economy? Who are going to be the derivatives, whether it's going to be a steel company, whether it's going to be the energy businesses? I think they'll all participate into it. In consumption, we just got to say that urban consumption will be the first one to rebound if all of this comes through. And that's the only space that we would want to be in, at least for a while.
Got it. Kenneth, lovely talking to you as always. Time has run out because I always wish for a longer conversation, but today we'll have to wrap it up. But thank you for your time, really appreciate, and look forward to talking to you maybe before the end of the year. Thanks for joining in today.
Sure, guys. Thank you very much. Have a great year.
You too. And that's Kenneth Andrade, founder and CIO at Old Bridge Mutual Fund. With that, it's a wrap on this leg of Talking Point. Thanks for tuning in.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters.
welcome. You're watching the F&O show. Over the next 30 minutes, we'll take you through trading ideas and, of course, also talk to managements of a few companies that we've got lined up for you. Well, it's an interesting Friday. The expectation was that the markets would look okay, and that's exactly what we're getting up to. We started the day off slightly lower, but have recovered quite well from the day's low point, with most of the Nifty counters now trading marginally higher. 24,185 is what we have on the index. We were positive at about 9:30, but sort of given up some gains from those levels a few minutes ago. Well, the breadth of the market's not too bad. Infi is your top gainer, up 2%, followed by Tech Mahindra, which is also up 2% in trade. Bajaj Auto not doing too badly. Apollo Hospitals gaining for the second straight day. HCL Tech, TCS, and in fact, barring TCS, all the Nifty IT companies are trading with gains of nearly 1.5%. All in all, it's a good morning, relatively better than what was expected. But Akam, what is the F&O action indicating? The 24,000 still very critical from what I understand.
It certainly looks like an important level to keep an eye on, considering we are, at the moment looking at marginal moves on the benchmark indices. I'm actually more interested in what's happening in the futures, part of things and how things are faring there. So we actually have an open interest decline of around 1% there, with very little change in, in the spot price. And when it comes to the Bank Nifty, again, let's pull that up as well and see how things are faring there. And the Bank Nifty, as well as the open interest, is also looking at very, very marginal moves coming in. Even if you consider something like the options market, the Nifty specifically at the moment, we continue to see a lot more writing around the 24,500 mark. And given on the lower end, of course, it's the 24,000 is where we are keeping an eye on. It does seem like 24,200, 300 is going to be that range around which we expect the Nifty to behave as a fulcrum. But for now, it's been a fairly quiet day, at least for the benchmarks. And again, it's a wait and watch on the broader markets, even though there is a lot that's going on the back of earnings.
Right, we have with us our guests, Bhavin Mehta and Amit Goel, both joining in with their technical calls this morning and, of course, strategies too. Bhavin, I'll start with you. The Nifty, of course, staged a recovery, then, of course, pull back. Today is a flat day of trade. Where do you think the bias is, and would you trade the Nifty at all?
Yeah, hi, good morning. So what we have observed over past couple of trading sessions is that we have a fairly strong support zone established around level of 23,800, 23,900 from a technical price perspective. While from the derivatives data, particularly from the option side, if you look at OI concentration for a monthly series, what we are looking at is that 24,000 put almost holds 2x the OI, which is at a 24,000 strike call, which clearly implies that participants are of the view that 24,000 remains a fairly strong support zone. And that is what we are observing over last couple of trading sessions, that 23,800, 24,000 kind of continues to attract good amount of buying interest. Now, having said that, as Agam has already pointed out, that we have fairly good amount of call OI written down around level of 24,200, 24,300 strike. So anticipating this range to kind of act as a supply. However, till the time we hold on to a level of 23,800, I am not ruling out a pullback rally towards level of 24,800 on upside in this particular case.
Right. Amit, what about you? How do you feel about the Nifty and Bank Nifty?
Yeah, hi, good morning, Samina, and thank you for having me. I concur with Bhavin, and I do believe that in Nifty, 23,800, 900, and 24,000 are good support levels. And till 23,800 is broken convincingly, I don't really see any fresh trend on the downside building up. I also feel that Bank Nifty, if you look at the futures, 52,000 is the fulcrum where we are going to be looking to expire this month, because I do see a lot of both call and put writing happening at that level, and that is where I also have planned a trade accordingly.
So let's talk about these trades then, Amit. What kind of option structure are you deploying here when it comes to the benchmark specifically?
Yeah, so the trade that I'm suggesting traders to consider is Iron Butterfly in Bank Nifty for the 27th of November expiry. There are about 20 odd days or trading sessions left in it. So there is enough theta to be gained, enough premiums to be sold. So the structure is very simple. We are looking to sell 52,000 call and put one lot of the 27th November expiry. But since this is just a short straddle and I do not want to have a unlimited risk or a naked strategy, we are also suggesting that we buy wings 1,000 points away. For on the put side, it is 51,000, and on the call side, it is 53,000. This trade, in this trade, I am going to be targeting about 3,500 rupees as profit, and the max risk on this trade also happens to be about 3,500. With 35,000 rupees as the margin, it's a fairly decent trade, and the logic behind that is simple. Bank Nifty is in a sideways mode, and there are enough modes on both the sides on support and resistances, with 52,000 seeming to be the pin where the market could expire. That's the reason why this sort of a non-directional strategy has been advised.
Well, let's talk stocks because I think there might be some more direction there. Bhavin, what are your trading ideas this morning? Where are you seeing some strength? I believe you've got 2 long calls.
Yeah. So what we are looking at is that these lab post the recent rejig of index, we have seen a very good amount of long aggression in this particular counter. Overall, if you look at the pharma as an index since July, we have seen the least drawdown for 2 sectoral indices in particular, which is IT and pharma. They continue to trade with a very good amount of strength and kind of outperform Nifty by a huge margin in over last 3 months. So overall structure for the indices continue to remain very strong. My sense is watch out for the constituent of pharma index. I am anticipating a strong move for majority of them, specifically after given that it has been consolidating for a long time. Now in this particular index, what we like currently is Divi's Lab remains a buy at current level of close to about 6,000 with a stop loss of 58.50, anticipating a move closer to 6,400 on upside. Second idea is Marico. Now, the entire FMCG space has witnessed a good amount of sell-off from the peak. In fact, something like FMCG moving lower by about 12%, we have not seen over a longer period of time frame. So in this, the constituent stocks, if you look at Marico, it had given a very strong breakout earlier. Currently quotes around level of 636, which remains a kind of contra buy for a potential target towards level of 660. Stop loss for the stock should be kept around level of 620.
Okay, all right. So there you have it. Those are picks coming in from Bhavin's point of view in terms of stocks. Amit, you've spoken about the Bank Nifty strategy, but any stocks on your radar this morning?
Yeah, I do have 2 picks. One is Wipro. It's a pure momentum pick, as well as Trent. So Wipro I am bullish and Trent I am bearish. So I'm giving you a mix of trades, a non-directional, a bullish and a bearish one. In Wipro, there has been a lot of pickup in IT momentum, and it continues. Even on my screener, in my technical screener, there is a breakout sort of a formation in Wipro, which is why I am suggesting that traders can consider a simple bull call spread, in which we will buy the 570 call 1 lot and sell the 580 call again 1 lot of the November series expiry. The max profit and loss on this trade is a clean 1:1 at about 7,500. But traders who are more circumspect could look at or target about 3,500 rupees as profit and rupee stop loss targets. Whereas in Trent, if I may continue, in Trent, after the results, the price movement has been very, very weak, and it continues. So again, this is a pure momentum on the downside, and I want to try and capture that momentum, which is why I'm suggesting that we consider a bear call spread, which is a credit spread. The reason I'm suggesting a credit spread in Trent is because the implied volatilities on account of the volatility and the price action has increased, because of which there is a lot of time value that I want to capture. Hence, I'm looking at selling the 6,300 call 1 lot and buy the hedge of 6,500 call. The max profit and loss on this trade works out to be about 10,000 on either side. But anybody who wants to trade this could consider about 5,000 rupees as a rupee target and a rupee stop loss. So these are the two trade recommendations.
Before we conclude this particular segment, just want to address TCS, Amit, and perhaps you can take this one up as well. TCS is the only IT company today which is not advancing with respect to the rest of the pack. Your overall view on this one, if you could just offer some sort of insight as to what's going on here.
Bhavin is taking that?
You can, Amit.
You want me to take it?
Yes, please.
Yeah, sure. Okay, so TCS has been taking support from 3,900 levels and has even on the weekly time frame, if you look from a positional perspective, it has given a bullish engulf sort of a formation. While it is not moving today, but then it has moved in the last couple of trading sessions and has clocked in handsome gains for this week. I would still want to go long in TCS because the overall turn in the trend looks fairly certain, with 4,000 rupees as a technical stop, and for targets of about 4,500 to 4,600.
Okay, Amit, thank you so much for joining us. In fact, Amit and Bhavin, thank you for joining us and taking us through your views on the markets. And of course, a lot of ideas being discussed right now. But we move on and talk about Borosil Renewables now. And we have Mr. Shrivar Kheruka, he's the vice chairman of the company, who joins us on the show. From what we understand is that authorities at the moment are considering duties and anti-dumping duties specifically when it comes to solar glass. Shrivar, good morning and thanks for taking the time out. Right now, it's just under a state of investigation, but if you could give me a better idea about how things could pan out here and what are the factors that are in fact playing out in favor of these duties coming back? Because from what I understand, we had those duties earlier, there was an end to that, and it does seem like the government is reconsidering it now.
Well, thanks for having me. As far as solar, the ecosystem is concerned, the government has very clearly mandated a national solar mission. As a part of the solar mission, there's a target, of many hundreds of gigawatts of solar energy installation in the country by 2030. And also, this also entails making a full solar manufacturing ecosystem, right from the raw material to the finished product. So solar glass is one of the key components of a solar photovoltaic module. And as such, it's a critical component to have manufactured in our country. So the problem has been that in the last few months, in fact years, China has made a very aggressive pricing which is below the cost of production and has been dumping products across the solar value chain, right from the finished product to all the ancillary components into India as well as many other countries across the world. And this is hurting the domestic manufacturing industry and also, therefore, impeding the overall goal of the national solar mission. As a result of this, the industry has been suffering substantial losses. And in order to, have a level playing field, we approached, the Director General Trade Remedies, and they have, done some preliminary investigations, and they've recommended provisional anti-dumping duty on the imports of solar glass from China and Vietnam.
Right.
Now, it is with the Ministry of Finance to sign off on this, and we hope that they will do so. But the government has been very proactive and has been helping the entire solar ecosystem, achieve a level playing field, which we are very happy with.
Right. Shrivar, just want to better understand, for the longest times, you guys have had a near monopoly when it comes to this specific, version of solar glass that you guys have been dealing with. But from what I understand is that there are several other players who are taking this up now, and perhaps they will have capacities on stream over the course of the next few quarters and perhaps the next few years. My question then is that, does that further strengthen the case for the government to, bring in these anti-dumping duties? And under those circumstances, I just want to lay of the land in terms of competitive scenario, what it could look like a few years down the line, and whether or not that does, in fact, increase the probability of the anti-dumping duty coming back.
So I'll just correct you. I would not say we are anywhere close to a near monopoly even in the past, because China has more than 98% of the world's capacity in almost all solar components. So if one company has 1% of overall world capacity, I would refrain from calling it a monopoly. But either way, I get your point. In India, we were the only manufacturers for some period of time. But the second point is there are already 6 solar glass manufacturers which have set up production in India, and there's another 2 in process of setting up a plant. So the local industry has more than one player now. Like I said, already 6 are manufacturing already as we speak, and another 2 are going to start production in the next few months. So therefore, the local capacity of the industry is more than sufficient to match the needs of the solar module players who have set up. So from a capacity perspective, I don't see any issue in servicing the needs. And of course, when there's an industry active with more than one player, the chance of getting, the government would be therefore looking at the industry as a whole, and which definitely should improve our probabilities of getting.
All right, fair point taken, Srivar. Thank you so much for joining us and giving us that much more clarity. Of course, we look forward to more updates from the government with respect to that particular decision coming in. But we should focus to Indian Hotels. My colleague Neeraj is talking to the management of the company, who's actually come up with a very strong quarter. We have Puneet Chhatwal, he's the MD here, and this is what he's saying. Listen in.
If you're doing 82% plus occupancy in Mumbai, you're doing very well. But if you're in late 70s, there is room for growth. So I think anything which is in metros like Delhi, Mumbai, Pune, Bangalore, which is between 76 to 84% occupancy, you're doing fine. And then you can always increase the rates. However, if you're lower than that number, then your ability to charge is not the same as would be if you're at a higher occupancy. So as we have reached very high level of occupancies, our ability to charge is good, and that is what is reflected in the performance of all the brands.
Lovely. Okay, so let's talk about, I heard you mention that you see many quarters of growth. Some of that comes in from the demand-supply mismatch continuing, right? Your call suggested demand grew 7% and supply grew 2%. Typically, it would be a 5-year cycle, Puneet. We're probably 2 years out into that cycle. You reckon this still continues for the next 3 years at the very least?
At the very least, next 3 years. But honestly speaking, I believe that this is going to continue till India reaches 100 years, India at 2047. If all the predictions that have been made about India, if they are true, in terms of India growing to 3rd largest economy, India remaining the fastest growing major economy in the world, then we are just at the beginning of the cycle, and we have to forget the past. Our past is number 13, number 15, number 20 economy, and maybe very luxury driven segment. Today, luxury segment in hospitality is less than 10% of the total room supply. So albeit the fact that a lot of profitability is still driven by luxury, the landscape is changing much faster than I think most of the analysts and the pundits have been able to capture. And I think Indian Hotels has done that very smartly. Several years ago, when we reimagined our brandscape, we communicated our strategy and kept delivering on it quarter on quarter, year on year basis. And despite a reset during COVID, we came back with a very strong performance, and we don't see anything changing on that front.
What Puneet Chhatwal is telling me that the India in the next few years, from a hotel industry perspective and otherwise, will look materially different from the past. What Puneet Chhatwal is also telling me is that a traditionally cyclical industry is turning into a structurally growth industry for many years to come.
Absolutely, that is, I can reconfirm what you've said is what I actually meant, which is very good news for the country. That's also the statement very recently given by the Cabinet Minister for Tourism. And this sector, together with the entire tourism ecosystem, the tourism sector is bound to contribute very positively towards the GDP of the country and towards direct and indirect employment in the country. And with Indian Hotels being the largest player in this ecosystem, we hope to contribute our share towards the growth of the nation.
Okay. Now, Puneet, from the con call, you said a few things that I wanted to probe a bit. ARR growth, would the average room revenue growth be the key driver because occupancies are already high, or would it be the F&B and the non-ARR part of the business which will contribute equally, if not more, to growth? What will be the key driving force? Everything will do well, but what would take center stage?
Both, because we are a very strong traditional wedding destination of the world, and with the request of wed in India. First it was make in India, then it was, heal in India, then it is wed in India. I think it is a very important part of the DNA or of the cultural fabric of the nation. So non-rooms contributed through F&B and through new MICE opportunities that we have, with the addition of infrastructural investments like Bharat Mandapam or Yashobhumi in Delhi, or the number of airports that are getting added, or the Geo in Mumbai, the high-speed trains, etc., is all contributing in the ease of travel and in the experiential business of enjoying a holiday and at the same time creating destinations that can hold events up to 1,000, 2,000, 3,000 people, which was not possible before. That's why my personal prediction is that there is a fundamental shift because of the infrastructure, because of the GDP growth in the nation, because of the growth in the disposable income that this sector stands to benefit from, with limited supply getting added in the very short term.
Wow. And Puneet, you are adding supply, because I read about a number of 25 hotels in FY25. Is that higher than what you've traditionally done? And what did the numbers look like, let's say, in the next 18 months, let's say for FY26 as well?
So we have communicated a bit over 2 hotels opening per month, and I think this will soon accelerate to 2.5 and further on to 3, because we have almost 120 hotels in our pipeline. And pipeline means these are signed, legally valid agreements in different stages of development, and does not include any opportunities of conversions like we've just now done Claridge's. This kind of hits the pipeline and is immediately goes out of the pipeline and is open and is running. So we hope to open 25 this year, as you rightly said, 30 next year, and going to 36 the year after.
Okay. And while all of this is happening, your operational metrics stay high at the levels that they are, because March 23 or FY23, FY24, trailing 12 months, you're knocking or clocking over 30% EBITDA margins consistently. Is that the new normal?
Absolutely, that is the new normal, because of the change in our brandscape, because of the change in our business model, because having the right mix between capital light and capital heavy contracts, and in the way we are opening hotels, and in terms of putting the right distribution strategies in place. Especially, we are beginning to see a lot of benefit coming from the loyalty platform of Tata Neu. Our loyalty-driven revenue is increasing by leaps and bounds. So I think that, or it is homestays or home delivery or humanization of Ginger, the growth in the Ginger brand, at the same time, the renovations and asset management in our traditional strongholds like the Taj, is really helping us drive both the top line as well as the margins.
Okay. Puneet, one final question. There's a fair degree of, I'm sure the internals and the cash flows, etc., are looking healthy, but there's a fair degree of expansion that you're talking about as well, as it may be asset light too. But still, would you need, or would you believe, would you need a capital raise of any sorts? Because a stock price is a currency, and the currency is doing very well for you currently. Would you take advantage to raise some cash or capital via equity route, or not needed at all?
See, it all depends on the opportunity. I think where we sit today, and also as has been proven in the recent past, if we needed capital, I think the investors would be very happy to invest with us. Our track record of the last 6-7 years is phenomenal, and we have done very well, and we have walked the talk. And all the strategies that we have communicated, we have achieved those targets ahead of time. So last one was Avan 2025, and now we are going to announce for the next 5 years on the 19th of this month is the Capital Market Day, where we will unveil or unfold our strategy for the next 5 years. And, it's a good positioning to be in. We have our own internal accruals from a company which used to have high debt. We are today net zero debt and are having healthy cash reserves. So we have our own internal accruals, and should need be for any major step that we had to take, which can only happen on the Indian subcontinent. We are not going out of India and trying to acquire anything. On the contrary, it will stay on the capital light model, and I believe that we would be able to do so. And today, we always had the ability, but today we have the trust and the confidence of our investors, of our promoters, to take calculated, right strategic moves.
Wishing you all the best for all of this and more. Puneet Chatwal, some key takeaways, including the fact that India is the wedding destination of the world, and the fact that you were talking about this industry now being a structural growth industry as opposed to being a cyclical industry. Thank you so much for those.
Thank you for having me.
The pleasure was ours. And viewers, with that, it's a wrap on the F&O show. Thanks so much for tuning in.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines.
Hello and welcome. This is the Small and Mid Cap Show. I am Agam Vakil and with me is Puneet Javeri. Well, we're here to talk to you about a handful of companies, especially on the back of earnings. But before that, I'm going to take a quick look at the markets. For now, as far as the Nifty is concerned, well, it's a day where we are looking at marginal weakness. It does seem like there's no short covering coming through for, at least at this point in time. The Nifty is just a tad lower than the 24,200 mark, and the Bank Nifty specifically is also looking at a cut of around 0.5%. A handful of names in the Bank Nifty weighing down on the benchmark indices, and along with that, in terms of key contributors too, naturally, it is a handful of these banks which are actually just weighing down on not only the Bank Nifty but the Nifty too. Case in point, ICICI Bank and SBI. But Trent continues its downward movement along with Reliance Industries as one of the top contributors for the decline. On the other hand, HDFC Bank is trying to stabilize the index to a certain extent along with Infosys and M&M, but not as much traction towards the positive side. Even in terms of the broader markets, there is, largely moves which are in tandem with the benchmarks. The mid-cap index is down around 0.6%. And, of course, the small-cap index is also down around 0.6%. That's as far as the markets are concerned. Let's take stock of Somani Ceramics. The earnings have come through. If we can also pull up how it's reacted to earnings, it's down around 1.5%, but it's also recovered quite a bit from its day's lows. To talk to us about the quarter gone by, as well as what we can expect going forward, we have Abhishek Somani, the Managing Director and CEO of the company. Abhishek, good morning and thanks for taking the time out.
Morning.
Overall, we've seen growth in terms of your revenues, but also a contraction in your margins. I'd reckon if you could just tell us about the quarter gone by and what factors do you attribute to, firstly, the top line and secondly, your operating profits?
So firstly, we've hardly got any growth. It's been a flattish growth. I mean, it's just been 1.5%. So as a result, the capacity utilization has been very low. It's at consolidated capacity utilization is at 77%. And therefore the margins, because at the end of the day, at a lower capacity, all costs are already incurred and therefore the margins are lower. However, we've been able to maintain the same margins as the last quarter, considering that the capacity utilization is lower, which means that we have been able to do some good stuff around cost and also some value addition, which we've done. So value added mix has gone up. And as a result, we've been able to maintain margins. Going forward, obviously, it's going to be a better H2 than the H1. H1, we had the first quarter, which anyway was kind of a washout. And then the H2 again, the quarter two was hit by incessant rains across India. And the building material industry, especially the ancillaries, do get hit when it's rain building materials, buildings come to a standstill. So we are looking at a much, much better quarter three and a much better quarter four. With that, the margins will also go up because the capacity utilization obviously will become better.
Mr. Somani, good morning, sir, and thank you so much for joining us today. I just wanted to take this point forward. You mentioned because capacity utilization has fallen, so hence the gross margins have also fallen by about a couple of percentage points in this particular quarter. I wanted to just understand what has been the competitive intensity in Q2. There has been some reports claiming that the unorganized players have tried to take some share of the other players, the listed players as well. Just talk us through that, and you are expecting a better performance in H2. Talk us through some of the factors that will determine that, and anything on exports as well, if you can comment as well.
So all the capacity which was added in the last 12 to 24 months in the Morbi region, which is where the cluster is of ceramic tile industry, a large part of that was, in fact, most of it was for the export market. And export, as you all know, has been very muted because of the high freight rates owing to the geopolitical situation and the two wars happening. As a result, that particular material was trying to be dumped into India. I must say there's not been any substantial amount of dumping which has happened in terms of volume. So they haven't been able to take market share from us as far as volume is concerned. In fact, they're probably negative. But there have been disruptions in terms of pricing. So there's been pressure on pricing, and therefore we also had a pressure on pricing of about 0.5% to 1% where we did extra discounting in the 2 quarters. But they haven't been able to take any market share because demand per se has been slow. It's not like the building industry will pick up an unorganized tile in the midst of rain. So the same issues persist as far as they are concerned as in terms of volume. So in terms of volume, not much change. In fact, the organized players have done better than the unorganized players in the domestic market as far as volume is concerned. But margins come into play because pricing comes under a little bit of pressure.
Now you did mention about the current outlook. So you have cut your guidance as well in the second for this particular year, about 5 to 6% from low double digit earlier. But you are anticipating EBITDA margin improvement. So will it be safe to assume that going forward, what will be the strategy in terms, because you've taken market share or maintained market share while letting go of some margins, but you are anticipating H2 to have better demand as well and better margins as well. Talk us through what could be the strategy going into H2 and with do you see lesser competition from the unorganized players as well in H2?
So we don't export too much, but I believe that the freight rates have come off a little bit, which means that by December, materials should start moving into Europe and to the US and all the first world countries from India, other than the other countries which we're anyway supplying to, Middle East, Far East, etc. So that little more offtake will happen on the export side. Otherwise, as far as India is concerned, it's a clear 5 months going forward. So capacity utilization obviously will be much better. And we're looking at a double-digit growth or a high single-digit growth in the H2. And considering we're at about 1% growth, therefore we have cut the guidance to about 5-6%, which is a very practical and doable target. And with that, margins would improve considerably from where we are today. So at least 1% to maybe 2%, depending on how much we are able to do the value addition mix better, and also how we are able to utilize capacity better. But having said that, the balance sheet is absolutely under control and under check. So we've done fairly well when it comes to balance sheet.
Right. And Abhishek, fair to assume that own manufacturing and tires JVs will be essentially segments which will drive growth in the second half?
Yes, correct. So in the first half, the own manufacturing came off a little bit and trading went up, but that would reverse. The minute I say capacity utilization going up, that means it would be for our own manufacturing and our own JVs where we have between 50 and 80% in most of them.
Not just one question on the Max plant. Now we've seen about 36% utilization in H1.
Yeah.
Is the confidence of gaining margins of about 100 to 150 basis points in H2 coming from higher utilization of the Max plant, because it's a bit lower than your 50% target of utilization? Is that a safe assumption to make, Mr. Somani?
No, first of all, our utilizations overall on a console level, we've always been at 80, 82 plus. It's been the first time.
So specifically for the Max plant, Mr. Somani, sorry to interrupt, just for the Max plant specifically.
No, I'm coming to that. So you said it's 50%. We've never had a 50% capacity utilization level. But as far as Max is concerned, we want to scale it up slowly. It is a material which is of high value added. And obviously in a muted market, dealers tend to buy the more moving material, the more cheaper material. So Max, we are hoping that the capacity utilization will be anywhere between 45 and 50% in Q3, and then going forward, it would only keep moving up. But that is only one small portion of the entire margin game. It's not that Max only moves the needle, if that's what you're asking.
Now, Anand, just one question I wanted to ask on the market specifically, because have you seen that South has been a little weaker than estimates? Just wanted to get your understanding on the same. Are you seeing some pressure in Q2 specifically? Have you seen some pressure in the South market? And because Morbi directly supplies to the South, so just wanted to understand a bit on what is your outlook. How has Q3 been, and anything on H2 that you can see in that particular market right now?
You're right. Morbi does pump in a lot more material in the South. But it's not that South has been weaker than any other market. It's kind of pretty much similar across India. So there is not any particular market which is done worse or better. I haven't seen specifically any huge disruptions between the south and the north. Obviously, we are a more larger brand in the north, but having said that, even north has been extremely weak.
I'm assuming that capacity utilization will improve in the second half. Even taking that into consideration, I'm assuming that you guys don't have any very large capex plans on the anvil. And under those circumstances, can we also assume that we won't have any big changes in the balance sheet going forward?
Yeah, absolutely correct. The three angles of the balance sheet, the receivables and the stock, both of them are under check. And very correct, and capacity utilization have more than enough capacity going forward. So there is no expansion plan for the foreseeable future as of
now. Just another question, as you mentioned briefly in this interview as well, that, you've been able to keep and maintain your balance sheet very well. Your net working capital days are also at 13 days. Would it be safe to assume that going into H2 as well, that is the kind of level that you will be able to maintain?
Yeah, absolutely. More or less there. We don't want to compromise on the balance sheet for sure.
Well, Mr. Sawhney, thank you so much for joining us today here on NDTV Profit. We look forward to our next conversation and wish you the best for Q3. And season greetings to you and everybody at Somani Ceramics.
As likewise, season's greetings to everyone. Thank you.
Okay, well, that's the management of Somani Ceramics telling us about what we can expect going into the next couple of quarters. But, and of course, Puneet, thank you for also helping us with this conversation. But I'm going to go back to taking a check at the broader markets, because I want to actually talk a little bit more about the mid-cap and the small-cap indices. So what's happening right now is a little bit of an underperformance there, but it is within these indices is where we're actually looking at some very, very large moves. So let's pull up the big movers on the BSE 500 or the NSE 500, and you'll get a better picture of the kind of movement that we're seeing. So you have Motilal Oswal, which is actually leading the charts, at least as far as the BSE 500 is concerned. It's up around 9%. ITI, of course, it's on the back of, one more order coming through. Page Industries is reacting to earnings, as is the case for Indian Hotels, and rightly so, because Indian Hotels specifically has had a very, very solid quarter coming through. And in fact, the management is suggesting that things could improve further from here on. Tejas Networks, Sterlite Technologies, among others, which are also advancing in trade. Moving on, we also have GE Shipping, along with something like GMR Infra, a GMM Pfaudler, Petronet LNG and Chambal Fertilizers also up and about in trade and, declining in trade. GMM Pfaudler has actually had a weak quarter, but we also know that GMM Pfaudler, it's been a little bit of a trend over the past few quarters where, the numbers have not really met expectations when it comes to the street. Chambal Fertilizers actually looking at about a profit taking at the moment. That's what's happening. RVNL, the Rail Vikas Nigam, is the other one where a lot of expectations were built in before the union budget presentation in July. Since then, it has fallen and it continues to fall, and now we know for good reason. And this is despite the fact that there have been plenty of feelers towards the positive end with respect to the kind of order flows that they're going through at the moment. Kochi Shipyard is the other very curious one. Of course, this one has also fallen considerably off its lifetime high made about a few months ago, and it continues to come off by quite an extent, and Ircon International. The other one, again, surprisingly weak numbers coming in. So a lot of these PSUs, which used to be in focus about two or 3 months ago, are now coming under pressure and are buckling under that particular pressure on account of weak earnings. So all in all, this is what we have with respect to how things are faring when it comes to the markets. But of course, joining me now is also Mahima. Mahima, how are you looking at the trends in the markets and anything else that stands out for you here?
Right. I mean, specifically to point out, as you rightly mentioned, Page Industries has been doing very well. Some other counters, which came out with their earnings, if you can pull up Emami and see how Emami is doing in trade today. While FMCG companies have seen pressure on their margins because of the inflationary costs, the pressure on costs due to inflation, this company has managed to, kind of see an uptick in their margins by almost 100 basis points. The stock, however, is not doing much in trade today, today, but decent set of numbers for Emami. Other counter in focus is Eureka Forbes, and Eureka Forbes, the revenue is up around 13%, EBITDA is up 44%, margins have improved by 227 basis points, and net profit has also gone up by 84%. And to discuss as to how the quarter has gone by and how overall FY25 is shaping up for the company, we're joined by Mr. Gaurav Khandelwal, who's the Chief Finance Officer of Eureka Forbes, who joins us now. Welcome to the show, Gaurav. My first question to you is your sense of the entire quarter as to how it has gone by and overall how FY25 is shaping up.
Thank you, Mahima. I think if I look at the quarter, I think from our perspective, it has been a continuation of the trends that we've seen in our business for the last 4 quarters now. We've now had 4 successive quarters of double-digit growth in our continuing business. And this quarter, in some ways, is a step up in that momentum that we've had. It's been a combination of several things. One key part has been our innovation portfolio. That is something that has been doing very well. The second part has been that there is an early festive season that has come in that has also helped. And we are seeing signs of early category tailwinds that are there. So it's been a combination of these things coming together. But I think at a big picture level, from our perspective, it is a continuation of a sustained performance that has been there for the last 4 quarters.
Right. Gaurav, just want to understand, because of the fact that we've seen an expansion in margins, first question is that are these margins sustainable? And secondly, is this more of a function of pricing, or is this also a function of your improved operating leverage on account of your better revenues?
Sure. Our profitability has been driven largely by operating leverage. We've not taken up any pricing decision. The benefit that we are seeing on the realization is largely a function of our premiumization of our portfolio. So our innovations are coming at a higher price point and they're getting very good consumer traction, and that is helping on the realization front. But profitability is being driven largely by operating leverage. I think one important part that we are thinking in terms of how we plan going ahead. If you look at the phase 2 of our strategy that we are currently in, one key priority that we've set out for ourselves is to drive growth investments. We now have the portfolio, we now have the distribution bandwidth, we now have the partnerships, and everything coming together would mean that we put in the right investments. And that is something that will continue to be an area of focus. In quarter 1, our NSP spends were up 21%. In this particular quarter, they are up 40%. This is something that we see translating into growth. Having said that, we'll equally be very mindful of driving profitability as well. So even in this particular quarter, despite a 40% increase in ANSP spends, we were able to expand our EBITDA margins by 105 basis points year on year. So it will be a combination of making sure that we put in the right investments, sustain our growth, and at the same time making sure that we continue to drive a year-on-year profitability improvement. As far as the year is concerned, we don't give out a guidance, but I think from a transformation perspective, our key priority that we've set out for ourselves is sustained growth, driving year-on-year profitability improvements, and driving service transformation. We are a business where we serve billions of customers. Our service levels are at a near all-time high, and our focus will be to keep driving that as well.
Gaurav, you mentioned that your service levels are at all-time high. Your revenue is divided into 2 parts. One is your product selling and the other is the services part. First of all, I want to understand the breakup right now in terms of revenue and what is the mix that you're expecting going forward. Because from what I understand is that margins in the service business will be higher than that of product selling. So what's the mix that you're aiming at? And then do you see your margins improving going forward?
Sure. Our service business is roughly 1/3 of our total business. And as you can imagine, like any other service business, the margins in the service business would always be higher. In terms of how we plan ahead, I think the critical part is to, see where we stand as a category. We are a category where the water purifier penetration is 6%. The vacuum cleaner penetration is 1%. So there is enough and more headroom that lies within these particular categories to drive growth. So this will be an area of focus for us. Equally, service is an opportunity where I think even if I look at our current portfolio, there are far many more of our own consumers who are not availing of our AMC. So that also gives us a headroom for growth. Directionally, the way we are thinking about it is to make sure that we drive both the levers of growth, and hence on a structural basis, whether there will be a significant shift in the profile of the business, that is unlikely.
All right. Gaurav, I also want to understand that there's some build-up in terms of your trade receivables and inventories, which is kind of weighed on the cash generation overall. So what's playing out there?
Yeah. I'll start off with trade receivables. The key part is that, there was an onset of an early festive season. And in this particular quarter, we've done well on e-com channels. We've done well on the modern trade side. And these, as you can imagine, come with standard credit terms. So that is something which is getting reflected as our trade receivables. But these are standard payment terms, and they start getting unbound between October and November. So the cash flow will start improving from October and November. Again, as far as inventory is concerned, large parts of that is linked to festive build-up. One critical thing that we wanted to ensure was, with the premium portfolio that we have, we wanted to make sure that we were fully prepared to capitalize on the festive opportunity. But as we go ahead, we'll see these unwinding. Even if you look at the past data, if I look at the average of the last 2 years, you will always find us that our half-one cash flow generation is on the lower side, because this is a phenomena which happens every year. And then half to the cash flow start improving. So on a full year basis, we'll see the cash flow generation coming through.
We just wanted to understand, we're looking at your net debt levels. They have, increased to a certain extent as compared to last quarter. Firstly, is this a function of your short-term requirements for running the business? And secondly, I'm looking at your net cash, which also is standing at around 120 crores, if I'm not mistaken. What are the plans with respect to this particular aspect?
I just want to clarify that number is actually a net surplus, So it's a net surplus number that is there, which has increased. So we were in a situation a couple of years back where we had a debt of 200 crores, but we've generated enough cash during this period. So the number that you end up seeing is the net surplus that we have. And that is something which has gone up vis-a-vis March levels, between the last 6 months.
Okay. All right. Gaurav, we leave it at that. Thank you so much for joining us and taking us through the quarter gone by, as well as what we can expect going forward. It's certainly been a very strong quarter for Eureka Forbes, and I'm sure investors will continue to keep an eye on this one. But from there on, we move on to another FMCG major, Emami, which is also, in fact, will come up with its earnings. And for that, we have with us Anuj Bansali. He's the CEO of Finance at the company. Mr. Bansali, good morning and thanks for joining in. Mr. Bansali, last quarter we spoke to you. You said that rural had picked up quite a bit, but it was to a certain extent outpacing urban. How are things panning out now, and what kind of effect has it had on your top line and consequently your operating profits?
Yeah, so the operating environment has been challenging. In fact, it's not only just rural or urban kind of a thing. The inflation led by the food prices, unemployment rates, though the urban demand has decelerated, rural has picked up, in fact. And the erratic seasons, all this has impacted the overall consumer offtakes for the quarter, and in fact for all the peers and everyone. And within this environment, we have been able to deliver a good, reasonable growth of around 3%, and that is also led by a volume growth of around 2% or so. So, reasonably good performance from our side.
Mr. Bansali, you've managed to see an uptick in your margins, while other FMCG companies have seen pressure in terms of raw material pricing. I just want to understand that what has led to this uptick in margin, and how are the key raw material price trends that you're observing?
Yeah, so if you look at the gross margins have improved by 60 basis points for the quarter. And in fact, for the half year also, the margins have improved by 140 basis points. So while the few of the costs have increased, but we have been able to manage them in a much better way. In fact, the crude had been still benign. Few of the materials, kind of gold, silver, or kesar, or some Ayurvedic materials, the prices had increased. But for other polymers and packing materials, we managed it very, very, very strategically, and the prices to that extent had been low for us, and we do not foresee going forward also any pressure from the materials prices. And also, another significant thing, when we saw that the revenues are not growing to the extent which we had expected, the market, because the market sentiment has been relatively low. So we conserved on A&P as well. So though for the first half, the A&P has been at around 18% or so, but for the quarter, some reduction had happened in the A&P as well. And so despite 3% revenue growth, the EBITDA growth has been 7% and PAT growth is at almost 19%. So we are very mindful of growth in terms of revenue and profit both.
Right, Mr. Bhansali, as the winter season kicks in, your expectations from this particular season, the kind of products that you guys are working with right now, any new launches, if you could shed more light here?
Yeah, so we are very optimistic on the winter products. In fact, winter has started setting in, and like the summer, which had been very strong, and it impacted our offtakes in the first quarter, and so we could demonstrate a good growth of almost double-digit 10% growth in the first quarter. We expect winter also to be good, and we expect almost the same kind of a growth in the second half. So for the full year, we still expect high single-digit kind of a growth for the full year on an annualized basis.
Okay, Mr. Bhansali, we leave it at that. Thank you for joining us and taking us through the quarter gone by. That's, of course, Emami's CEO of Finance for you, telling us about the winter season that could potentially play out quite positively for the company. But on that note, we are out of time on this edition of the Small and Mid Cap Show. Lots more lined up on the other side. Keep watching NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Rucha Somaya. We'll take you through the next 1 hour of trade, and it is looking like it's going to be a bit of a quiet end to the trading week. Let's take a look at where the benchmark is. Nifty 50 trading with very narrow cuts at this juncture, down about 0.2% or so, and it's been a pretty narrow range through the session, and this is despite the risk-on sentiment that you saw overnight with the US equity markets gaining ground, and you have quite a few markets in Asia as well that are gaining. In fact, the broader markets are seeing quite a bit of selling, and you have the mid-cap index that's down about 0.8%. You have the small-cap index is also losing ground in trade today, down about 0.8%. And most sectors are currently trading in the red. The only sector that's bucking the trend by and large is the IT index, which is up about 1% or so, and most others are losing ground. But let's jump straight to the focus of the day, and that is on a couple of railway stocks that are under a little bit of pressure on account of earnings, and those are RVNL as well as IRCON. And we've got Anushi joining in to tell you about why that is. Anushi, perhaps to a certain extent, earnings playing catch up with valuations?
Hi Alex, so absolutely, as you mentioned, the railway stocks are in pressure today, and this is after the weak set of numbers that we've seen from two counters at RVNL and IRCON. But as you've mentioned, valuations is one factor which have played for the railway stocks, not just this quarter, but it has been going on for like last 2-3 months that we look at. Also another factor which is very important is the project execution which is happening. So let's just look at the numbers. If you look at revenue, it was down by about 1.2% for RVNL, while there was a margins have also narrowed to 5.6% as compared to 6%, and net profit down about 27%. Now this is on the account of the higher gains which happened in last year. There was a net loss of rupees 15.2 crore from its joint ventures and associate as compared to a gain of profit of 24% last year. Along with that, higher finance costs, depreciation costs have also led to this kind of a profit decline that we are seeing that has happened for RVNL. But the major concern remains on the execution side. The company has over a 1 lakh crore of an order book, and despite that there has been issues on the execution which has been playing out as we've seen the revenue downtick which is happening. IRCON also, if you look at the numbers, 19.3% of a downtick in revenue, while net profit was down about 18%. The company did highlight that it has anticipated an order inflow of 4,000 to 5,000 crore in its previous con call, while if you look at the revenue growth prospect, it has a flattish growth outlook for the years on the project execution side, and also seeing some potential margin declines in FY26. So this is all that has been playing out. What are the factors which are important to focus on railway stocks from now on?
Right, thanks so much, Anushi, for giving us those details. Samir Dalal and Amar Deo joining in. Gentlemen, thanks so much as always for taking the time. Happy Friday to you. I will come to you first, Samir, on these two companies and indeed the space. I was asking Anushi this, and I'll ask you as well. Earnings playing catch up at this juncture and proving to be a little bit of a disappointment?
Oh, absolutely. Earnings has been needing to catch up, and like you rightfully said, they've been disappointing. Look, there are multiple factors for different sectors. So, of course, we know that the pickup in rural is still not shaping up the way we had expected, the market had expected, and also the urban, side, you're seeing a bit of a slowdown. So that is kind of having an impact on the overall earnings. Now, specifically to, railway stocks, which we're discussing right now, yes, earnings are also playing catch up. But the big problem is that, look, we had a slightly extended monsoon this time around, because of which certain projects may have been, taken more time for work to happen because of the issues. So it's not necessary that everything is a problematic thing. But yes, definitely, like you said in the question, earnings are not catching up the way everyone expected.
So I would assume that you would say avoid at this juncture. If you're holding, do you continue to hold, or do you book profits and take money off the table, Samir?
So for stocks in the railway sector, RVNL in special, the valuations are just ridiculously high. When a stock is trading at 70 times forward earnings, it becomes difficult for a fundamental analyst to recommend a buy as good as we expect the prospects to be, because the growth has to be, for you to justify 70 times, I mean, a PEG, you need the company to grow at least 50 to 70%, which is not really happening. And I don't see that really happening. So would I continue to recommend holding in these stocks? No, I don't think I would recommend them to hold. I think it makes sense to take money off the table in these stocks. There will be opportunities when, I don't know, but you will get a significant correction. I'm talking of not 10%, but maybe 20, 25% correction from the current levels after seeing a correction. So no, I would not hold on, but this is a bull market we're in and anything can happen.
Right. Okay. Thanks for that. Let's begin with the question. There are a couple of questions from our viewers. The first question is to you, Mr. Amar Dev. Well, this one is for Hitachi Energy. Well, the viewer, that is Karthikeyan from Kerala, he's asking whether fresh buying should be, should happen over here. Is that being supported by the charts as of now?
So see, if you look at this particular stock, it has witnessed a significant rally year till date. If you see, the stock is up by almost 166%. And technically, if you look at the charts, we are seeing some sort of consolidation. And also, if you look at the valuations in terms of stock P, that's almost 300, almost towards that level. So wouldn't recommend buying at the current levels. But yes, on any significant correction, the stock recently did correct towards the 13,000 levels. But ideally, somewhere around 12,000, 12,500, that's a level where one can look at fresh entry, not at the current levels. Because what's happened is that the intermediate term trend of the stock that has now weakened significantly. So that tells me that the stock is going in for consolidation, and we could see the stock witnessing choppy trading sessions between 12,000 and on the upper side 16,000. Currently, it's around the 14,000 level.
Okay, all right. We've got PJ Sharma who's writing in from Ghaziabad, and he's got RIL at an average price slightly elevated of 1,532. He's got 300 shares. The stock is currently trading at sub 1,300 levels. He hasn't really given me a time frame, Samir, but this is clearly a stock that has been under pressure, and it's proved to be a drag for the benchmark as well. It's down today as well. How much patience would you need to have with this? When does it turn around? And I guess to a certain extent, the answer is in the O2C business. Would you agree? Samir, that's for you.
Yes, I think. Yeah. So I honestly believe that the person is going to have a little longer, a little more of patience for Reliance Industries. So look, the two big triggers were the value unlocking that was expected to come from Jio and the retail business. Now the management has, somebody in the management has said that, look, we are expecting 2025 is when the telecom business probably could list, and the retail business will take even longer, for the simple reason that there's been a bit of a slowdown. I'm not saying slowdown, but growth has taken a bit of a dip, and because of which profitability in the retail business is not as growing at the pace that they had expected. So they'll probably wait a little longer. So, that has been a bit of a dampener for the stock. We know the petrochem, the oil and petrochem business, which are the cash cows, are doing well, but the value unlocking was the story for Reliance Industries. So I think till 2025, what you could see is the stock consolidating over, till we actually see some movement from the management on that side. It is going to be a while. We think the valuations are not that expensive when you look at it, given the fact, when I look at where Bharti is trading and I just try to attribute a value to the telecom business, and where I see where companies like Trent and DMart are trading, and I try to attribute a value to the holding of the retail business, I don't think the valuations on the overall basis are very expensive, but it will take some amount of time. But I would say hold on to the stock, and on corrections, add on to the stock. It's eventually a very cash positive business, and the value unlocking will lead to upside on the stock. So I would hold on and add on corrections.
Outlook on that one, but the next question is coming in from Anup Ghosh from Mumbai. Well, he is asking about L&T Finance. This one is down about 14% from its listing in April, and he is asking about whether he should hold or exit this stock, and he can hold this for a maximum of 1 year. The buying price is 152.5 rupees and 6,000 shares is the quantity, and this one is for you, Mr. Amar.
Yeah, so if you look at L&T Finance, what we've seen is that the stock for this quarter is down by almost 24%. And if we go back in time, so in September of I would say the last quarter of 2017, the stock had made a high of almost 200 levels, 198 to be precise, and recent high was also around 194. So that was a major zone of resistance from where the stock has corrected. I wouldn't ask him to exit at the current levels because the stock is approaching very crucial support zones on the long-term charts. That's on the quarterly charts. So the stock could witness some bounce back. There could be some respite post the almost 30% correction, which the 25-30% which the stock has seen. But it needs to sustain above the 130 level. That's going to be very important. And only a meaningful rally is expected once the stock starts sustaining above the 150, 152 level.
I'm coming back to you, Amar, on a couple of stocks, Star Health as well as National Insurance, NIACL. And we've got, I don't know the buy price, but then I'm guessing that Satya has bought and he is making some gains in the stock. He's looking to hold for a period of 1 year. What are the kind of levels that you would watch out for, and where would you peg the support and resistance for these two counters?
So see, first looking at Star Health, this is one stock which really has missed the bus because the stock from its IPO times, it's almost, I wouldn't say half, but yes, almost close to, yeah, the lows it had made, recent lows around 472, earlier the low was around 470. So somewhere or the other, the stock is finding some support around the levels. If you ask me, the trend is still down. The stock has halved by almost 50%. There is some fair amount of buying which is happening definitely at these levels. So 470 on the downside is 460, 470 on the downside is very strong support zone. If one wants to look at it from a short-term perspective or a trading perspective, maybe one can look at it. It needs to sustain above the 505, 510 level for any meaningful rally of around 8 to 10%.
Right. Okay. Thanks for that. Next question is from a long-term investor, and that is Balwant Modi from Rajkot. Well, he's looking at the energy sector and would like your view, Mr. Sameer, on two stocks, that is Waaree Energy and Premier Energy, largely from a long-term perspective. So what's your view on these two stocks?
So Waaree Energy is just a recent listing, so we don't have active coverage on that. And Premier also, actually, unfortunately, we don't have active coverage. But I can talk about the solar energy space. I think that is an industry which is set to grow, given the fact that the government is giving a lot of incentives for that. Apart from that, the government wants to set up these rooftop solars. So what we're going to see over the next many years is there's going to be a lot of growth in that space. Unfortunately, I don't know about these two, but the one that we do like and we do have a coverage on is Sterling and Wilson Solar. And there we are actually quite positive. We believe that the opportunity for them, given the fact that their parent is Reliance Industries, is quite strong, given that Reliance is going to be setting up huge solar farms. So apart from Reliance, they also have a lot of orders coming from other companies. But as the Reliance orders start trickling through, you'll see the order book growing, you're seeing the execution improving, you're seeing the operating leverage playing through. So for me, I would look at Sterling and Wilson Solar given the fact that I cover it, but the other two is something I haven't really had a chance to go through in great detail and cover, so I can't comment on that.
Point. All right, but Sterling and Wilson dropped about 23% or so over the last 6 months, as you can see on the charts. Let's talk about Angel One, and we've got Neelam from Jaipur, who's making gains in the stock currently. His stock is up just about 1/3% in trade today. But let's pull up the year-to-date chart, because there's one stock that has done reasonably well, if I'm not mistaken, and made quite a bit of stride. Okay, so it's actually, pull up the one-year chart if we can. Let's pull up the one-year chart, because in the business, this is a company that has made quite a bit of strides in terms of the number of clients that it has taken on. The stock performance has not kept pace. But the question is for the next 2 to 3 months, and would you buy, or rather, would you hold on if you're making some gains in this? Amar, on the charts, how does it look?
See, I am not authorized to speak on Angel One.
Oh, yeah. I completely forgot. Amar, okay, so Sameer, on the fundamentals then, obviously you can't speak about the next 2 to 3 months, but then if you were to zoom out a little bit and you talk about the kind of space, the developments in the space, I can't remember the exact data points, but I know that they've made quite a bit of strides in terms of the number of clients that they've added. and also the model shift that they did about a year and a half, 2 years back, if I'm not mistaken. What do you make of the company?
So, the company is doing extremely well. I would say they've been able to capture a good amount of market share. We still believe that the opportunity in the Indian broking space is quite large, be it from the institutional, be it from the retail side. It's just that these are cyclical stocks, because you got to remember, when the markets are good, you're always going to get more activity in the market. And right now we are in a all-out bull market run. So everyone's interested, everyone's looking for opportunities, people are constantly trading. The problem happens when the markets turn into a bear cycle. And that's when the volumes start dipping. And this business is very dependent on volumes. Like, it's transactional basis. It's not a business where I earn a revenue like a mutual fund distributor, like a wealth manager, where the minute I've invested the money, whether it's doing anything or not, I'm still earning a fee income on it. This is a business which is a very transactional basis. So given that the fact that we are at the bull market period, and we could probably in the next 2 years go into a period of a lull or a slowdown, and the volumes could dip, I would not be in a rush to buy these stocks at this point of time. What happens in the next 2-3 months is very difficult to tell. But also you got to remember that SEBI has come out with these regulations which are going to change the F&O volumes, and that could also start affecting someone like an Angel who's got a good chunk of revenue coming from there. So I would not be in a rush to invest, although I say they've done extremely well, and they would probably be able to capture market, but valuations and given where we are in the market, I would avoid it.
All right, do stay with us, both of you. We're joined, in fact, right now by the management of Alembic Pharma, stock in focus on account of earnings, of course, to say the very least. And we've got Shaunak Amin, who's the managing director of the company, joining in. Shaunak, thanks so much for taking the time and for speaking to NDTV Profit. I just want to take my viewers once again through the key numbers, and then we'll talk to you about the fine print there. Revenue growth of about 3% in the quarter gone by, stood at about 1,650 crore rupees or thereabouts. EBITDA growth of about 15%. The margins have expanded to 14.5% versus 13.1% in the comparable quarter, and there's been a 12% growth in net profit. I'm curious, Shaunak, what do you make of, the results? And if you zoom out and talk about FY25, do we anticipate single-digit growth in revenue? And this is particularly because seemingly your acute and specialty business, the India business, has been a little subdued.
Yeah, so I think the commentary for the business, if I could, I think there seems to be a connection issue maybe.
Yeah, no, I think we're fine now.
Okay, fine. Yeah, so, the commentaries as such, I think from the US point of view, we've been maintaining that there has been significant price erosion that continues in the market. I think the way you would interpret the results this quarter is, despite price erosions, I think we've been able to build up on our volumes, along with some good launches that have happened in the current quarter, as well as I think some major launches expected in the next 2 quarters. So that would be the broad US summary. From the cost and margin point of view, we have worked on cost optimization projects internally now over the last couple of quarters. Some of the margins, despite the slowdown in volumes, is representative of that, along with a better product mix for the US business. On the India business, I think the acute market for our portfolio, which is a large part, almost close to 40% of our India portfolio, that seems to be, the market is seeing a fair slowdown. Now, whether that's a combination of high base between 2020 and 2023, that's contributing, plus along with some extra urban and rural slowdown, that seems to be, creating a bit of challenge in terms of working these markets. I think that sentiment is echoed through FMCG commentary also. There is some amount of extra urban slowdown. So these two are impacting us in the India business. The positive points for the India business is we do have a very good specialty business which continues to outperform, along with our vet business also, which continues to outperform the market with us.
So what I'm getting, Shaunak, what I'm getting from that is that on the US side, you have done reasonably well despite the pricing pressure. You have launched products, and so from that perspective, the second half, I would assume, will continue to be okay on the US side. But the India business is a bit of a question mark. So from that perspective, the original question, do you anticipate that you will only have single-digit growth in revenues and you will maintain your margins based on the kind of levers that you have been using in the first half, in the second half as well?
Yeah, so I mean, the India business, I think it would be a commentary on the whole market.
Yeah.
Is GDP, extra-urban GDP going to pick up? Is demand going to revive extra-urban rural? I think that's a big question for me to answer. I think it's cross-sector because that's what's slowing down most of the acute portfolio. If that does turn around, which I'm hopeful it does, I think we should be returning back to, a double-digit growth for the India business. Going forward, it's, operationally, we are working to kind of offset some of these market slowdowns through better operational efficiencies for the India business. I'm quite positive that some of these do start trickling in over the next few quarters.
Mr. Shaunak, Varsha here. Hi. On your API business, so you've lost some accounts there. Now, are those permanent losses, and what has led to that loss, number one? And number two, how are you seeing this business in H2?
So the API business for us has come off a high base. I think we lost some accounts. I think that's not necessarily in terms of what's the right way? We've kind of passed on some orders because to drive a better product portfolio. But I think API is a much smaller base for our business. I think going forward, we do expect some amount of stabilization at these levels, and we expect revival down the road on this front.
And about the loss accounts, are those permanent losses? Because you've lost customers right?
We don't give commentary on specific products and customers. So that's a corporate policy on this.
No, but you're going to regain them back. That's what I'm asking, because your API business has seen a degrowth.
Yeah, I said we don't comment on specific orders, geographies, or customers from the US point of view. So.
All right. Also, I wanted to ask you about this GLP-1 product opportunity. Are you filing this? What is the kind of opportunity that you are seeing when it comes to GLP-1 products?
So it's too early at this point in time. I think we don't give forward guidances as such. So, when we have something material to communicate, we would be communicating it, Okay, but at this point, it's hard to give any future commentary.
Okay, Shaunak, so you mentioned, let me take a different tact, and you mentioned that there have been launches that contributed to your US business. So can you give us a sense of the kind of products that you would be launching in the second half? What's on the anvil right now?
Yeah, so I think we have 9 products lined up in the next 2 quarters for launches. We don't get into specifics of product launches because it's hard to get into any preemptive forecasting for this. But that being said, I think of the products that are coming up for launch in the next 2 quarters, I think some of the products we're positively bullish that something significant should come out of this. So that's at best what I can leave. So there is some exciting possibilities. But unfortunately, as you guys know, you only know of US products launches post the launch in terms of price erosion and competition. So yeah, that's where we are.
Leave us with an idea of the borrowing levels, because I see the overall borrowing is at 995 crore or thereabouts. What's the idea there? How much are you going to use this leverage, and will you bring it down eventually? What's the idea?
Yeah, so if you see our ratios, I think we're quite comfortable on our debt to equity ratio. I think 900 crores is quite small for a balance sheet of our size. That being said, this is just a routine build up due to launches and some new products as well as some plant commissioning. So that's where we are. I think we'll try to maintain at this or maybe marginally lower than this going forward.
Shaunak, thanks so much for taking the time. All the best for the second half.
Thank you so much. Thanks, guys. Thank you.
All right, let's head back. In fact, let's pull up the chart while we're talking about it. Alembic Pharma, and see what it's done. It's done reasonably well in the year so far, down about 2.3% in trade today. While we're at it, why don't we, in fact, go across to Samir about this. Samir, have you tracked this, and what do you make of the commentary? Not specific answers about the API business losses there. We were looking for something more concrete, but I guess corporate policy, they don't want to comment on it.
So I think it's better not to speak on something that doesn't go correct, right? It's easier to get away with that. Having said that, look, Alembic is a strong group, and they've been doing well over a period of time. And like the management said, they have a few launches coming up in the US, which will allow them to grow their top line. Yes, growth may be a little more tepid in the near term, given the given the fact that there is a bit of an issue in certain segments of the business. But overall, we believe that the pharma market in the US is something that's quite large, which is only going to keep growing. India as a CRAMS manufacturer, as a supplier of low-cost drugs will only keep increasing. Alembic Pharma in that space is also going to be able to capture some market share. So we're not too perturbed by the results, which have been a little subdued. But yes, we believe it'll take some time. But I think overall the entire pharma space is going to do well. Where maybe some discomfort comes is in the stock valuations, which have all run up over the last maybe a year and a half. So on corrections, they may be interesting buys. Alembic is specific. If it corrects by another maybe 7 to 10%, we would look at buying it also.
Samir, Amar, do stay with us. We have to slip into a very quick break. On the other side, viewers will be taking more of your questions. So in the meanwhile, that number that you see on your screen, that's where you send them to us. Do stay tuned. We'll be back before you know it.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching Ask Profit, and we're in the midst of taking all of your questions. That number that is just about on your screen right now, that's where you send your questions to us. And remember, if you're writing for the first time, to send us your name as well as your location. Sameer Dalal and Amar Deo with us right now. Amar, I'm coming to you on JM Financial. We've got Suresh from Hyderabad who's bought at levels of 142, and he says that he can hold for another year. He is wondering whether he can get something like a 20% upside on this.
So see, if you look at JM Financial has significantly rallied over the last few quarters from almost 70 currently. It's more than doubled in the last 2 quarters. And specifically, the last quarter has been exceptional for the stock. So what we're seeing is that the stock made a high of almost 170 and then it has corrected to around 145. And earlier the stock has traded as high as almost 190, 192. So if you look at the stock on the charts, the trend continues to remain strong and positive on the charts. So one can look at buying, but I would say only on some correction, because if you look at the stock, the good level to enter is somewhere around 130 or so. If he already has a position, then he can hold on to his position. But any significant rally will only happen post the stock trading above the 160, 165 level. Otherwise, it could go in for consolidation. But as far as the trend is concerned across different time frames, the trend remains positive for JM Finance.
Right, thanks for that. Well, the next question is from our long-term investor. This is Vijo from Chennai, and he's asking about Thangamal Jewelers. Well, this one has moved up by 65% in last 6 months, and now he's asking whether he should add more or sell now. And he's bought 100 quantity at around 1800 levels, and this one is to you, Sameer.
Thangamal Jewelers is the one we don't cover. The ones we do cover are Titan and Kalyan. So I won't be able to comment on this, but Titan at this point looks rather interesting from the fact that we've seen a decent correction. Look, the management has said that if you look at the quarterly results, there was a 290 crore exceptional loss because of the change in customs duty, because of which they had to take a hit on the already holding gold inventory. Now going forward, we believe that, look, the organized jewelry space is only going to keep growing. And Titan, being the market leader and having the biggest distribution reach, being a pan-India player, stands to benefit. At the end of the day, they have brand recognition. They cater to categories that range from high-end jewelry, wedding jewelry, to Tanishq, to Mia, which is a slightly lower, to Carrot Lane, which is even cheaper. So they have covered the entire vertical span of jewelry through their various brands, which they're constantly increasing. Where they probably have missed a boat is the lab-grown diamonds, which they said that they will announce whenever they do. So once they get into that space, again, that would also add on to the top line and the bottom line for them. Their business will only keep growing over a period of time. Like I said, the organized space is growing. So Titan is the one I like at this point. Kalyan is also a good company which has run up a lot. Valuation discomfort for me a little bit out there. Titan more comfort. So I would buy Titan, and the stock that was asked for, unfortunately, we don't cover.
All right. That's the view in the jewelry space. Quite a few companies worried about the lab-grown diamonds and what the change in the trends are in that space. Maybe you'll be able to tell me, Rucha, what you would prefer, but later, I'll ask you later. Let's talk about the next question. That's in the IT space. Kishore is asking whether or not to buy one, of course, in the IT space and for a period of 1 year. Amar, if you were to buy a stock today for 1 year, which IT company would you buy?
So I would look at buying TCS from a long-term perspective, but not at the current levels, because currently we are seeing some sort of consolidation. It has got very strong support coming around the 3900 level, 3900. So any pullback in the stock, if we see some correction in the stock, then that could be a good level for entry, because upside somewhere seems to be capped around the 4400 odd level. So buying on any correction can be looked at in TCS.
Okay, next question is for actually BEL, well, our viewer has bought 400 shares of BEL at 275, and he's asking about the medium-term target and whether this one will reach at 350 levels or not. And this one is from Rajiv. Actually, can you maybe give us a view on this one, Samir?
No, it's a technical question actually.
Okay.
So let's take it to Amar. Amar, on the charts, 3-month perspective, will it cross 350?
Yeah, so if you look at the stock continues to remain strong and positive on the long-term charts. Intermediate-term trend, yes, there definitely has been some sort of consolidation happening on the intermediate-term trend, and the short-term trend has turned positive. So that's one good thing. However, the stock needs to sustain above the 310, 312 mark. That's very important. Because what's happened is that the long-term trend is positive, the short-term trend is positive, but the intermediate-term trend is quite negative. So what happens generally in such cases is that the stocks do rally because they are moving from an oversold territory after a sharp correction. Because if you look at BEL, the stock had corrected from almost 340 levels to 257. So that was a sizable correction of almost 70 points, 70, 80 points. So roughly in terms 25% or so. So we are seeing this pullback. So any meaningful rally is only above 310, 312 levels. Then the stock could witness some rally towards its earlier highs.
Okay, Samir, coming to you on the next. Sometimes my mouth does not catch up with my brain, and unfortunately that is the case. But Engineers India is a counter that we're talking about. 229 is a buy price. Govind Bhatia from Dubai is asking this question. He's looking to hold this in his retirement portfolio, which he's planning to hold for the next 5 years at the very least. Would this be a pick to hold, Samir? And what would you say on the fundamentals?
Okay, so first off, Alex, it's good that your mind works faster than the mouth. The mouth works faster than the mind, which is dangerous.
I'm glad as well.
Having said that, so EIL is a good company, but is it something that you should hold on for eternity? Something like a retirement thing, which is the question. I think there are better opportunities with companies that are more aggressive, which can deliver better growth prospects. See, eventually you're buying a stock. When you're investing in a stock, you want the company to be a growth company, which is profitable, generate good cash flows, paying out good dividends. Now, EIL fits two of the bills. One is it pays out good dividend. Two, it's a relatively debt-free company. It's actually debt-free, it's cash rich. And they're growing. But the growth, if you look at it across the space, is not as great as some of the other companies in the engineering space, right? You take L&T, for example, you take some of the other infra engineering companies which are also there, which grow at a much quicker clip, which will allow the stocks to probably give a better return over a period of time. So for me, would you hold on to it? Yes, you could hold on to it, but would it be my top pick in the space? No, probably not.
Thank you so much. Well, next question is from Hari Om. Well, in quick queries, he wanted to ask about Yes Bank. He has an average cost of 33, having 6,000 shares. So he's asking whether he should hold or sell. Well, he's not mentioned whether this is for long term or short term. But Samir, to you, what do you see in Yes Bank for, say, a 2-year perspective?
So I'm quite positive on Yes Bank. Look, the worst for Yes Bank is over. They are now in the period where they will probably see some recoveries from some of the loans that they've sold out, or some of the security receipts that they have. That apart, they're growing their book. They are, because of the smaller size, they're able to give a higher deposit rate to customers, which is allowing them to grow their deposits. So we believe that, like I said, the worst is over. Where the problem lies is you see their equity base has become very large. Because of which, servicing that equity is not easy. So it need not be an immediate runaway. But over the next maybe 2 to 3 years, I do believe the stock will be able to generate good returns as the profitability grows, as the return on assets improves, as the return on equity improves. But it's all going to take time. The other overhang only there for the stock is that, look, there are these banks which had to put in money into Yes Bank to save it when it was going through difficulties. And these banks at some point are going to want to come to sell, especially SBI. So if what the deal that everyone's talking of is where some foreign institution is allowed to take in a large chunk from these guys, then that overhang could go, and then you could see a big stock rally. But till that overhang is there, probably the stock will remain subdued. But if you have a 2 to 3 year horizon, I say Yes Bank is a good buy at this point of time.
Goodbye. All right. And thanks for that view, Sameer. The next question is on Adani Port, and Dharvesh is asking this question. The stock was bought by him at a price of 1,419, slightly elevated levels. The stock has given up a little bit of ground since that point. On the technicals, though, would you add at this point? Would you hold? Amar, what's the view on the charts?
If you look at Adani Ports, we are seeing some sort of correction, and now we are seeing some sort of consolidation. Currently, it's around 1347 odd levels. And if we look at it, the stock has got very good support coming around the 1250 levels or so. So ideally, I wouldn't recommend buying at the current levels, because the intermediate term trend is very negative. So effectively, it means is that the stock could go in for consolidation. It's not very likely to sustain at higher levels, that is above the 1400, 1420 level. Only sustaining above the 1420 can there be an upside to the stock. Otherwise, the stock could witness some sort of consolidation between 1250 and 1420. That's the range, short-term range for Adani Ports.
Right. I just need to mention the standard disclaimer, of course. Adani Ports, part of the Adani Group. NDTV Profit is part of the NDTV Group, which is owned by the Adani Group.
Right, thanks for that, Alex. Next question is coming from Sushila. Well, she's holding IREDA shares at 160 rupees and 260 is the quantity. Well, she's asking about exiting the stock, or still one should hold on to this one. Well, talking quickly about IREDA, this one got listed last year as up 200%. So any view on this one, Mr. Singh?
Yeah, so if you look at IREDA, we are seeing some sort of profit booking here. Again, this is one stock one can look at adding on some correction. Ideally, 175, 180 is a good level for entry, not at the current levels.
Okay. All right. Thanks so much, Amar, for joining in. In fact, that brings today's query segment to a close. But do remember that we'll be back on Monday to take more. And some of you, I will promise that I will take that at the start. I promised 3 of you that, and generally I try and do that on an ongoing basis. For now, let's turn to earnings expected, and State Bank of India is something that we're tracking at the start today. Large public sector bank, of course, we've seen a few earnings in the banking space. You will know about the advances and deposits growth. But let me go across to Harsh about the key elements to watch out for, not least of which I would assume is the asset quality. Harsh, what's the view here?
Well, seems like State Bank of India will be able to maintain those asset quality numbers. Doesn't seem to be something which will alarm the street likely, because State Bank of India has a very large book otherwise, outside of the pockets where we have seen stress. But let's talk about the overall picture. One is, of course, asset quality going to hold key in terms of what they're seeing on ground, what component of their portfolio is MFI, how much exposure is there, and how that portfolio is behaving. That will, of course, be crucial. Outside of that, margins. How much of margin contraction? Well, the likelihood is that they'll be able to maintain the 3.2% kind of margin number which they clocked in Q1, likely to continue as is, and therefore a muted growth on the NII count. In terms of operating profit, you're expecting a slight bit of decline QOQ, but on PAT, you're expecting just about a flattish kind of a profit after tax number on a sequential basis. On a year-on-year basis, you'll continue to see a decentish healthy growth. In terms of advances as well as deposits, that's going to hold the key, because can they continue to grow on the base that they are growing in terms of deposits in this environment? That's likely something that the street will look out for. Also, their capital adequacy. Will they require a capital raise or not is something which we'll wait to hear from the management, because it's one of those few banks where capital adequacy has shrunk and likely an equity raise on the anvil.
It's an important point to make on the capital adequacy ratio. But let's talk about how things look in the banking space. Let's in fact pull up the Nifty Bank and see where it is. SBI right now down about 1% or thereabouts, and like a large part of the market today, the banking index also a little bit under pressure. And in fact, a look at that is that HDFC Bank and Kotak are the only ones in the green, but by and large you see the banking pack as a whole in the red. In fact, let's also pull up the PSU banking index just to give you a sense of how things are looking and whether or not that is also down. And In fact, yeah, there you go. So the PSU banking index is also down about 100 points or thereabouts. But one of the stocks that we've been tracking at the start is Lupin, and that is on the back of the earnings. We spoke with the management of Lupin, and in fact, we spoke with Ramesh Swaminathan, the executive director of the global and the global chief financial officer of the company, about the factors that led to the higher gross margins in the second quarter. Here's a slice of that conversation.
Insofar as the gross margins are concerned, you would observe that it has been going up continuously for the past 5 to 6 quarters. And that's obviously coming in on the back of, in fact, a lot of effort on the top line front. There's tremendous buoyancy in terms which is being created, obviously, by good products being launched across, especially in America. The last couple of quarters, of course, there has been made a big run. There was 25 mg in the previous quarter, 50 mg in the current quarter. So obviously the sales mix and the top line buoyancy has contributed tremendously for the improvement on the gross margins front. But that's not the full story because there has been a lot of effort in containing a lot of the cost lines as well. Tremendous focus on alternate vendor development, routes to synthesis, the way we actually freight our goods from India to America in a mode of ocean freighting than air freighting. So all of this has contributed to a lot in terms of the gross margins improvement. Going forward, yes, given the rich pipeline that we have for Americas and obviously for other markets, including India, we think this will certainly continue.
Two clarifications. One is on your other operating income. I understand there is a PLI effect which comes into play there, and also an extraordinary item which has come in, provision of 58.5 crores for these litigations which are underway. Is the PLI thing one-off for this quarter, or is it going to come in every quarter from here on? And this litigation cost which has come in, have you broken down across quarters, or is it again a one-off?
Insofar as the PLI is concerned, as you would be aware, we are talking about 1,000 crores being claimed over a period of 5 years and the like. But the government also allows for a spike in a particular year, which could be one-off in that sense. So we would be perhaps claiming a larger quantum this particular year vis-a-vis the other year, so to speak. And that's actually come about. Some parts of it has come about in the first half, so to speak, more particularly in the second quarter. Insofar as your other questions related to?
The provision that you made, 58.5 crores regarding dispute, is it one-off in this quarter, or is it going to be broken down into various quarters?
No, this is essentially a one-time item that you've taken on account of certain disputes, a particular dispute, so to speak, that we've been running with some of our counterparties. It's a one-off item which will not repeat in every quarter, so to speak.
Also, Mr. Ramesh, hi, this is Varsha. Now, your US business grew 6% and dipped quarter on quarter. Now, this was guided by you. Now, what's the outlook there? The single-digit guidance that you've given, is this because of the loss of market share in albuterol?
Firstly, we have done fairly well in America. So essentially, we are middling between $220 to $230 million. Mirabegron continues to perform pretty well, as does the inline products on the respiratory front, both the albuterol and Spiriva. Going forward, perhaps there would be some reduction of some price erosion that you might see with competition creeping in on albuterol. But for the present, for sure, it's doing pretty well, and we are fairly hopeful of actually sustaining our market share on that score.
Can you give us a sense of the generic competition that's now prevailing in the US market, and whether the price erosions have bottomed out in that sense as compared to what it used to be a year back? And also a bit of a commentary on your channel inventory, because that's something which also impacted the US growth, because while the volumes grew, you were impacted by generic competition and channel inventory.
Firstly, the price erosion, I think we have entered a phase where things are fairly benign. That's on the back of the fact that a lot of companies have been pruning down on their portfolio because the fact that there's too much of intensity of competition leading to a high price erosion. And some of these products were actually not yielding us enough. And from that perspective, a lot of companies were shedding our portfolio, and Lupin was no different. So what we really have there is a very profitable tight portfolio. The other fact why there has been a price, benign price erosion is more because the fact that in recent times interest rates were very high, and because of that, a lot of companies have closed down operations, closed down factories, and to kind of delever themselves. And that obviously has meant some of these products were short of production, so to speak. There's actually been a shortage of products, and that's contributed in some ways to actually keeping the price erosion at a particular level. Hopefully, this will stay the course. Insofar as we are concerned, we are pretty hopeful about, irrespective of the price, we are still hopeful about, in fact, the overall American markets, given our richness of the pipeline. Next year, for example, we do have tolvaptan. And then, of course, there's a host of other products we're lining up on the respiratory front, on the injectables front and the like, which will help us to kind of sustain the growth as well as the margin trajectory.
Mr. Ramesh, on the product that you were just speaking about, tolvaptan, now, give us an update on the same, given the litigation that you have, and what's your stance there, and how should we think about this product going forward?
It's a fairly large product for us. The litigation has been settled from our perspective in our favor. And from that perspective, we're fairly confident of launching it in the first quarter of next year.
Okay.
First quarter of the next fiscal, that is.
Give me a sense of, Ramesh, the change in regime which is now underway in US, the new president. How do you see pharma companies and especially Indian generics, performing now in the market? Do you see any change in policy or any implication that's coming in for the Indian pharma industry?
As you would appreciate, our industry is all about affordable medicine. And given the fact that, every government would be very keen on ensuring that there is fair supply of medicines for its population, I don't think this industry is going to be impacted very much at all. So irrespective of whether it's going to be, the change in regime, Republican, Mr. Trump, I guess things will be pretty normal for us. From our perspective, there of course would be some emphasis on local manufacture and the like, but I would appreciate that it's going to be the cost of production of for goods manufactured in America is obviously going to be much higher. So from that perspective, we do believe that things will be pretty okay for us. For the generic industry in a general sense from India.
Also, maybe a bit of clarification. If I'm not wrong, at the end of Q2, you're sitting on a net debt position on your books as compared to net cash at the end of Q1. Any particular reason on the high debt that has been taken in the second quarter, and how do you see cash flows for the remaining of the financial year?
Actually, the debt is very marginal. It's obviously because of business as usual in terms of a slight increase in working capital. The number of days has gone up from 102 to 107. The second is essentially payment of dividends. And we would appreciate it also, obviously, we don't believe in actually being a debt-free company because I think it helps in trading on equity. So, a level of debt on the balance sheet is always useful. And we are, given our, strong cash flows, our EBITDA margins, we believe that a debt, could be, we could raise monies if we want to for looking at acquisitions both in India and America. And that's our philosophy really.
And what is the kind of investments that you see for various new forays? Is there a amount that you are looking at from a capital investment point of view into new forays?
Even if I were to prescribe, say, EBITDA to debt ratio of, say, of 2, I would think that close to $1 billion, a little more than that, would easily be possible. So there's tremendous room for acquisitions. And clearly, but the proposition should be compelling in itself. So we would obviously it's going to be calibrated aggression on that score. And if there's a proposition which is alluring enough, we would look at things in both India and America.
Also, I wanted to have update on your pipeline and specifically on this peptide GLP sort of product. So what kind of opportunities you are eyeing there?
The world is looking at it. So we are not, so obviously there is going to be a lot of focus on getting new drugs into the portfolio, especially GLP-1s, given the fact that it's, I guess it's going to be the flavor of the season. Perhaps it's going to be like this for several quarters to come. We are eyeing also several GLP-1, so to speak, not merely for India, not merely for America, but for other parts of the globe as well. I would only say wait for the news on this long term.
Also on the India business, so how are you planning to offset the impact of patent expiry, maybe within in-licensed products?
Well, obviously, some of the lack of sheen in the past has been because of the fact that there has been loss of exclusivity on certain products in India, especially when it comes to, in fact, the diabetes portfolio. There is, in fact, one more product which will possibly go with, we'll encounter loss of exclusivity towards the end of this particular fiscal. But we are also in the process of actually looking at newer products and so on as well. So we do expect the buoyancy to be back and, of course, grow in the quarters to come. We are very, very focused on the Indian market and we will do what it takes to kind of ensure that the growth is a good 25-30% above the market.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro,
Hello and welcome. I'm Harsh Saita. You're watching Hot Money on NDTV Profit. Thanks for tuning in. I have with me Rucha Somaya as well as Varsha Chandani. And over the next half an hour, we'll try to cover stocks which are buzzing in trade today, as well as try to cover some news which likely should add value. Let's quickly look at the Nifty 50 first off. 1/3% lower on the Nifty. We're off the lows for sure. So let's pull the Nifty 50 up and there you go, just off the lows in terms of where the Nifty is at. Let's look at where the broader markets are and let's look at the advanced decline as well, because it's been a tough market over or through this week. You're seeing 1% lower on the Nifty mid cap. You're seeing roughly 1% lower on the Nifty small cap as well. And if you can give us the advanced decline, there you go. The advanced decline is in fact increasing in favor of the declines. It's 3:1 currently, but it's getting the breadth of the market getting weaker as we speak. Let's pull up the sectoral indices as well. Within the sectoral indices, FMCG IT seems to be holding up fairly well after that rate cut. IT seems to be doing well. It's probably the sector of the day. But outside of that, you're seeing pretty much all indices in the red, with a special punishment for Nifty Realty as well as something like a Nifty PSU Bank. Both of those really down 1.5% more or more in terms of the losses in trade. Let's pull up, let's in fact bring on board Vivek Parthiban, who's the COO at Kaplan Point Labs, to talk to us about the Q2 numbers. Vivek, just first off, talk to us about how the quarter gone by has been and how it stacks up for full year FY25, both in terms of revenue as well as your margins. What needs to be done in H2 and how has H1 gone for you?
Yeah, thank you. So consistency has been key for our company for many quarters now, many years, in fact. That also goes back to the fact that our business is predominantly focused towards the bottom of the pyramid, especially in Latin America, where almost 82% of our current revenues come from. The other 18% is the US. The consistency is achieved because of our business model, which is mostly in the private sector, not so much of an exposure to institutional business. So the quarter has been quite good. In fact, we continue to maintain about 17 to 18% growth overall, and we're already at close to 35-36% EBITDA margins, around 24-25% PAT margins. We've been able to consistently focus on very good cash flows for the company. So I think it's been good. H2 should follow a similar pattern. We hope to do even a little bit better in H2.
Hi, Varsha here. So now with respect to your US business, you're transitioning from B2B to B2C. Now, will this affect your profitability, number one? And number two, are you on track to do $100 million revenue that you have guided by FY27 for the US business?
Yeah, so as we move from B2B to B2C, we need to take into account that this will be a slow process, right? There's, in fact, 100% of all our current US revenues come from B2B. In fact, over the next 3 to 4 years, I don't expect B2C to occupy a very large percentage. This will be a slow evolution for the company. So I wouldn't expect any sort of reduction in margins or anything like that. In fact, once the entire transition has been completed, it should actually boost our margins a little bit, which is also one of the reasons as to why we're converting this from B2B to B2C. With regards to overall revenues, we feel very confident with the growth at which Kaplan Steriles is growing. And if we're not really chasing a particular number, we want to make sure that we are doing better than what we did yesterday, specifically when it comes to compliance, specifically when it comes to productivity and stuff. So if that number happens by 27, it's good. If it happens in 28, it's fine. We're not really racing against the clock with anybody at this point.
Understood. Also, the new areas like onco and peptides. So what's the opportunity there, and when will this make up to your top line?
Yeah. So oncology is a very special area for us. It's a space that we always wanted to be in, but we had not, because we required dedicated plants, we required dedicated field staff as well for that. But the platform in Latin America was set very well for us, so that as and when we have oncology portfolio coming in, we'd be able to hit the ground running, which is basically what has been happening for us over the last 2 to 3 quarters. So we remain very confident about this business. It's a low volume, high margin kind of a business. And we feel that this will be one of the very few entities that will actually break even on year 1, so first full year. And we expect the top line accrual to happen probably by FY26 onwards. Peptides as well is a key area for many companies right now, right? I think and it's almost the buzzword right now for many formulation and API companies at this point. Early stages. Right now, we always like being differentiated, so we don't want to take the road well traveled when it comes to peptides. We have a few ideas of our own which we feel would serve us well, especially in Latin America. So for us, peptides and biosimilars would be specifically targeted towards our emerging markets in LATAM before we move towards the regulated markets.
Okay, Vivek, last 2 questions. One is your capex. What is the capex that you're targeting for, say, next 2 years? And for FY25 and FY26, will Caplin see a double-digit growth when it comes to your top line?
Yeah, so capex, I think, as we've mentioned in the past, we are close to completion of most of the capex. Most of the important ones that are essential for the company, of course, I think has been completed. We are moving towards, I think, over the next 24 months, completion of all of the essential capex that is needed for us to, take it down to 2030, etc. In addition to that, I would say, growth-wise, we are very happy with the way we're growing. The next 2 years is going to be very much a consolidation period for us, because many of the, the growth drivers that we are aiming towards, whether it is the US market with our own label, whether it is the oncology business, or whether it's the larger markets of Latin America, such as Mexico, etc. All of this will take about 18 to 24 months to stabilize and really start firing up. So I would say next couple of years, we are still confident of growing in double digits. It would probably be similar to what we are seeing currently, but 27 and beyond could be something quite exciting for us. We are closely watching and focusing on that.
Excellent. Wishing you all the very best for a very successful H2 and belated season's greetings. Thanks so much for joining us, Vivek, today. With that, let me bring on board Gaurang Shah as well. He's going to be joining us in a minute or two. He's head investment strategist at Geojit Financial Services, and he'll of course give us his views on certain stocks that we're keeping on our radar today. But on NDTV Profit, we're going to deep dive on one particular counter today, discuss Hindalco. The stocks witnessed deep cracks yesterday after its US arm Novelis reported a weak second quarter. Let's get in Hiral, who's joining us with a total breakdown of what's happened here. Hiral.
Thank you. So overall, if you go to see in terms of Hindalco, we all know what actually went wrong, and it was especially with Novelis. If you see in terms of the stock price as well, 8% in trade yesterday, 14% from its recent peak. Today, though, the stock is up nearly 1.5%, so there is some bit of buying that is coming in. But whether this joy will last for long is something we need to check from a longer term perspective. What has gone wrong now? Now, Novelis reported a weak set of numbers, and they have suspended their guidance with regards to the EBITDA. Secondly, the outlook that the management has given has been absolutely disappointing for Novelis. Why is Novelis so important? Almost 55 to 60% in terms of EBITDA as well as revenues for a Hindalco comes from Novelis, and you have Novelis which will be reporting numbers next week as well. So this is going to be absolutely crucial. Moving away, Now, what have they suspended? So this is the short-term EBITDA per ton guidance of $525 has been suspended from now. And moving on, the firm had expected a steep EBITDA per ton improvement trajectory in the medium term. And that's the reason why the street is not really taking this well right now. Moving from here on, if you see what has led to this EBITDA decline, because that's one of the major concerns, as we know. A couple of them, one is the increase in the aluminium scrap prices, and this is on the back of the changes in China policy. This is one of the reasons. The other one is that unfavorable product mix. Now, the first one, if you see Novelis's products, 60% is recycled content, right? So any increase in scrappage prices impacts. And thirdly, the impact of the Sierre plant floods. That has been something which has impacted the overall EBITDA this time around. Now, what are the peers also saying? Now, if you talk about the global aluminium companies, the downstream peers are calling out a 25 to 30% EBITDA impact going ahead from here on. And a lot of cautious stance that is coming in with regards to aluminium players, right? So these are factors that we need to take into consideration for the second half of the year as well as going ahead. And you now have the Inflation Reduction Act program that is expected to be scrapped with the new US government coming in. And this is the reason where the financial support for Bay Minette that could be unlikely. Now, why this is important? $1.1 billion of capex is what was allocated to Bay Minette in the second quarter. And from here on, this was expected to be commissioned somewhere in the second half of FY26. So whether there will be delays here or not is what we need to see. And December quarter is a seasonally weak quarter as well. So these are major things that we need to watch out for. And very lastly, headwinds are likely to persist in the current as well as the March quarter. That is what the management has indicated, which we have to take it with a pinch of salt, that it will be in the second half only, because it can extend to the first half of FY26 as well. So a lot of factors. Now, Hindalco numbers will be crucial from here on.
Thanks, Hiral. Definitely, Hindalco numbers will be crucial, but thanks for the deep dive analysis for that. But let's move on and talk about Hindalco from our guest, that is Gaurang Shah, the head of the head investment strategies at Geojit Financial Services. Thank you for joining us and welcome to the show. Your view on Hindalco? Well, the stock performance is not that great, up about just 4% in last 6 months. Do you think this is a good time to get into this one?
Well, thank you very much, and good afternoon to all of you all. I think it would be prudent on my part to first give a disclosure that we have a fundamental buy coverage on Hindalco. Our long-term targets stands at somewhere close to about 790 to 800. Headwinds definitely there, not only in the short term, but also in the medium term. The question is whether the company is able to guide itself out of the strong headwinds, which we believe absolutely visible over here. Demand from global arena and the news flows from China always plays an overhang, not only for companies like Hindalco, but most of the companies which are into ferrous and non-ferrous. Domestic demand, we expect a good uptick on fallback of recovery in various sectors which consume both aluminum and copper. Possibly contribution from Novelis is something which is an overhang, but I think it remains to be seen what Hindalco delivers.
Thanks so much for that, Gaurang. Let's switch on to the next stock on our radar. We have Puneet here with a lowdown on Astral. Puneet, weak numbers, but they are in some form, at least there's a view coming through, that they are maintaining their guidance, which is not diluting margins as much. Give us a perspective with regard to numbers. Stock down 1%, so not too bad.
Yes, definitely. I think so. What they've done is they've just recalibrated the margins and giving a range. So earlier guidance was about 15% of growth in this particular year. Now they've done it from 10 to 15%. And as you rightly said, while the results were kind of like a washout, the expectations were normalized because of some other pipe players that reported results. They also said that they had a lot of pressure because of the PVC raw material prices being very volatile in this particular quarter. So the revenue was up just about flat, almost 0.5% compared to previous year. EBITDA margins was down 73 basis points, while net profits were also affected with down 17% in this particular quarter, coming at roughly 109 crores versus expectation of about 135 crores. Now, when you look at the segmental performance, there has been no revenue growth from the plumbing business basically. Just 1% degrowth in terms of revenue, coming at 966 crore, but margins actually gained 40 basis points in the plumbing business. And where the margins fell was the second business, which is the paints and adhesive business. Revenue came in at 404 crores, 6% growth for the paints business, but margins were down roughly about 450 basis points in this particular segment. That dragged the overall margins as well. But the commentary was going to be the key, as well as some brokerage notes as well. So they mentioned that the PVC raw material prices were very volatile, which led to destocking of the expensive inventory, and that's the reason why one of the key reasons that affected margins as well. They have mentioned that demand was also low because of lower government spending and monsoons largely being a Q2 as well. So they've cut their guidance, as rightly said, to 10 to 15. But what's important in the first half, they did about 6.5% growth in volumes. If they have to meet the whole 15% guidance, they will have to achieve roughly about 15% growth in the next 5 months starting November. So that's going to be one of the key things. Execution risk is there, and it'll be seeing that they will be able to do that, because that's one of the key numbers that they mentioned in the interview as well, speaking to my colleague Neeraj. They'll be able to do that and has an upside risk according to them, but it seems to be seen what can be done. Investec, they have maintained their buy target price of 2,485 rupees per share, and they mentioned that it could be a strong compounding play on the core plumbing business. So overall, while the results were a washout, I think the commentary and the guidance by the management is going to drive the stock over the next couple of months. But updates and on the segmental is one of the key things to watch out for.
Right. Interesting you say that commentary going to drive the stock. Gaurang, are you in a similar camp that you believe that execution will likely, as well as a bit of commentary, will likely drive Astral in terms of stock price action? Also, the change with regard to PVC, the additional duty which is going to get levied on imports of PVC to kind of counter domestic PVC prices and to kind of counter dumping into India. Believe that's going to aid Astral in any way? How does all of that fit in?
So I think the government will always step in whenever it comes to the survival of the domestic companies, whether it is to do with the PVCs or whether it is to do with any other product which gets dumped on the Indian ports, and the price has to be paid by the domestic companies. So I think those policies are quite fair and appropriate steps will be taken. Prudent to give a disclosure on Astral again, we have a coverage. We have a very conservative target of somewhere close to about 2,100. What we are extremely upbeat about is the recovery in the semi-urban and rural India. Along with that, you have a positive tailwind of the real estate sector doing well. So just to highlight a point, I think real estate sector doing well, recovery in semi-urban and rural India will always augur well for associate sectors. Be it, we were talking about Hindalco, that also reflects a little bit on what real estate sector is doing because of the demand supply. Astral, well, basically into PVC pipes, has got a very decent product portfolio. I travel length and breadth of India, and what I witnessed is that the market share for Astral is quite strong as far as the metros, tier 1, tier 2 cities are concerned, but equally is the capability of penetrating into the semi-urban and rural India. So we believe that headwinds are there. Post the numbers, the stock has seen a correction. I think in the last 1 month, the stock is down close to about 6.5 to 7%, which is, we believe, is a great opportunity for long-term investors to get invested.
Right. The other one on our radar, Gaurang, is SBI. Numbers to come out today. It's going to be an interesting set because, can they hold on to the kind of margins that they've done in Q1 is going to be essentially one of the key questions. Can they do a 1% plus on ROA is the other major moot point. You believe SBI can go from strength to strength from here, and are valuations in your view lucrative at this point?
So give me 30 seconds to answer your question. I think on the entire PSU banks and PSU companies, there was a report before the October sell-off that we saw. and there was a sell side report. We saw correction coming on fallback of that report, especially in PSU banks. Then we had the sell-off in the month of October, which is continuing even in the month of November, which has led to a decent price correction for some of the public sector banks. Now, if I have to reflect upon the Q2 numbers for likes of PNB, Canara Bank, to name a few, they have done fairly well. And if I have to take it forward for State Bank of India, which is the biggest bank in India, again, a disclosure, we do have a positive coverage on the buy side for State Bank of India. Since numbers are going to be coming out today, I don't want to say much, but I hope the recovery that we've seen in other leading public sector banks would reflect upon State Bank of India. Currently, the targets that we have set aside is somewhere close to about 920 to 950. But if the numbers deliver, then these targets would get revised upwards.
Right, upward revision of targets is a possibility on SBI, but let's move on to talking about ITI. Well, this one is up about 12% in trade today, and actually let's talk about the stock first. Well, this one is a public sector undertaking largely specializing in the manufacturing, development and marketing of telecommunication products, and the reason why this one is up 12% is because it emerged as the lowest bidder for a 3,022 crore rupees project for 3,022 crore rupees project for BharatNet, and this one is also in Himachal Pradesh, West Bengal, Andaman and Nicobar Islands, and it also succeeded in 2 packages out of the total of 11 packages. So, any view on this one, Mr. Gaurang, because this one has not really done well in about last 6 months or 1 year. When we look at the price chart, it has just moved about 10% in last 1 year. So, do you think this one is a good bet, or what's your view on this one?
Well, so I won't give a specific comment on buy, sell and hold because we don't have a coverage on ITI. But let me say this, whether it is ITI or any other company, when it comes to getting orders from the government of a larger scale, the momentum tends to be on the upside for that particular stock, maybe for momentarily, day 2 or 3. But then the stocks settle down and we start talking about brass tacks in terms of what are the capabilities of the company to deliver as far as earnings growth is concerned and how to upscale the business. Now, as far as the aspiration of the government goes, well, the government does want to take the connectivity of net to the remotest part of India. And I think that's what they have been concentrating on for the last couple of years. So whichever company which contributes to the aspirations of the government to make net viable and available at a reasonable price to each and every part of India, I think all those companies are likely to do well.
Right, okay, so those companies likely to do well, but let's move on to Anushi, who will speak to us about RVNL and IRCON. RVNL largely buzzing on the back of the 2Q numbers. Well, if we look at the stock right now, the stock is not doing great in trade today, down about 6%. But Anushi, give us more perspective on these two companies.
Hey Rucha, so as you mentioned, the focus was on the Q2 numbers of both of these counters, that's RVNL and IRCON. First, coming to RVNL, we've seen about a 1% of, almost about a 1% of a decline in their revenues, while their margins have also narrowed by 50 basis points to 5.6% as compared to 6.1%, and net profits saw about a 27% of a decline. Now, execution has remained as one of the focal points for the company. This is execution remains as a key focal point as to why this kind of a revenue decline that we are looking at. So more management commentary on that would be awaited, but the net profit decline is much higher than the revenue decline also, and this is on the back of several factors. First is that net loss of 15.2 crore which took place from the joint ventures and associates this quarter as compared to about a 24 crore of a profit last year. Along with that, higher finance cost and depreciation expenses also played into the larger decline number that we are looking at, along with decline in other income also which took place this quarter. Coming to, so again, railway stocks, even if you look at, before I move on to IRCON, they have been under pressure for not just this 1 month, but since last 1 to 3 months, they've been under pressure, and this is on the back of the execution delays which have been happening as compared to the higher valuations which they've been commanded on. And do note that in the last 1 to 2 years, railway stocks in general have gained significant gains. Coming to IRCON International, 19% of a revenue decline that we are looking at, margins stood at about 8.2% as compared to 8.6%, and net profit about a 18% of a downtick. The anticipated order inflow for this is 4,000 to 5,000 crore, but FY25 management guidance remains flattish on project execution side, and also sees some potential decline in margins happening in FY26. So this is what is happening in IRCON and RVNL.
For that, Anushi, stay with us. Let's go to Gaurang very quickly. Gaurang, some of these railway counters saw very good rally. They've also seen a correction now, 20 to 30% lower, including something like even an IRFC of sorts has taken a dip. Your sense, because execution clearly seems to be the challenge here now, because order books are bloated.
Well, order books being bloated is one part, but how good and capable the company is to execute that order book is of great importance, because that starts contributing to the top line and profitability. So let me speak about the sector, because we don't cover RVNL IRCON, but like defense, I think the railway related companies and sector has gone through a major sea change. If you just compare the performance year to date, I think there's been a stupendous rally in all the defense and railway related stocks, and whatever goes up does have to settle down when the reality sinks in, and in case if there is some kind of disappointment on the earnings front. So the growth story for the Indian railways and companies related to Indian railways is absolutely very, very strong, whether it is government owned or whether it is private owned. The only thing is the near-term issue in terms of price correction and a little bit of disappointment on the earnings front. But if you ask me for the long term, I think since the order book is so very, very strong and more orders are likely to come through, I think execution should not be a problem. It's just a short to medium term kind of blip that these companies are facing.
Right, okay, let's move on to talking about Indian hotels. This one is buzzing in trade, up 6% on the back of strong numbers. So coming to you directly, Mr. Gaurang, do you think that this kind of growth momentum will be sustainable in the second half, largely because second half will be more of a holiday season? Do you think this momentum is going to sustain or not?
Yeah, so with holiday, you're going to have a lot of marriages also happening. I was reading a report. This time, marriage season is going to be a record-breaking one, and people are going to be spending a lot over there. So coming to Indian hotels, again, a disclosure prudent one, we have a positive coverage. And our sense in the hospitality sector is that not only the cash registers are ringing in because of the room occupancy or the tariffs going up, but also the fact is that the contribution from food and beverages and banquets are going to come in much better. Along with that, most of the companies which are associated with hospitality or hotel sector have already lined up huge capex plan in the next 3 to 5 years. And I think the way things are shaping up, contribution and performance should be much better going forward from here.
Right, okay, thanks for all those perspectives, Mr. Gaurang Shah, but that's all the time we have on the show. Thank you, viewers, from me, Harsh, and all those team members who have tried to put this show together. Thank you for tuning in. Lots more action on the other side.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed.
Markets trade in a tight range. Nifty off the day's low trades below 24,200. Sensex near 79,400. Broader markets underperform benchmarks. All sectors barring Nifty IT trade with cuts. Consumption trades flat. Nifty oil and gas loses the most. Railway stocks on the slow line. RVNL trades with 6%. Cut post a 27% profit dip, while Ircon shares dropped 7% following disappointing Q2 results. Swiggy's grand 11,000 crore IPO is now fully subscribed. Post a cautious start, sees maximum subscription from employees. A 7-judge Supreme Court bench ruled 4-3 to reverse the 1967 judgment of the Aligarh Muslim University. The prohibited statutory institutions from claiming minority status. Aligarh Muslim University's claim to minority status will now be decided by a regular bench under this revised position. Hello and welcome. You're watching Market IQ. I'm Himakshi Bahuguna. Let's look at how the markets are performing today. We have seen volatility through the week and right now it's trading lower. Nifty 50 is currently trading at 24,139 while Sensex is trading at 79,400 levels, down over 100 points. Speaking of the broader markets, Nifty Mid Cap 150 is down over 1% and Nifty Small Cap 250 is down 1%. As they continue their underperformance versus benchmarks, let's take a look at the Nifty contributors. Heavyweights like RIL, ICICI Bank, Trent, Asian Paints and India's largest public sector bank, SBI, are significantly dragging the market down. Let's also pull up the losers and top gainers in trade today. Coal India, Asian Paints and Trent are top Nifty laggards, whereas stocks are among the top gainers with Wipro leading the pack, followed by Tech Mahindra and Infosys. The market breadth is favoring the declines. Sectoral indices, most sectors are under pressure with Nifty oil and gas down by almost 2%, followed by Nifty media and energy. The only sector in green is Nifty IT by over 1% and FMCG hardly making above the negative zone. Also, all eyes are on the SBI Q2 results that will be out anytime soon. Traders are awaiting the quarterly earnings from India's largest lender. The PSU basket is underperforming the benchmarks, so stick around for one of the biggest earnings of the day. So now let's take you through the SBI numbers that will be out shortly. Harsh joins in with more details.
Well, seems like State Bank of India will be able to maintain those asset quality numbers. Doesn't seem to be something which will alarm the street likely, because State Bank of India has a very large book otherwise outside of the pockets where we have seen stress. But let's talk about the overall picture. One is, of course, asset quality going to hold key in terms of what they're seeing on ground, what component of their portfolio is MFI, how much exposure is there, and how that portfolio is behaving. That'll of course be crucial. Outside of that, margins. How much of margin contraction? Well, the likelihood is that they'll be able to maintain the 3.2% kind of margin number which they clocked in Q1, likely to continue as is, and therefore a muted growth on the NII count. In terms of operating profit, you're expecting a slight bit of decline QOQ, but on PAT, you're expecting just about a flattish kind of a profit after tax number on a sequential basis. On a year-on-year basis, you'll continue to see a decentish healthy growth. In terms of advances as well as deposits, that's going to hold the key, because can they continue to grow on the base that they are growing in terms of deposits in this environment? That's likely something that the street will look out for. Also, their capital adequacy. Will they require a capital raise or not is something which we'll wait to hear from the management, because it's one of those few banks where capital adequacy has shrunk and likely an equity raise on the anvil.
Right, Harsh. So today on NDTV Profit Deep Dive, we will discuss about the Hindalco. The stock witnessed deep cracks yesterday after its US arm Novelis reported a weak second quarter. Let's get in Hiral, who is joining us with the analysis.
So overall, if you go to see in terms of Hindalco, we all know what actually went wrong, and it was especially with Novelis. If you see in terms of the stock price as well, 8% in trade yesterday, 14% from its recent peak. Today, though, the stock is up nearly 1.5%, so there is some bit of buying that is coming in. But whether this joy will last for long is something we need to check from a longer term perspective. What has gone wrong now? Now, Novelis reported a weak set of numbers, and they have suspended their guidance with regards to the EBITDA. Secondly, the outlook that the management has given has been absolutely disappointing for Novelis. Why is Novelis so important? Almost 55 to 60% in terms of EBITDA as well as revenues for a Hindalco comes from Novelis, and you have Novelis which will be reporting numbers next week as well. So this is going to be absolutely crucial. Moving away. Now, what have they suspended? So this is the short-term EBITDA per ton guidance of $525 has been suspended from now. And moving on, the firm had expected a steep EBITDA per ton improvement trajectory in the medium term. And that's the reason why the street is not really taking this well right now. Moving from here on, if you see what has led to this EBITDA decline, because that's one of the major concerns, as we know. A couple of them, one is the increase in the aluminium scrap prices, and this is on the back of the changes in China policy. This is one of the reasons. The other one is that unfavorable product mix. Now, the first one, if you see Novelis's products, 60% is recycled content, right? So any increase in scrappage prices impacts. And thirdly, the impact of the Sierre plant floods. That has been something which has impacted the overall EBITDA this time around. Now, what are the peers also saying? Now, if you talk about the global aluminium companies, the downstream peers are calling out a 25 to 30% EBITDA impact going ahead from here on, and a lot of cautious stance that is coming in with regards to aluminium players, right? So these are factors that we need to take into consideration for the second half of the year as well as going ahead. And you now have the Inflation Reduction Act program that is expected to be scrapped with the new US government coming in. And this is the reason where the financial support for Bay Minette, that could be unlikely. Now, why this is important? $1.1 billion of capex is what was allocated to Bay Minette in the second quarter. And from here on, this was expected to be commissioned somewhere in the second half of FY26. So whether there will be delays here or not is what we need to see. And December quarter is a seasonally weak quarter as well. So these are major things that we need to watch out for. And very lastly, headwinds are likely to persist in the current as well as the March quarter. That is what the management has indicated, which we have to take it with a pinch of salt, that it will be in the second half only, because it can extend to the first half of FY26 as well. So a lot of factors. Now, Hindalco numbers will be crucial from here on.
Yes, absolutely, Hiral. Now, railway stocks in a slow lane, RVNL and IRCON. So, Anushi is joining us live to tell us what's triggering the fall.
As you mentioned, the railway stocks are in pressure today, and this is after the weak set of numbers that we've seen from two counters at RVNL and IRCON. But as you've mentioned, valuations is one factor which have played for the railway stocks, not just this quarter, but it has been going on for like last 2-3 months that we look at. Also, another factor which is very important is the project execution which is happening. So let's just look at the numbers. If you look at revenue, it was down by about 1.2% for RVNL, while there was a margins have also narrowed to 5.6% as compared to 6%, and net profit down about 27%. Now this is on the account of the higher gains which happened in last year. There was a net loss of rupees 15.2 crore from its joint ventures and associate as compared to a gain of profit of 24% last year. Along with that, higher finance costs, depreciation costs have also led to this kind of a profit decline that we are seeing that has happened for RVNL. But the major concern remains on the execution side. The company has over a 1 lakh crore of an order book, and despite that there has been issues on the execution which has been playing out as we've seen the revenue downtick which is happening. IRCON also, if you look at the numbers, 19.3% of a downtick in revenue, while net profit was down about 18%. The company did highlight that it has anticipated an order inflow of 4,000 to 5,000 crore in its previous con call, while if you look at the revenue growth prospect, it has a flattish growth outlook for the years on the project execution side, and also seeing some potential margin declines in FY26. So this is all that has been playing out. What are the factors which are important to focus on railway stocks from now on?
Yes, Anushi. Now, moving on, Page Industries soars on upbeat Q2 performance with double-digit growth in EBITDA and profit after tax and margin expansion. Brokerages have been divided on the company's Q2 results. Mahima joins in. Mahima, take us through the highlights, please.
Right. So basically, in terms of how the Q2 has panned out for Page Industries, revenue was up 11%, EBITDA growth of 22%, margins have improved from 20.5 to 22.6, net profit is up 30%. So good set of numbers overall in a comparatively weak quarter in terms of demand for other retail companies. In terms of key highlight, there was a 7% year-on-year volume growth, demand improved sequentially, and e-commerce channel continues to outpace overall brand growth for the company. In terms of management commentary coming in, it's been very positive. The management has retained EBITDA margin guidance of 19 to 21%. Gradual pickup in rural consumption is happening, is what the management has said, and there have been no price increases since July 22, and it plans to expand its EBOs by 150 to 180 annually, is what the management has said. Now, brokerages, as you rightly mentioned, have remained slightly, divided in terms of the target price as well as the view. Citi has maintained sell with a revised target price of 35,800. It has a downside of 20%. They've said that better than expected execution of cost control, but they remain cautious given the near-term company-specific initiatives to drive growth, and current valuation appears to be expensive. Motilal Oswal on the other side, after the longest time, they've upgraded Page Industries to buy with a target price of 54,000, which gives a 20% upside, which is completely contrary to what Citi has said. What they've said is that it's an all-round beat, growth acceleration to sustain. They've increased EPS estimates by 5% and 3% for FY25 and 26 respectively. And what they've said is that they expect uptick in earnings cycle and valuation also see a quick re-rating going forward. And they model a 20 to 21% EBITDA margins for FY25 to 27 estimates. So this is the overall view of how Q2 has panned out for Page Industries.
Right, Mahima. So after Page Industries, Astral is another stock that is reacting to Q2 numbers today. The net profit cracked over 17%, whereas the revenue growth was flat. The company has slashed growth estimates to 10 to 15% versus 15% earlier on demand concerns. Puneet is joining us with more on this.
I think so. What they've done is they've just recalibrated the margins and giving a range. So earlier guidance was about 15% of growth in this particular year. Now they've done it from 10 to 15%. And as you rightly said, while the results were kind of like a washout, the expectations were normalized because of some other pipe players that reported results. They also said that they had a lot of pressure because of the PVC raw material prices being very volatile in this particular quarter. So the revenue was up just about flat, almost 0.5% compared to previous year. EBITDA margins was down 73 basis points, while well. Net profits were also affected with down 17% in this particular quarter, coming at roughly 109 crores versus expectation of about 135 crores. When you look at the segmental performance, there has been no revenue growth from the plumbing business basically, just 1% degrowth in terms of revenue coming at 966 crore, but margins actually gained 40 basis points in the plumbing business, and where the margins fell was its the second business, which is the paints and adhesive business. Revenue came in at 404 crores, 6% growth for the paints business, but margins were down roughly about 450 basis points in this particular segment. That dragged the overall margins as well. But the commentary was going to be the key, as well as some brokerage notes as well. So they mentioned that the PVC raw material prices were very volatile, which led to destocking of the expensive inventory, and that's the reason why one of the key reasons that affected margins as well. They have mentioned that demand was also low because of lower government spending and monsoons being a Q2 as well. So they've cut their guidance, as rightly said, to 10 to 15. But what's important in the first half, they did about 6.5% growth in volumes. If they have to meet the whole 15% guidance, they will have to achieve roughly about 15% growth in the next 5 months starting November. So that's going to be one of the key things. Execution risk is there, and it'll be seeing that they will be able to do that, because that's one of the key numbers that they mentioned in the interview as well, speaking to my colleague Neeraj. They'll be able to do that and has an upside risk according to them, but it seems to be seen what can be done. Investec, they have maintained their buy target price of 2,485 rupees per share, and they mentioned that it could be a strong compounding play on the core plumbing business. So overall, while the results were a washout, I think the commentary and the guidance by the management is going to drive the stock over the next couple of months, but updates and on the segmental is one of the key things to watch out for.
Thanks, Puneet, for that. Now, Ashok Leyland numbers are out, viewers. Ashok Leyland Q2 net profit has jumped 37% year on year. And if you talk about the profit, so it is in green, which is 37% at 770 crore versus the estimates that were 561. So it's a bit decent number there. Now revenue, but on the other side is down 9% at 8,769 crore versus the estimate figure of was 9,638 crore. So these are the numbers of the Ashok Leyland's Q2 results. The profit seems a bit high, but the revenue side is a bit low, a bit disappointing that way. But we'll be joined by. Okay, so let's move on. Now, speaking of the Q2 numbers, Mahindra & Mahindra reports a 35% year-on-year jump in its consolidated net profit to 3,171 crore for the second quarter of FY25. We spoke to the group CFO of Mahindra Group, Amarjyoti Barua, who talked about if momentum of growth will continue, start of upside in tractor business.
So actually, October was really good for farm. It's taken up the share to above 43%.
Wow.
So I think what's going to happen is there is going to be more competitive intensity in the second half as people do come out of now some of the traction is back in the market, so everybody's going to go more aggressive. We hope to maintain that share, but there's always a little bit of plus and minus that will have to contend with. So why we believe that last year was going to be tough is because the reservoir levels had dropped quite a bit. Now with the reservoir levels being high, and then also seeing some of the output come out in the mandis, we talked about it yesterday, 20% increase in October in mandi kind of inflows. That indicates that the farmer is feeling good about what's happening. And that's always, we've seen is a 12 to 18 month momentum. That's why we're feeling good that this should carry into F26.
On to some global political update now. The German Bundestag, or the federal government, could be set for an overhaul following the collapse of country's first ever three-party coalition involving Christian Democratic Union, Free Democratic Party and the Green Party. The chain of events unfolded on Wednesday, a day after Donald Trump's victory in the US presidential election, as German Chancellor Olaf Scholz fired Finance Minister Christian Lindner, the head of the pro-business Free Democratic Party. Lindner was fired following disagreement over how to handle the nation's budget and economy, with the FDP wanting to put a debt ceiling while other parties wanted to spend more government money. Scholz will continue to be the chancellor, but now in a minority government until the end of this year. This means that Social Democrats and Greens will need to pass legislation with cooperation from opposition parties. He promised to hold a confidence vote in Parliament on January 15th. However, he'll likely lose without the help of the Free Democrats, since he wouldn't have the support of the majority of the lawmakers. An election would then need to happen by early March. The Supreme Court overruled a 1967 verdict that held the Aligarh Muslim University could not be considered a minority institution as it's a central university. The court said that the case papers should be placed before the Chief Justice for setting up a fresh bench to decide the validity of the 2006 Allahabad High Court verdict. The apex court, by a 4:3 majority, said the judicial records of the case should be placed before the CGI for setting up a fresh bench to decide the validity of a 2006 Allahabad High Court verdict. My colleague Sunil Prabhu brings in more details on this.
Yeah, so that's what exactly I've been saying for the last 1 hour, if you recall, just as the verdict came out, stopping short of giving it a minority status. And as I explained to you, Kapil Sibal, the petitioner for this case, who argued before the 7-judge bench, speaking to me immediately after the verdict was delivered, has said very categorically that this was a reference bench. All the details, as has been pointed out, all the prerequisites that are required for determining have been spelled out by this reference bench, and it's in this context we'll have to wait and see now when that bench is constituted, how they look at the AMU. So as I was giving you the history, 1967, 5-judge bench had held that AMU was not minority in character. In 1981, a subsequent act was made where it said very categorically that this was a minority in status. Subsequently, there was a reservation given to the Muslim minorities, in particular for giving postgraduate medical seats, and it's in that backdrop that the government the Allahabad High Court had struck it. So it's on that basis now that the Supreme Court, 4:3, 3 judges dissenting, 4 of them Chief Justice of India in a majority judgment with his next Chief Justice who's going to succeed him, Justice Sanjeev Khanna, as well as Justice Pardiwala and Justice Manoj Mishra, have said and laid down the test of how you decide a minority status. So it's in that backdrop now that the Supreme Court has given that verdict, and it will now be a defining moment for minority institutions in particular. What was the intent? What was the character? How was AMU set up? Because there's a whole historic context right from our freedom struggle on the formation of the Aligarh Muslim University. That has to be looked at before deciding whether it is a minority status or not.
J&K Assembly ruckus continues for a 3rd day in a row after Khurshid Ahmad Sheikh, MLA from the Langate and brother of jail Lok Sabha MP engineer Rashid, displayed a banner on Article 370, leading to a fist fight among lawmakers. The leaders demanded immediate restoration of Article 370 and 35A to their original form and called for reversing the changes made by the Jammu and Kashmir Reorganisation Act 2019, urging the government to honour the region's unique identity and autonomy. The newly elected Jammu and Kashmir Assembly witnessed chaotic scenes on the first day of its first session after the opposition member Wahid Para of the People's Democratic Party moved a resolution against the scrapping of Article 370. The stage is set for high-stakes election between the top 2 alliances of Shiv Sena party in Maharashtra. My colleague Anuja Raite brings in a ground check from Mumbai's fort. Have a look.
Talking about the place where I'm standing at the moment, this is the fort region of the city, and it is a very important part of the city. The maximum number of tourists from outside Mumbai flock to the fort part of the city to experience the life in Mumbai. Here you see the Mumbai Darshan buses, the Mumbai Darshan cabs going around all day long. And I say that this is the part of the city which has got the maximum amount of aura because it has got everything from Asia's richest corporation body building to the RBI headquarters of the country, from CSMT building to the Ballard Estate, which is one of the most iconic and one of the oldest business centers here in the city. Let us then try and go around the city or go around this place talking to people about what are their concerns ahead of the much awaited 2024 state assembly elections here in Maharashtra. You know, when you live in an expensive city, there are of course several such places where we think twice before going. But then at the same time, there are several such places or pockets where one goes to buy things which might look expensive but are not really expensive. You know, these are called thrift markets, or in Mumbai, a lot of these places are located in such subways, and I am present here at the CSMT subway, a very iconic one at that, because it's very crowded, right? You see the entrance to the CSMT is right here, a few meters away to my right. So a lot of people who come to the city in lakhs and lakhs, many of them come here to buy things of daily needs. सबवे में इतने सारे लोग आते हैं, तो आपको क्या लगता है आपके एक्सपीरियंस में दुकान चलाने की कि एक बाहर दुकान होना ज़्यादा प्रॉफिटेबल हो सकता है या सबवे में जहाँ पे इतने सारे लोग आते जाते रहते हैं यहाँ पे?
एक्चुअली ये एक ऐसी जगह है, ये वीटी एक मशहूर जगह है बॉम्बे की, और पहले इसका नाम पहले वीटी था, अभी CST हो गया है, छत्रपति शिवाजी टर्मिनस। तो एक्चुअली ये जो है ना, ये बॉम्बे का एक ऐसी जगह है जहाँ पर हर इंडिया के लोग अलग अलग कंट्री अलग अलग मतलब जगहों से आते हैं, प्लस क्या आउट ऑफ इंडिया से भी लोग यहाँ पर आते हैं। तो एक्चुअली ये एक प्लस पॉइंट है यहाँ का बिजनेस का।
आप बताइए कि आपके एक्सपीरियंस में ऐसी कौन सी चीज़ें जो कि यहाँ पे थोड़ी सुधर सकती है? अभी इलेक्शन आने वाले, तो अगर उसके दृष्टिकोण से सोचे
तो यहाँ पर एक्चुअली एक चीज़ की खाली तकलीफ है यहाँ पर जो सभी वालों को है, क्योंकि ये अंडरग्राउंड है, यहाँ पर गर्म बहुत होता है, गर्मी बहुत है। आप खुद खड़े हैं, देखिए कितने पसीने में है, बराबर है। तो यहाँ पर क्या एग्जॉस्ट की कोई जगह नहीं है, सिर्फ 2 ही जगह 3 जगह है, वो भी दूर है। जब मेट्रो खुलेगा फिर वो AC वगैरह लगेगा तो ये हो सकता है कि आगे चल के तरक्की हो जाए, ये दुख हम लोगों का निकल जाए।
Well, that's all the time we had on this edition of Market IQ. Do stay tuned to NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading F&Os.
Hi, thanks so much for joining in. You're watching Market IQ on NDTV Profit, and my name is Alex Matthew. Let's take a look at how the markets are faring right now. And it has been a little bit of a subdued end to the trading week where you've seen quite a bit of chop and churn. And the equity markets, the benchmarks at least, are trading just about flat, treading water. And they've been more or less very range bound through the session, currently down about 0.8% or thereabouts, 0.08% or thereabouts. But what is going to be in focus, and we'll have to zoom out really, because what you see at the bottom of your screen right now is the updates from the China NPC meeting. And this is the National People Congress meeting, which relates to measures that are being taken to support that economy. This is extremely important because that economy has been flagging somewhat. There have been measures already announced by the Chinese government in September to try and support growth. Already, the growth target of 5% for 2024 has been looking a little bit challenging. And in fact, the IMF coming up most recently and saying that the likely growth rate in 2024 will be 4.8% and not 5%. In the third quarter itself, the GDP growth was about 4.6%. That was more or less in line with expectations, but the problems in certain key areas of that economy, like for example the real estate space, have not gone anywhere. And so therefore that economy is not out of the woods. You have of course seen quite a bit of equity flows into that market in the recent past on account of some of these measures that are meant to support the economy. We're going to get you some more detail. So what you see at the bottom of your screen essentially is the approval for the local government debt swap plan. And this is primarily to allow smaller administrations in China to swap their debt to reduce their borrowing cost. And this is going to be seen as a fillip to generating some growth at the grassroots level or at the lower constituent level for the Chinese economy. There is an anticipation that there will be more measures announced, of course, and we will get you some of those details in just a bit. But what are the measures that have been announced so far? While we're waiting for that to come through, just to give you a sense of what has been announced so far, there has been a reduction in the rates that was announced in September. There was a lowering of the mortgage rates for existing homeowners. There were measures that were announced to support the real estate sector as a whole, where you had foreigners allowed to pick up real estate in certain key markets. So trying to increase demand for real estate in some of those key markets. And there was also a reduction of the reserve requirement ratio for banks, which kind of functions a little bit similar to the cash reserve ratio for Indian banks, which allows them more liquidity to lend. So creating more liquidity in the system to allow banks to lend more and to spur growth, that was the attempt. But so far it has been felt that some of those measures are not broad-based enough. They're not large enough to support an economy and to push an economy the size of China higher. So let's see what they announced. Of course, what you're seeing right now and the visuals that you were seeing just a short while back are live visuals from a press conference that is being conducted after the meeting of the NPC. Let's turn attention back. Right there you have it. So the visuals that you see on your screen live coming in from China. We'll get you more details as and when we get them. For now, let's turn very briefly back to the equity markets in India, because as I was pointing out, you've had a very narrow range for the benchmark Nifty 50, and the broader markets are where you're seeing more drops. The mid-cap index losing about 0.8% or so right now, and you have the small cap index is also losing a similar amount, in fact a little bit more at this juncture, down close to 1% right now. And so understandably the market breadth is tilted in favor of the declines. It has widened in fact over the course of this session, and at this juncture it is pretty much at very close to the widest point of the day. Let's take a look at some of the contributors on the Nifty 50, because you've seen a few names that are gaining and lending a little bit of support, and some of those are the real large ones. HDFC Bank, one of them, in fact one of the two banks that are really holding the fort, and we'll come to that in just a bit, because the Nifty Bank is also under pressure like a lot of sectoral indices. But on the losing end you have Reliance Industries that continues to lose ground. It has been a laggard in the past couple of weeks and it continues to do so. Let's in fact give you a sectoral picture as well, because that is going to give you a sign of how the mood is at the end of the week. In fact, even an hour back, there was more red on the screen. So if anything, this is a bit of an improvement. You only have IT, which was gaining about 1% earlier on in the session. It has given up a little bit of ground and now trades with gains of about 0.7%. But as we've been speaking, there's been a lot of news updates on the earnings front, and we are waiting for a very critical announcement by State Bank of India. And let's pull up State Bank of India while we're at it. It's down about 0.8% or so at the start before the earnings get announced, of course. And I will take you through some of the key numbers. Let's pull up some of the key expectations on the screen as I'm speaking to you. You have the net interest income that is expected to come in at about 41,500 crore rupees. That's a growth of about 5% on a year-on-year basis. You have the operating profit that is pegged at very close to 25,000 crore rupees, and that would be a gain of about 29%. The advances, and we know about advances and deposits because this comes through in the quarterly updates that come in before the earnings. The advances have grown by 16% and deposits have grown by about 8% or thereabouts. Now, what are the key aspects to focus on? Of course, asset quality has been a concern for some other banks, not so for State Bank of India. Provisions are expected just about 7% higher at about 3,700 crore rupees. If anything is a deviation from that, perhaps you can expect the stock to react to that. The margins are expected to be more or less flat. The commentary on capital adequacy ratio is going to be critical to watch as well, because seemingly in order to pursue higher growth going forward, the bank may actually need to announce capital raising. So that's certainly something to watch out for. And the loan to deposit ratio, which is something of a key monitorable for a lot of banks, has also is likely to remain flat in the quarter gone by as well. Now, let's talk about a few more stocks while we're at it. By the way, there's more details coming through on the screen right now as well. So some quantification of the numbers. I'm reading this just as I'm speaking to you. In fact, we've got 6 trillion yen to swap existing debt. This is the proposal that has come through. And in fact, this is what I was talking about at the start. It's allowing local governments to go in for a debt swap. It's a total of an $839 billion debt swap to rescue some local units or local governments that may have been under a little bit of pressure. We're expecting the State Bank of India numbers to come through in just a bit. So let me reiterate some of those numbers for you. And we're going to be very closely watching the asset quality number, of course, because that has been a little bit of an issue for other banks. But for this bank in particular, we're expecting an improvement in the asset quality, and that on a sequential basis. Provisions, as I mentioned, are likely to go up about 0.7%, or about 7% or thereabouts. Already you're seeing a significant improvement in the stock price. It is off the low point of the day, and the numbers come through. Net profit is coming at 18,331 crore rupees. This is in fact much higher than expectations. It was pegged at 16,500 crore rupees. That's a growth of about 15%, and this is coming significantly higher than that. We'll have to look at the fine print to try and find out where that has come through. It was pegged at 16,112. So this is a significant beat on the bottom line. The gross NPA is, as I was just pointing out, expected to improve, and that indeed has come through. 2.13% is the number that you should watch out for on the gross NPA side as well. It'll be interesting to note what the net interest margin is, because we've seen a trend of a contraction in net interest margin for several banks, and we'll have to see if that has panned out for State Bank of India as well. There's an improvement on the net NPA side as well, from 0.57 to 0.53%, and that indeed is something that is going to bode well for this bank as a whole. Just before the earnings came through, you had cuts of about 0.7, 0.8% or thereabouts for State Bank of India. It's now only down about 0.2%, or it has recovered from the low point of the day. Harsh Saita is joining in because he's got the numbers in front of him. Harsh, it's a clear beat on the bottom line. What else stands out to you?
Well, yes, the ROA number really impressive, Alex, when you're looking at it. Clearly, the number looks very, very strong. You've done over 1.1% in ROA 2 consecutive quarters. It's a number which seems to clearly reflect the strength at the bank. In terms of NPA ratios as well, coming off in a quarter when otherwise you're seeing pressure with regard to asset quality across the board, it's clearly looking much better than what one can anticipate. Now, in terms of where the NII number is, it's coming at 41,620, and therefore that the NII number also coming slightly, or rather pretty much in line. So they've been able to maintain that margin number, I believe, of around the 3.2% mark. So not looking too bad even with regard to margin compression. It seems like, of course, further detail awaited with regard to some of those numbers.
Yes, those details. It seemed that way to me as well. In fact, evident, because you have such a significant beat on the profit number, and you have a contraction in the asset, or rather an improvement in the asset quality. Net interest income increasing by as much as 5%. The provisions standing at 4,506 crore rupees or thereabouts, and we were looking at the numbers not too long back. So let me tell you what was expected on the provisions number, slightly higher than anticipated. The expected number was about 3,700 crore rupees. So the provisions coming in at just over 4,000 crore rupees, slightly higher than expected. But Aditya Shah, founder of Hercules Advisors, joining in at this juncture to talk to us about the numbers and what he makes of it. Aditya, just the initial snapshot coming through for State Bank of India, a profit number that is a significant beat at over 18,000 crore rupees. The provisions higher
than expected, 31% higher, where it was expected to rise about 7%, but an improvement in asset quality, both on the gross NPA and the net NPA side. Net profit, once again, I'm telling you, at 18,300 crore or thereabouts, significantly higher than expected. What do you make of the numbers?
Hi, good afternoon, Alex. I see that the numbers are really very stable as it can get. From my perspective, the biggest concern across all banks this quarter has been the slippages that we have seen on the microfinance side of it, and smaller banks have continued to struggle. Although SBI's slippages have increased a little bit at about 4,000 or 4,500 crores, still there is an improvement in the net and in the gross NPA and consequently in the net NPA per se. So the numbers are very stable per se. From the presentation when it gets uploaded, we need to understand the loan growth, the deposit growth, and the movement in SMA 1, 2, 3. However, on the first look, it seems that the results are very, very stable. There's nothing to complain about, and as is the trend, that all large banks, particularly private sector and public sector banks, are starting to do well, and the real pain is within the smaller private banks and NBFCs.
I'll come back to you, Aditya, in just a bit. Harsh, coming back to you for some more numbers. I'm also noting there's a significant increase in the other income, which is stood at, I believe, about 15,270 crore rupees. Did you see that as well?
Well, yes, absolutely, Alex. In fact, that's led to the operating profit beat that we're seeing on the screen. 29,000 crore of operating profit that SBI has clocked, likely the highest ever in terms of operating profit that the bank has clocked. And what you've essentially therefore got is a very high base with regard to operating profit, which is aiding the provisions number, which is elevated, which has spiked up, and spiked up of a low base, in all fairness, Alex, because the balance sheet of SBI is just that large, right? And therefore, in all fairness, that's how it's really playing out. Even in terms of growth, and maybe Aditya, if he's listening to me, and maybe he can give a perspective as well. Deposit growth slightly on the softer side. It's come in at roughly 51.2 lakh crore is where the deposit base is currently at, and your loan base is currently at roughly 38.5 lakh crore. It was expected to be at 38.8 lakh crore as per our poll. It's come in at 38.6 lakh crore versus also the deposits expected at 50.5. It's come in with a beat on the deposit count at 51.2. So the deposit growth is stronger, and despite that, they've been able to largely maintain margins, at least basis the numbers in front of my screen. It seems like they've been able to maintain margins.
Harsh, can you take a look at that capital adequacy ratio as well? And I'll come back to you on that. But in the meanwhile, I want to get Aditya's view on this other income number. As I understand it, Aditya, this has to do with, correct me if I'm wrong, treasury income gets classified into other income as well, and certain other activities that the bank conducts. So would you say that this is one of the factors that has led to that outperformance?
Yes, of course. So the treasury income, as you've seen the bond yields going down, it automatically translates into higher other income per se. But having said that, the net profit is not the number that market will really concentrate on. Market will concentrate on the fact that the asset quality is as stable as ever, and asset quality deterioration has not taken place. In fact, asset quality improvement has taken place. So of course, the net profit margin can be here and there, but what the market will take to heart is about the asset quality per se. And as Harsh also said, that the deposit growth is fairly stable at a time when the entire system is struggling for deposits. Brands like HDFC, ICICI and SBI are continuing to garner deposits very strongly.
Harsh, only coming to you again because you made this point in the morning when you spoke to me about the preview and when you were talking about the numbers expected, you mentioned capital adequacy is something to watch. And I'm looking at the capital adequacy ratio at 13.76, about 10 basis points lower sequentially. And I'm seeing that the CET1 ratio, which is tier 1 equity, has fallen below 10%. So certainly something to watch for. Do you anticipate that they will have to raise capital sooner rather than later?
Very likely, in fact, Alex, it's a matter of time now, it seems. Because if SBI needs to continue to grow at the kind of mid-teens kind of level that they've been guiding for, even 13-14%, they're going to have to show up on their capital adequacy for sure, and tier 1 especially. So equity raise very likely on the cards in maybe a quarter or two, it seems. But if I can also interject and probably ask Aditya a quick question. Aditya, your provisioning spike up. 3,400 crore was the provisioning in Q1. Q2 now at 4,500 crore. Concern for you at all?
Not, Harsh. At a time when the micro cycle, of course, SBI also has some exposure on the micro side of it. And at a time when the micro cycle is really turning bad, still the slippages are at control per se. So we will need to listen to the management commentary on where the pain points really are. I believe that the pain points would be the credit card and the micro and the unsecured side of it. However, a mild increase in slippages for a bank that is size of SBI, I don't think is really worrying per se. In fact, I am happy that the slippages are not as big as I would have expected per se. So happy with the asset quality, and that I think for every analyst on the street would be the biggest part to take from the SBI results.
And Aditya, I know you said that profitability doesn't matter, but ROA is just going from strength to strength. Now 1.2%, and every quarter they are delivering a beat on one of the line items. This quarter, of course, it's other income, which is aiding ROA. But it just looks extremely solid overall, because that's how even HDFC Bank has done it over the last 20 years. Somewhere or the other, they create that outperformance, which kind of aids the numbers at the bottom line, which at the end of the day matters.
Absolutely. So to give a disclaimer, we believe that this is the peak ROA that SBI or all banks will have. From here on, the ROAs will start to stabilize, or for some banks decline as well. In our opinion, for SBI, it will stay here for a while. And then over a period of time, if the NPA cycle deteriorates, it will come down. So we are at the top of the cycle. The results are really very good. There's nothing to complain about per se.
I have a question then, Aditya, based on where you see the price right now, just about 850 or thereabouts. It is at the low point of the day, or more or less there. It's been quite choppy since the results came through. I guess to a certain extent, the street kind of trying to digest the number as a whole. The beat on the patch, sure, but an increase in the provisions, which according to you is not too much of a concern. So then tell me about how you see valuations and how you see that panning out. Is it a buy according to you at the current market price, and what is the upside that you see heading into next year?
So, Alex, we are at a peak ROA, and SBI is now, in our opinion, trading at about 1.5 to 2 times price to book, which in our opinion for a PSU bank is not generally cheap per se. Those who are holding the stock can continue to hold the stock. That is not really a problem. The bank will continue to deliver this kind of ROAs, in our opinion, at least for the next 6 to 12 months. If you are looking for an entry, we would like to wait and see what happens over a period of the next 6 to 12 months and then take a call. If there is a price correction towards 700, then that could be an excellent opportunity to add. But right now, at this stage, those who have the stock can hold on to it.
Aditya, what do you think will lead to a contraction in ROA? So, what do you believe will drag ROA going forward? Is it going to be the fresh equity raise, which is likely to come, in your opinion, as well? What are those 2-3 factors, major ones?
So, Harsh, we are coming out of a cycle where we had pretty low NPAs. And the biggest drag on ROA is always the NPAs provisioning that a company would really have to do over a period of time. So in my opinion, when the NPA cycle really turns out, that will be the biggest drag. Of course, ROA will be a drag over a shorter, of course, equity raise will be a drag over a shorter period of time. But if that equity is put to use and growth comes in, automatically the ROA will then start to revert upwards. So my sense is the next NPA cycle will then lead to SBI and all other larger private sector banks ROA coming down. But we are still away from that cycle, that it will be at least 12 to 24 months before that cycle comes in. So right now, it is like Rahul Dravid, the results are like Rahul Dravid, all-round stability, nothing to complain about. And now consistency will be the key from SBI over the next 6 to 12 months.
Okay. So I like the cricket analogy, Aditya, but just to that end, sometimes you wish that Rahul Dravid would score a little faster. And from that perspective,
would you say that the loan growth at 16% can be better? And what, according to you, can that number be? And in order to facilitate that, of course, a lot of factors have to play together. I guess the pitch is important to consider as well.
Absolutely. So in order to make a test match, a T20 match, India lost 3-0 with New Zealand. So the bank must not grow faster than it is able to digest. The economic condition is also really very important. In our opinion, if SBI grows at about 2 or 3x what the economy's growth is, it is fairly okay. So anywhere between 15 to 20% growth that SBI is really clocking up is perfectly okay. I'm perfectly happy with loan growth. I'm perfectly okay with the deposit growth. Now the only point is how SBI manages its NPAs. That will drive the stock price forward, or that will lead to a decline in the stock price. So faster growth is not possible in my opinion. It's fairly decent amount of growth SBI is giving right now.
Okay, all right. Thanks, Aditya, for joining and for giving us your first take. We're also joined this afternoon by Ashutosh Mishra, who's the Head of Research Institutional Equity. Ashutosh, just at Ashika. Ashutosh, just getting your perspective on the numbers. Initial look at it seems to be a big beat on the profit number, and that seems to have been led by the growth in other income. Asset quality also looks good, but there's an increase in provisioning. What is your first take?
The number is good at all front. If you look from business growth, deposit growth is very good. Loan growth is quite healthy for the bank. And at the same time, if you look on P&L part of it, NI growth remain healthy compared to what market was expecting it. Even on a provision line, if you look, provision for NPA is relatively lower. And they have already highlighted that the one account they are most probably may convert into the NPA, and probably because of that slight elevated credit cost out there. But if you look at sequential basis provision towards the NPA, that has come down out there. So if you look from all, even other operating expenses has also come down on a sequential quarter basis. So all the numbers are clearly indicating that bank is slowly progressing towards the and sustainably giving very good set of numbers.
Yeah. Ashutosh, thanks so much for joining and for giving us that perspective. We will come back to you, of course, later in the day to get a more detailed view once more elements like the NIM and commentary from the bank comes through. And indeed, we have to slip into a very quick break on this note. State Bank of India down 1.7%, reacting a little negatively. Perhaps the street not too happy about the provisioning number, which is up about 30% or thereabouts. It was expected to rise only about 7%, but the asset quality is actually improved. So hold your horses, perhaps wait till the management comes through. The press conference is not too far away, and you will hear from the management very shortly. We have to slip into a very quick break. We'll be back on the other side with more action, so do stay tuned. This is NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome, this is Market IQ. I'm Agam Vakil, and we're going to take you through the latest developments and updates that are coming through over the last 1 hour of trade. Right at the top of that, well, we're addressing what China has come up with respect to its stimulus plan. Well, there are a lot of swaps involved here, and the number that we are working with is about $839 billion worth of, and this is US dollars, worth of stimulus is what's been in the plan right now. But I have with me Neeraj, who's also tracking this. Neeraj, what are you making of this? And can we simplify how this will work in terms of the kind of involvement of swaps?
Yeah, so whatever China does, very difficult to simplify, but let's try and do some numbers out there. Agam, you can add on to this.
Yeah.
But the expectations, and viewers would remember that we did a piece on what the Bank of America market expectations were on the China MPC meet, which is about $870 billion of bond issuances over 3 years and 4 trillion renminbi, which is about 561 billion, into special local government bond issuances. Now, what is good that has happened is, it was important to note if the central government will fund the debt swaps, which effectively allow local government bonds to be swapped. And I think China's plan is $839 billion of a debt swap to refinance the local government debt. This is exactly what was needed per se to help the local governments, and that has been done. There's a local hidden debt swap total size also of about 10 trillion with 6 trillion yuan to swap the existing ones. I think, Agam, let me try and simplify this, because this may become a bit difficult for people to understand, but the net piece of what has happened, and it's on the back of comments that people have made who are China specialists, that what has come in is at the lower end of the expectations. Now, authorities are well aware that they need to do a lot more in China.
Right.
This has come in at the lower end. This does take care to solve some of the existing debt problems that the Chinese local governments have.
Right.
But is this large enough to invite investments by locals or globals into China? There is a problem.
Right.
And I think day before yesterday, when we were talking to Sridhar Shivram or somebody else, they were talking about how Chinese government not have the wherewithal to be able to do as much to solve the existing problems and invite fresh investments.
Right.
I think they've done this measure to solve the existing problems, but not fresh investments. The only piece that I would love to end this with, Agam, it is my view, is that the market probably started, this was before Donald Trump came to power.
Yeah.
The market started expecting that now that Trump is at the saddle, the stimulus will be supersized.
Yeah.
It has not been like that.
Right.
It is in fact at the lower end, not even at the higher end and not even supersized.
Right.
I think that is why metals globally have come off. Chinese markets in after hours have fallen as well. And India too, the metal stocks are not quite reacting.
Right. Well, actually, that's one of those things that we are going to take this forward with, and it's the impact on the metal sector. At the moment, it doesn't seem like we're seeing too much of a reaction. In fact, the metal sector has only fallen further on an intraday basis. As you can see, it's trading near days low, the sector specifically. But of course, we're not seeing a very sharp reaction. But as Neeraj just pointed out, that the stimulus is towards the lower end of the expectations. So it's certainly not supersized, not even on the higher end. And given the fact that it is at the lower end, it's a stimulus. You can't deny that. But that's something that we're going to have to work around with. Neeraj, thank you so much for giving us that clarity when it comes to that particular stimulus package coming in from China. But we also have with us Aditya Velekar. He's the senior research analyst at metals, or for metals at Axis Securities, who joins us on the show. Aditya, good afternoon, and thanks for taking the time out. What are you making of this stimulus package? And well, my natural question next will be, what does it mean for metal pricing across the globe?
Yeah, good afternoon. I think they have announced 6 trillion yuan of debt swap. So they will be swapping the local government debt with bonds from the central government. So usually in China, all the construction and real estate infrastructure activities are done through the local government. And the hidden local government debt as of 2023 was 14.3 trillion yuan. And in today, they have announced a swap for 6 trillion yuan, which will be done over a period of few years. So 2 trillion yuan will be used for each year for the swap. So basically, this allows the local government to efficiently now deploy the money for their construction, infrastructure and other activities, which because of the decline in property prices, the local government was unable to repay their interests and they were not able to mobilize their funds. So that's why the central government of China, they have gone for this debt swap. So this will now reinvigorate the local government, and that will boost some of the activity which was so far not picking up. So that is the rationale for that. As far as fiscal stimulus is concerned, I think this is just a swap. Additional fiscal stimulus, I don't think they have announced so far. But this swap is also kind of a, we can say it's a step in the right direction. We will have to wait for further measures if they announce any. But as far as metal prices are concerned, we have to wait and see, because it involves other parameters like recently, because of the Trump presidency, that how his policies will be and how the US dollar index moves. So there is a bit of a complication there, but I think this step is a step in the right direction, but slightly premature to just say that the prices will increase from here.
Point taken, Aditya. So going forward, I reckon that we'll have to wait for a little bit more queuing on fiscal stimulus, if at all. And perhaps that could give us a better picture on whether or not there will be an increased demand in metals, and thereby that would drive pricing further. But for now, it's safe to assume that we don't have anything on that sort, and it is basically status quo. Am I getting this correctly?
Yes, that's right. It's a step in the right direction. Maybe incremental steps they will take, but as of now, slightly premature to pronounce the judgment that this will increase the prices. That is a slight premature statement.
The China aspect, what are the other factors that are driving the driving forces for existing pricing for metals at the moment? And what are the other factors that are actually influencing the prices right now?
The other important factor is, I think, post this presidency of Trump, we have to see how his policies will be. So, especially with regard to the green transition. So, because the transition towards green energy, that will impact metals like aluminium, copper, and to a certain extent other base metals. So, if he scraps that policy, then the demand in USA will be impacted. Also, if he focuses on the domestic US economy, then the inflation, which was the Fed was targeting to reduce it, so there might be some, that trajectory may get reversed. So US dollar index may find some support, which is slightly negative for metals. So far US dollar was declining, but if they focus on American consumption, then the US dollar may find support. So that is the other aspect where metal prices will be decided in future. But primarily it's the domestic demand of China, which is the major driver. And within China, the property sector, which is at the root cause of all the structural decline in steel demand and other base metal demand. So we have to see if they announce any additional fiscal stimulus, and if they announce, that will be a major positive. As of now, it's just a first step in a correct direction.
Okay, our final question then, Aditya, we are nearly towards the end of the earnings season. What are you making of the earnings for the entire sector so far, and what's the way forward here?
So far, for steel stocks, the earnings were not so good. The debt of most of these companies, they are rising. The debt is rising, and earnings were under pressure. In Q3 also, we expect some kind of spreads could remain under pressure because of the decline in the steel prices. Ultimately, now it depends upon the steel prices. If they find support, then we can say that further the spreads may improve. But as of now, in Q3, the outlook is not very. The spread outlook is not very good on a quarter-on-quarter basis. For non-ferrous companies, the situation is quite favorable because most of the non-ferrous metal prices like aluminium and copper and zinc, they are doing good. And at the same time, thermal coal prices, they are at a lower level. So the spreads for aluminium smelters is quite good. So it's a clear distinction between non-ferrous and ferrous, where ferrous is not doing good and non-ferrous is doing good and is expected to do good in future.
Aditya, we leave it at that. Thank you so much for joining us and giving us that much more clarity with respect to what the latest updates coming in from China mean for the metal sector globally, and of course, how it could potentially pan out for us Indian companies as well. But from there on, we move on and talk about the market, of course, which has come off to a certain extent. It's still near days lows. The Nifty, of course, down around 0.2%, but it's still largely range bound, I'd say. It's been a very, very quiet Friday afternoon, and it's the same for the Bank Nifty, which is down around 0.5%. But with that, we shift focus to the primary market now. And Swiggy's 11,000 crore IPO has now been fully subscribed on day 3. The demand was, of course, muted when it opened, with the retail portion still being slightly undersubscribed. But why is that? And the street believed Swiggy is undervalued when compared to peer Zomato, and we now have Sajid, who joins us to tell us more. Sajid, over to you.
That's right. Swiggy's IPO is fully subscribed. It's subscribed 2.4 times as of 2 p.m. and that's primarily led by foreign institutional investors who have come in towards the afternoon and added to the subscription. But the IPO as a whole, which was the most widely expected IPO, hasn't been to expectations, especially because of the kind of headwinds that we are seeing with respect to foreign investors. And and the kind of demand and the listing gains which are absent in the market there. If you look at from a category point of view, you have retail investors which the portion was fully subscribed as of now, which is one time, and that's primarily because we had 3 IPOs underway, which is Acme and Niva Bupa, which is also there in the market there, and all the 3 IPOs don't have much of a listing gain as we speak, and that's one of the reasons why retail interest is very lukewarm in this IPO, and in most cases it will retailers will get the entire allotment for which they were going to subscribe there. In the HNI segment, the cost of IPO financing is high, and also the absence of listing gain is preventing many of the HNIs from coming and subscribing in high numbers. Also, the fact that many of the HNIs have also acquired the Swiggy shares from the off market at a price which is much higher than the IPO price is also preventing them, from averaging, because they don't because there is no listing gain which is coming in at this point in time. FPIs have been very wary of the secondary market, but in 2024 we have seen FPI has been net buyers in the primary market there. So the flows which are coming into the IPO is the only positive flows which are coming in India as of now. Otherwise, for the last 28-29 sessions, we have seen nearly 1.42 lakh crores of foreign fund outflows which is happening there, and that is also one of the reasons that appetite was much less in the anchor book. If you see the construction of the anchor book there, 54% was subscribed by domestic institutions. Now, normally in an anchor book, 1/3 is reserved for the mutual funds and other domestic institutions. In this case, more than half was given to domestic institutions because the appetite was much lower going into the IPO, because there were multiple international factors at play at that point in time. And mutual funds have been good subscribers there. They have put in some bids, but it's not the kind of bid that we saw in the case of Zomato. Zomato issue was subscribed 38 times at the end of the issue, and the issue size was around 9,300 crores. And here we are seeing Swiggy subscribing just 2.4 times, and especially because of the headwinds that's coming in from various investors, and no listing gains which are expected for the IPO.
Okay, Sajid, thank you so much for getting us all those updates. With respect to Swiggy, of course, it sailed through, and now it comes down to how it is going to list when it does over the course of the next few days. But with that, we shift focus to one stock which is bucking the trend in doing well in today's day of trade. That's Indian Hotels. We now have Anushi joining us to tell us about not only the earnings, but also several other factors which have worked in favor of the company and are still. Anushi, over to you.
Hey Agam, so speaking about Indian Hotels, now this is on focus after it came out with a very good set of numbers in Q2. If we look at how it has been, the stock has seen about the company has seen about a 27% of a gain in its revenue, while the EBITDA margins have also seen a meaningful expansion to 27% as compared to 24.5%, and net profit about a 225% of growth that we are looking at. But do note that this higher growth number that we are looking at is on the back of some high exceptional gains which happened almost at the tune of 307 crore, and this was on the Taj SATS consolidation with the IHCL which took place, because of which we are looking at these gains. But on to the outlook forward, what was noticed in Q1 was a weaker set or more muted set of numbers that we had seen, and the management had commented that the June-July booking numbers looked strong, and this is reflected in the kind of key operational highlights that we are looking at. Occupancies were almost at a high number of 78%, seeing a 150 basis expansion here. ARR, that's the average room rate, saw about a 10% expansion, and RevPAR, that is revenue per available rooms, saw about a 13% expansion. So with this, the management remains really confident on maintaining the double-digit growth, and also they remain steadfast on their target of openings 2 hotels per month. In this, they do aim to open about 25 hotels in FY25 and 30 hotels in FY26 as we speak. Some of the other factors which also needs to be considered is now they are seeing that foreign tourist arrival should be back to the pre-COVID levels, and this would be happening by end of FY25. And also they see some further acceleration in H2 revenues. Q3 and Q4 are seasonally stronger quarters for the business, so focus remains on that, and this is on the account of higher wedding dates that are taking place in this quarter. So this is all that is happening in IHCL.
All right. Well, Anushi, thank you so much for getting us those updates. But we move on to Page Industries, and this one is also buzzing in trade, is up around 7%. We now have Mahima joining us to tell us why this one is advancing on volumes. Mahima, over to you.
Right, Agam. So in terms of how Q2 has panned out for Page Industries, it's been good quarter overall for Page Industries, where retailers have otherwise seen a weaker demand. Its revenue grew by 11%, EBITDA grew by 22%, margins have improved from 20.5 to 22.6%, net profit has gone up by 30%. Now overall, what's working for Page Industries? Couple of things. They have had a double-digit growth in EBITDA and PAT, as I mentioned. Margin expansion was led by stable input costs and improved operating efficiency. They have a healthy 7% volume growth, which was 3% in Q1. E-commerce channel has continued to outpace the overall brand growth for the company, and e-commerce channel has posted a 41% growth in first half of FY25. The recent launches of new SKUs are set to boost growth for the company, and volume growth pressure is now bottoming out, and the benign input costs are likely to lead a better margin print going forward, is what the management has said. And technology upgrades like the ARA system are enhancing distribution and inventory management, because of which the inventory days have decreased from 168 to 93, which was the case in FY24, and gradual pickup in rural consumption is driving positive shifts for the company overall. And lastly, working capital days have also improved for the company from 75 to 61, which is kind of aligning with how it was in FY24. Lastly, in terms of brokerages remain slightly divided in terms of their view on Page Industries. Citi has maintained sell with a revised target price of 35,800. They're saying that better than expected cost control, but they remain cautious given the lack of near-term company-specific initiatives that will drive growth, and the current valuations of 61 times PE appears to be slightly expensive according to them. Motilal Oswal on the other side, after the longest time, has upgraded Page Industries to buy with a target price of 54,000, which suggests a 20% upside. What they're saying is that all-round beat and growth acceleration to sustain going forward, and they've increased EPS by 5% and 3% for FY25 and 26 respectively. They expect demand improvement to continue in the second half of FY25, and they're estimating a CAGR of 13%, 17% and 19% respectively for sales, EBITDA and PAT over FY24 to 27 estimates. And lastly, they believe that the margins will remain in the range of 20 to 21% for FY25 to 27 estimates. So this is the overall view of how Q2 panned out for Page Industries and why it's buzzing in trade today.
Mahima, thank you for getting us those updates there. So we do have a handful of names which are in fact advancing in trade today. We move on and talk about Indian metals and ferroalloys, and now we have Mihika who's joining us to give us an update on this one. It's come off quite a bit from day's highs. Mihika, what are you tracking here?
Yeah. So Indian metals and ferroalloys, it's actually volumes over 11.5 times its 30-day average, and it's an intraday high of 10.6%. Now the stock is buzzing on the back of a good Q2. Now despite flat revenue growth, EBITDA is up 13.46%, margins have expanded 294 basis points, and net profit is up 40.14%. Now what led to EBITDA growth and thereby net profit growth was 7% lower other expenses and a 20 crore reversal in finished good inventories. When you look at why revenues were flat, well, the segment-wise revenues is where the answer lies. Mining revenues were up 18% on a year-on-year basis. However, power revenues fell 13% on a year-on-year basis due to muted demand, and the ferroalloy revenues were flat at 690 crores. Lastly, in terms of operational highlights, ferrochrome production was up 2% on a year-on-year basis at 68,248 tons, and power generation was down 6% at 277 million units.
All right, Mihika, thank you for getting us those updates around that one. And then we talk about Vijaya Diagnostics. We now have Varsha joining us to give us more details. Varsha, over to you.
Thanks, Agam, for that. So yes, Vijaya Diagnostics is buzzing on the back of volumes. If you see, yesterday a company came out with its Q2 FY25 numbers, where like a kind of pretty set of good numbers. Revenue was up 32%. Now this growth was led by 30% increase in test volumes, and the realization per patient increased 6% year on year. They plan to add 10 hubs by FY26, and they're expanding into Pune and Kolkata with new leases to start operation in 2 to 3 quarters. The B2C segment contributes almost 93%, with wellness services contributing at 13.4% of revenue. They're targeting 19% volume CAGR from FY24 to 27, largely through new centers and increased footfalls. Also, just few con call highlights that I want to highlight. One is they've guided for EBITDA margin in the range of 40% in FY25 and 26, and they expect 15 to 16% year-on-year revenue growth in FY25, and they are entering into Bangalore market through organic growth. So this is all we have on Vijaya.
Okay, Varsha, thank you for getting us those details on Vijaya Diagnostics. But shifting focus to the primary markets once again, Zinka Logistics is in focus. The company is set to come out with its public offering on November 13th, and we caught up with the management on the use of IPO proceeds and more. Listen in.
Blackbuck, Zinka Logistics is our registered entity. Our brand is Blackbuck. Blackbuck is in the business of enabling and empowering the truck operators of the country to do their business in a very simple way, help them participate in the digital economy, help them grow their earnings, help them grow their business. So we are a digital platform, the largest in the country, which is essentially trying to do this. Today, zooming down, really what we help a truck operator uses our app to conduct his payments, his toll payments, his fuel payments, uses our app to do telematics, has GPS installed in his vehicles, which he uses to track his trucks, he uses to track his drivers. He uses our app to find loads anywhere in the country. He wants a return load or a forward load. He has a lot of shipments which come onto our platform. He chooses and then decides to take one of those shipments. So, and if he is in a need of a loan to buy a vehicle or against his vehicle, he can apply, for a loan through the app. So everything in the life of a truck operator, which could be digitally, 10x, it could be delivered to him 10x better, 10x more efficient, is what Blackbuck is involved in, and solving, the trucking problem in its own way.
Also on your screen, we have the numbers for Vedanta flashing, where we are looking at, EBITDA margins coming in at around 26.1%. So a contraction of nearly 240 basis points, actually 340 basis points, pardon me. And however, we are looking at a net profit in the bottom line worth 5,600 crores against a net loss on a year-on-year basis. Of course, a lot of one-offs will have a play in this part, and but as far as your revenues are concerned, again, mostly flattish, marginally down by around 3.5%. And that's the reason why we're not looking at too much traction, too much a decline in Vedanta, because at least the top line is steady, but we are looking at a sharp cut with respect to its operational numbers. But with that, we are completely out of time on this edition of Market IQ. Don't go anywhere. India Market Close coming up next. Stay tuned in.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Thanks so much for tuning into India Market Close. And while the markets are reeling under a bit of pressure because, well, you know, bunch of things haven't worked, including SBI numbers. But SBI is about to start speaking, and we'll cut to the management in just moments from now. So that's to be watched out for sure. See, look at the numbers on your screen, by the way. Vedanta came out with a set of numbers. The numbers were, well, decent, you have to admit, relative. But I think the fact that the Chinese NPC outcome hasn't quite worked out is keeping this stock also under a bit of pressure for sure, because the EBITDA numbers are much better than what the street was working with. State Bank of India reeling and bring up the Bank Nifty losers, if you will, while we just wait to cut to State Bank of India pressure in just moments from now. The Bank Nifty, HDFC Bank is holding out okay, but between SBI, BOB, PNB, PSU banks are under a bit of pressure. Also giving them company is ICICI Bank. What else has happened? The Chinese NPC outcome hasn't quite lived up to its billing. So, I mean, they've come in at the lower end, and that's why metal names out here would be important. So, if you can get the BSE metal index, again with the winners and losers, and you will see what I'm talking about. But there on your screen, almost every stock save for Hindalco in the red. And the reason is the expectation was that the Chinese stimulus within the range that was anticipated by the market, it will come in at the higher end of the range or maybe above that, because now Donald Trump is the president, or president-elect, if you will. but it is coming at the lower end. So not only has it not beaten the upper end, but it's actually coming at the lower end. And as a result of which, people believe that the investments that were supposed to or could have happened with a stimulus haven't quite happened. So therein lies the other problem. We have two very special guests lined up over the course of the next half an hour. One, of course, we'll cut to the SBI presser. So that is one. Two, for understanding more about Chinese stimulus as well as the US presidential impact, we have Taimur Beg as well, and we'll cut to that as well in just moments from now. But bring up the heat map and bring up the BSE 500 winners and losers. So first, this is the Nifty heat map, a lot better than what it was looking in the morning, by the way, with the likes of M&M rebounding, some of the IT names doing well, and a lot more green than red. But the losers are commodity names, Coal India, Tata Steel, etc. SBI on results, Tata Motors still sulking out of numbers, Trent is down as well. But SBI started speaking, let's get across.
Value to all stakeholders while positioning ourselves as a reliable financial services brand. I will first start with a brief description of the present global and domestic economic scenario and then discuss bank's performance. Global growth is expected to remain stable, though somewhat underwhelming, with the cementing of growth in the largest economy of the US being a silver line. The recent US election results could lead to lower taxes, favorable regulations along with tighter labor markets. They also present an opportunity for the Indian economy to further strengthen the domestic manufacturing base while closely aligning with strategic allies. Further, any positive development on the geopolitical situation in areas of conflict could lead to easing of commodity prices. On the other hand, the EU bloc appears still shrouded in uncertainties. The global growth forecast by IMS for 2025 remains at 3.2%, with India remaining the fastest growing large economy. In domestic economy, India's GDP registered a growth of 6.7% in Q1 FY25, driven by private consumption and investment. Looking ahead, agriculture sector is expected to perform well on the back of above normal rainfall and robust reservoir levels, while manufacturing and services activities remain steady. On the demand side, healthy kharif sowing coupled with sustained momentum in consumer spending in the festival season augur well for private consumption. The average inflation for FY25 is expected to be 4.5% according to RBI estimates. Latest numbers show that scheduled commercial banks' deposit growth has now surpassed credit growth. Deposit credit differential has now turned positive, which was last seen in April 2022. We expect scheduled commercial bank deposits will grow 11 to 12% and credit by 12 to 13% in FY25. RBI has ensured that system liquidity remains comfortable by conducting two-way market operations. As far as our bank's results is concerned, we have once again delivered a good set of numbers. At the end of Q2 FY25, our credit growth was 14.93% year on year. Deposit growth was 9.13% year on year, while the CD ratio domestic is at around 67.87%. Importantly, our slippage ratio was 0.51%, with retail slippage ratio at 0.31%. Credit cost was 0.38% and PCR is all-time high of 75.66%. The profit for the current quarter is 18,331 crores, up almost by 28% year on year. As far as in the part of business growth, I would like to make a special mention of the deposit growth, which we've been very seriously pursuing. At the end of Q2 FY25, deposits have crossed a milestone of 50 trillion rupees. I think this is a milestone which we crossed, and we stand at 51.17 trillion. We serve more than 50 crore customers. We are humbled to serve 1 out of every 3 Indians, but I take pride in saying that SBI in some manner touch every Indian family. The total deposits have grown by 9.13% year on year to 51.17 trillion. Term deposits have grown by 12.51% in year on year. Our current account deposits have grown by 10.05% year on year, and CASA grown by 4.24%, and we have maintained CASA ratio at more than 40%. So this is a good deposit story in our view. As far as credit growth is concerned, I am pleased to advise that the credit growth continues to be robust across all segments. Our domestic advances have grown by 15.55% year on year, driven by 18.35% growth in corporate, 17% in agriculture, and another 17% in SME, and 12.32% in retail segments. Our foreign offices advances have grown by 11.56% year on year in rupee terms. As regards asset quality, slippage ratio, as I mentioned earlier, is 0.51%, while the credit cost for Q2 FY25 stood at 0.38%. The net NPA ratio improved by 11 basis points year on year, stands at 0.53%. We have a well-provided NPA book, as mentioned earlier, with a PCR of 75.66%. These indicators of asset quality highlight the robust quality of our loan portfolio. As far as liquidity is concerned, our liquidity position is comfortable, with the liquidity coverage ratio being about 129% as on 30th September, while the domestic CD ratio was at 67.87%, indicating a significant potential to grow our credit portfolio. The bank remains well capitalized, and we have sufficient headroom to take care of business growth requirements. Our capital adequacy ratio is at 13.76% without considering plowback of profits, and is well above the regulatory requirement. And if we include the profits for H1 FY25, our CAR would be at 14.79%. As in the digital journey, I am happy to share that the progress we are making in digital banking is paying dividends. More than 8 crore customers have been registered on YONO, driving digital agenda of the bank. 61% of regular saving bank accounts are opened through YONO in Q2 FY25. Our subsidiaries are also consistently performing well and continue to create significant value for all the stakeholders. We will nurture these subsidiaries and maintain leadership position in the respective businesses. We are glad to report that the bank continues to report ROA and ROE greater than 1% and 20% respectively at the end of half year FY 2025. While we are glad about the outcomes in Q2 FY25, we are also mindful of areas for further improvement. On the liability side, we continue to focus on increasing our share in current account while maintaining our leadership position in savings bank deposits by further strengthening our customer outreach and branch network. Although our bank's cost base is substantial, it highlights our commitment to compliance and establishment expenses. From this strong position, our goal is to be consistently achieve ROE over 15% throughout business cycles. To conclude, I want to thank you all once again for your support and being there here. The bank, while pursuing its own progress, contributes to the progress and growth of the.
That's SBI, of course, and if the Q&A has something interesting, we'll cut across. But I think what is interesting is a conversation with Taimur Beg at any single point of time. Let's go across. Tamanna is in conversation with Taimur Beg.
Now we move to the media.
Scale which was not imagined. Does this mean more money globally coming into America, again at the cost of emerging markets like India?
It should not be, but unfortunately, we live in a world when there is some risk aversion, some uncertainty. Everybody flocks to US dollar assets, either the US dollar currency or the US dollar bond or US equities. And that's what we've seen. But combine it with the fact that the US economy is showing tremendous growth momentum on the back of spending boom with respect to AI, on the back of very strong corporate earnings and fairly resilient consumer balance sheet, the economy is looking very good. So late in the cycle, it should not be growing at 2.5%, 3%, but it is. So I don't think the US needs to give people too many reasons to invest. All the reasons are already in there. I don't think Trump coming or not coming would have made a difference. Flows would have been US friendly for a while. But now with the cloud of tariff gathering, it has an impact on people's view on the US dollar. If you have tariffs, the dollar will strengthen. All the other currencies, which are the exporting currencies in the US, they should sell off just to balance out against the tariff. So that makes it a no-brainer as far as a long dollar call is concerned. Now, if you also combine that with the fact that there is a strong likelihood that the US fiscal will not go toward consolidation, that means more bond issuance, but that also means high interest rates, which again brings global investors in. So in a way, US good news and bad news, both of them seem to be right for US assets at this juncture. It will not last. But at this moment, given the uncertainty, it's all long dollar, long USD assets, unquestioned.
So long dollar, long USD assets. And if I were to ask you to complete that equation with India in it?
Right. So I think that the secular growth story of India is absolutely undiminished. And when I talk to global portfolio managers, whether in India or outside of India, in the Middle East or Europe or the US, there's not one percent decline in people's enthusiasm or interest in India, whether it is related to India's sort of burgeoning supply chain of manufacturing, or the burgeoning and extremely full of vitality in the capital markets, whether it's M&A or private equity or listed equity market. There is a lot of interesting deals, interesting opportunities, and there's a lot of interest from global investors. I don't think anything if that is being diminished. We're only talking about the last 3-4 months, during which time we have seen some degree of sideways movement, a few sell-off here and there. But otherwise, I really don't think, again, it's not a zero sum. Good news for the US should not be bad news for India at all.
When do you see this sort of tide turning as far as India is concerned, Taimur? I mean, you're one of the few voices who has been completely very bullish on India, even, I mean, in the recent past. And when I'm speaking to you right now, compared to others who are talking about overvaluations, who's talking about China and US being a negative for India, you're saying this is just a correction. India had a one-way run-up. When do you see that tide turning? You already have very hefty outflows.
Right. So I really feel that it's a matter of time frame. If you were to ask me, do you want to put in money in the Indian stock market with a 3-month horizon? Do you think there's substantial upside? I probably will hesitate. But that's not the time frame that I'm talking about. I mean, we should not be thinking about the stock market in such narrow tactical terms. Nobody can time those things, as we have seen with the F&O saga this year in India. We should think about the US stock market, Indian stock market, as a multi-year long game. And in that horizon, the market will deliver good returns, no question about it. There have been issues related to how strong is the export demand, and that is not India specific. We see all over the region, with the exception of the very latest data that came out of China yesterday, exports have been a bit on the downside lately, and Indian exporters have felt that. We've also felt that there's a bit of a two-track economy in India, rural demand versus urban demand. There's been a bit of a lopsided momentum. Those things have given people a bit of a wake-up call, and we've seen that among Indian retailers who have given some signals, and they've come to your show many, many times in recent years, that they also feel that the sort of strength and demand that should be a part of India's structural story probably is not there. But surely there is sometimes a bit of a cyclical element. There is sometimes some degree of exhaustion after a very strong bullish run, whether it is consumption or the stock prices. We're going through that. That doesn't bother me at all.
Okay, so so let me rephrase the question that you actually asked yourself. You said, if you ask me, will you invest in India right now with a 3-month time frame, I would hesitate. What is the time frame which removes all hesitation for you?
Oh, as soon as we go past 1 year, I am very, very comfortable.
But 1 year is a long time, Taimur. That's a long time. The 3 months is feeling like a lot longer for Indian investors who've seen their portfolios dwindle.
They're spoiled for choice. They're also seeing their portfolios expand tremendously in the last 3-4 years. They should take that into context.
Okay. So now, we've talked about Trump briefly. We've talked about China. Let's talk about Fed and what we've heard from the Federal Reserve in the last 12 hours or so. 25 basis point cut in December. Now, how certain would you be? Also, how certain you'd be that Powell sticks around, even though he says that, no, Trump can't fire me?
Right. I think that was like the most interesting part of the entire press conference, not the commentary on the economy, because that was just, ho-hum. We've heard the same story many, many times. Labor market marginally weak, underlying demand still pretty strong, inflation is coming down, the Fed is happy with cutting rates, and I think we can say fairly safely that the December rate cut is also on the cards. Nothing is going to happen as far as Trump's policies are concerned between now and December. He will not take office till January. I think 2025 is going to be very interesting. All this time, the Fed's playbook has been to prepare the markets for a sustained set of rate cuts through the course of 2025. And we've all been busy pricing in a terminal Fed rate of 3%, 200 basis points below where we are now, or 175 basis points below. That is looking increasingly untenable. And you've seen that already reflected in the pricing even before the election. I think the election sort of reinforces that view that bringing inflation down to 2%, bringing Fed funds rate down to 3% might be nearly impossible in 2025, especially if the U.S. growth momentum remains unabated. If we're expecting tax cuts under Trump, if we're expecting all sorts of support for the capital markets and deregulation, how on earth are we going to see growth slow down? And therefore, services inflation in particular. I'm not that worried about goods inflation. That's a tariff story. We'll see that later. But just in terms of services inflation dynamic, which is the key source of inflation pressure in the U.S. right now, that might turn around and spoil the picture in 2025. So I'm not fussed about the Fed direction in December of this year. They'll cut. How many cuts can they carry out in 2025? And if indeed Trump goes all out with deficit spending, unfunded tax cuts, should the rise in long end, which the Fed really cannot control, bother the Fed? Or should they just talk about near-term inflation outlook and keep on cutting rates? And we see an increasingly steep curve, which could create other problems in the market. So those are all beginning to now come into our windshield, if you will. We have to keep an eye on that. Storm's coming, but not in December.
Okay. So what happens in 2025? Do you see possibly an extension of rate cuts, a pause, or then a reversal in direction?
The baseline scenario, which is independent of what policy prescription that Trump will put in place, let's just talk about the baseline scenario, is one where growth does go from, say, 2.5 toward 2 in 2025. Why would that be the case? Because on the labor market side, we are beginning to see marginal, not substantial, and marginal weakness. And as wage growth moderates, there is some degree of softness in the labor market. It should bring growth down a little bit. That in turn should have a solitary impact on inflation and bring inflation down to 2. In that scenario, 2% inflation, 2% growth, that can take the Fed funds rate down to 3.5, at least in my view. Now, how would this view be challenged? If again, as I said earlier, Trump comes with a very expansionary fiscal agenda, the Fed will start thinking about the risk to inflation in the medium term. But mind you, this is a data-dependent Fed. They cannot make a decision or postpone a decision for some inflation that might appear in the horizon a year and a half from now, owing to tariffs or expansionary fiscal policy. They're forecasting models, which is based on available data on labor market, on capital formation, on economic momentum. That also needs to show that in the near term, there is significant inflation risk. I am not sure they'll be able to show that in a very convincing manner immediately. And if they can't, they'll get in trouble with Trump, because Trump will feel that the Fed is playing politics. It is punishing the U.S. government for something that hasn't happened yet that might happen in 2026, and is being reticent about rate cuts in 2025. So we will see seeds of conflict around that.
What is the best case scenario and worst case scenario of a Trump administration, Taimur, in terms of his policies, which will impact the globe, America, of course, India?
So the best case scenario would be Trump has nothing else to prove. He's gotten elected for a second time. He's the comeback kid. And therefore, he doesn't need to rely on vitriolic rhetoric and daily tweet storm to shock the global system on a repeated basis. He also doesn't need to go out on a big war with China on tariffs, on technology. He can be the peacemaker, and he can be the elderly statesman, something like that. How likely is that? I would assign a 20% chance to that. 80% chance, in my view, would be on the not so great scenario, which is Trump is exactly the person he has been for the last 40 years. All the way back in the 1980s, Trump was taking full-page ads in U.S. newspapers criticizing Ronald Reagan for being soft on Japan. And today he is talking about the same things in the context of China. So we would expect Trump, in my view, in that 80% scenario to remain exactly the same person that he has been for the last 4 decades. Japan has been replaced by China. There will be tariff, and there will be tariff across the board for all countries in the world. It would hurt our exporters, but we have lived with Trump, even in the bad case scenario, for 4 years. I'm sure we can survive these 4 years too.
Okay, that's an optimistic view. Taimur, as we wrap up the view on India, you talked about some concerns on the urban-rural divide. what is the economic outlook looking like for you and the rate cut cycle from the RBI's perspective?
Right. So we have been on the camp that, RBI doesn't have the room to cut rates in 2024. So whatever rate cut that they do, it'll be taking cues from the Fed with a substantial lag. And then in the first half of 2025, if indeed we see growth heading toward this bottom part of the 6 to 7% spectrum, so like a low sixes growth, the RBI would then start thinking more about growth and less worry about inflation and perhaps go ahead and cut. We have the same old issues with inflation, the vegetable prices and the fruit and perishable prices. Those things are really complicating the food picture, but that's not necessarily, in my view, a demand-driven issue. It's a supply-driven issue. So if it's supply-side inflation coupled with some sort of a weakness in growth, I think there will be some room for the RBI to set the ground for some rate cuts. But in terms of growth outlook, independent of what the RBI does, we do see on a calendar year basis for 2025 about 6.5% growth, which is, I think, great by global standards, may not be great by India's aspirations, but 6.5 is fine.
It's a reduced number, your 6.5% growth? Has the India growth forecast come down, Taimur?
No, so we have been in that 6.5 to 6 3/4 range. I wouldn't necessarily call this a downward revision. It is basically recognizing some of the risks around the domestic demand side. That's about it.
Okay. Thank you so much, Taimur, for speaking with us. Taimur Baig there with very comprehensive responses to all things Trump, China, Fed, and of course...
Taimur Baig, and no big downgrade effectively onto the India forecast, but some interesting points being mentioned out there. Yep, almost everybody says bet for the long term, not the short term. Let's try and talk about the short term though a bit. Kunal Rambia, founder of The Street, and Neeraj Dewan, independent market expert, joining on the technicals and the fundamentals. Gentlemen, thanks so much for waiting by patiently while we were just finishing that conversation with Taimur Baig. Really appreciate your time. Kunal, let me get the trade conversation first in before I get in Neeraj for his fundamental view as well. Are you trading? Are you initiating any trades for the weekend on the Nifty or the Nifty Bank?
Thank you so much, sir, for having me on the show. It's always great to listen to the market experts and understand their views also. So if I look at the Nifty, yes, I'm absolutely comfortable. The extreme low was seen somewhere on 25th of October and followed by the next low, which was on 4th November. But if you look at the overall range, I think Nifty is comfortably holding 24,000 mark. Now, this is the broad level from where the risk-reward ratio for the long is absolutely favorable. So yes, on Nifty front, I'm comfortable initiating a position with the stop of 150 points. And on the upside, I think the room for 500 to 600 points is absolutely open. When it comes to Bank Nifty, it's more volatile compared to Nifty. But if you look at the range again, on the lower side, I think 51,000 is a strong support and the resistance is at around 52,500. So from the risk reward point of view, I think Nifty is good to trade over Bank Nifty as of now. But otherwise, the trend on both the indices remain intact and I'm absolutely comfortable initiating trade on both of them.
Okay. So more upside than downside, right? Kunal, I got that straight. More upside on the Nifty. Okay.
Absolutely.
And what are the stocks, therefore, in such a scenario that you are penciling in as trades?
So as of now, I'm selecting a very specific counter. The first is Marathon Next Gen. Now look at this counter. Just a couple of days back, it made an extreme low near 540 levels, and right now it's trading at 625. So I think this is a trending counter which one can initiate a buy for. The stop loss will be 610, and the target can be 675. The other two are the PSU counters. The first is REC. Again, sideways consolidating counter right near to the support and favorable risk reward ratio. So I'm initiating a buy on REC, which is offering me the stop loss at around 505, and the targets can be 540 to 545. And the third is BHEL. Right now trading at 240. I think with the stop of 234, one can initiate a buy on that also. And the targets can be 250 to 255. So these are the three conservative counters, where the trend is looking okay and the risk reward is favorable. So initiating buy on these three.
Three calls, all buys though, and Kunal calling them conservative. That's interesting. I've heard Marathon from him in the past as well. Neeraj Dewan, thanks for joining in. China stimulus, what it was, or rather, not too much out there. US elections out of the way. All major events done, including the FOMC. Now at circa 24,100 odd, what do? Do you put in fresh money to work, even if it's bottom up, or would you wait for some corrections?
Yeah, good afternoon. Thanks for having me on the show.
So basically, in the last leg of the correction also, when we went below 24,000, and even now when the market is correct in the last couple of days, we've been putting the money, we've been investing only at these levels. Because there are opportunities which are coming across sectors because result season is also almost over. So you even have some pockets where you're seeing decent results, decent margins, improvement happening. So based on that, we have been investing in. I think that the bottom as where it's going to be 23,900, where it's going to be little below that, or where it's going to be the current level is very difficult to predict. But stock specific, one should look at where you've been looking at putting in money. Everyone was talking about high valuation. Now stocks have corrected. We've seen a decent correction in mid and small cap also. And these are the spaces where mid and small caps are spaces where you can get good returns. One market reverses. So I think one should be more stock specific and looking at opportunities at these levels and not be extra bearish and keep on waiting for further downside.
So Neeraj, I just want to get a sense of what would be the strategy. I mean, we're obviously ending off a very, very tough week. What would be your top sector or stock to look at to start a fresh Monday? Any positions that you would build right now?
Basically, there are corrections which are happening in different sectors. Real estate, you're seeing a good correction, especially the North-based companies which are into real estate. So that is one sector where I think there is inherent value, and those companies have been talking about stronger balance sheets. So that is one space. Infrastructure is one space. We saw good results from L&T as far as operational performance is concerned. That even stocks like Container Corporation showed good operational performance, and the stocks have also corrected there. So logistics is one space, and infrastructure I mentioned, real estate I mentioned. I think even PSU banks, the results have been decent. You saw good results from Bank of Baroda. You saw good results from PNB. State Bank also results are good, though they can be a couple of irritants here and there because of little high slippage and maybe little lower names, but otherwise results are very good there also. And I saw good results from Vedanta also coming out. Even hotel stocks, Indian Hotel came out with a brilliant set of results. So there are opportunities across these sectors where wherever there are corrections happening, you can add on corrections, and where there are very good results coming there, you can add on more to the positions.
All right. We'll take a very short break. Please stay with us. We're coming back with the top BTST ideas. What do you buy today, sell Monday actually? Or, what is the positional trade for Monday? But as we're going into that break, a little improvement. Can we end the markets flat? That would be the best case scenario, frankly. Nifty IT, really the only hope there. SBI, I just want to quickly pull up SBI. We heard from the management, the whole bank Nifty down about 0.5%, and SBI is still seeing a bit of pain. But we'll come back with what you should do in the remainder of trade and your strategy for Monday after this very short break. Stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching India Market Close. Important story on Zomato and Swiggy, which is out, quoted by agencies. The Competition Commission of India has found that Zomato and Swiggy food delivery businesses have breached an antitrust law. Look at the Zomato stock taking a bit of a dive, down about 1.5%, and this is an important one as we await more details on what exactly this breach was. But on the face of it, it seems like some partners were being given more precedence over others. Now remember, a similar kind of an action was taken against Amazon and Flipkart just yesterday. In fact, Enforcement Directorate has been looking at Amazon and Flipkart because they're saying that during festive sales, some partners were given more prominence on their websites, on their platforms, and these are the partners which had a revenue share with Amazon or Flipkart in either case. So an important one, Zomato feeling the pain there. Swiggy, on the other hand, remember, it's the third day of their IPO. They've just about managed to fill that subscription once and a little more. We'll get you a special report in a bit on what's ailing Swiggy. But meanwhile, Mahima with us. Mahima's talking about Page Industries and what's not working for Page Industries. Stock is up though, Mahima, nearly 7% today.
Absolutely, Tamanna. So, in terms of how Q2 has panned out for Page Industries, it was up 11%, EBITDA was up 22%. Margins have improved from 20.5 to 22.6%, and net profit has improved by 30%. So, a couple of factors that are working in favor of Page Industries. It did witness a double-digit growth in EBITDA and PAT. Margins expansion was led by stable input costs and improved operating efficiencies. They've seen a healthy volume growth of 7%, which was just 3% in the first quarter. E-commerce e-commerce channel continues to outpace overall brand growth for the company, and e-commerce has posted a 41% growth in first half of FY25. Recent launches of new SKUs are set to boost growth for the company, is what the management has said, and volume growth pressure is now bottoming out, and benign input costs are likely to lead to better margins in the future. Now, they've also made technological upgrades like ARS system, which is enhancing their distribution and inventory management, and because of which their inventory days have decreased to 93 from 168. They're also seeing a gradual uptick in the rural consumption, which is driving positive shifts for the company, and working capital days have also improved to 61 days from 75 days. Now, management has also come out with a positive commentary where they've guided for a margin guidance between 19 to 21%. They've said that they want to expand their exclusive brand outlets by 150 to 180 annually. Now, in terms of what brokerages are saying about Page Industries, where they have a divided view, Citi has maintained sell with a target price of 35,800, which is a 20% downside, and they're saying that it's a better than expected cost control execution, but they remain cautious given the lack of near-term company-specific initiatives, and the current valuation looks expensive. In terms of Motilal Oswal, after the longest time, has upgraded Page Industries to buy with a target price of 54,000, which is an upside of 20%. What they're saying is that it's an all-round beat, and the growth acceleration will sustain going forward, and they've increased EPS estimates by 5 and 3% respectively for FY25 to 26. Lastly, the estimated CAGR growth is 13%, 17% and 19% respectively for sales, EBITDA and PAT, and they model a 20 to 21% EBITDA margin over FY25 to 27. So this is the overall view of how Q2 has panned out for Page Industries and why it's buzzing in trade today.
Thank you for that, Mahima. Page Industries actually doing very, very well, and great notes on it as well. Brokerages are bullish. Neeraj Dewan, are you excited about Page Industries?
Yeah, actually, in the segment, there's definitely improvement that we saw last quarter also in the performance of these innerwear companies. In the sector, like other smaller companies, valuation-wise, I think you can get a little more upside potential in those companies. Page definitely is the leader, and they're doing better as far as operations are concerned. So the upside still would be capped because valuation is not cheap. They're already trading at a very hefty valuation. But if you go a little down and look at companies like Dollar or Rupa, I think their valuation comfort will be there, and maybe the upside potential can be a little more than what return you can get from a Page.
A solid move there, and like Mahima said, Motilal seems to be constructive. Actually, just wondering very quickly, Kunal, it's already 6% higher. If somebody who took an intraday trade, book profits or stay long?
Generally, it's always advisable to stay with the trend. So if the trend is extremely strong and if someone has comfort, I think he should carry overnight trade also. Here the stop loss can be 47,500 kind of levels. That's 500 points away from the present level. One can carry the position. These are exceptional volumes which are recorded on the counter after a very long time. So yes, one can stay long, and the targets can be 49,500 to 50,000 in a day or two itself.
Price volume action as far as Page Industries go. 48,111, nearly at the high point of the day. What a move. It's been probably the best move in the stock in a really long time. Okay, not the best IPOs in a really long time, but the big Swiggy IPO is now fully subscribed. The demand was muted when it opened, but now why is that? Did the street believe that Swiggy is not as undervalued compared to peer Zomato? Because otherwise the street definitely did think about it that way. At least Sajid was saying that when we did the digital live, and Sajid Johnson to talk more about this issue. Sajid, you said it was undervalued. It's barely gotten subscribed.
That's right. There are multiple factors which is driving this kind of demand. To give you a perspective, Swiggy IPO has been subscribed 3.4 times, largely led by QIBs which came in towards the afternoon today. The retail segment is subscribed just one time or so, and this muted demand which is coming in from the NI, which is the HNI segment. If you look at the factors which are influencing this IPO from a retail point of view, there are 3 retail IPOs underway as we speak, and there is no listing gains in all the 3 IPOs, and that's one of the reasons why retail investor applications are much lower in the Swiggy IPO there. And that's also one of the reasons why we don't see a much higher subscription from the retail segment, even though it was anticipated that there will be good demand coming in for Swiggy. In the HNI segment, the cost of IPO financing has been high. There's hardly any listing gains, and so the HNIs have stayed away. To add to that, many of the HNIs have acquired the shares from the open market at a much higher price, and the absence of listing gain is also something which is preventing them to put in bids there. FPIs have been slow to come in. We've seen secondary market FPI flows to be negative, more than 1.4 lakh crores over the last 29 sessions. In 2024, over 90,000 crores of positive flows have come into the primary market. So the flows which are coming in from FPIs are only into the primary market, while withdrawals are happening from the secondary market there. And we saw that happening in today afternoon as well, when it's more than 4 times subscribed on the QIB front, which from largely demands coming from the FPI there. Also, one factor to look at it very clearly is the anchor book. When the anchor book came out, 54% of the anchor book was subscribed by the domestic institution. That also gives away the thing that the demand from the FPIs have been muted when the anchor book was open, and that also gets reflected in the full subscription numbers going forward. And in the mutual fund space, we have seen mutual funds taking a large position in the anchor book, which basically means that they're positions are already 30 and 90-day locked in, and there would be additional demand which will come in from the mutual funds only in the IPO, and that demand has not been as great as we've seen from the FPI as well there. So that's something there. If you want to compare it to Zomato IPO was subscribed 38 times, and Swiggy is around 3.5 times there. Zomato IPO size was 9,300 crores, and Swiggy is a little over 11,000 crores. So demand is muted for Swiggy.
Not hungry for Swiggy. Quite a shame there, because there was so much excitement about that IPO. Thank you for that, Sajid. And what are you going to do? Because it's a lot about timing. It's also a lot about what the mood of the market is. Neeraj Dewan, any views on the Swiggy IPO? I think pretty much closed for subscription, maybe the last few minutes. But would you say that there is any merit in subscribing, or you'll wait for listing day and then think about what to do?
I think looking at the muted response it has got, I think it is better to wait for the listing day and then decide what to do, because you already have Zomato, which is listed. It's a profit-making company, and their quick commerce is really growing very fast. So I think you have a choice there among the listed space also. So for Swiggy, I think one should wait and see how it lists.
And what about Zomato on charts, Kunal?
Zomato on the chart was looking very, very attractive. In fact, right from the extreme low when it made somewhere in March 23 near 50, it was in a positive trend. But off lately, it's been almost now last 3 to 4 months, it's in sideways consolidation. The support is at 240 and the resistance is faced at around 275. Right now, it's trading at 248. The trend is so far intact. But by any chance, if it slips below 240, that would be the time to book the profit, even from a trend follower. So far it's all okay, but support of 240 needs to be kept in mind.
Support of 240 needs to be kept. Okay, there were some flashes on your screen, of course, and we'll get to that in a moment with Harsh too. But SBI has lowered its deposit growth guidance to 10 to 11% from an earlier high number, and that is probably what is ailing the street. So keep an eye out for that. Meanwhile, Avalon Tech is the net stock in focus. We are, and just bring up that stock for you. 11% gains in the session today after a 20% uptick in trade yesterday. So it's 10.5%, but a really strong showing by this one too in trade. So some of these stocks are really flying around. What is also flying around is Mahindra and Mahindra. And we spoke to the management earlier today. We'll try and make you hear a slice of that conversation. But Neeraj Dewan, here's a management which comes out and says that SUVs are doing well, so our passenger vehicle is fine. Tractors are entering an up cycle, so that is positive. For the console entity Tech Mahindra, if indeed the tech space grows, then that is also a positive. Except for Mahindra Holidays, there are not too many chinks in the armor. Is M&M that auto stock which might defy what is generally happening to the auto companies by and large?
Yeah, I think that is already visible also in the kind of performance I think it should continue performing with the kind of guidance they've given for their tractors and the kind of response that they get for their launches. And the last launch also saw tremendous response. I think M&M should continue doing well as far as the auto space is concerned.
Okay, well, in fact, we spoke to the Group CFO of Mahindra Group, Amarjyoti Barua, on a variety of things, but more importantly about whether the momentum of growth will continue and whether this is the start of an upside in the tractor business. Listen in.
So actually October was really good for farm. It's taken up the share to above 43%.
Wow.
So I think what's going to happen is there is going to be more competitive intensity in the second half as people do come out of now some of the traction is back in the market, so everybody's going to go more aggressive. We hope to maintain that share, but there's always a little bit of plus and minus that will have to contend with. So why we believe that last year was going to be tough is because the reservoir levels had dropped quite a bit. Now with the reservoir levels being high, and then also seeing some of the output come out in the mandis, we talked about it yesterday, 20% increase in October in mandi kind of inflows. That indicates that the farmer is feeling good about what's happening. And that's always, we've seen is a 12 to 18 month momentum. That's why we're feeling good that this should carry into F26.
Yeah, and just to add an interesting insight, Neeraj, that I had with a quick chat with Mr. Barua is that the new EV launch, which will come in towards the end of this month from Mahindra, and remember it's their born EV, so from the ground up, that platform, the difference that you're seeing between ICE or a conventional engine and electric vehicles, and customers have to pay a premium for electric vehicles. What he explained is because it's in a category of SUV which is taxed so highly on GST, 40% plus, I think close to 48%, and this is only 5%, in their case, the difference in pricing is going to be negligible.
You're saying that their EV is not taxed at 48%?
No EVs are taxed at 48%. ICE engines are taxed at 48%.
Right.
But the current lot of EVs in smaller models, the tax difference is not as much. Here, the tax difference between 48 and 5 versus, say, 23 and 5. For a smaller car, that means you still have EVs priced much higher in the market for consumers. But here, since the tax difference is so high, the way they are pricing it, they're hoping for close to no difference or very negligible difference between the same model in an ICE engine and in an EV. So the pricing of their new electric vehicle will be very, very interesting to watch. Meanwhile, please look at the news on your ticker. I think it's going to bring a smile to your face.
No surprise, but no surprise. I don't know why people were thinking that, yes, it's not done until it's done.
Yeah.
There's no way that you would have the markets open on the voting day.
Maharashtra elections. Well, if you're in the state, you have to go and vote.
Exactly.
It's maybe a holiday if your job is around the markets, but you have to go and vote, and don't forget to do that. Just SBI, we need to talk about a little more. It's lowered its guidance. Harsh is joining us for more. It's the big stock this afternoon. We've heard from the management, but more details coming in. Harsh, what are we learning about their guidance?
Well, guidance, Tamana, lowered 12 to 13% kind of growth guidance for deposits, now at 10 to 11%. So they've lowered their growth guidance with regard to deposits. But mind you, it's been a tough deposit growth environment anyway. So that's probably my first line of defense. But my second line of defense is the loan to deposit ratio for SBI is extremely good. It's at below sub 80% at a time when you're seeing a lot of larger private sector banks having loan to deposit ratios north of 85%. And therefore, even as a comparable, SBI does very, very well. In terms of the Q2 numbers, for perspective, SBI has grown its deposits sequentially at 4.4% QOQ. 9% YOY, not impressive, but the QOQ number of 4.4% is quite impressive in that sense. And this quarter has been good for deposits in any case. They've grown deposits faster than advances this quarter. Advances grew at 2.9% QOQ, and therefore your loan to deposit ratio has actually improved when I'm looking at it sequentially. Technically speaking, that's how the growth is really panning out. They've tapered down on growth for sure for the full year, which likely also means that they are more comfortable likely with the LDR is what it seems like.
So that's, well, Harsh, just wondering, is this 10 to 11% the lowest in many years? Any idea? I'm sorry, I'm throwing
not really, Neeraj. In fact, Q1 they grew at 8% 8% YOY. So not really the lowest. In fact, they were doing single digit or early double digit even for full year FY24 when there was deposit growth pressure. So don't believe that this is the lowest in many years.
Lowest in many years. Okay, fair call, Harsh. But thanks to that. But okay. And Neeraj, does this number by SBI? Because PSU banks until then were doing reasonably well. Yesterday too, I think PSU banks had a good outing. But if you had to choose banks, does this deposit growth guidance cut negate the PSU banking investment idea, or do you believe large PSU banks like SBI, PNB, or maybe the likes of HDFC, etc. on the private side are still good buys?
I think they are still good buys. The numbers are not, if they're not great, they're not wow numbers, but they are decent numbers. And with this size of a bank, and I think the deposit growth guidance cut is actually in line with what the reality is. It's anyways very difficult to grow the deposits in the kind of scenario, the kind of opportunities which depositor has right now. So it was actually challenging. So I think it's more to do with what the reality is. And otherwise, if you saw the numbers of Bank of Baroda, you saw the numbers of PNB, I think numbers are pretty decent. And with those large size banks coming out of these kind of numbers with one or two disappointments of Canara Bank, I think others have been pretty decent. But I think still if there, I would recommend that if there are any dips which are happening in these, whether it's State Bank or a Bank of Baroda or a PNB, they I think should be buying opportunities.
Okay. So SBI is okay to buy. It's fine. Now, you know what would have been okay to buy or amazing to buy would have been Avalon. And Puneet Johnson right now, because while yesterday the stock was up 20%, it's up 11% again today. Now, Puneet, just break this down for us before we get to the top BTST area for the day. Just break this down for us.
Well, definitely.
What has gotten Avalon excited? What does it do that it has suddenly shot up so much?
Yes, definitely. So, since its listing back in April of 2023, there were 6 quarters of relatively no growth in terms of revenue and profits for the company. And yesterday when the company reported its results, I think the 140% beat in its profits was one of the things that, investors lapped up to. And EMS as a sector has seen a lot of interest. We've seen 3 to 4 big heavyweights, Dixon, Keynes, Amber, were the 3 top picks, and the valuation differential between the top 3 and the others were very, huge. So we've seen Sirma reporting results very strongly. They have seen a valuation, a re-rating on the positive side because of this, and Avalon is one of those as well. So I just want to highlight a report which Motilal Oswal had today. They are having a buy with a target price of 920 rupees per share, still quite a decent upside from the current levels. While they've increased their EPS, and just mentioned about the report by roughly 36% EPS increase for this year and 10% for FY26, and they are maintaining that this year will be 16 to 20%. I want to also focus on 2 other reports which came in, which are a sell call on the stock. Purely on valuations. The first one's Investec. They have a target price of 490 rupees per share. So it's a 38% discount from the downside from the current levels. What they've said that while the manufacturing is continuing to move into India, which will lower the employee cost, the ramp up in the clean energy segment which the company operates in will only happen in FY26. So there's still another 12 months into that. The other part is that the restocking benefit which happened in this quarter, basically they had low inventory, they've restocked it now. That benefit won't be there in the next year. So this beat in results will be only limited to this year. That's what Investec says, and they have a target price, as I mentioned, of 490. Incred also has a similar view. They have a target price of 565, 28% downside from the current levels, and they say the valuations are currently quite rich, while they are raising the estimates for FY25 with 11%. But FY26 stays largely similar, just 3 to 4%. So overall, when you look at the valuations also of all the players, if you can have that table on screen, Dixon 79 times FY26, and so is Keynes. Amber is at 54 times. And currently, if we look at Avalon Tech, is gone past Amber and PG Electroplasters at 59 times FY26, while someone like a Sirma is still trading at a relatively cheaper value at 40 times FY26, and so is Sign DLM. So overall, the valuation differential and catch up in prices has happened too quick in these 2 days. Let's see what happens on Monday. It's going to be a very interesting day.
All right, definitely. Avalon on Monday. Kunal, you want to give a take on Avalon and then, of course, your BTST trades?
Absolutely. So, on BTST, I like the first counter, which is Borosil Renewables. Now, this counter has already shoot up from 400 levels to around 465. The breakout was seen at 465, where it's trading right now. So, I think it's retesting the breakout zone. So, with the stop loss of around 455, one can initiate a buy on this, and the targets can be 500. The second counter is TCS. We saw good run up in the counter again in the recent times after the result. This counter has bounced from 39.40 and it's trading at 41.40. The long-term trend line of around 5 years is comfortably on charts. It's holding on to that particular support as such. So with the stop of around 40.50, that's 4,050, one can initiate a buy. The targets can be 4,300. And the third counter is the banking sector counter, which is ICICI Bank. Available right near to the support. Good volumes are happening on 15-minute charts right now also. And long-term trend is absolutely intact. So with the stop loss of 1240, one can initiate a buy on this also, and the targets can be 1300. These three counters are not precisely BTST kind of counters, but at least one can look at these counters from 1 week point of view.
Kunal, quick 20 seconds, Kunal. You've given us 6 ideas today. You bet money on all the 6?
Absolutely. I'm very comfortable with at least last 3 counters. In first, I'm comfortable with Marathon. I'm just keeping a watch on REC and PAIL right now. So 4 buys immediately, 2 are on watch list.
Okay, cool.
Excellent.
Okay. Thanks Kunal for that. Neeraj, thanks so much for joining in. Both of you have a great weekend. The NSE circular out as well, so it's a great weekend for anybody who is wanting a holiday. It was obviously coming, but NSE flashing.
Let's not give ideas to
it's out there. The screen is saying so. But yeah, let's get the heat map up on the screen. And in fact, the markets, maybe just for a moment, just to see how we are shutting shop, if we can get the Nifty. The Bank Nifty playing a bit of a spoiled sport today with 0.9%. SBI leading this, but some of the others too have been wobbly, and as a result of which 1/3% on the Nifty. Mid caps and small caps, Tamanna, I don't know, should come up on your screen. 1.5% lower, so sharp cash today.
Yeah. In fact, let's pull up the intraday for the Nifty mid cap if we can, because they seem to be following a different trend. And maybe there are some stocks which are holding up on the Nifty, but in the broader markets, they are close to the day's low, not far off from the day's low right now, the Nifty mid-cap 100. So that's the pain point. Let's just pull up sectoral indices for a second and advanced decline ratio to get a sense broadly of what's happening with market breadth. I mean, Nifty IT was really only the saving grace and continues to be. This is painful. 3% cut on the Nifty reality. Can we pull up constituents here and see really what is happening? PSU banks, SBI hurting over there. I can see that. Oil and gas, Godrej Property, Prestige, between 3 and 4% cuts all out on Nifty reality. So I think interest rates could be one factor. Overall outlook, maybe these stocks have run up. There could be a multitude of reasons that you're seeing reality stocks looking for. Advanced decline ratio, just for a second, just to see what the breadth is like. And this gap also widening when we get to close, 1631 versus nearly 500. So market breadth negative, even though the Nifty relatively looking okay.
Portfolios would be hurting today for sure, but let's mark the Nifty 50 gainers and losers. Not many gainers, I'm sure. M&M maybe, and a couple of others. Though there was a lot of green, by the way, when we ended. No, this is fine. I mean, and good to see Infi and M&M, but the heat map will help because there was a fair degree of green, and there still is, interestingly, with M&M leading, Titan bouncing back, Tech Mahindra, Nestle, and then the IT biggies Infi and Wipro. But a lot of stocks sulking as well, with consumption looking wobbly out there, Tamanna. Trent, Asian Paints, Tata Motors, Eicher, and really on Monday, I think we need to do a small piece on Reliance Industries because its stock's been really sulking the last few days.
Yeah, Tata Motors ahead of its numbers, looking wobbly. I find it interesting how Trent and Titan tend to be on opposite sides of the spectrum on most days.
LGDs.
Yeah, completely. LGD versus LGD. I don't know. Well, lab grown versus Asli diamond. Which is the Asli diamond on your portfolio? I can't quite say. Let's pull up the gainers and losers from the broader markets, the BSE 500, just to close out our coverage, and then we'll tell you what's happened this week very quickly. Aarti Industries numbers. And ahead of its numbers, hit quite badly. GE shipping again. Results. All fertilizer stocks have been in pain, Chambal fertilizers as well. Rail stocks doing badly, and RVNL's numbers were not great either. Indian hotels, on the other hand, very strong numbers. And of course, we spoke to the management today. M&M may be looking good. Page Industries, fantastic. And Motilal.
And Capital Marketplace.
Yeah,
quite stunning. Oh yes, but I'm told we need to wrap up. So call it a day on this leg of India Market Close. From Tamanna and me and the team that put this show together. Thanks so much for tuning in. Have a fabulous weekend.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. Astral is in focus today after the company came out with the second quarter numbers, wherein the numbers were below estimates. But can the things change with polymer prices reviving and the government capex coming through? Hiranand Savlani spoke to us. Here are the slice of that conversation.
It was below the estimation. But at the same time, you have to understand how the industry is faring. If you see, the industry was degrown by 5%. Again, that we are doing fairly well. Our first half performance is fantastic. Looking to the industry, I'm telling you, it is 6.5% kind of volume growth. And top line was eroded mainly because of the polymer price were downward trend. In this quarter alone, if you see, the PVC price down by 13.5%. So now when the polymer price on the downward side, there are two effects. One is the inventory losses. Secondly, the top line get eroded. And the third thing is, you in the initial remarks said that the dealer and distributor will do the destocking. Because no street people have a confidence why they will hold the inventory when the prices are continuously going down. So because of that also the demand pressure comes. Now with this initiation of the anti-dumping duty by the government of India in this week, 4% price rise have taken place within a 1 week time. So now we are expecting there will be a rush to restock that thing. So we are expecting that the demand should come back. Otherwise, I don't see any challenge to this industry for the growth.
Okay. So let's split it between value and volume. What were volume numbers like? I mean, did monsoon, we also hear that the government capex has been fairly soft in the first 6 months. Did all of that play on the volumes for the first half and the second quarter? And has the festive demand started off on a positive note?
So you rightly said that the infra spending of the government was low. So because of that, the demand was very low. Secondly, monsoon was extended this time. So many part of the countries were under the flood. So that also affected the demand. But I think all these things are now past. Now post Diwali, we don't see next 5 months there is any challenge. So now from here on, we are expecting the construction activity should boost up, and that is going to convert into the number for the industry and Astral per se. So we are of the view that these kind of things happen in the industry whenever some particular region things get affected. But when you look at the number on a 12-month basis, I don't think any challenge. The biggest achievement during this last 6 months was that Astral had done a lot of new initiatives. That is very important for the future growth. Whatever happened in the past, that was the history. But now what in this last 6 months Astral has done, which can give the extra revenue to the Astral. The number one thing, our Hyderabad plant has started commissioning. So that is going to give us the extra revenue in the southern region. Secondly, paint, we started launch of Astral brand in the state of Karnataka and Maharashtra. In Gujarat. Then last quarter we started in Maharashtra. This quarter we are going to start in Rajasthan. So we are going to stop with this 4 state initially. So that is going to give us the revenue in the coming time. Thirdly, bathware business has started performing very well. We have also launched few new items into that also. So first half, the bathware performance was 75 crore. Of course, the base is still very low. So our expectation graph is very high. So in the coming time, we are seeing a very good response from the bathware, because once your brand will be known in the market, then only you can expect the top line to grow very fast. So we are expecting that to grow very fast. And the best part of the bathware, that so far we have not received any complaint from any of the consumer. So that is giving us more confidence. Thirdly, we have taken an initiative of New Bharat in adhesive. So we are now moving into the rural India, into the adhesive side. So that is also going to give us the extra revenue. As far as our overseas operations are concerned, our UK subsidiary has developed a few products which is successfully completed in the R&D. Now trial productions are going on, and hopefully we will be able to launch it commercially in the market by December. And that product has a very high potential, and we are going to bring that product into the India also, and that will be first time in the country for this kind of adhesive. So that is also going to help us. And lastly but not least, the OPVC. We have already started, I can say, the trial production of OPVC. We have given the pipe for the ISI approval, because ISI is must in OPVC. We are expecting that by next month we should get the ISI. So by December end, we will be able to launch. So you'll see the revenue from Q4 onward. So these all steps we have taken in the last 6 months. Though little bit demand was affected, that's fine. But we are confident that because of all these steps, the coming period, we are going to deliver the excellent number.
Got it. So one is capacities having been there. The other is demand. What gives you the confidence about demand, Mr. Savlani?
So demand, I think normally whenever there is an extra monsoon or maybe some spending curtailed by the government, so that is going to affect the demand. But that cannot be a permanent. If you see the government collection, the revenue front, whether it's a GST number, whether it's a direct tax number, or whether you can consider the other side, all are robust. So there is no reason that the government is not going to spend money in the coming time. Temporary, what is the reason? I don't know what is the reason why it's a little bit slow, but it is going to come back ultimately. They have to spend the money into the capex.
Got it. Okay, now Mr. Savlani, on the growth numbers, right? You've cut the growth guidance from 15% to a band of 10 to 15%. But because your H1 volume growth was, I think, about 6.5%, if my numbers are wrong, if I'm not wrong, that implies that you have to grow out about 15% over the next 5 months to hit, or 13% over a 6-month period, right? To hit the lower end of the volume growth guidance. You think that will happen? And is that a volume and value mixed growth, or do you believe you will be able to clock in about 13% volume growth itself?
So right now we are considering we will be hit the volume. Value will be now better because now the polymers have started inching up. Just 4% price rise had taken place, and another we are expecting 4 to 6% yet to come in the coming time. So value will also come back. The reason why we are saying that infra spending will come back, That is what the assumption we have taken. Second, we are of the view that the restocking will start from November onward. In last couple of days, you will be surprised to know the kind of order flow we have got it in the company, because now we are going to increase the price. So because of that, dealer and distributors are going to complete the inventory, whatever cash flow they have. So that is giving us the confidence that this will come back. There is no reason that dealer and distributor will remain permanently with the lean inventory. The reason why I'm saying that now it's a seasonal one going to start. If you see the plumbing season normally start from October to March will be the peak. But unfortunately this time festive season was there, monsoon was there, so October was not that great. But now from November onward, everybody has to keep, otherwise they will be missing the business, because now it's peak season. So these are the assumptions we have taken while considering this growth. And we are of the view that we should not be wrong in our assessment.
Got it. So plus destocking has happened. So in some sense, some restocking might happen too. But so you reckon 13% odd volume growth to meet the lower end is distinctly possible. Can you do more? Is it possible that you hit a number for the whole year between 10 and 15%, and therefore could you actually do maybe 16, 17% volume growth as well?
So it is possible, provided the restocking take place in a very aggressive manner. If the price rise will be 10% kind of level, then there are high probability that the dealer and distributor will be overbought. And in that case, we will be able to even hit more than 10% also, or we even 15% can also be possible. And last year also, if you see, Neeraj, we have guided the street 15% volume growth. And then midway, we revised our guidance to 20%. And we completed the year with the 25% kind of growth. So if the demand will be there in the system, Astral is not going to be stacked back. We are ready. We have the capacity ready with us. We have infrastructure ready with us. Now we have a new plants ready. So I think all this going to definitely help for the growth. Only thing is that we are waiting for the things to settle down, and which we are seeing in last 2-3 days. We are seeing that the demand has already started picking up.
Okay. My final question is on margins, Mr. Savlani. Where do you expect margins to stabilize?
And the best part of this half is that whatever we have guided, we have delivered in margin. We have communicated that we will be between 16 to 18% kind of range in plumbing business. We have delivered that thing. We are at close to about 18%. So we are on the higher end. Now with the inventory gain, and that can come in the second half, there are probability that it can be even more also. Okay. So that side, we don't see any problem. Our India operation margins, we have guided 14 to 16% adhesive. We have delivered 15.5% kind of margin. So we are very well within the range. The only little challenge which we have faced, that is in the paint and the UK operation. There I already explained to you that in both the businesses, we have taken the judicious call that we are going to expand the paint business. So that's why temporary hit we have to take. So, but that base is very low. So it's not going to affect the company overall basis. Similarly, UK, when the Q4, this new product launch will be there. And now in US also, our 12 new product launch will be there. There are high probability that we will again back to the double-digit margin in the UK. Right now, minus 2% is there. So we are forecasting double-digit margin next year. So I am confident that with this all initiative which management has taken, little bit delay is there, but we are confident that now everything is done. So hopefully things will start turning up, and our overall margin guidance of 15 to 16%, we are definitely going to deliver, and even today also we are able to deliver.
Well, that's Astral for you, and confident about volume growth and polymer prices or PVC prices upcycle of sorts that he spoke about, which may lead to restocking. Let's see. Expensive stock hasn't done too much in the recent past, but the numbers too have been disappointing. Maybe H2 turns out better. The management is very confident of that. Well, both Astral and M&M that we spoke to earlier spoke about some telltale signs of corporate capex also coming back or starting to come back. Somebody who looks at this and more very closely joins me right now on the show. Absolute delight to talk to Kenneth Andrade, founder and CIO of Old Bridge Mutual Fund. Kenneth, so good having you. Thanks for taking the time out and being with us, and I hope all is well.
All is well, Neeraj. Thank you very much. Hope you had a nice festive season.
Yeah, it was fantastic, Kenneth, must say, to say the least. Hopefully, it's fantastic in terms of earnings which come out in the December quarter, because Kenneth, this quarter left a bit to be wanting. I mean, in some sense, the earnings season has not been that great, and coupled with all that's happening on rates, etc., it's not been a happy hunting ground for the markets. How have you looked at the landscape?
Well, when you stepped out of 2024, and if you look at corporate earnings at that point in time, you were at an all-time high margin, you were at an all-time high sales growth, you were all-time low leverage. Everything was like optimal as far as corporate India's profit and loss account and balance sheet was concerned. Now, to have a repeat of something like that again in 2025, I think we were all waiting for a breather, and that breather has come. I mean, corporate, while there's a lot of activity happening on the ground, I think it will be a little bit slow for 2025 and maybe some part of 2026 going forward, because the percentage growth may not be very high, but volume growth will be available. So take a breather for the rest of the year. I think what has happened in the first half, we have a little bit of a repeat in the second half. We've also come out of multiple events. I think the election was one of the big ones that were there. And toward the fag end of this, and you had, of course, a very good monsoon, which has slowed down stuff a bit. So the next quarter should be okay, and the March quarter, at least, it's the biggest quarter for corporate India in that season. So we should make up some part of the gain out there, but I wouldn't expect significant amount of surprises coming in at that for the rest of 2025.
So, Kenneth, sorry, before I get to global, so am I understanding this correctly, that you believe that there is not, or there won't be too much of uptick in activity in the second half to take a breather, bide your time, maybe things change in FY26?
Yes. So things do take a pause when you have a general election. You will, I mean, the economic activity does does slow down. The order intakes, as you've seen, had slowed down, but now there are talks of all of this restarting all over again. So I think that's where we are. We had good monsoons, so which is why you're seeing a little vibrancy that's coming back into rural India. If that's followed up next year with another reasonable good monsoons and good commodity prices, that part of the economy should hold up. But it's going to be a volume game, not so much of a margin game in profitability, in earnings. So my sense is look at a lower band of earnings that India will go through in 2025 and 2026, somewhere closer to a low double digit or maybe a high single digit number that could come through over the next 2 years.
Over the next 2 years. So, sorry, you're talking about FY25 and 26.
Yeah, that's right.
FY25, 26. So high single digits or low double digits. Is that a recipe for bringing down the multiples as well, Kenneth? I mean, we've come off a little bit. So trading at what, 20, 21 times, give or take, or if the earnings are lower, then maybe higher in terms of multiples. But can PE multiples come down further for Indian markets?
So the correlation of earning multiples, at least we've seen just one cycle in correlation of earning cycle to corporate balance sheets, is that when corporate India doesn't leverage, price earning multiples tend to remain elevated.
Okay.
Right, and I don't see the corporate leverage coming back at least for a year or two. So to say that valuation risks exist, while they exist, we are at the top end of the band of valuations. To see a significant sell-off just because valuations are high, I may not subscribe to that thought.
Okay. No, but what? Okay, so but if earnings growth comes off, even then you believe this 20-21 odd multiple will stay on, will sustain.
It will sustain. It will sustain simply because there is cash accumulation on balance sheets.
Got it. Okay. And Kenneth, the other part of my question therefore is that at some point of time, if the private capex cycle, not sporadically in specific pockets, but broad private capex cycle does begin, it will drain some of the cash, it will bring in some leverage. But I've heard you now for the last 2 years or 3 years talk about how corporate India balance sheet is in pristine shape. I mean, the debt equity levels are great. So even if that worsens a little bit in lieu of capex, will that be considered a big negative for multiples, or you think it'll be digested?
The normal correlation is if net on corporate balance sheets increase, price earning multiples do tend to come off.
You see that happening?
No, I don't see that happening. Unfortunately, while we've been looking at corporate capex or expecting corporate capex to come back, it is not happening to the extent that any corporate or any investor should be actually worried about.
Okay.
Okay. So if I give an analogy of this to a very large sector which is very mature in India, and if you take IT services, okay, for mid single digit growth levels, they tend to trade between 20 times earnings or between 17 times earnings to 23 times earnings. This is very close to their cash flow yield or even to their dividend yields of about 4%. Now that's a bottom that you will have to look at it from a valuation standpoint. So our common methodology of looking at valuations is price earning multiples. But if you look at this one large industry, because of its cash generation and its payout policies, it trades somewhere at a 4% cash flow yield, which is reasonably good. So that should be a floor for how you should look at valuations in today's perspective.
Got it. Okay. When 2 months may be too short a comparison, but when I look at some of the comparisons that I managed to do between what Old Bridge as a house did in October versus what they had in September, and just to get an indication of how you might be thinking. You made some investments or added some investments into a major steel maker, into a road construction company or a construction company, etc. Is the thesis behind some construction activity beginning, which leads to demand and order flows, or what is it?
So if I could reconstruct a little bit of our thought process as we've built into the fag end of 2024 calendar year. While these are isolated cases of metals and a contractor, a broader thought process is if you have to look for growth at reasonable valuations, because there's nothing that is cheap out there. You will have to look at franchises that are building or companies that are building franchises across the world. Okay. Now, why are our thought processes in alignment with something like that? Now, if you take any business that is there in India, look at the commentary that they're talking about, right? Everyone started focusing on what they call the export market, and that's and that is where I think if you have to get growth and a reasonable amount of growth, you would have to go outside the country to drive that. So India remains for all of these companies, India remains a very strong base for cash flows and profitability. But if you have to get that incremental amount of growth and maintain and start your capex cycle, you will have to start dominating some segments of industry which is more global facing. Okay, it's more global facing. So if you, I go back to the analogy of IT services, and if you look at those companies' cash flows, they're stupendous. I mean, even the fourth largest company in IT services does cash flows equivalent to probably within the top 10 of corporate India, right? So that's the linkages that India as an economy or corporates have to find with customers beyond the shores of their domestic market. Look at India for cash flows. Take those cash flows, invest in market shares that come from the rest of the world, and continue to grow those franchises and become reasonably large. This is an economy which is developing, and any economy that moves from a developing economy to a developed economy has to earn has to cut its teeth by getting international market shares and going abroad. So I think that's where our focus is. So the one individual contractor, one individual steel company, those are businesses that that exist on our portfolio, but they're isolated cases. But the broader structure is that how much of India is investing in growth capex, and how much of that capex is outbound in terms of sales, and how much of that is facing the global market. I think that's the way we be constructing our thought process into say the end of this decade.
What's the overarching trend there? Is it IT services, chemicals, pharmaceuticals? Is that the bucket? Maybe auto ancillaries? I'm just trying to think at the top of my head.
So look at India's largest car company and look at the commentary. They do expect exports to be a large leg of the marketplace. You look at India's largest aviation business and look at the entire fleet expansion. It is all the international business. You look at pharmaceuticals, and we're having a patent peak coming up between 2025 to 2028. Very difficult to quantify which company is going to benefit out of all of this, but this is a significant opportunity that is sitting for all of these companies out there. So contract manufacturing, whether it is chemicals, whether it is pharmaceuticals, I think we set up one of the largest manufacturing bases in pharmaceuticals that is out there. So largest manufacturing bases out there. So it's a variety of industries. I don't think I can pick and choose. I mean, one of the recent commentary by one of the tire companies also said that exports is a focus area, and all incremental capex is going to address that part of the world. So that's where we come from, right? And that's how we're building it out. So if I look at our portfolio, and I had to say that how much of our total, how much of the basket of companies that we own have very strong dollar-denominated earnings, it would easily come up to about between 55 and 60% of our portfolio have dollar-denominated earnings, and I think that's where we think our strength would lie in this economy between now and the end of the decade.
And Kenneth, for the last 3-4 years, has said that if you're catering to India, you're catering to 3% of the world. Try and look at companies which cater to the remaining 97% as well. Kenneth, I have 2 minutes on the show. Just very quickly, so I'm maybe trying to focus on the remainder 40% because I've got the answer for the 60% of your portfolio. An exchange, an appliance distributor, a steel company, a gas distribution company, all of these, therefore, are the domestic-centric businesses that you're bullish on, because that's a set of additions that you've done in the month of October.
Yeah. So on the energy space, the things are very simple. There's incremental amount of energy demand that is coming in because once the capex of all of these companies come through will exist. So it's just a value chain building out. If you look at a city like Bangalore, construction or real estate wouldn't exist if IT didn't exist. So it's a very model economy to say that exports are driven. Exports or the India economy, because of its low cost of supply of a talented pool, has created the entire infrastructure out there and created the real estate market out there. So we're all piecing it together to say that these are ancillaries of a much larger trend that is playing out. 3% of the economy is going to go to 5% of the global economy. What's going to build out in this 5% of the global economy? Who are going to be the derivatives? Whether it's going to be a steel company, whether it's going to be the energy businesses. I think they'll all participate into it. In consumption, we just got a sense that urban consumption will be the first one to rebound if all of this comes through, and that's the only space that we would want to be in, at least for a while.
Got it. Kenneth, lovely talking to you, as always. Time has run out because I always wish for a longer conversation, but today we'll have to wrap it up. But thank you for your time. Really appreciate and look forward to talking to you maybe before the end of the year. Thanks for joining in today.
Sure, guys. Thank you very much. Have a great year.
You too. And that's Kenneth Andrade, founder and CIO at Old Bridge Mutual Fund. With that, it's a wrap on this leg of Talking Point. Thanks for tuning in.
Headlines you start your day with.
Nifty Sensex end an event-heavy week lower. Nifty Realty emerges as the worst performing sector. The rupee too hits fresh lows against the US dollar every day this week. State Bank of India reports a 28% growth in net profit for the second quarter. India's largest public sector bank beats estimates by a wide margin. Swiggy's grand 11,000 crore IPO is now fully subscribed post a cautious start. Sees maximum subscription from employees. China unveils $839 billion debt swap to rescue local governments, but holds off on big stimulus measures to support a slowing economy facing new risk from the re-election of Donald Trump. As the US Fed cuts rates along expected lines by 25 basis points, Fed Chair Jerome Powell underscores the bank's independence, says he won't step down even if asked to do so by the incoming President Donald Trump. Elon Musk predicts downfall of Canada's Prime Minister Justin Trudeau in the upcoming Canadian federal election. He will be gone in the upcoming election, says Musk on X, while responding to a user's request to help Canada get rid of Trudeau. Hello and welcome. This is Profit 360 on NDTV Profit, and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So the Nifty Sensex ended this event-heavy week lower. Nifty Realty emerged as the worst performing sector. The week also saw the rupee hit fresh lows against the US dollar every day this week. Neeraj Shah joins in with a wrap of all the action on the bourses.
Well, not the best of ends to the week, especially if you are an investor which parked in SMIDs, because the mid caps and the small caps had a deep gash today. So portfolios would have sulked even if the Nifty looked flat, because the mid cap index 1.3% lower and the small cap index will come up on your screen 1.5% lower. So the breadth, the market breadth looked very, very wobbly. So if you look at the Nifty 50 heat map, by the way, you would find it to be a very ordinary day. Look at this. Usually happens a little bit more red, but almost even Stevens. Some stocks like Trent, Tata Steel, Tata Motors, etc. have fallen a bit, and some stocks like M&M, Tech Mahindra, etc. have done well for themselves. But the big point is the devil is in the detail. By the way, it's interesting to see that SBI, because the loan growth guidance cut presumably is down 2%. Reliance for yet another day is down about a couple of percentage points. So those, and Asian Paints has corrected as well. So those are a few wobbles. And on the gaining side, Titan gains interestingly, and IT's had a good day with Infi and Wipro both clocking in gains. But the broader end of the spectrum had pain, and BSE 500 winners and losers will come up on your screen, and you'll see what I'm talking about. The indices were down. I mean, this is the BSE 500 down 239 points. A lot of stocks on results corrected. So Aarti, G Shipping, GMM Pfaudler, all three are result reactions. There was also weakness in Suzlon, RVNL, etc. What did do well? ITI on their order win, Indian Hotels on strong numbers, Motilal Oswal continues from where it left off. Latent Few, Sterlite Tech, again some orders that have come into some of these companies. So all in all, a decent outing for select names, but broadly the indices remained under pressure. Let's see if next week brings about some stability at the broader end of the spectrum.
This morning, Khoon Go of ANZ Research spoke with NDTV Profit. He outlined the possible consequences for Asian markets if Donald Trump's tariff policies are put into effect.
If Trump were to implement the tariffs that he's talked about at face value, 60% against China, 10 to 20% against the rest of the world, it won't be just Asia that will be hit. I think most other economies, particularly Mexico, will also be similarly negatively impacted. But this is where we don't really know for sure whether those tariffs will be implemented or there's just threats in order to get countries to start negotiating with the US and come up with some kind of trade deal.
India's largest public sector bank, State Bank of India, beat earnings estimates by a wide margin, reporting a profit of rupees 18,331 crore, up 28% year-on-year. My colleague Subhana Sheikh joins in with more details on the earnings.
Hi, SBI has actually reported a healthy set of numbers for the quarter ended September. Its profit rose 28% on year and exceeded expectations. But the slow growth in NII, has actually capped this rise in its PAT. Now NII has risen 5% on year this quarter, but in the year ago quarter in FY24, NII had risen about over 12%. Now the bank's loan growth and deposit growth continue to remain healthy at, its credit growth continue to rise at 15% on year and deposit growth continue to rise on 9% on year. But the bank has actually curtailed its guidance for the current financial year. They have cut down on deposit growth guidance to 10 to 11% on year from its previous guidance of 13 to 14%. The chairman CS Sethi, post the earnings at the conference in Mumbai said that they expect they believe that deposits have actually peaked and the cost of deposits is expected to they're planning to contain the cost of deposits. Overall, looks like healthy set of numbers. ROA also looks healthy, and another biggest relief for the bank is that asset quality is not seeing some deterioration. Asset quality seems to be quite robust for the bank. So that's on SBI.
Right, Subhana. So thanks for that. Now, Swiggy's 11,000 crore IPO has now been fully subscribed on day 3. The demand was muted when it opened. But why is that? Did the street believe Swiggy was undervalued when compared to peers like Zomato? Sajid joins in to tell us more.
Swiggy's IPO is fully subscribed. It's subscribed 2.4 times as of 2 p.m. and that's primarily led by foreign institutional investors who have come in towards the afternoon and added to the subscription. But the IPO as a whole, which was the most widely expected IPO, hasn't been to expectations, especially because of the kind of headwinds that we are seeing with respect to foreign investors and the kind of demand and the listing gains which are absent in the market there. If you look at from a category point of view, you have retail investors which the portion was fully subscribed as of now, which is one time, and that's primarily because we had 3 IPOs underway, which is Acme and Niva Bupa, which is also there in the market there, and all the 3 IPOs don't have much of a listing gain as we speak, and that's one of the reasons why retail interest is very lukewarm in this IPO, and in most cases retailers will get the entire allotment for which they were going to subscribe there. In the HNI segment, the cost of IPO financing is high, and also the absence of listing gain is preventing many of the HNIs from coming and subscribing in high numbers. Also, the fact that many of the HNIs have also acquired the Swiggy shares from the off market at a price which is much higher than the IPO price is also preventing them, from averaging because because there is no listing gain which is coming in at this point in time. FPIs have been very wary of the secondary market, but in 2024 we have seen FPI has been net buyers in the primary market there. So the flows which are coming into the IPO is the only positive flows which are coming in India as of now. Otherwise, for the last 28-29 sessions, we have seen nearly 1.42 lakh crores of foreign fund outflows which is happening there, and that is also one of the reasons that appetite was much less in the anchor book. If you see the construction of the anchor book there, 54% was subscribed by domestic institutions. Now, normally in an anchor book, 1/3 is reserved for the mutual funds and other domestic institutions. In this case, more than half was given to domestic institutions because the appetite was much lower going into the IPO because there were multiple international factors at play at that point in time. And mutual funds have been good subscribers there. They have put in some bids, but it's not the kind of bid that we saw in the case of Zomato. Zomato issue was subscribed 38 times at the end of the issue, and the issue size was around 9,300 crores. And we are seeing Swiggy subscribing just 2.4 times, and especially because of the headwinds that's coming in from various investors, and no listing gains which are expected for the IPO.
Tata Motors has just come out with their second quarter earnings. Margins contracted and net profit has dipped 10%. Puneet joins in with more.
Well, thanks for that. So it's been a disappointing quarter. It was expected to be lower side this time, but it's come in below that as well. So revenue is down 3.5%, coming at roughly about 1 lakh crores. There was expectation of about 1.03 lakh crores in terms of revenue. EBITDA is down 14% in this particular quarter, coming at roughly about 11,736 crores versus expectation of upwards of 14,000 crores. So definitely a miss there. Margins coming at 11.6% versus expectation of 14.2%. While profits also have come down by 10%, coming at roughly 3,450 versus expectation of 4,800 odd crores. So definitely a big miss there. When we look at the segmental performance of the company, JLR, the EBITDA margin is down 320 basis points, coming at 11.7%. And the company has called out that a one-time impact of a temporary aluminium supply constraint was one of the biggest reasons for the fall in the EBITDA margins. They've also said that they've placed about 6,000 vehicles on hold for completing more channel checks on them because of faulty parts. So those two factors are contributing to EBITDA margins being lower for Jaguar Land Rover. Apart from that, the CV business has seen a revenue fall of about 13%. That's because of volumes have also been down in this particular quarter, while the passenger vehicle space has also seen EBITDA margins fall about 30 basis points. So overall, it's a miss on all fronts for Tata Motors, JLR being one of the biggest drags in the numbers.
Right, Puneet. Now, China is in focus. The $839 billion debt swap plan is set to help local governments refinance their debt. NDTV Profit's Neera Chubb breaks down what this means for the economy and the potential ripple effects.
Well, what's the impact of the China's NPC meet and the stimulus that they've given? Precious little, because you saw that commodities world over came off. I think the Chinese markets in the futures market also came off a little bit. But let me try and tell you what has happened. So China has unveiled an $839 billion debt swap to refinance the local government debt. Now, this is what was needed, that the central government will help refinance the local government debt. What else has been announced? Well, local hidden debt swap, total size of about 10 trillion, with 6 trillion to swap the existing debt. This is what has happened. Now, I'll tell you what hidden debt means as well. Remember, the 6 trillion yuan of debt swap quota is spread over 3 years. So now you know that it's about $6 trillion of debt swap quota. Central government will refinance or swap the local government bonds and some of the hidden debt. Now, hidden debt means off-balance sheet debt. So a lot of measures that have come in were exactly what was anticipated at the lower end. Now, let's just briefly understand this, that the street was working with a band of expectations before the US elections. After the US elections decision came out and Donald Trump came, a lot of people believed that China might actually exceed the upper end and give an even bigger stimulus. What has happened is that the stimulus is coming at the lower end of expectations, and experts say that this is not good enough to kickstart a new round of investments into some of the ailing sectors or otherwise. Because, why do I say this? Because as I said, that some experts were expecting a higher stimulus post-US election outcome. Now, if you can go to the previous plate, the reason why this is disappointment is because of the second line, that this is not good enough to kickstart a new round of investment. Now, you would expect Chinese markets to start off weaker on Monday. You would expect the metal names to be under pressure. And while Indian metal companies came off from the highs of the day, you probably expect some more pain into some of those stocks come Monday morning.
The US Federal Reserve announced rate cut by another 25 basis points to 4.50 to 4.75%. The rate cut is in line with the market expectations. It comes less than 2 months after it reduced the interest rates by a significant 50 basis points, thus kickstarting the rate cut cycle after a gap of 4 years. Along with that, US Fed Chair even talked about unemployment and inflation data and emphasized that future rate cuts will depend on evolving economic data and the Fed is on the path towards a neutral stance for the global economy. Ola Electric has also just come out with their second quarter earnings. The company continues its march towards profitability on the higher sales. Tushar is joining us to break the results down for us.
Yeah, so whatever troubles that Ola may have faced from the after-sales front, that's not actually reflecting in the financial numbers, so to speak. Revenue is up 40% year-on-year. EBITDA is narrowing even further, even as the losses are also narrowing. All of that comes on the back of actually blockbuster numbers. The company continues to post month-on-month as far as sales is concerned. So while August and September were weaker months, but that hasn't stopped India's largest electric scooter maker from posting the numbers as we see at this point of time. At this run rate, it seems like the company may turn profitable in the next couple of years. What remains to be seen is how the after-sales service impacts the company going ahead in the subsequent quarters.
Tushar, so thanks for that. Now, moving on in today's discussion with NDTV Profit, Taimur Beg of DBS Bank revealed why Indian markets present a wealth of opportunities. He mentions that global investors continue to view India as a top investment hub.
The secular growth story of India is absolutely undiminished. And when I talk to global portfolio managers, whether in India or outside of India, in the Middle East or Europe or the US, there's not one big percent decline in people's enthusiasm or interest in India, whether it is related to India's sort of burgeoning supply chain of manufacturing, or the burgeoning and extremely full of vitality in the capital markets, whether it's M&A or private equity or listed equity market. There is a lot of interesting deals, interesting opportunities, and there's a lot of interest from global investors.
He also weighed in on the Fed's latest rate cut and the likelihood of another December, considering the implications of Trump's election win.
We've heard the same story many, many times. Labor market marginally weak, underlying demand still pretty strong, inflation is coming down, the Fed is happy with cutting rates, and I think we can say fairly safely that the December rate cut is also on the cards. Nothing is going to happen as far as Trump's policies are concerned between now and December. He will not take office till January.
US Fed Chairman Jerome Powell told media persons that he won't resign if President Trump asked him to. But can Trump as president fire Powell? Let's find out.
Will Trump ask US Fed Chair Jerome Powell to resign? Well, Powell has already answered that.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
The million-dollar question that's on everyone's mind: can Trump fire Powell? But which position would he fire Powell from? Powell holds 3 positions. He's a member of the Board of Governors, Chair of the Board of Governors, and Chair of the FOMC. Jerome Powell was appointed by former President Barack Obama to the Board of Governors, and it was President Trump who picked him to be the chair of the board in 2018. 3 out of the other 5 governors, Michelle Baumann, Richard Clarida, and Randall Qualls, are all Trump appointees. If Trump wants to remove Powell, he would need a reason, meaning inefficiency, neglect of duty, or malfeasance in office, according to the Brookings Institute. If Trump cites differences in policy as the reason to replace Powell, it would probably go to the Supreme Court. If this happened, it would be one of the biggest changes in administrative law in the United States in 80 years. So no, it is not likely to happen. The law, though, says nothing about whether the president can fire the board chair, meaning demoting him to being just one of the other governors. Legally, this is up in the air.
J&K Assembly ruckus continues for 3rd day in a row after Khurshid Ahmed Sheikh, MLA and brother of jailed Lok Sabha MP Engineer Rashid, displayed a banner on Article 370, leading to a fist fight among lawmakers. The leaders demanded immediate restoration of Article 370 and 35A to their original form and called for reversing the changes made by the Jammu and Kashmir Reorganisation Act 2019, urging the government to honour the region's unique identity and autonomy. The newly elected Jammu and Kashmir Assembly witnessed chaotic scenes on the first day of its first session after opposition member Wahid Para of People's Democratic Party moved a resolution against the scrapping of Article 370. NDTV's Pratibha Raman takes a deep dive into how Trump's win could affect India's IT sector with insights from Indian tech entrepreneurs. Let's hear their thoughts.
We are here at the Hyderabad-based T-Hub, largest innovation ecosystem that the government-enabled ecosystem, in fact. And I have here entrepreneurs and the CEO as well of Math Lab here, and someone who is in fact hosting a lunch for his teammates because Donald Trump has made it. Why the celebration at this scale?
Yeah, I've been rooting for Donald Trump for a while now, and I think the sanity has restored at the US scale. And also, like, I think, meritocracy is something compared to a DEI type of environment will prevail. So that's why I think I'm as a startup and I'm in a core technology space. So I think this is what is very much needed. And I'm greatly looking forward for what is coming next.
So how is business going to change?
I think quite a bit. Because now, as a part of Indian technology space, right, most of us are, supporting, developing, the applications. But then most of us to focus on core technology. Always, it helps if somebody in US or in the West, right, is supporting a lot of merit. So that's where I think we should start looking at, how to innovate, and then move away from traditional space of, just supporting or building applications to build the innovation technology, and also with Elon Musk at the helm of things to, build the government efficiency, this thing. I think a lot will change. I think there'll be a lot of cut in government spending on, rudimentary things, and then they'll focus a lot on innovation. I think even India, like startups from here, right, would play a critical role in that.
US President-elect Donald Trump announced that his campaign manager, Susie Wiles, will be his White House chief of staff. She will become the first woman to hold this position in US history. Trump said that Susie helped him achieve one of the greatest political victories in American history and was an integral part of his 2016 and 2020 successful campaigns. Trump also gave a shout-out to Wiles during his victory speech on Wednesday. In a dig at Canadian Prime Minister Justin Trudeau, billionaire Elon Musk predicted Trudeau's political downfall on social media platform X. Musk posted that he will be gone in upcoming elections. This was a response to a post that said Germany's socialist government had collapsed, to which a user asked for Musk's help to get rid of Trudeau. This election will be a significant test for Trudeau, as his current minority government status makes him vulnerable to losing power. Canada has ordered TikTok to dissolve its business operations in the country due to national security risk. It clarified that Canadians will still have to access to the app. Innovation Minister stated that the decision was made based on advice from Canada's security and intelligence community after a thorough review of ByteDance's operation in the country. Details of the review remain undisclosed due to Canadian laws on foreign investments. In response, TikTok announced plans to challenge the order in court, arguing that it would result in the loss of hundreds of local jobs. As Maharashtra elections draw closer, we spoke to voters in the Bandra suburb of Mumbai to get a sense of what their concerns are. So NDTV's Radhika gets you the pulse of the voters.
Hello from Bandra, a scenic beauty, urban charm. This upscale area is the beating heart of Mumbai's cultural and social life. And as assembly elections draw close, we are here to understand the pulse of this dynamic neighborhood. Let's find out their laughter routine, what this routine is all about, and of course what their expectations from these elections are?
There should be proper parking for us and the take care of the senior citizen. There's sometimes some ladies, they are alone, they come alone in the morning. So there should be something like to protect them.
The roads also are being improved, they're a bit widened also. They are doing, the corporators, they're doing well, everybody is doing well.
Bandstand is a favorite spot for locals, tourists and even joggers.
It's very messy around here. The garbage is all around. We would like to see the clean bandstand. Every people from everywhere come here and it's not looking good.
I would like some changes in the traffic scenario here. Usually even during the peak hours or not the peak hours, it's very trouble for someone who's coming and there's a lot of traffic and it causes a lot of delays.
This is a heritage site and we want to maintain it as a heritage site. That is why when the roads were being done, we all came out en masse and we supervised it. And we want it to remain just like this. You know, we don't want, there is a move to break this road and to make it into concrete. Why break something which is good?
At Land's End, all the cars are coming and parking at the Cane Road, and the drivers and the rickshawalas in the night stay there and they remove their shirts, they're drinking in the night and nobody's doing anything about it. There should be like cops, especially at a place like this.
People here have expectations from the leadership. They want the leadership to be a perfect balance of solutions for the future and of preserving the charm and heritage of Bandra.
That's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option.
It's been said that parenting is the easiest thing in the world to have an opinion about, but the hardest thing to do. And that goes not just for bringing up your child, but also for the finances involved. Depending on who you speak to, when you're planning to have a child, you'll either be told that you have nothing to worry about and that the kids come with their own luck, or you'll be told that you have no idea what you're signing up for. But chances are that the reality is somewhere in the middle. I'm Alex Matthew and this is MoneyWise. And on today's episode, I'd like to discuss some of the most important financial decisions that you will make as parents. We'll break them down for you so that you have one less thing to worry about. Joining me today are a couple of very special guests, Tripti and Dilip Chaturvedi. They're not personal finance experts, but having been parents for 13 years, they've got a fair idea of what it takes. We learn from their experiences and try to help them manage their finances going forward. And to answer their questions and yours, I've got Mohit Gang, the Chief Executive Officer of Moneyfront. Thank you so much to all three of you for taking the time.
Yeah, thank you.
Now, I do want to ask the first question. You have a son, and I was asking you before we started this conversation, his name is Gaurav.
Yeah.
I will ask you first, Tripti. When did you decide that you wanted to have a child? आपने decide कब किया था कि आपको you want to have a child, and did you want to have only one?
No, मुझे तो दो चाहिए.
अभी भी दो चाहिए.
हाँ, मुझे अभी भी दो चाहिए.
And what did you have to say about that, Dilip?
So नहीं, actually मुझे दो ऐसा नहीं, depend on the condition, financials and the background. On that basis, I have decided to only stick to one only.
Okay.
Yeah, it's जब हमारी शादी हुई थी 2007 में, so as a thought process कि मुझे थोड़ा time चाहिए child के लिए, लेकिन since now we have to do because in 1 year already हो गया शादी के लिए. Then it's take 3 years. हम लोगों ने तभी
3 साल लगा आपको convince करने में उनको.
3 साल के मैं पहले साल से convince करती.
Dilip or Tripti, when you decided to have a child and when you had a child, right, the only child that you had, उस टाइम पे आपने कुछ prepare किया था financially, आपने कुछ decide किया था कि मुझे save करना है, आपने कुछ conversation उस टाइम पे किया था कि हमें ये करना है, ये plan करना है?
मैंने सोचा था कि एटलीस्ट 2 or 3 years डाउन द लाइन अगर हम शादी के बाद करेंगे तो एटलीस्ट वी कैन सेव सम पार्ट फॉर दैट, बिकॉज चाइल्ड होगा फिर देन अगेन 4-5 years तक हमें एक्सपेंसेस मैनेज करने होंगे. तो ग्रेजुअली वी पुट सम इन्वेस्टमेंट, मतलब जो मेरे से सेविंग हो पाता था तो थोड़ा हमने किया था.
और आपने इस कॉन्वर्जेशन में भाग लिया था मनी के बारे में?
मैंने शुरुआत में तो नहीं पूछा था मैंने.
बट आप अभी सोचते हैं मनी के बारे में?
उसके बाद से जब गौरव हुआ उसके बाद.
Okay, so I think this provides the perfect opportunity for Mohit, for you to come in as well. And ordinarily in the course of your in the business that you do of advising people, a lot of people come to you seeking advice for particular scenarios. So imagine that this is such a scenario. You've come here on this show and Mohit is here as an advisor. If you have questions about what to do from now, because Gaurav is at 13 years old, you're now going to be thinking of further education, what the costs are, how you want to save for his future beyond just his education to set him up for success in life. So if you've got questions, think about them and we'll set that up. But Mohit, when you meet somebody who comes to you for advice saying, what can I do right now? How do you go about that conversation? Let's start that.
All right. Thank you so much, Alex, and Tripti and Dilip. Thank you so much. It's been lovely knowing you both. Look, I think when it comes to having a child and taking a call financially, my first thought is you have to start T-1, which is you have to start at least a year before. Let's say when you decide to plan for a child, that's where the first thought or first seed should germinate in terms of how would you plan for the finances. Honestly, Alex, it's not an easy task bringing up child, and the way you started the conversation today was a perfect apt way of starting it. It's somewhere in the middle. It's not too easy, it's not too hard, but somewhere in the middle. And even when it comes to finances, look, it's easier said than done. That
you
yes,
have a child yourself.
I have a daughter
11-year-old.
who's 11 years old,
Yeah.
so almost identical in terms of the path, right? So we have to start T-1 in terms of provisioning for the child, what her requirements or what his requirements will be, what kind of, let's say, atmosphere or environment would you want to provide. Schooling. Schooling is ultra expensive in a city like Mumbai, honestly, and look, it also depends in which city you are staying, right? So your cost of education, your cost of living, your other expenses, just simple expenses like the birthday parties are so expensive, Alex. Look, trust you me.
So, okay, so I'm pretty sure that you have to deal with a lot of his demands, right, Tripti? Mummy, mujhe ye kharidna hai, I need to buy this, I need to buy that. How do you manage that? Because he would obviously come to you first, right?
मेरे पास जब छोटी चीज़ों के लिए आता है तो मैं तुरंत खरीद के दे देती हूँ. जब ज़्यादा कुछ बड़ी डिमांड रहती है तो फिर पापा के पास फ़ोन लगाओ.
Phone laga. So okay. So but then is it a controlled manner of dealing with it, Dilip? How do you manage the demands that you have?
Yeah, it's control, because I have to again think of my pocket only, because as an date की जिसकी grow होगा उसकी requirement और उसकी demand बढ़ते जाएगी. So I'll back of the mind, I'll keep my pocket also कि मेरे budget क्या है और what I can afford to him. So based on that, if I feel okay, it's necessary or I can manage, then otherwise I'll postpone or I can ask him to please drop the.
Okay, आप pocket money दे देते हो उनको?
नहीं, अभी तक तो.
Okay, so there is a very clear handling of money in a particular manner. Let's start this conversation in a way that you would if you were meeting somebody and trying to find out how to help them with this particular goal. Let's assume that their goal is to educate their child and to set them up for success. What would the first question be?
Okay, so my first question is that let's say now he's 13 years of age. So what all have you provisioned for? What are you planning currently in terms of, let's say after 5 years, let's say at age 18 or at age 20, you would need some kind of amount for his graduation, depending on what college he goes into. And then for post-graduation, let's say if you are planning something, whether he does an MBA, he goes into engineering, he does computer applications or anything, right? You would need certain amount of money, right? So have you thought about that? What is the kind of requirement you will have at his age 18, 20, 24? 3 critical junctions, basically. And then from there on, for his marriage and maybe
Let's
other
take it
things.
one step at a time, no? So, do you have an idea at this stage of what he wants to do?
As of now, मतलब उसका he is in looking for the some tech, मतलब is in very good in tech point of time. So as per उसका जो requirement जैसा जो interest part है, तो मुझे ऐसा लग रहा है कि ये tech में कुछ इसका interest होगा, तो I'll help him
तो
to do
engineering
that.
करना पड़ेगा.
Help him to do that in that.
Okay, so if you, and this is a simple issue that I think a lot of, not simple, it's a complicated issue that a lot of parents deal with. You would know as well. You don't know what your kid is going to do.
Absolutely.
They're 11, 12, 13.
Absolutely.
For all you know, they want to be an artist and you want to support that as far as you possibly can.
Right.
How do you set the money aside?
Look, ideally you have to take a educated estimate out here, right? So let's say if engineering or technology is his chosen line of interest, right? You might just want to see what the competitive colleges in the country are quoting the current fees at. Let's say for his undergrad, 4 years of undergrad, you might need whatever, around 20 odd lakhs if he decides to stay within the country and study. And if he's any which ways, let's say the ambition is to send abroad, then the equation completely changes. For the graduation or the post-grad, let's say in engineering, a good campus will any which ways cost around 30, 40, 50 lakhs also, depending on the kind of colleges you would want to set, right? So that's the current cost. If you were to then see what is the timeline, which is like 5 years down the line or 10 years down the line, then you have to see the inflation aspect of it. The fees today won't be the fees 10 years down the line, right? So if it is 20 lakhs today, my sense is 10% inflation in education is given, Alex. You can't do away without it, right? So which means that 7 years, it doubles. So in 7 years from now, the 20 lakh fee will be 40 lakhs. So that's your basic math. You start with that number saying that, okay, if in today's term it's 20 lakh, I would need 40 lakhs after 7 years, which is age 20 for Gaurav, right? And that's when you back compute and say, okay, I need to provision this much every year so that I easily attain that 40 lakh kind of corpus.
They've saved a certain amount of money, but they've not necessarily saved enough. Am I right in assuming that? So if you are in that situation and your child is 11 to 13 now, and you need the funds 5 to 8 years down the line, how do you manage that situation, Mohit?
Alex, the equation has only few variables. It has either R or T. I can't extend the T out here, which is the time horizon, right? That's pegged. He has to go for education at his age 20, he has to go, right? So that's non-negotiable. R, again, is not in my control, which is the rate of return which you will earn. I can assume 12, I can assume 15. That's the range I can go about. The only thing which then is in my control
is the amount.
Is the amount, right? Then I'll have to provision accordingly. I'll have to perhaps cut out my own self in a manner that I provision a higher amount, or then I also moderate my expectation, right? So it's not a given that you need to really strive for that kind of a college or a campus. There are many options available which will give you good and great education at different price bands, right? So you plan accordingly, you provision accordingly. But my whole point here is that unless you plan, you won't reach that goal post. अगर आपको 80% भी पहुंचना है या 100% भी पहुंचना है, you will have to know what is your ultimate amount. Knowing is the first step towards achieving.
Okay. So having said that, it's not unachievable. It's something that you can do. Another option that a lot of people don't consider necessarily is to take a loan. And what people tend to do in this situation is to borrow from their retirement corpus, which I'm assuming, Dilip, that you will very seriously consider doing. You've set aside a certain amount of money. I understand that you're doing mutual fund investments right now. You would have to take from that. Is that a good idea though? Because what people think is, and okay, let me find out what you would do. Assuming that your son gets into the top college possible, gets into an IIT, gets into a top tech college, would you say that I will pay the fees right now and I will work for 5 years extra if I have to, or I will save for myself later? Is that your approach?
No, mostly I'll go for in such scenarios, if there is a shortage of the funding, I mostly will go for the loan.
Okay.
So education loan I'll prefer instead of touching my retirement corpus.
Okay. So that is an evolved thought. A lot of people wouldn't think like that. Is that a good idea?
Absolutely. I would assume so. Look, I have myself studied on an education loan when I went for my MBA, right? And I paid for my own this thing. The interest component was paid by my father for 2 years of my education, but the actual EMI started post me getting a job, and then I actually paid for it. So education loan is a great instrument. It actually puts the onus of repayment from you to the child once he gets a job, number one, which makes him more responsible, and he also understands and appreciates the hard value of money. And B is you get tax benefits, Alex, right? So there are certain amount of tax benefits if you are in the old regime. You still tend to get certain amount of tax benefits.
The entire interest is
absolutely is available for exemption, right? So I think that's a great tool. Touching your own retirement corpus is an absolute no-go. It's an absolute no-go zone, and I understand Indian parents at times can get drawn into emotions and can touch their own retirement corpus. We have seen our own parents cutting themselves out number of occasions and provisioning for children. My sense is I go with the famous Hindi adage at these situations ki poot sapoot to kyon dhan sanche aur poot kapoot to kyon dhan sanche, right? So if your child is good, you don't have to like really save for him. If your child is obviously doesn't turn up as a responsible child, then also you're saving for wrong causes, right?
So I see Tripti grinning away. आप इस बारे में सोच, have you thought about
this?
सर
बार-बार एक ही चीज जो बोलना वो चीज घूम रहा है सर मेरे माइंड में.
वो क्यों?
वो पता नहीं, वही मैं बोल रही हूँ ना कि आगे मैं अपने बेटे को तो अच्छे से दे रही हूँ, संस्कार जो दे रही हूँ, लेकिन आगे क्या होगा उसके बाद मैं नहीं बोल सकती ना। कि उसकी मैं सारी इच्छाएं तो पूरी कर रही हूँ, लेकिन वो मेरे जैसे मैं सोच रही हूँ वो उस पे खरे उतरेगा।
ओके, सो दैट्स अ फेयर पॉइंट। आपके हिसाब से, इन योर ओपिनियन, एंड आई एम गोइंग टू आस्क यू बोथ दिस क्वेश्चन सेपरेटली, apart from education, do you think that you should give your son anything? For example, do you think that you should build a home for him and give him a house, in your opinion?
Actually, I thought that because इसके पीछे लॉजिक है कि because I take at least my half generation to build a house, so back of the mind I thought that कि at least मेरे son को वो ना करना पड़े, then he can do whatever is
So you think that you should buy a house?
Yes, I thought that.
I'm sure that you have not had this conversation yet. You've not had this conversation. So Tripti, what is your opinion?
मैं तो बोलूँगी अपने बलबूते पे करे सब।
That he should build. वो क्यों?
क्योंकि पढ़ाई से लेके सब चीज़ पाल पोषण हम लोग ने किया है, तो उसके आगे भी तुम्हें, क्योंकि उसको भी एहसास होना चाहिए ना कि हम लोग ने जितना तुम्हारे लिए किया है, अब घर बनाना तुम्हारा काम है। शादी भी करा देंगे लेकिन घर बनाना तुम्हारा।
शादी भी करा देंगे। ओके, सो वील टॉक अबाउट दैट।
शादी का भी भरोसा नहीं हो सकता। शादी का भी भरोसा नहीं हो सकता उसमें।
क्यों?
क्योंकि बच्चे की अपनी पसंद रहेगी ना। अब हमारे जनरेशन में अलग बात थी।
तो आप बजट सेट करेंगे, इसके ऊपर आप जाएंगे नहीं?
नहीं।
तो आप ऐसे ही करेंगे, और अगर ज्यादा मांगे तो?
ज्यादा कैसे मांगेगा? तो वही मैं बोली ना कि वो अपने बलबूते पे कर, फिर मैं कुछ नहीं कर सकती फिर उसमें, क्योंकि जब तुझे अपने मतलब अपने इच्छे से करना है सब चीज़ें, तो तू फिर अपने बलबूते पे करके दिखा।
Now I know that this is not the core purpose of this conversation, but since you're here and since you have the opportunity to ask Mohit this question, have you thought about how much you will need for your retirement?
लाइक सेड कि वो हमारा ऐसा ना प्लान तो ऐसा नहीं है, मतलब लाइक डे टू डे एक्सपेंसेस जो हमारा होता है, तो बेस्ड ऑन दैट कि हम लोग ये सोचते हैं कि भाई इतना हो जाना चाहिए आगे 15-20 सालों में, तो ऐसा बैक ऑफ द माइंड पूरा ऐसा कॉर्पस नहीं है कि हमें इतना ही चाहिए।
तो
और जो हम इन्वेस्टमेंट करते, सेविंग करते, लाइक कि सेट की जो थोड़ा सरप्लस बच जाता है आफ्टर कंट्रोलिंग द एक्सपेंसेस, तो वो इन्वेस्टमेंट होता है। फिर जो इन्वेस्टमेंट वो ग्रो हो, फिर जो कॉर्पस बन जाए उसी का कॉर्पस बन जाए।
ओके, आपने कुछ सोचा है कि आपको कितने पैसे चाहिए रिटायरमेंट के लिए?
नहीं, एक्चुअली तो
अंदाज से आप क्या?
नहीं, अंदाज से तो नहीं सोचा है। थोड़ा एक्सपेक्टेशन भी लग जाता है बेटे के साथ कि बुढ़ापे में काम आएगा।
एग्जैक्टली, देखो ये तो सही बात बोली आपने। So this is exactly what I'm talking about, right? You're investing ultimately not in an investment product. You're investing in your son, you're investing in your child, because you want your child to be your retirement.
I get that.
And so, okay, so since we're here and since you have the opportunity, Mohit, why don't you take them through how they should plan, how much they need for their retirement?
Look, from my perspective, Tripti, I understand, and I would also love to be in a situation that every parent in this country would honestly believe so that his or her children will take care of all the expenses and everything. But उस हिसाब से आप प्लानिंग मत करिए, राइट? माई सेंसेस, आप एक एक्सपेंसेस देखिए अभी कि आपके मंथली एक्सपेंसेस कितने हो रहे हैं। लेट से वो मंथली एक्सपेंसेस आपके 50,000 रुपये, मुझे नहीं पता वो जो भी हैं, उस एक्सपेंसेस को आप देखिए कि आज से 20 साल बाद या 15 साल बाद, वेन एवर यू आर अबाउट टू रिटायर, राइट, आपके वो एक्सपेंसेस कितने हो सकते हैं इन्फ्लेशन को ध्यान में रखते हुए, विच मीन्स कि अगर अभी 50,000 रुपये के एक्सपेंसेस हैं, तो आप रफली मानिए अगर मैं 6% का इन्फ्लेशन पकड़ता हूँ, ठीक है, तो 12 साल में वो डबल हो जाएगा, विच मीन्स वो आज से 12 साल बाद और 12 ईयर्स इट विल बी 1 लाख, एंड इन 24 ईयर्स इट विल बी रफली 2 लाख रुपीज़ अ मंथ, जो आज 50,000 रुपये है, राइट? सो उस हिसाब से यू फिगर आउट कि व्हाट इज़ द काइंड ऑफ कॉर्पस यू विल नीड कि आपको आराम से एवरी मंथ यू कीप गेटिंग दैट 1 लाख रुपी, लेट्स से इफ दैट इज़ द अमाउंट विच आपके थोड़े खर्चे कम हो जाएंगे, लेट्स से योर सन ऑल्सो टेक्स good care of everything, then you will need lesser amount of money, but you have to at least plan कि a lakh a month should be something which you can after age 60 or age 65, till then perhaps maybe the lip will keep working, you will keep having some resources. And after that, you have still good 25 years, at least, right? So for those 25 years, will you have a corpus which will keep giving you 1 lakh a month?
The investments that you make, a lot of parents, young parents, tend to say as soon as their child is born, they should start an investment. And I'm sure that you start this as well. Without getting into what they've done, because I think we should cater to everybody listening in as well, what according to you should you do and should you not do?
Look, I think the first thing is that you get your child a PAN card or Aadhaar card, utmost critical, and start SIPs. Day 0, I think your SIP or your systematic investment plan, which is provisioning out of your monthly salary, has to go out. If you do it in the name of your children, absolutely great. If you don't, then do it in your own self. Why I would say it is better to do it in child's name? Because that is one pot of money which you will never touch, never ever touch. I kind of stopped my SIPs when I was buying my house, right? But I didn't stop it for my daughter. So that continued, right? That is one pot of money which I know for sure I'll never going to touch, right? If you have a daughter, please go for Sukanya Samriddhi. It's a great tool. It's like an alternate planning, a provisioning with safety, with cushion. But I think that's one of the finest schemes Government of India runs. You should also consider opening up a PPF account for your children. It's always a great tool, though obviously it is clubbed with the parents' limit, overall limit, but it's always good to have this kind of planning and provisioning. And things which you should not do, Alex, I think first and foremost, don't get emotional and don't start buying life insurance policies in the name of your children.
The two of you had a conversation about having a second child. And while Tripti wanted a second child, you said no. Why is that?
बेसिकली ठीक अभी करंटली जो इन्फ्लेशंस और एक्सपेंसेस है अगेन वी हैव टू गो फॉर जैसे एक सन के लिए हमने किया देन अगेन वी हैव टू गो फॉर द सेकंड चाइल्ड आल्सो और एजुकेशंस एंड द लाइफ एक्सपेंसेस जो लाइफस्टाइल एक्सपेंसेस है उसको थोड़ा ऐसा देख के लाया कि नहीं एटलीस्ट एट अ वन चाइल्ड एंड गिव हिम बेटर फैसिलिटीज़.
What do you have to say when you're giving advice about people? Because oftentimes it's not a financial decision, though it's becoming that, Mohit. Let's face it, a lot of people are deciding not to have children because it's a financial choice.
Absolutely.
But it's also an emotional choice. And we're seeing both sides of that in this room right now. What advice would you give from the financial side?
Look, I can't answer for anyone's emotions out here. But from the financial perspective, it's absolutely important that quality matters over anything else. What quality of life are you going to give to your children? What is the kind of education, what is the kind of provisioning you want to make for their education, their upbringing, their coaching classes, their extracurricular classes, right? Even for their outings. Travel has become a big thing with your family. Like, so what is the kind of real life experiences you're going to give? Do you have enough provisions for that? Do you have enough provisions for that? A child is a costly affair. Let's all agree on that, right? And it's not just 1 year. It's an affair for at least 20-24 years till the children are old enough to fend for themselves. So for 1/4 of a century, you are taking care of an additional life. It's not just emotional, it is everything. It's everything in life. It's financial, emotional, psychological, everything, right? So you have to be completely into it from all sides, not just emotional side, but from the financial perspective also. There's no point getting someone a life and not
letting them
live
it to the fullest.
Absolutely.
Okay, it's a point well taken. We're reaching the end of this conversation there, but I wanted you to come and join us in studio because I wanted you to be able to ask Mohit questions. Is there something that you are thinking right now that you would want in terms of advice from the financial planning side that you can ask him right now?
सर मुझे से पूछना था कि क्या बच्चों के लिए जो स्पेसिफिक इन्वेस्टमेंट टूल होते हैं जैसे कि म्यूचुअल फंड्स में भी हुआ तो क्या आपने जैसे लाइकली पहले कहा था कि आप इन्वेस्ट कर सकते हो तो वो एडवाइजेबल है उनसे मतलब स्पेसिफिकली चाइल्ड प्लान टाइप?
Look, so there are these child care plans which comes in a mutual fund format which have a 5-year lock-in minimum, or at the age of 18 for the children, they are they become open-ended. But they're like any other mutual fund. I would rather say you invest in an open-ended mutual fund scheme, but do it in your children's name. Do it in the name of Gaurav. I think that'll be great, because वो पैसे को फिर आप touch नहीं करोगे. जितना हो सकता है आप उसके नाम पे जो provision करोगे ना, वो आपका फिर एक पीछे चला जाएगा, वो आपको दिखना बंद हो जाएगा, तो आप उसमें से कभी निकालने की कोशिश नहीं करोगे, बिकॉज आपको पता है कि उसका अल्टीमेट यूज क्या है.
And if you're not utilizing it, and if Gaurav decides to become a painter, and it can be a very lucrative career option to have, you can always bequeath them, you can always give that money to them at that stage and say you invest and you do what you want with it. But on that note, Dilip as well as Tripti, thank you so much for joining in and for giving us some perspective. I thought the best way to have this conversation is to bring actual parents on board, because I don't have a child, and so thank you so much for the perspective that you got.
Thank you.
Mohit, as always, thank you so much for joining me in studio and for giving the advice that you did.
No, thank you very much, and I think it was a very different format. Honestly, I loved this conversation today, because it's so different to hear what goes behind someone's mentality in terms of raising a child. It's not an easy job, all of us know.
And
but
you know it best.
Thank you so much.
Thanks so much, Mohit, for joining in and for answering all the questions that you did and the perspective that you gave us. And that brings us to the end of this edition of MoneyWise. Thanks so much for joining in. Let us know what you think in the comment section, and tune in for a lot more on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money. When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
Hello and welcome to the Mutual Fund Show. I am your host Neeraj Shah, and in times like these, it's very important to get the right advice to try and understand what should you do with your mutual fund portfolios. Is it time to do some rebalancing? Is it the right approach to think of rebalancing, if at all? If you're putting in fresh money to work, what are the kind of funds that you should put your money to work? Because I'm guessing one thing is a given, that these times don't last forever, and therefore there should not be any change to the investment strategy if you have. There could be, or maybe there could be minor tweaks to it, but the process of investing, which a lot of Indian investors have gotten into a habit of, which is the systematic investing, should probably just continue. Is that true or no? Let's talk about this with Mrin Agarwal and Rishabh Desai. Both of them join me on the show today. And both of you, thank you so much for taking the time out and being with us, because you know it's an important day to be doing this show, because portfolios are reeling under pressure. Whether you're a stock market investor or a mutual fund investor, looking at your portfolios today, you must be a bit ruffled about how they are performing. So Mrin, before we talk about the how to rebalance, what should an investor do? Is this a good time to rebalance? Is it a time to sit tight? Or is it a time to continue the investment strategy as earlier, as difficult as it may be?
So good afternoon, Neeraj, and nice to be on the show today.
Thank you.
Well, as such, I think what is really important is to, first of all, build a portfolio that can withstand different market conditions. And, you know, it's very difficult if we have to keep changing our portfolio strategy or even doing the tweaking on a regular basis based on the news that's there in the markets. It's going to be very, very difficult to actually manage a portfolio like this. So I would say, yes, we will talk about a couple of things that you can check at this point. But as such, I think if you have got your asset allocation right, and if your portfolio is as per your asset allocation, then I think you should just sit tight.
Rishabh, what would your view be?
Hi, Neeraj. First of all, thanks so much for having me on the show. It's been quite some time since we last did a show together. Yes, I think I more or less agree with what Mrin had to say. Like, you know, sticking with one's goal, one's time horizon, and most importantly, knowing your risk appetite and asset allocation is something what we advise our clients to do. I mean, if you have a long-term time horizon, then sticking with your risk appetite and your asset allocation is something what makes sense. So to answer it very simply, you know, sitting tight, sitting put during these volatile times makes more sense. You know, another thing what we recommend our clients to do is to diversify well. You know, a lot of people, you know, concentrate on product selection, category selection. But, you know, it is very important to diversify across different styles if someone is venturing into pure equity, like growth and value and contra. So, you know, that really helps in kind of like mitigating risk. And, you know, I wouldn't say, see, if someone is investing in pure equity, of course, there are going to be double-digit drawdowns. But at least, you know, in different market cycles, different products and different styles will outperform. So it's very important to diversify across different styles as well, Neeraj.
Okay, so, okay, Rishabh, let's start with you on this then. Is there a change of style that you are prescribing with the markets the way they have behaved in October or the way they behaved in October? So come November, the first few days, should people change their portfolios to a style which according to you might work better? And why is that so?
I think, you know, what we recommend, and this is my personal portfolio as well, Neeraj. See, I invest 50% in growth and 50% in value. Right now, growth can consist of, say, like momentum and like pure value. Momentum and pure growth-oriented strategies. And the value segment can consist of, you know, value style and contra style as well. So I think investing 50% in growth and momentum and 50% in in value and contra is something what I personally follow. I really don't need to bother too much about rebalancing too frequently, when markets fall, because see, currently markets have just fallen around 10%, which is very hardly. If you see the mid and small cap space, the valuations are still very expensive, right? So I think following a 50% growth and 50% value strategy is something what I would do.
Sorry, one more follow-up. Actually, let me first go to Mrin. Mrin, I heard your opening answer. I'm just trying to understand. Would you do some rebalancing, some fine tweaking, or are you comfortable continuing with what your strategy was, let's say 3 months ago?
Actually, Neeraj, that really depends upon what the investor has done. The issue that we really see today is, as always, trend chasing. And people have taken very high exposure to sector and thematic funds, for example, or they could be overexposure to, for example, mid caps or small caps where valuations are stretched. So the tweaking is going to really depend upon the stance of the investor. As such, I do recommend rebalancing only once a year at the end of the financial year. But at this point, if you are feeling uncomfortable as an investor, the first thing that you need to be asking yourself is that, are you ready for market volatility? Because of 10 to 15% drawdown every year is very normal, firstly. Second thing is that if you are not comfortable with this volatility, then you need to look at your portfolio and you need to have a look as to where you have a exposure that you want to cut down. So is it small cap? Certainly, I would say that if you're holding these sector funds and thematic funds, which has been the largest category that investors have acquired over the last 1.5 years, I think those are the funds that you should certainly look at exiting irrespective of the return. So clearly, it's a question of the investor's stance and whether they have the ability to stick on or not. And that said, investors should also keep in mind that equities are meant for the long term. So a little bit of volatility in the short term is not really going to make a difference as long as you have the ability to remain invested for the long term.
Okay. So, Bryn, let's try and understand. Let's assume it's an average investor who's watching us right now with average risk appetite and an average time horizon as well. So let's say the time horizon is not necessarily 1-2 years. But right now we are trying to gauge, or even people who might have shorter term goals, but this show is dedicated to people who have a proper mindset in mind of having to look at or investing with a 5-year, 7-year, 10-year period under an ideal case scenario, right? Should thematic funds be out of the window for the time being? Let me ask pointed questions to try and understand this. Should thematic funds be out of the window, or are there thematic funds which you are happy having?
I never advocate thematic funds. So yes, thematic funds should be out.
Okay. Rishabh, what about you?
I agree with Mrin.
Okay. That's
I really don't see any value addition in sectorial and thematic bets, Neeraj. See, unless and until if someone is investing in a product like Nasdaq 100 or a FANG Plus index, that's very different, because they are taking global exposure over there. And in today's time and age, I think having global exposure is very important. But see, if you see the thematic and the sectorial funds today, I mean, if I diversify well across flexi cap, multi cap, mid cap, and small cap, automatically, sectorial and thematic rotations is going to happen from the fund manager side, right? So I really don't see a lot of, cluttering your portfolio with too many funds. And of course, see, there has been plenty of liquidity over the past 2-3 years. Returns have been phenomenal, and investors are more or less pumping in money looking at to the past returns. So I think, following a consistent methodology, right? See, we are in this business day in and day out. So we can take probably sectorial bets or thematic bets, but a regular investor may not understand, when to invest and when to exit. See, there are two things. One is entering at the right time and exiting at the right time as well. I mean, look at the China market today, right? I mean, China is more or less like a theme what someone would want to invest, or look at the media sector. It is still negative today. So I think thematic bets is something what retail investors should completely avoid.
Okay, thematic funds should be avoided. So that's the first one. A lot of people are talking about slightly exotic options, and I'll come to those before I come to normal. So people buying into China ETFs, people buying into global funds or global ETFs as well. Is that an option currently while India is looking so volatile? Rishabh, I'll start with this one with you.
Absolutely. I think global diversification, especially in the US economy, is very important. I mean, if you see, look at the 10-year data, Neeraj. See, 10-year data clearly tells us that Nasdaq 100 has actually outperformed most of the broader Indian indices, which is the Nifty 50, Nifty 500, right? So I think having one foot abroad, especially in the US economy, looking at the giant nature, looking at the consistent returns, looking at the transparency what the US economy have. I mean, there are so many sectors and companies what India has not even seen. I mean, we are still developing, especially in the technology space. Look at Facebook. Look at Alphabet. These are like Apple. These are giant, super giant company with global presence. And let's not forget, how much ever we want to discuss that the dollar is deteriorating, but see, today dollar is a global currency. I will not deny that, and it's going to take a very long time for the dollar to come down the rail or come down from the primary currency, at least at this point of time. So I think having some global exposure, especially in the US economy, is something what I strongly recommend, Neeraj.
Rin, would you concur, and is it only US, or would you look at China ETFs? Would you look at some others?
I would concur with I would concur with Rishabh. And yes, I think US is a great market. In any case, it makes up a large part of world market capitalization. And as Rishabh pointed out, some great investments out there. So certainly I would look at some diversification into US markets.
How do you do this, Brin?
I'm sorry, Neeraj?
How would you do this diversification? An average investor wants to know how to take that exposure. What would you say?
I would say look at a S&P 500 ETF or look at the FOF route, either through the international fund, of course, through the mutual funds, not through direct stocks. Because again, if you're going to try and identify stocks directly out there, one is, the whole aspect of what you buy, but more than that, the tax reporting of foreign stocks in India is quite tedious and complicated. So, of course, through international mutual funds.
Okay. And is there, are there specific funds, Brin? I'll come to you, Rishabh, with the same question. Are there specific funds? These need not be an exhaustive list of recommendations, but indicative list of some of the funds that people can look at and study.
I would say the S&P 500 index fund is a good option if you want a more broad-based option. Because again, when you look at NASDAQ or when you look at FANG, it's primarily directed towards technology stocks. So I would say pick up a S&P 500 index that's available. And of course, study the tracking error to know how well the fund is actually optimizing the investment.
Rishabh, what about you?
I more or less agree with what Miren had to say. See, there are two ways to look at this, Neeraj. One is, unfortunately, there is a offshore limit by the RBI. $7 billion is the MF overall limit, and it's kind of exhausted today. Okay, so maybe there will be many funds which may not take additional lump sum money, maybe SIP, but not lump sum money, especially in S&P 500 or Nasdaq 100. See, what happens is that when investors try to buy ETF, when there is a restriction, the ETFs can also go at a premium because they are traded in the secondary market. So that is also something what investors really need to keep in mind, is that go for either pure index funds or the FOF route. Let the AMC manage that for you, because if you try to buy the ETF, you really need to see at what price the ETF is being traded. You don't want to buy an ETF which is trading at some 4-5% premium, right? it will not add much value to your portfolio. So I think keep your portfolios very simple, keep your products very simple. It will be much more easier for you to track and monitor. So I think if someone wants to invest abroad, Nasdaq 100 either in the index fund route or the FOF, or also investors can look at Indian mutual funds with a combination of Indian equities and foreign equities, for example, like Parag Parikh Flexi Cap Fund or the SBI Focus Fund, because even Parag Parikh Flexi Cap Fund do still have around 17-18% towards the US economy. And I think around SBI Focus Fund does around somewhere around 9-10%. So I think including these funds which have Indian equities plus US equities should do the job.
Okay. So before we take some queries, I just have one more question. Would you guys advocate bringing in hybrid funds, balance advantage funds at the current juncture, or was the right time in the Nifty, on hindsight of course, or was the right time when the Nifty was at 26,000? Min, the question to you first.
See, again, we can't time markets. So I would say, again, it really comes down to the investor. If you cannot take volatility that's there in mid caps and small caps, of course, you have the option of investing in large caps through the ETFs, or you have the option of adding in the balanced advantage funds as well. Now, balanced advantage funds can be added at any time, because the beauty of the balanced advantage fund is that it keeps doing the rebalancing between debt and equity based on various quantitative parameters. And ideally, when markets are overvalued, then it tends to reduce the equity allocation. So I think, again, these calls cannot be taken basis volatility in the market or basis news that is coming out. This is a strategy that people have to decide, how much volatility they can take, how much risk they can take, and decide basis that. But yes, it's a good time for you to do that check in case if you're feeling worried about your investments right now.
Okay. And Rishabh, what's your view here?
Neeraj, see, if someone wants to play defensive, right? I think the best way to do is to be more aggressive during market corrections. See, what happens is during market corrections, you are going to accumulate more units, number one. Once you accumulate more units in the future, see, markets, we have seen that, the downfall or the negative periods have been much more lesser than the positive periods in the equity markets, right? So I think once the units have been properly accumulated during bull markets, the returns will be enhanced. And most importantly, once that volatility phase is waved off after a couple of months or maybe a year or two, the future downside will be very well protected during future market correction. So I think number one, if someone is investing in pure equity, I think the best way to play defensive is actually to be more aggressive and invest or pump in more money during market conditions, market corrections. See, if someone wants to go into dynamic asset allocation funds or balance advantage funds, one should be very clear why they are entering in these products. One is that they cannot stomach volatility. That is a good way to go into balance advantage or dynamic asset allocation funds. Number two is that they don't want to time the markets. They don't want to keep on rebalancing from time to time. And they want to leave that to the fund manager to do the job, right? From equity to debt and debt to equity. So once someone has a moderate risk appetite, someone who cannot stomach too much of volatility, and someone who does not want to time and rebalance on a regular basis, I think balance advantage funds and dynamic asset allocations funds are meant for them.
Okay, let's try and get in some queries going. G2 is the first question is from G2. Don't quite know the age, but G2 is ready to invest 50 lakh rupees into mutual funds with a long-term view. Considering current market conditions, a good time to invest, or should G2 wait until the US election outcome is over? Well, G2 is just a couple of days out, but he needs guidance on timing and strategy. Mrin, you want to help?
So as I said, you can't time markets. First thing to keep in mind that long-term view means that you should be in it for at least 7 to 10 years. So that's my definition of long-term. Secondly, in terms of strategy, well, again, it depends upon how much risk you want to take. but I'm presuming that you're looking only at equity mutual funds right now. I always suggest that take a combination of index, like a Nifty 50 index fund, a flexi cap fund, a mid cap fund, and a small cap fund, because in this, you're getting exposure across the different market cap segments, as well as some amount of international exposure. Of course, provided you choose funds like Parag Parikh, which have international exposure. But I think one of each of these categories is honestly good enough. In the portfolio, it will give you large cap, mid cap, small cap, and international exposure. And always remember that it's very important to be diversified among fund houses as well. So don't choose all funds from one fund house, among market caps, and at the same time, remain invested in this for the long term. That is what is really important.
Okay. Rishabh, is your advice different?
I think, investing around 50-60% into flexi cap and the rest can be divided into mid and small caps. This is something what I would recommend, because it gives a good blend of both these spaces, which is the large cap space and the mid and small cap space as well. So I think, first of all, staggering investments is something what I would recommend, because we don't know where the markets are going. I mean, the earnings have also been quite flat on a year-on-year basis. So I think we may see some kind of stagnation, or the correction could continue for some more time. So I think don't just look at the US elections. It's a combination of everything, which is the global picture and plus the domestic earnings of how they are panning out to be at this point of time. So I think staggering investments over the next probably 3 months or so, this is something what I would recommend. So 50-60% into flexi caps, and the rest can be divided into mid and small caps.
Okay. Second query is from Aman Mehta. Aman is 33 years of age. He says, I invest 1.24 lakhs a month. Interesting number. 1.24 lakhs a month through an SIP route, and is looking for long-term wealth creation, ideally a CAGR of 15%. Is requesting a review of the portfolio. The goal, Mrin and Rishabh, is a 15% CAGR, as I said, and the portfolio has PPFAS flexi cap, which is about 31,000 rupees a month, SBI Contra 31,000, HDFC mid cap 31,000, and Tata small cap 31,000. So those are the 4 funds, 31,000 each, 1,24,000. Is this a good portfolio, or does it need some changes? Rishabh, I'll start with you on this.
Neeraj, I think overall it's a brilliant portfolio, good blend of growth and value. It's not too cluttered. Perfectly what I had actually thought, Parag Parikh flexi cap and SBI Contra are like flexi cap strategies, and one mid cap and one small cap. I think just one change I would like him to make is the HDFC mid cap opportunities fund is a giant fund today. It's around more than 60,000 crore fund. So I think the AUM, especially in the mid cap space, can hinder the future performance. So I think I'm not telling him to redeem from HDFC mid cap. I'm just telling him to stop the SIP in HDFC mid cap and start an SIP in a moderate AUM mid cap fund. So probably I would suggest him, instead of HDFC mid cap, I would suggest him to go for an Edelweiss mid cap fund. I think that's the only change I would recommend. Otherwise, the portfolio looks perfect to me.
Okay, portfolio looks perfect. And Mrin, very quickly, your advice before we move on to the next query.
So I concur with Rishabh that the portfolio is fine. I think somewhere he needs to possibly look at moderating his the returns expectation. I do see a lot of investors who think, SIP, if I do, I'll get 15%. So I think it's better if you have slightly lower returns, lower return expectation of, let's say, 10 to 12% over, having this goal. It's nice to have a goal of 15%, but yeah, that's the only point that I'd like to make.
Okay. The next query, Mrin, is from Abhijit Das, age 22 years, wish to start investing 10,000 rupees a month into SIPs with a 10% annual step up, horizon of 20 years. Can you suggest some funds?
Well, firstly, I'm happy to see that he's having this step-up plan in place, because one of the key things which I advise on is to focus on the corpus. because we are assuming average returns of 10 to 12%. So then a good way to actually build corpus is the actual annual step up, right? In terms of funds, given his age being 22 and the fact that he has an investment horizon of 20 years, I would say take some good risk, take higher risk and look at mid caps and small caps. So maybe like Mire mid cap, SBI small cap. These are a couple of funds that I would suggest.
Okay. Very quickly, I'll try and take one more query, and Rushabh will have to make this quick. But Rajesh Chaudhary, age 36 years, is investing 90,000 a month through SIPs across 10 funds. 24-year time horizon, expectation of 14% CAGR. Please review the portfolio. Rushabh will have to make this quick. The goal, as I said, 14%. The funds on your screen. PPFS FlexiCap 10,000, Mirae Asset Consumer 10,000, HDFC Midcap, about 10,000 in HDFC Manufacturing, about 5,000 coupled with the HDFC Pharma, Nippon India Growth, Nippon Multicap, HDFC AMC, Nifty B. So about 9 funds.
So there are two things, Neeraj. One is there are too many funds, which I would recommend to trim down. Number two is that he's concentrating on certain AMCs, which is HDFC and Nippon. I think diversifying across different AMCs and different products is something what I would recommend. I'm not a very big fan of the sectorial and thematic funds. So manufacturing, pharma, consumer. I think these are the funds I would like him to kick it out from his portfolio. Stick with 4 or maximum 5 funds. I don't think there should be more than five funds in one's portfolio, in one's core portfolio, especially on the equity side. So probably stick with FlexiCap fund. Introduce one more FlexiCap fund, like probably say Franklin India FlexiCap fund. He can stick with Nippon India Growth Fund, and I would encourage him to introduce one more small cap fund, probably say like Kotak Small Cap Fund. But just stick with 4 or 5 funds, 2 or 3 FlexiCap, 1 mid cap, and 1 small cap, Neeraj.
Got it. Okay, both of you. That's all at the time that we have on the show. Thanks so much for taking the time and being with us and giving us your advice. Really appreciate your time. That's all the time that we have on this leg of the mutual fund show. Stay tuned to NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
if you want to be in the money. When the whole day passes like a blur,
Nifty Sensex end an event-heavy week lower. Nifty Realty emerges as the worst performing sector. The rupee too hits fresh lows against the US dollar every day this week. State Bank of India reports a 28% growth in net profit for the second quarter. India's largest public sector bank beats estimates by a wide margin. Swiggy's grand 11,000 crore IPO is now fully subscribed post a cautious start, sees maximum subscription from employees. China unveils $839 billion debt swap to rescue local governments, but holds off on big stimulus measures to support a slowing economy facing new risk from the re-election of Donald Trump. As the US Fed cuts rates along expected lines by 25 basis points, Fed Chair Jerome Powell underscores the bank's independence, says he won't step down even if asked to do so by the incoming President Donald Trump. Elon Musk predicts downfall of Canada's Prime Minister Justin Trudeau in the upcoming Canadian federal election. He will be gone in the upcoming election, says Musk on X, while responding to a user's request to help Canada get rid of Trudeau. Hello and welcome. This is Profit 360 on NDTV Profit, and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. Let's first go across to an exclusive conversation that my colleague Vishwanath Nair had with SBI Chairman C.S. Sethi post their Q2 results.
Hello and welcome to NDTV Profit. We are here at State Bank of India right after the bank has announced its Q2 results, and I have with me the Chairman, Mr. Sethi. Mr. Sethi, the 28% growth on net profit, your highest ever net profit on a quarterly basis and highest ever in among the listed universe. I just want to get a sense. You talk about consistency in delivery of results. Is this deliverable going ahead?
Yeah, thanks for having me on your show, Vishwanath. I think the results, as I said in the press conference also, is a manifestation of our commitment to consistency. We are confident to maintain the consistency for 2-3 things. One is that our investments in the digital technology and our investment in the underwriting processes and more importantly our renewed focus on the deposits to support the credit growth indicates that we will be able to maintain this consistency unless of course there are unusual geopolitical events or something which we are not expecting, but otherwise the run rate seems to be stable and asset quality is stable. The earnings are moving in the right direction.
I want to also ask you about the way that the bank's credit and deposit growth numbers have come out. Corporate credit has outpaced your retail portfolio at this point in time. Going ahead, it looks like that's a trend that is going to continue for the rest of the year. What is driving corporate credit growth? What is slowing down retails?
On the corporate credit growth, both combination of term loans in terms of the capital expenditure, not necessarily the steel, cement, core sector slightly slower, but we see that sectors like petrochemicals, there's a good amount of investment coming in there. And then the road sector is doing very well. The renewables, both in the solar, hydro, and pumped hydro, all these sectors are showing good demand. The corporate credit growth is also contributed by the increased utilization of working capital. But if you see the year on year, almost 8 percentage points working capital utilizations have gone up. And as far as retail is concerned, we see that every product in our portfolio, particularly our flagship home loan product, is doing extremely well. We are having the same CAGR of 13 to 14%. That will continue. We have seen some slowdown in the auto in the first 2 quarters, but and also unsecured retail personal loans, both mainly from the demand side. And I see that in the current quarter, the retail growth is back on track. I think hopefully we will be doing better on the retail side. Obviously, another important element which we have to see, that is secular credit growth, is also happening apart from the corporate credit growth. Agriculture and SME. Okay. We are happy that all productive sectors are absorbing the credit in a significant manner.
No demand issues there.
No demand issues there.
Okay. I want to ask you one question around deposits. A quick one. You've brought down that deposit estimate for the year, low double digits. I just wanted to get a sense from you. Obviously, from a size perspective, that's completely fine. 50 lakh crores, so 5 lakh crore of deposit growth is fine with you. But going ahead, is there any worry on the deposit front at all?
Many?
On the worry on the deposit front?
No. See, the worry is the system level worry. I think the changes in the asset class obviously putting pressure on the banks to mobilize the deposits. But we realize that we have a very strong franchise. It is only the nudge and push which we had to give in terms of reactivating and regalvanizing our the network. And that has really helped us. It's not that we have done anything significantly different. We have pushed on the interest rate or something. Of course, we wanted to compensate our customers adequately on the interest rate. We have launched a product called Amrit Vrishti, 444 days deposit, which has been a big hit among the customers. But more importantly, I think we focused on the qualitative improvement on the counter level service, improved on the digital services, and more importantly, the outreach towards customers. That is really helped us, and we are focusing on the premier banking customers. I mentioned earlier also that a large number of customers who have a significant relationship value with us, we started rolling out specific services to them, privileges to them, which otherwise, they were neither in the wealth category nor on the not were receiving any privileges. This premier banking also had helped in terms of accelerating attracting higher quality accounts to us.
Last quick question around the profitability aspect. Again, you talked about a 1 lakh crore operating profit number. You've hit 93,000 crore earlier already last year. How soon do you think, I'm not asking for a specific timeline, but is this achievable this year, next year? Some indication.
The idea is that we should reach operating profit of 1 trillion as soon as possible. I think hopefully in the current financial year, without sounding it as a forward guidance. The idea is that with the operational efficiency what we brought, both in terms of containing the overheads and expenditure, and also trying to push the envelope on the yield and advances and non-interest income, we hope to achieve that operating income level of 1 lakh crore soon.
All right, Mr. Sethi, thank you so much for joining us on this conversation. Thank you. Pleasure talking to you.
The Nifty Sensex ended this event-heavy week lower. Nifty Realty emerged as the worst performing sector. The week also saw the rupee hit fresh lows against the US dollar every day this week. Neeraj Shah joins in with a wrap of all the action on the bourses.
Well, not the best of ends to the week, especially if you are an investor which parked in SMIDs, because the mid caps and the small caps had a deep gash today. So portfolios would have sulked even if the Nifty looked flat, because the mid cap index 1.3% lower and the small cap index will come up on your screen 1.5% lower. So the breadth, the market breadth looked very, very wobbly. So if you look at the Nifty 50 heat map, by the way, you would find it to be a very ordinary day. Look at this. Usually happens a little bit more red, but almost even Stevens. Some stocks like Trent, Tata Steel, Tata Motors, etc. have fallen a bit, and some stocks like M&M, Tech Mahindra, etc. have done well for themselves. But the big point is the devil is in the detail. By the way, it's interesting to see that SBI, because the loan growth guidance cut presumably is down 2%. Reliance for yet another day is down about a couple of percentage points. So those, and Asian Paints has corrected as well. So those are a few wobbles. And on the gaining side, Titan gains interestingly, and IT's had a good day with Infi and Wipro both clocking in gains. But the broader end of the spectrum had pain, and BSE 500 winners and losers will come up on your screen, and you'll see what I'm talking about. The indices were down. I mean, this is the BSE 500 down 239 points. A lot of stocks on results corrected. So Aarti, G Shipping, GMM Pfaudler, all three are result reactions. There was also weakness in Suzlon, RVNL, etc. What did do well? ITI on their order win, Indian Hotels on strong numbers, Motilal Oswal continues from where it left off. Latent View, Sterlite Tech, again some orders that have come into some of these companies. So all in all, a decent outing for select names, but broadly the indices remained under pressure. Let's see if next week brings about some stability at the broader end of the spectrum.
Now, Swiggy's 11,000 crore IPO has now been fully subscribed on day 3. The demand was muted when it opened. But why is that? Did the street believe Swiggy was undervalued when compared to peer Zomato? Sajid joins in to tell us more.
Swiggy's IPO is fully subscribed. It's subscribed 2.4 times as of 2 p.m. and that's primarily led by foreign institutional investors who have come in towards the afternoon and added to the subscription. But the IPO as a whole, which was the most widely expected IPO, hasn't been to expectations, especially because of the kind of headwinds that we are seeing with respect to foreign investors and the kind of demand and the listing gains which are absent in the market there. If you look at from a category point of view, you have retail investors which the portion was fully subscribed as of now, which is one time, and that's primarily because we had 3 IPOs underway, which is Acme and Niva Bupa, which is also there in the market there, and all the 3 IPOs don't have much of a listing gain as we speak, and that's one of the reasons why retail interest is very lukewarm in this IPO, and in most cases it will retailers will get the entire allotment for which they were going to subscribe there. In the HNI segment, the cost of IPO financing is high, and also the absence of listing gain is preventing many of the HNIs from coming and subscribing in high numbers. Also, the fact that many of the HNIs have also acquired the Swiggy shares from the off market at a price which is much higher than the IPO price is also preventing them, from averaging because they don't because there is no listing gain which is coming in at this point in time. FPIs have been very wary of the secondary market, but in 2024 we have seen FPI has been net buyers in the primary market there. So the flows which are coming into the IPO is the only positive flows which are coming in India as of now. Otherwise, for the last 28-29 sessions, we have seen nearly 1.42 lakh crores of foreign fund outflows which is happening there, and that is also one of the reasons that appetite was much less in the anchor book. If you see the construction of the anchor book there, 54% was subscribed by domestic institutions. Now, normally in an anchor book, 1/3 is reserved for the mutual funds and other domestic institutions. In this case, more than half was given to domestic institutions because the appetite was much lower going into the IPO because there were multiple international factors at play at that point in time. And mutual funds have been good subscribers there. They have put in some bids, but it's not the kind of bid that we saw in the case of Zomato. Zomato issue was subscribed 38 times at the end of the issue, and the issue size was around 9,300 crores. And we are seeing Swiggy subscribing just 2.4 times, and especially because of the headwinds that's coming in from various investors, and no listing gains which are expected for the IPO.
Well, China is in focus. The $839 billion debt swap plan is set to help local governments refinance their debt. NDTV Profit's Neeraj Shah breaks down what this means for the economy and the potential ripple effects.
Well, what's the impact of the China's NPC meet and the stimulus that they've given? Precious little, because you saw that commodities world over came off. I think the Chinese markets in the futures market also came off a little bit. But let me try and tell you what has happened. So China has unveiled an $839 billion debt swap to refinance the local government debt. Now, this is what was needed, that the central government will help refinance the local government debt. What else has been announced? Well, local hidden debt swap, total size of about 10 trillion, with 6 trillion to swap the existing debt. This is what has happened. Now, I'll tell you what hidden debt means as well. Remember, the 6 trillion yuan of debt swap quota is spread over 3 years. So now you know that it's about $6 trillion of debt swap quota. Central government will refinance or swap the local government bonds and some of the hidden debt. Now, hidden debt means off-balance sheet debt. So a lot of measures that have come in were exactly what was anticipated at the lower end. Now, let's just briefly understand this, that the street was working with a band of expectations before the US elections. After the US elections decision came out and Donald Trump came, a lot of people believed that China might actually exceed the upper end and give an even bigger stimulus. What has happened is that the stimulus is coming at the lower end of expectations, and experts say that this is not good enough to kickstart a new round of investments into some of the ailing sectors or otherwise. Because, why do I say this? Because as I said, that some experts were expecting a higher stimulus post-US election outcome. Now, if you can go to the previous plate, the reason why this is disappointment is because of the second line, that this is not good enough to kickstart a new round of investment. Now, you would expect Chinese markets to start off weaker on Monday. You would expect the metal names to be under pressure. And while Indian metal companies came off from the highs of the day, you probably expect some more pain into some of those stocks come Monday morning.
The US Federal Reserve announced a rate cut by another 25 basis points to 4.50 to 4.75%. The rate cuts is in line with the market expectations. It comes less than 2 months after it reduced the interest rates by a significant 50 basis points, thus kick-starting the rate cut cycle after a gap of 4 years. Along with this, that Fed chair even talked about unemployment and inflation data and emphasized that future rate cuts will depend on evolving economic data, and the Fed is on the path towards a neutral stance for the global economy. In today's discussion with NDTV Profit, Taimur Beg of DBS Bank revealed why Indian markets present a wealth of opportunities. He mentions that global investors continue to view India as a top investment hub.
The secular growth story of India is absolutely undiminished. And when I talk to global portfolio managers, whether in India or outside of India, in the Middle East or Europe or the US, there's not one percent decline in people's enthusiasm or interest in India, whether it is related to India's sort of burgeoning supply chain of manufacturing, or the burgeoning and extremely full of vitality in the capital markets, whether it's M&A or private equity or listed equity market. There is a lot of interesting deals, interesting opportunities, and there's a lot of interest from global investors.
He also weighed in on the Fed's latest rate cut and the likelihood of another December, considering the implications of Trump's election win.
We've heard the same story many, many times. Labor market marginally weak, underlying demand still pretty strong, inflation is coming down, the Fed is happy with cutting rates, and I think we can say fairly safely that the December rate cut is also on the cards. Nothing is going to happen as far as Trump's policies are concerned between now and December. He will not take office till January.
US Fed Chairman Jerome Powell told media persons that he won't resign if President Trump asks him to do. But can Trump as president fire Powell? Let's find out.
Will Trump ask US Fed Chair Jerome Powell to resign? Well, Powell has already answered that.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
The million-dollar question that's on everyone's mind. can Trump fire Powell? But which position would he fire Powell from? Powell holds 3 positions. He's a member of the Board of Governors, Chair of the Board of Governors, and Chair of the FOMC. Jerome Powell was appointed by former President Barack Obama to the Board of Governors, and it was President Trump who picked him to be the chair of the board in 2018. 3 out of the other 5 governors, Michelle Baumann, Richard Clarida, and Randall Qualls, are all Trump appointees. If Trump wants to remove Powell, he would need a reason, meaning inefficiency, neglect of duty, or malfeasance in office, according to the Brookings Institute. If Trump cites differences in policy as the reason to replace Powell, it would probably go to the Supreme Court. If this happened, it would be one of the biggest changes in administrative law in the United States in 80 years. So no, it is not likely to happen. The law, though, says nothing about whether the president can fire the board chair, meaning demoting him to being just one of the other governors. Legally, this is up in the air.
Jammu and Kashmir Assembly ruckus continues for a 3rd day in a row after Khurshid Ahmad Sheikh, MLA and brother of jailed Lok Sabha MP Engineer Rashid, displayed a banner on Article 370, leading to a fist fight among lawmakers. The leaders demanded immediate restoration of Article 370 and 35A to their original form and called for reversing the changes made by the Jammu and Kashmir Reorganization Act 2019, urging the government to honor the region's unique identity and autonomy. The newly elected Jammu and Kashmir Assembly witnessed chaotic scenes on the first day of its first session after opposition member Wahid Para of the People's Democratic Party moved a resolution against the scrapping of Article 370. NDTV's Uma Sudhir takes a deep dive into how Trump's win could affect India's IT sector with insights from Indian tech entrepreneurs. Let's hear their thoughts.
We are here at the Hyderabad-based T-Hub, largest innovation ecosystem that the government-enabled ecosystem, in fact. And I have here entrepreneurs and the CEO as well of Math Lab here, and someone who is in fact hosting a lunch for his teammates because Donald Trump has made it. Why the celebration at this scale?
Yeah, I've been rooting for Donald Trump for a while now, and I think the sanity has restored at the US scale. And also, like, I think, meritocracy is something compared to a DEI type of environment will prevail. So that's why I think I'm as a startup and I'm in a core technology space. So I think this is what is very much needed. And I'm greatly looking forward for what is coming next.
So how is business going to change?
I think quite a bit. Because now, as a part of Indian technology space, right, most of us are, supporting, developing, the applications. But then most of us to focus on core technology. Always, it helps if somebody in US or in the West, right, is supporting a lot of merit. So that's where I think we should start looking at, how to innovate, and then move away from traditional space of, just supporting or building applications to build the innovation technology, and also with Elon Musk at the helm of things to, build the government efficiency, this thing. I think a lot will change. I think there'll be a lot of cut in government spending on, rudimentary things, and then they'll focus a lot on innovation. I think even India, like startups from here, right, would play a critical role in that.
US President-elect Donald Trump announced that his campaign manager, Susie Wiles, will be his White House chief of staff. She will become the first woman to hold this position in US history. Trump said that Susie helped him achieve one of the greatest political victories in American history and was an integral part of his 2016 and 2020 successful campaigns. Trump also gave a shout-out to Wiles during his victory speech on Wednesday. In a dig at Canadian Prime Minister Justin Trudeau, billionaire Elon Musk predicted Trudeau's political downfall on social media platform X. Musk posted that he will be gone in the upcoming election. This was a response to a post that said Germany's social government had collapsed, to which a user asked for Musk's help to get rid of Trudeau. This election will be a significant test for Trudeau, as his current minority government status makes him vulnerable to losing power. Canada has ordered TikTok to dissolve its business operations in the country due to national security risk. Thought it clarified that Canadians will still have access to the app. Innovation Minister stated that the decision was made based on advice from Canada's security and intelligence community after a thorough review of ByteDance's operations in the country. Details of the review remain undisclosed due to Canadian laws on foreign investments. In response, TikTok announced plans to challenge the order in court, arguing that it would result in the loss of hundreds of local jobs. As Maharashtra elections draw closer, we spoke to voters in the Bandra suburbs of Mumbai to get a sense of their concerns and issues. NDTV's Radhika gets you the pulse of the voters.
Hello from Bandra, a scenic beauty, urban charm. This upscale area is the beating heart of Mumbai's cultural and social life. And as assembly elections draw close, we are here to understand the pulse of this dynamic neighborhood. Let's find out their laughter routine, what this routine is all about, and of course what their expectations from these elections are.
There should be proper parking for us and the take care of the senior citizen. There's sometimes some ladies, they are alone, they come alone in the morning. So there should be something like to protect them.
The roads also are being improved, they're a bit widened also. They're doing the corporators, they're doing well, everybody is doing well.
Bandstand is a favorite spot for locals, tourists and even joggers.
It's very messy around here. The garbage is all around. We would like to see the clean bandstand. Every people from everywhere come here and it's not looking good.
I would like some changes in the traffic scenario here. Usually even during the peak hours or not the peak hours, it's very trouble for someone who's coming and there's a lot of traffic and it causes a lot of delays.
This is a heritage site and we want to maintain it as a heritage site. That is why when the roads were being done, we all came out en masse and we supervised it. And we want it to remain just like this. You know, we don't want, there is a move to break this road and to make it into a concrete. Why break something which is good?
At Land's End, all the cars are coming and parking at the Cane Road, and the drivers and the rickshawalas in the night stay there and they remove their shirts, they're drinking in the night and nobody's doing anything about it. There should be like cops, especially at a place like this.
People here have expectations from the leadership. They want the leadership to be a perfect balance of solutions for the future and of preserving the charm and heritage of Bandra.
Before we wrap, verdicts on Ayodhya, privacy laws, decriminalization or Section 377 and more. That's the legacy of Chief Justice D.Y. Chandrachud. On his last day, here's what he had to say.
I would have definitely put on a couple of kilograms of weight by all that you have said. If I were to come back to the court tomorrow, I would sure be a puffed up face and a puffed up nose, and I would be thinking a great deal about myself. Now, even if I do, it doesn't matter because I'm not going to be delivering justice tomorrow. But honestly, it's been a great honor to be sitting in this court.
Well, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Good evening and welcome to the big story on NDTV Profit. I'm Nupur Talwar Suri. The Australian government has decided to introduce what it calls world-leading legislation to ban children under the age of 16 from using social media. Now, the government is looking to introduce this piece of legislation in Parliament soon. The law aims to hold social media companies responsible for making sure that kids under 16 are not exposed to it. It would be up to Australia's online regulator, the e-Safety Commissioner, to enforce these laws. Now, the action comes as governments around the world are grappling with how to limit younger people's exposure to smartphones and social media. Now, it also, of course, opens up the debate whether imposing a ban is the best way to deal with the problem. To quote the Digital Industry Group of Australia, the measure is a 20th century response to a 21st century problem, unquote. Let's begin with what the Prime Minister of Australia said about this ban as he announced this proposed legislation.
Social media is doing harm to our kids, and I'm calling time on it. I've spoken to thousands of parents, grandparents, aunties and uncles. They, like me, are worried sick about the safety of our kids online. And I want Australian parents and families to know that the government has your back. I want parents to be able to say, sorry mate, it's against the law for me to get you to do this. We don't argue that the changes that we will be legislating will fix everything immediately. We have laws such as people can't buy alcohol if they're under 18, and from time to time that can be broken.
Well, in fact, that brings us to the three big questions that we are asking this evening on the big story. Number one, can social media be controlled? Is a ban too blunt an instrument to deal with this problem? And what should India do to protect its young? And to answer all those questions and discuss them, joining me right now on the big story are Dr. Lakshmi Vijay Kumar. She's a consultant psychiatrist, Meeta Sen Gupta, an education strategist, Siddharth Deb, manager, public policy, the Quantum Hub. Good evening, all three of you. Thank you very much for joining us. Right, Dr. Jayakumar, I'm going to begin with you now. Social media, of course, has transformed lives beyond imagination, but it's also brought about an epidemic, if I can call it that, of anxiety and a sense of disconnect with the real world. Now, you've worked with people who have suicidal tendencies extensively. Tell us about a bit about the kind of mental health issues that teenagers face because of the advent of social media.
Yeah, mental health and social media, they have a bi-directional way. That is, people who are anxious, prone or depressed or having psychological problems tend to use the social media more. And those who use more social media have more anxiety and depression. So it is a bi-directional problem we have. And unfortunately, I think the ban has been brought out because of real evidence-based studies which have shown that excessive use of social media produces changes in the brain, both structurally, physiologically, and even in the network system. So we are really changing the brain structure of young adolescents where the brain is still forming its pathways and networks. So it is very crucial that the social media needs to be under control for particularly young children, which is why which is where majority of the brain pruning and the neural networks happen. We have research to show that the gray matter in the amygdala, which controls the emotion, becomes less the more and more you use social media. And it has got other problems also. Actually, the people who use excessively social media, the adolescents, particularly it affects the young girls more than the boys. The online gaming and gambling affects the boys more. But the social media posts affects the young women more. And already in India, the young women between 18 and 29 have the highest suicide rates. And this has a terrible impact on young girls. And the fact is, the more the young girls use social media, they feel more disconnected, they feel more anxious, they feel more depressed, their academic performance comes down. So it affects both physically, their sleep, their appetite, everything gets reduced. Their school performance, cognitively also, they perform less, and their academics are not great. Their interpersonal relationship also becomes less because they are so disconnected from reality.
Right. I'm going to come back to you on that bit, but let me also bring in the other guests. Ms. Sen Gupta, now you're an educationalist. Now, while platforms like YouTube, of course, have completely revolutionized education, they've given students an access to an insane amount really of information, which if used correctly can work very, very well. But do you think that, the benefits versus the pitfalls is something that we still don't have a complete idea about right now?
Absolutely agree. We do not have a complete idea of the balancing forces. We who are decision makers belong to the past. And we speak from our fears, and the fears that the doctor has related are absolutely valid. What is also valid is that we are in the golden age of learning. When else has so much learning been freely accessible to any and every individual, every child in the land? An understimulated, very, very intelligent child stuck in a very rote learning system has a chance to learn so much more. A frustrated mother who says you need to learn how to boil an egg, go and look at YouTube, fold a shirt, tidy your room. Everything that you want to learn, you can find on YouTube. Repair something in the house, anything and everything. More importantly, it is the sense of responsibility, and I will use a word, agency, that we want our students to have for their own learning. They take charge of their own learning. They have a sense of their own approach to what interests them, what careers they can try out, what is happening in other people's careers when they try out those careers, so many wonderful things. Yet we notice that when children go online, they also do not always do all the good things you should. That is true of every science. That is true of everything that you have. Even your kitchen knife can be used to chop your vegetables or to do any harm. So we do not have a ban on kitchen knives as such. We cannot. What we want is regulation, but not necessarily from a government. This is about regulation at a much more granular level. It is about values in the house household, and I appreciate that as parents, as uncles and aunties, we have lost the battle. We are struggling to bring that sense of control to our children, to say, please direct yourselves to a better direction. But that is our failure. Our failure should not result in a ban for them. It is up to us now to learn how to engage our students better. We need better mentors as parents. We need better guidance as parents. Our students and our children need better mentorship, better pastoral care, better activities through the afternoon, evening, etc. One classic example, the IT curriculum was very inadequate at a certain point of time. Student groups went onto social media, taught each other how to program. That's how they got admissions into the best colleges and were able to cope. This is something I have seen personally. Science tutorials, anything that you cannot do, student groups have self-organized in small ways. Wonderful things have been done. And yet we also know that students can slip. Of course they are young. They should not be unsupervised, but supervise them at the home level, supervise them in the classroom, supervise them in the laboratories, your computer science laboratories, wherever they have access to computers. Do not ban them. Do not deny them the future that they can choose. Do not take the power away from them. As elder people, we love to have power. This is not a power game. This is the future of our children.
So what you seem to be saying is that this perhaps, as you know, several people have said, is a 20th century solution to a 21st century problem. And the problem lies with the fact that this is so new that we also don't know how to deal with it. I'm coming to you next, Siddharth. Now, Siddharth, as we've been talking this evening, the power of social media is actually demonstrated just by the sheer number of people who have access to it. Now, there are estimates, and we're going to pull out that graphic for you, that seem to suggest that 4.9 billion people across the world have access to it. Now, is this now become too big a giant to be able to tame? And the added problem is that we don't really know how to tame it.
I think, Nupur, I absolutely love that question, because the reality is right now, the international dialogue around this issue is based on a lot of studies which are situated in the Western world. And very often they can have sort of contradictory sort of conclusions on the exact sort of challenges that social media pose. And very often causality between social media and mental health is difficult to establish in these international studies. Now, if I were to bring those assumptions and apply it to India as a country, that's not the best way to have a conversation around how do we design and manage social media. Because the reality is, so for example, my organization has a sister concern called the Young Leaders for Active Citizenship, and we've done a lot of on-ground work on the habits of people outside Tier 1 and Tier 2 areas and their use of social media. And very often we observe, one study tells us that 77% of young people below the age of 18 are often accessing the internet, digital services, and social media in shared device environments, where they also have to share it with their parents and family and so on and so forth. So in that context, very often screen time is organically regulated, especially outside your metropolitan areas. So actually, as step one, we really need a holistic understanding of the impact of social media for children situated in India. And we also need to be able to measure their perspectives and their perceptions on both the upsides and the downsides of social media. Now, on top of that, we also, before we even talk about regulation at the government level, we need to appreciate the fact that when it comes to screen time and so on and so forth, even platforms are contending with how do they craft platform level interventions to secure the interest of our young people. So, for example, we've seen Instagram come out recently with their teen-specific accounts to create better privacy features for teenagers and adolescents and so on and so forth. A brand like Snapchat has a family center intervention, which creates better controls for parents to be able to oversee their children's usage of social media. And then YouTube, of course, has a very prominent kids-only profile. So if these kind of design designs are already being implemented by businesses. It's on us to try and do impact analysis to try and see if these interventions are having a meaningful, beneficial impact on the child and mitigating the risks, and also preserving the advantages of social media and digital services and access to the internet. That's a real important stepping stone before we have a conversation on regulation. And I'm happy to talk about some of the deficiencies and impracticalities of what is being proposed by the Australian government.
But Siddharth, the problem here is that while we understand that banning something is not the way out, the issue has become so huge now. We have studies upon studies that seem to suggest that whatever regulation has been put in by these social media companies is just not working. We have, youngsters who have serious anxiety issues because of social media. And at the end of the day, do remember that social media companies make a lot of money out of these young kids who still don't have an understanding of what it's doing to them. So in that sense, when an elected government is actually faced with a problem like that, they have no other way but to come out with regulation.
Absolutely. But when we talk about the proposal of the Australian Prime Minister with banning social media to children under the age of 16, what's interesting is that the regulator you talked about right at the top of the conversation, which is the e-safety commissioner, when we talk about age verification and the concept of trying to assure that in fact a person is above the age of 16 or below the age of 16, the e-safety commissioner, as is the case with regulators in the UK and France, has done a very comprehensive study. Are there available systems that can, without a shadow of a doubt, verify the age of a person to the extent that is required for a regulation like this? It conclusively arrived at the answer that there is no foolproof or silver bullet solution to the problem. And if I were to transpose that conversation and say, what about in India? A lot of people will say, hey, we have some digital ID system like Aadhaar that can help us circumvent that problem and verify people's age. But the reality is that the government in other contexts is already making submissions in court that Aadhaar is not a solid proof for the date of birth of an individual. So then now we shift the onus and tell businesses that in an imperfect technological environment, you have to ensure that a person who accesses your solution without a shadow of a doubt is above the age of 16. That creates an incentive for businesses to stop developing and building and creating products for adolescents. And ultimately, if it leads to a chilling effect in terms of innovation for our young people, I'm afraid that proposals like bans will ultimately hurt the digital competitiveness of kids emerging from India. And thus, I love what Ms. Sengupta was saying earlier. We need to talk about conversations around responsible design for social media landscapes, and how can regulators, parents, schools, maybe even children advisory boards work with businesses to think about standards around healthy platform design, which nevertheless maintains some sort of element of the beauty of the internet, which allows for more of an aspirational quality, especially for kids who live outside your regular metropolitan areas. And social media really democratizes, access to culture, access to content creation opportunities, and so on and so forth. And we've drawn a lot of these insights from our work on the ground outside these areas.
Oh yes, absolutely, Siddharth. I agree with you there. It makes us all equal in terms of being able to access information, which was such a big thing earlier on. Dr. Vijay Lakshmi, I wanted to come back to you on, your work so far. Now, when you were talking, it seemed to be that the part of the problem right now is also that we don't know how long-term these effects are, because we've only been able to analyze what's happened in the past few years. Are there fears that this is a problem because we do not know the full extent of it? It could be very, very difficult to tackle because it's hitting kids so young, between the ages of 13 and 17, which is very, very vulnerable, and we don't know how it will end. Is that a fear that's very, very real now?
Yes. See, the issue is we cannot wish away social media. It is with us we have to accept that. Like any new invention, which has its own pluses and minuses. See, when the TV came, people said, okay, it is people are getting addicted and all that. But with social media, it's completely different with the help of the smartphones because, see, you can't take the TV to your bedroom or the toilet or to your school. But now this temptation or this potential for addiction is in your hand all the time. Okay, so for example, to give you an example, for many posts in social media is about, say, some restaurant you have been to remember that, and some dress which you have or some party you have been to, and you post it so that you will, you tell people and you remember it. But actually, research has shown that after a few months, when you post it, your mind doesn't remember it. When you don't post it, you remember more details. So it interferes with your memory, it interferes with your cognition, it interferes with your sleeping schedule. Most of the young kids use the social media in the night. So through the night, they look at it. So how do we control this is a big issue. As you say, if you are able to be responsible and use social media, fine. But the fact is, the young vulnerable minds, how can you expect them to be responsible when their brains have not yet matured? And the social media platforms are all trained to get you hooked to that. You have really exposed social media on young, vulnerable brains without any guardrails. If you have had guardrails, that's fine. So now we are scrambling to see how we can put the guardrails, and that becomes a problem.
Yes, absolutely. I completely buy your point over there, because even at this age, people like us, when we go onto social media, I'm talking about myself here, I often get these notifications that I can't help myself but see. I get these prompts which I can't help but see. I wanted to bring you in at this point in time, Meeta. Obviously, there is a lot to gain from social media, but is the problem the fact that it's the age that it targets that's the main issue in this situation?
Absolutely.
Social media does target every age, and Dr. Vijay Lakshmi was right that the amygdala, for example, has not developed. The amygdala fully develops till the age of 25. This Australian conversation is about the age of 16. See, it really is not about saying a brain hasn't developed so much, or it's not about the age over here. It is about granularity and intelligent design, smart design of the guardrails. She's absolutely right. This is about designing guardrails. This is about designing and accepting as a society, as a group. Now, what scale of society? As a whole government, as a family, as a tribe, where you say, okay, these are our values. We say work first, pleasure later. We say spend so much time and this is the way you're going to schedule your life. Who is the authority who will design this for all of us at different age levels, at different age groups? At age 25 or age 22, I'm not going to accept government control over what I can see and what I cannot see. I would not like to do that. I would like to think of myself as a responsible adult. At age 50, I certainly would not want that kind of control. At age 16, you have terrible rebellion anyway. So children are going to rebel. The more you ban, the more you're going to have underhand black market kind of approaches to using somebody else's login, creating false logins. Any time, especially for younger people, you try to create strong regulation, you will have a strong pushback. I mean, the prohibition era for liquor in the US proved that time and again. Any bans are going to completely ruin the very idea that you are trying to establish. And we know that. Yes, we have a problem with anxiety. Yes, we have a problem with validation. Youngsters are vulnerable. This is about developing their sense of self-worth. And developing their sense of self-worth will come with better quality mentorship at schools, will come with better quality opportunities to showcase what they are good at. Even social media could be a part of it, but there have to be other avenues. Have your competitions all over the place, have national level hackathons, build so many mechanisms that children are validated in other ways rather than seeking this dopamine fix all the time. It's not easy. It's not easy. We are going to fail and fail and fail and fail again. In learning, in education, we fail for 7 to 10 years before we fix it. We do have an anxiety crisis now. I would also say we have an over-medication crisis, as has been discussed. Anxiety dealing with over-medication, the generation one medications have been proven to be much more addictive than social media.
Absolutely.
I move on somewhat safer though.
You know, I'm running out of time, but I want to know all of your views on what is the way forward for India. Meeta, you go first. Do you think a ban like this is something that India should consider at any point in time?
I certainly hope not. I certainly hope that India will encourage counselor training at schools, will have a lot of teacher training at schools, will have a lot of parent as a mentor training available, as well as social structures for which are not necessarily tuition based or paid payment based, social structures where children can engage to validate and showcase what they are good at.
All right. Also, coming to you next, Doctor, do you think that a ban will only drive the problem underground, or do you think that, government needs to come in, an elected government often needs to come in to fix problems like this one?
India has already banned TikTok, and I think it's one of the best things which is the government has done, because I don't know where you'd be if the TikTok had continued. As the others said, banning has never been a solution. But the fact is, there are two challenges. If you do have a ban, you need to know how we are going to implement it. If it is not going to be implemented, and as people say, it's going to drive the thing down, then it is no use. Yes, there needs to be education for the children, parents, and all that. But how many rural schools have counselors and things like that, or educated parents to talk to? That is something which we have to do. It is not only an urban problem. In India, almost 50% of rural students also have smartphones, and they are also getting addicted. The other thing which we need to do is, we have to think of something also. For example, we have done studies in India where we see that 1/3 of the children who are using the social media are cyberbullied, okay? And 1/3 of them are suicide. So what are you protecting your children? See, unfortunately, the parents are behind the curve when it comes to knowledge about these things. So they don't have any control. So there must be a method, there must be a method in which it is used only for the productive process and not thing. And that is the biggest challenge which you face. I'm not saying you should ban or you should not ban. All I'm saying is that this is a huge problem and it is affecting the brains of our young adults. So if something needs to be banned, okay, we'll try that. If it causes more problem, then we'll have to address that. Or if you have come up with an ideal solution where you see that every child will have only 1 hour of social media, then that's fine.
Yeah, but absolutely, Dr. Vijay Lakshmi, I take your point. One quick word on that one, Siddharth. Is banning the way forward? And do you think that it's going to be effective at all? Because this is something that many would argue is coming into your personal space. And you might ban it till a certain age, but after that, it might depend on people's privacy.
So I'll answer that question, Nupur, with an anecdote, which is in the early 2010s, gaming was a highly political issue in South Korea. The government came out with a regulation that said people below the age of 16 cannot game between the time period of 11 p.m. and 6 a.m. or something along those lines, because it was a politically charged issue. Ultimately, what happened was that kids were nevertheless figuring out creative ways to bypass the requirement. And eventually, around 2021, the Korean government was forced to repeal that regulation because it just did not work. And the reality is, the lesson should be we should not politicize this issue, but rather start collecting more evidence on how social media impacts young people across the country, And once we establish a baseline, we should start seeing how do platform interventions like
All
family
right.
sent teen accounts help them or don't help them. And then we can advance the conversation
But
on
we all
regulation.
seem to agree that we do need an intervention in this situation. Now, what is the level of that intervention, what kind it should be, is obviously going to be a bit of hit and trial. But thank you, all three of you, for joining us on The Big Story this evening.
Thank you.
Well, with that, it is a wrap on The Big Story on NDTV Profit. Thank you very much for joining in, and do stay with us as we bring you more. When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
There is so much going on right now in the global economy that it is important to understand where we are at this moment in time, impact, of course, for the global economy, but more importantly for India. So a few things that we want to talk about. China has unveiled a huge stimulus plan to prop up their economy. What does it mean for China? What does it mean for India? We have, of course, the Federal Reserve's announcements. They've cut rates by another 25 basis points. But are we now heading into uncertainty on whether more rate cuts are in the offing? And of course, what is the Trump era looking like for the world and for India specifically? To speak on all of this, I'm joined by Taimur Baig, Managing Director and Chief Economist at DBS Bank. Taimur, thank you so much for speaking with us here at NDTV Profit. I mean, I can't think of a better time to have a conversation with you when so much is happening and there is so much to unpack. So let's start with China, which is the latest coming in. Jumbo measures announced, huge debt swap. But is this once again a little below what was expected?
Hi, Tawana. Great to be with your show. Look, it is along the lines of expectation. We want the Chinese authorities to do a lot, but let's also appreciate where they're coming from. There is a huge amount of uncertainty now that Donald Trump has gotten elected about how big the tariff burden is going to be going forward. You can't spend all your energy right now. You got to conserve some energy, conserve some stimulus. You have to play this game where there is a tit on that side, there has to be a tat on this side. And if there is a 60% tariff versus 30% tariff, what kind of stimulus and what kind of support Chinese exporters need? So I would not blame the authorities for somehow, falling short of like whatever it takes type of a solution. They also have to play the longer game. They have to see the makeup of Trump's cabinet. They have to see the kind of measures that Trump has said he will implement and how and when they will be implemented. So these measures are in the right direction. The debt swap is important. Support for local governments is important. Property market support is important. Supporting consumption is important. They're doing all the right things. They're keeping some powder dry. That's the right thing to do.
Okay, so you wouldn't say it was disappointing. They are keeping some powder dry. That's a good way to put it. So there's more ammunition if they need to come in. But even then, in total, it's a $1.4 trillion package. I'm just trying to understand, Taimur, the Indian perspective on this is Chinese stimulus, more global money flows into China at the cost of India. That's already happening. We've had record outflows from foreign investors from the Indian markets in the last month, and it seems to be unabated.
Right. I wouldn't necessarily tie China's fortune with India's misfortune. There might be some technical arguments from a global portfolio manager perspective. You're looking for value, then China flashes green. You are worried about very rich areas, and then, of course, India flashes a little red because Indian markets have had an extremely strong run. But I firmly believe that this is not a zero-sum game. China's prosperity should not come at a cost of India. India's prosperity should not come as a cost to China. This is a zero-sum narrative that is somehow sold in the West, particularly out of the US, especially under Trump. But I don't believe that. I think that both of these large emerging market economies can grow equally well, have outperforming stock markets, and it doesn't have to be that an investor dollar has to go between China and India. Now, the fact that India's stock market lately has been a bit lackluster must be seen in the context of what an amazing run it has had in the last few years. And think about China's strong run lately versus what a miserable run it has had in the last 4 or 5 years. So I wouldn't, think about either or at all.
So, okay, since we've talked about the Indian context, what does a Trump administration do to foreign flows vis-a-vis India? Because once again, you're seeing large number of flows go into American markets, and already through the month of October, as the Trump, just as the Trump victory came in, already markets had reacted, and victory at a scale which was not imagined. Does this mean more money globally coming into America, again at the cost of emerging markets like India?
It should not be, but unfortunately, we live in a world when there is some risk aversion, some uncertainty. Everybody flocks to US dollar assets, either the US dollar currency or the US dollar bond or US equities. And that's what we've seen. But combine it with the fact that the US economy is showing tremendous growth momentum on the back of spending boom with respect to AI, on the back of very strong corporate earnings and fairly resilient consumer balance sheet, the economy is looking very good. So late in the cycle, it should not be growing at 2.5%, 3%, but it is. So I don't think the US needs to give people too many reasons to invest. All the reasons are already in there. I don't think Trump coming or not coming would have made a difference. Flows would have been US friendly for a while. But now with the cloud of tariff gathering, it has an impact on people's view on the US dollar. If you have tariffs, the dollar will strengthen. All the other currencies, which are the exporting currencies in the US, they should sell off just to balance out against the tariff. So that makes it a no-brainer as far as a long dollar call is concerned. Now, if you also combine that with the fact that there is a strong likelihood that the US fiscal will not go toward consolidation, that means more bond issuance, but that also means high interest rates, which again brings global investors in. So in a way, US good news and bad news, both of them seem to be right for US assets at this juncture. It will not last. But at this moment, given the uncertainty, it's all long dollar, long USD assets, unquestioned.
So long dollar, long USD assets. And if I were to ask you to complete that equation with India in it?
Right. So I think that the secular growth story of India is absolutely undiminished. And when I talk to global portfolio managers, whether in India or outside of India, in the Middle East or Europe or the US, there's not one, percent decline in people's enthusiasm or interest in India, whether it is related to India's sort of burgeoning supply chain of manufacturing or the burgeoning and extremely full of vitality in the capital markets, whether it's M&A or private equity or listed equity market. There is a lot of interesting deals, interesting opportunities, and there's a lot of interest from global investors. I don't think anything if that is being diminished. We're only talking about the last 3-4 months, during which time we have seen some degree of sideways movement, a few sell-off here and there. But otherwise, I really don't think, again, it's not a zero sum. Good news for the US should not be bad news for India at all.
So when do you see this sort of tide turning as far as India is concerned, Taimur? I mean, you're one of the few voices
who has been completely very bullish on India, even, in the recent past. And when I'm speaking to you right now, compared to others who are talking about overvaluations, who's talking about China and US being a negative for India, you're saying this is just a correction. India had a one-way run-up. When do you see that tide turning? You already have very hefty outflows.
Right, Tawana. So I really feel that it's a matter of time frame. If you were to ask me, do you want to put in money in the Indian stock market with a 3-month horizon? Do you think there's substantial upside? I probably will hesitate. But that's not the time frame that I'm talking about. We should not be thinking of the stock market in such narrow tactical terms. Nobody can time those things, as we have seen with the F&O saga this year in India. We should think about the U.S. stock market, Indian stock market, as a multi-year long game. And in that horizon, the market will deliver good returns, no question about it. There have been issues related to how strong is the export demand, and that is not India specific. We see all over the region, with the exception of the very latest data that came out of China yesterday, exports have been a bit on the downside lately, and Indian exporters have felt that. We've also felt that there's a bit of a two-track economy in India, rural demand versus urban demand. There's been a bit of a lopsided momentum. Those things have given people a bit of a wake-up call, and we've seen that among Indian retailers who have given some signals, and they've come to your show many, many times in recent years, that they also feel that the sort of strength and demand that should be a part of India's structural story probably is not there. But surely there is sometimes a bit of a cyclical element. There is sometimes some degree of exhaustion after a very strong bullish run, whether it is consumption or the stock prices. We're going through that. That doesn't bother me at all.
Okay, so so let me rephrase the question that you actually asked yourself. You said, if you ask me, will you invest in India right now with a 3-month time frame, I would hesitate. What is the time frame which removes all hesitation for you?
Oh, as soon as we go past 1 year, I am very, very comfortable.
But 1 year is a long time, Taimur. That's a long time. The 3 months is feeling like a lot longer for Indian investors who've seen their portfolios dwindle.
They're spoiled for choice. They're also seeing their portfolios expand tremendously in the last 3-4 years. They should take that into context.
Okay. So now, we've talked about Trump briefly. We've talked about China. Let's talk about Fed and what we've heard from the Federal Reserve in the last 12 hours or so. 25 basis point cut in December. Now, how certain would you be? Also, how certain you'd be that Powell sticks around, even though he says that, no, Trump can't fire me?
Right. I think that was like the most interesting part of the entire press conference, not the commentary on the economy, because that was just, ho-hum. We've heard the same story many, many times. Labor market marginally weak, underlying demand still pretty strong, inflation is coming down, the Fed is happy with cutting rates, and I think we can say fairly safely that the December rate cut is also on the cards. Nothing is going to happen as far as Trump's policies are concerned between now and December. He will not take office till January. I think 2025 is going to be very interesting. All this time, the Fed's playbook has been to prepare the markets for a sustained set of rate cuts through the course of 2025. And we've all been busy pricing in a terminal Fed rate of 3%, 200 basis points below where we are now, or 175 basis points below. That is looking increasingly untenable. And you've seen that already reflected in the pricing even before the election. I think the election sort of reinforces that view that bringing inflation down to 2%, bringing Fed funds rate down to 3% might be nearly impossible in 2025, especially if the U.S. growth momentum remains unabated. If we're expecting tax cuts under Trump, if we're expecting all sorts of support for the capital markets and deregulation, how on earth are we going to see growth slow down? And therefore, services inflation in particular. I'm not that worried about goods inflation. That's a tariff story. We'll see that later. But just in terms of services inflation dynamic, which is the key source of inflation pressure in the U.S. right now, that might turn around and spoil the picture in 2025. So I'm not fussed about the Fed direction in December of this year. They'll cut. How many cuts can they carry out in 2025? And if indeed Trump goes all out with deficit spending, unfunded tax cuts, should the rise in long end, which the Fed really cannot control, bother the Fed? Or should they just talk about near-term inflation outlook and keep on cutting rates? And we see an increasingly steep curve, which could create other problems in the market. So those are all beginning to now come into our windshield, if you will. We have to keep an eye on that. Storm's coming, but not in December.
Okay. So what happens in 2025? Do you see possibly an extension of rate cuts, a pause, or then a reversal in direction?
The baseline scenario, which is independent of what policy prescription that Trump will put in place. Let's just talk about the baseline scenario is one where growth does go from, say, 2.5 toward 2 in 2025. Why would that be the case? Because on the labor market side, we are beginning to see marginal, not substantial, and marginal weakness. And as wage growth moderates, there is some degree of softness in the labor market. It should bring growth down a little bit. That in turn should have a solitary impact on inflation and bring inflation down to 2. In that scenario, 2% inflation, 2% growth, that can take the Fed funds rate down to 3.5, at least in my view. Now, how would this view be challenged? If again, as I said earlier, Trump comes with a very expansionary fiscal agenda, the Fed will start thinking about the risk to inflation in the medium term. But mind you, this is a data-dependent Fed. They cannot make a decision or postpone a decision for some inflation that might appear in the horizon a year and a half from now, owing to tariffs or expansionary fiscal policy. They're forecasting models, which is based on available data on labor market, on capital formation, on economic momentum. That also needs to show that in the near term, there is significant inflation risk. I am not sure they'll be able to show that in a very convincing manner immediately. And if they can't, they'll get in trouble with Trump, because Trump will feel that the Fed is playing politics. It is punishing the US government for something that hasn't happened yet that might happen in 2026 and is being reticent about rate cuts in 2025. So we will see seeds of conflict around that.
What is the best case scenario and worst case scenario of a Trump administration, Temur, in terms of his policies, which will impact the globe, America, of course, India?
So the best case scenario would be Trump has nothing else to prove. He's gotten elected for a second time. He's the comeback kid. And therefore, he doesn't need to rely on vitriolic rhetoric and daily tweet storm to shock the global system on a repeated basis. He also doesn't need to go out on a big war with China on tariffs, on technology. He can be the peacemaker and he can be the elderly statesman, something like that. How likely is that? I would assign a 20% chance to that. 80% chance, in my view, would be on the not so great scenario, which is Trump is exactly the person he has been for the last 40 years. All the way back in the 1980s, Trump was taking full-page ads in U.S. newspapers criticizing Ronald Reagan for being soft on Japan. And today, he is talking about the same things in the context of China. So we would expect Trump, in my view, in that 80% scenario, to remain exactly the same person that he has been for the last 4 decades. Japan has been replaced by China. There will be tariff, and there will be tariff across the board for all countries in the world. It would hurt our exporters, but we have lived with Trump, even in the bad case scenario, for 4 years. I'm sure we can survive these 4 years too.
Okay, that's an optimistic view. Temur, as we wrap up the view on India, you talked about some concerns on the urban-rural divide. What is the economic outlook looking like for you and the rate cut cycle from the RBI's perspective?
Right. So we have been on the camp that, RBI doesn't have the room to cut rates in 2024. So whatever rate cut that they do, it'll be taking cues from the Fed with a substantial lag. And then in the first half of 2025, if indeed we see growth heading toward this bottom part of the 6 to 7% spectrum, so like a low sixes growth, the RBI would then start thinking more about growth and less worry about inflation and perhaps go ahead and cut. We have the same old issues with inflation, the vegetable prices and the fruit and perishable prices. Those things are really complicating the food picture, but that's not necessarily, in my view, a demand-driven issue. It's a supply-driven issue. So if it's supply-side inflation coupled with some sort of a weakness in growth, I think there will be some room for the RBI to set the ground for some rate cuts. But in terms of growth outlook, independent of what the RBI does, we do see on a calendar year basis for 2025 about 6.5% growth, which is, I think, great by global standards, may not be great by India's aspirations, but 6.5 is fine.
It's a reduced number, your 6.5% growth. Has the India growth forecast come down, Temur?
No, so we have been in that 6.5 to 6 3/4 range. I wouldn't necessarily call this a downward revision. It is basically recognizing some of the risks around the domestic demand side. That's about it.
Okay. Thank you so much, Temur, for speaking with us. Temur Beg
My
there
pleasure.
with very comprehensive responses to all things Trump, China, Fed, and of course, India. What a time to track the global economy.
Interestingly, it's called ISAC. It deals with cyber security. But I'm mainly here with a lot of other tech experts as well to find out how Trump's presidency in the US can affect the IT sector here in India. I want to start with Captain Anand Naidu, who actually is running this entire organization, though from the Air Force to cyber security. And now we are talking of Trump. How did this transformation happen, and what are your first thoughts?
Thank you. Air Force technology side, we were there, and we had to deal with certain cyber security issues as well. Then this is a natural transition, I thought, because a lot of crimes are happening and crimes are only going up on a regular basis. So I switched over to cybersecurity about 6 years ago, and it's been a great journey. That's exactly how I transitioned.
About Trump's presidency?
I think Elon Musk's dance on the stage during the campaign reflects a lot of things. What is going to come is an indication of his dance, actually. And for the Indian tech companies at least, there is optimism. Cautious at the initial stages, because obviously he may like to generate more employment for the local people. Employment is in a very urgent need there in US. People are not willing to take employment as of now. He'll have to motivate them to come for jobs. That's something which might affect our low-skilled workforce. But high-skilled workforce, I think, will be definitely benefited. We will be having some more traction as far as our tech companies are concerned. The big tech companies, you have seen how the share market has responded. So they are all indications positive for me. Regulatory side, yes, I think there are some things that possibly will come in due course. We will have to wait and watch.
Mr. Mithun, you've been dealing with the tech sector that caters to US healthcare. The fact that the relations between Mr. Trump and Mr. Narendra Modi, I mean, it needs absolutely no explanation at all. Do you think that camaraderie between the two can really be a big boost for the tech sector here?
With healthcare, yes, predominantly, I was looking at one of the article from Robert Jr. Kennedy, where there is a lot of emphasis on healthcare in terms of how they could actually look at more chronic things, chronic diseases, and obese. They just want to treat that, which means that automatically, since we are into US healthcare, we see that it's definitely going to grow. There is a lot of emphasis on the healthcare side of it. So in terms of employment, we definitely see that it's definitely going to pick it up. But on the flip side, the H-1B visa is what we see that there is going to be a significant impact. Even during the first time when Trump was in, we saw that a lot of employees, when we sent them for the visa, it was declined. So there was a huge drastic change. But that is one thing which probably might kind of impact. But however, now that we are able to operate remotely, and then there's a lot of way how we have established, especially post-COVID, in terms of without traveling, how we have established. So we would definitely see that it's a brighter side of how the healthcare would pick up, and which would create a lot of opportunities for healthcare. That's how we see with healthcare as.
I mean, while there is hope on one hand, there are also challenges, because we've been talking about Mr. Trump's stand with respect to immigration, with respect to migrants. We've also seen the visa issues, like you pointed out. How do you see the dollar versus rupee? How do you think that is going to play out?
I think that aspect of the exchange rate aspect, which helps us be very productive in our service industries, that might not change in near term. It's probably continue to go and help our delivery process that we do and in the profit margins and all. But the point which Mithun was talking about, for the last 2 decades that have been working with the US market, the visa issues which were there in the last decade, and it has not been resolved at all, those aspects we hope will get addressed. The economy, even in the Trump's first term, was actually probably better compared to now. That's what the US indexes say. So that shouldn't get impacted in the near term, at least in the next 4 years. So it should still work for us.
In fact, you did start off on the Elon Musk note. Do you think that India will be able to see Tesla very soon?
Yes, I think it is going to happen. May not be very soon. One is Tesla, the other one is X. Trump and X, the earlier version, Twitter, had a lot of issues. Now he is a friend. That's something which definitely will have impact. Social media as a whole and the information environment that is prevailing today there, they will have definite changes come about. A lot of research is going to hopefully happen. Protection of data, especially of the children and other areas, will get much traction. Definitely they will have some benefits as far as that. And as far as we are concerned, I think social media regulation from our side in Indian context, we are pretty good. That way, possibly we will have something aligned with what they will also have. Some of the states are already following them, some of the states not yet. Like, for example, the data protection for the kids, they have some states have 18 years of age, which aligns with us, whereas some of the states still have, the federal laws have 13 years of age. That's something which will have to possibly go up. It will, for us, I'm optimistic that in the cybersecurity sector, there will be positive outcomes.
When it comes to Bangalore or Mysuru, we are not just known as the tech capital, but we are also known as the startup capital. How do you think this is going to affect the startup sector? Because time and again, in the last decade at least, we've been talking about the receding funding for startups. Do you think that trend will be changed? There will be an upward trend now?
I think definitely with how I would see startups as India being more dominant with a lot of startups being there, and we being a startup for the last 5 years. So I definitely see that in terms of tech, as Mr. Captain Anand mentioned, if the IT the niche roles, I'm sure India is the capital for it. So definitely that can capitalize a lot of opportunities for India, but it would still impact the entry level or the mid level. Probably that is something which could cause an impact for startups. But if it is something which can target the real cybersecurity or something which you was aware that we're able to align, absolutely that wouldn't make a difference, is what is my opinion.
In the recent past, there have been a lot of issues as well as wars that we have been witnessing and we've been talking about. But when it comes to the Trump-Modi factor, do you think that these kind of wars would be averted? There would be some kind of a peace talk that can be looked forward to, and the impact of those wars on the IT sector will also be mitigated?
Yeah. See, wars across the globe, not just IT sector, it impacts everybody, everything. We have seen the costs sort of spike, countries going bankrupt because of it. But for sure, from the time since the war has started, couple of years now, Modi has been one of the proponents of peace. Solve your problems by talking, not by fighting, right? And Trump consistently in his campaign has told that if I was the president, this would have got solved in the first day. So I hope both of them, Trump is expected to be in India in 2025 for Quad meetings now. So I hope by that time they talk, figure out, and they talk it out in a table. That would definitely not just help IT sector, but everybody. Life will be better. So I hope it happens.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future,
as we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money. When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
The Nifty and the Sensex end an event-heavy week lower. Nifty Realty emerges as the worst performing sector. The rupee too hits fresh lows against the US dollar every day this week. The State Bank of India reports a 28% growth in net profit for the second quarter. India's largest public sector bank beats estimates by a wide margin. Swiggy's grand 11,000 crore rupee IPO is now fully subscribed post a cautious start sees maximum subscription from employees. China unveils a $839 billion debt swap to rescue local governments but holds off on big stimulus measures to support a slowing economy, facing new risks from the re-election of Donald Trump. As the US Fed cuts rates along expected lines by 25 basis points, Fed Chair Jerome Powell underscores the bank's independence, says he won't step down even if asked to do so by the incoming President Donald Trump. Elon Musk predicts a downfall of Canada's Prime Minister Justin Trudeau in the upcoming Canadian federal election. He will be gone in the upcoming election, says Musk on X, while responding to a user's request to help Canada get rid of Trudeau. Well, good evening and welcome. You're watching Profit 360 on NDTV Profit and I'm Nupur Talwar Suri. We begin with a look at how the markets have ended this week. Well, it was an event-heavy week and they did end lower. The Nifty Realty emerged as the worst performing sector. The week also saw the rupee hit fresh lows against the US dollar every day almost. We're going to go across right now to Neeraj Shah, who is going to take us through a wrap of all the action that we've seen this week on the bourses.
Well, not the best of ends to the week, especially if you are an investor which parked in SMIDs, because the mid caps and the small caps had a deep gash today. So portfolios would have sulked even if the Nifty looked flat, because the mid cap index 1.3% lower and the small cap index will come up on your screen 1.5% lower. So the breadth, the market breadth looked very, very wobbly. So if you look at the Nifty 50 heat map, by the way, you would find it to be a very ordinary day. Look at this. Usually happens a little bit more red, but almost even Stevens. Some stocks like Trent, Tata Steel, Tata Motors, etc. have fallen a bit, and some stocks like M&M, Tech Mahindra, etc. have done well for themselves. But the big point is the devil is in the detail. By the way, it's interesting to see that SBI, because the loan growth guidance cut, presumably is down 2%. Reliance for yet another day is down about a couple of percentage points. So those, and Asian Paints has corrected as well. So those are a few wobbles. And on the gaining side, Titan gains interestingly, and IT's had a good day with Infi and Wipro both clocking in gains. But the broader end of the spectrum had pain, and BSE 500 winners and losers will come up on your screen, and you'll see what I'm talking about. The indices were down. I mean, this is the BSE 500 down 239 points. A lot of stocks on results corrected. So Aarti, G Shipping, GMM Pfaudler, all three are result reactions. There was also weakness in Suzlon, RVNL, etc. What did do well? ITI on their order win, Indian Hotels on strong numbers, Motilal Oswal continues from where it left off. Latent Few, Sterlite Tech, again some orders that have come into some of these companies. So all in all, a decent outing for select names, but broadly the indices remained under pressure. Let's see if next week brings about some stability at the broader end of the spectrum.
Well, in fact, foreign investors continued their selling streak to the 30th session in a row today, and foreign investors have sold 3,404 crore rupees of funds, whereas their domestic counterparts have mopped up only 1,748 crore rupees of funds as of today. Well, Swiggy's 11,000 crore rupee IPO has now been fully subscribed on day 3. The demand was muted when it opened. But why is that? Did the street believe Swiggy was undervalued when compared to its peer Zomato? Sajid is joining in to tell us more.
Swiggy's IPO is fully subscribed. It's subscribed 2.4 times as of 2 p.m. and that's primarily led by foreign institutional investors who have come in towards the afternoon and added to the subscription. But the IPO as a whole, which was the most widely expected IPO, hasn't been to expectations, especially because of the kind of headwinds that we are seeing with respect to foreign investors and the kind of demand and the listing gains which are absent in the market there. If you look at from a category point of view, you have retail investors which the portion was fully subscribed as of now, which is one time, and that's primarily because we had 3 IPOs underway, which is Acme and Niva Bupa, which is also there in the market there, and all the 3 IPOs don't have much of a listing gain as we speak, and that's one of the reasons why retail interest is very lukewarm in this IPO, and in most cases it will retailers will get the entire allotment for which they were going to subscribe there. In the HNI segment, the cost of IPO financing is high, and also the absence of listing gain is preventing many of the HNIs from coming and subscribing in high numbers. Also, the fact that many of the HNIs have also acquired the Swiggy shares from the off market at a price which is much higher than the IPO price is also preventing them, from averaging because they don't because there is no listing gain which is coming in at this point in time. FPIs have been very wary of the secondary market, but in 2024 we have seen FPI has been net buyers in the primary market there. So the flows which are coming into the IPO is the only positive flows which are coming in India as of now. Otherwise, for the last 28-29 sessions, we have seen nearly 1.42 lakh crores of foreign fund outflows which is happening there, and that is also one of the reasons that appetite was much less in the anchor book. If you see the construction of the anchor book there, 54% was subscribed by domestic institutions. Now, normally in an anchor book, 1/3 is reserved for the mutual funds and other domestic institutions. In this case, more than half was given to domestic institutions because the appetite was much lower going into the IPO because there were multiple international factors at play at that point in time. And mutual funds have been good subscribers there. They have put in some bids, but it's not the kind of bid that we saw in the case of Zomato. Zomato issue was subscribed 38 times at the end of the issue, and the issue size was around 9,300 crores. And we are seeing Swiggy subscribing just 2.4 times, and especially because of the headwinds that's coming in from various investors, and no listing gains which are expected for the IPO.
Now, in fact, India's largest public sector bank, the State Bank of India, beat earnings estimates by a wide margin, reporting a profit of 18,331 crore rupees, up 28% year-on-year. My colleague Vishwanath Nair joins in with the key takeaways from the post-earnings call.
All right, so we are here at the SBI Auditorium, and we are standing here right after the management has announced the second quarter results. And I'm taking you through the five key messages that are coming in from the State Bank of India management and what the results look like. The first of which is on profit growth. Now, profitability for the bank is coming out very strongly, 28% year-on-year growth in net profit for the quarter, which is standing at over 18,000 crore. And that looks like it's the highest net profit number in the listed universe in India, and that's sort of a big milestone for State Bank of India. But what's more important is that the bank is actually guiding to achieve about 1 lakh crore of annual operating profit. They have not specified the timeline as to when they will hit this this number, but they've already hit about 93,000 crore of annual operating profit last year, and 1 lakh crore seems largely achievable, is what the State Bank of India chairman had to say. The second thing that you need to watch out for is credit growth. Now, of course, the bank has said 14 to 16% credit growth. That's the guidance for this financial year. In this, the corporate portfolio is likely to grow at 18%. That's what it has shown in the second quarter, and that's likely to continue. The bank has a sanctioned line of about 6 lakh crore worth of corporate loans, and that's likely to keep the the credit growth engine moving. The next thing that you need to watch out for is deposit growth. On the deposit growth front, the bank is saying that they will try and grow at about double digits, which will be close to 10 to 11%. This is lower than about 12 to 13% that they were guiding for earlier, simply because the bank's deposit pool is at about 50 lakh crore. So even a 10% growth is a 5 lakh crore deposit base increasing year on year. And that's a pretty large number. So the bank is saying that 10% looks actually quite strong. The fourth thing that we need to, that we're picking up from the SBI results also on asset quality, the bank is sitting at its best ever asset quality at 2.21% gross NPA, a number that is looking very, very strong for State Bank of India. The last thing that we need to look for, the message that is coming from State Bank of India, is on Premier Banking. That's a new product that the bank is pushing. They have revamped their entire operations behind this Premier Banking product, and they're targeting people who are below the high net worth category, simply because they believe that that's where the future of banking is.
Well, Vishy, of course, taking us through those numbers that have come in from SBI. We now move on to Tata Motors, which has also come out with their second quarter earnings. Margins seem to have contracted and net profit has dipped about 10%. The Shah joins in with more on this, and he'll also, of course, be taking us through the key takeaways from the management's commentary.
While Tata Motors' second quarter earnings disappointed both on the top line and bottom line front, CFO PB Balaji believes that the worst may be close to being over. So while revenue was down about 3.5%, profit was down about 10% on the back of lower sales as well as higher discounts that went out during the quarter. PB Balaji now believes that if the festive boost that the company saw in the month of October sustains in the month of November and December, then the worst can be said is behind us. According to Balaji, 2024 was an atypical year where the normal pattern of sales was not consistent. He expects that to end in the first half of the year with more product launches that are coming in. The Curve launch is yet to fructify in the market. It's only been about a couple of months since the car was launched. That should start reflecting in the first half of 2025. Other key takeaways from the company was that the inventory levels are down to about 33 days, which is normalcy. During the festive season, inventory levels came down by over 25,000 units, so dealer profitability is back on track according to Tata Motors. Tata Motors EV sales, the second other part of the business, was down by about 16% year on year in the month of October, but that should also change going ahead as Curve EV shapes up and future launches come in the next year. In terms of JLR, there was some pressure on the company in terms of supply chain issues, that too is done away with. The aluminum prices have normalized. So essentially, the company believes that all the three components of its business, the JLR, the passenger vehicle, as well as commercial vehicles, should start delivering when the new year comes in.
In fact, Tushar, do stay with us. Now, Ola Electric also came out with their second quarter earnings earlier in the day, and the company has continued its march towards profitability on higher sales. So, Tushar, do break down those results for us as well.
Ola Electric has continued on its path to profitability despite the after-sales woes its customers are facing on a daily basis. So during the quarter, July to September, net profit and actually net loss narrowed significantly. The EBITDA loss also narrowed, while revenue jumped about 39% year on year. That came on the back of higher sales of electric scooters. The company sold about 1 lakh units in the July-September period. That's despite August and September being actually significant lows for the company. The company averaged about 130 units sold from each of its 782 outlets that were operational as of September 30. Now, the company wants to expand this network to about 2,000 centers by the end of FY25. Looking ahead, the company also wants to put its own in-house battery cells into its two-wheelers from the first quarter of FY26. These will be, and even as the Ola Giga factory ramps up as what the company is predicting. So while after-sales woes persist, what we have to see now whether those after-sales woes can hamper the company's growth in Q3 and Q4 of FY25.
Well, thank you for that. Now, China is in focus, and the $389 billion debt swap ban is set to help local governments refinance their debt. NDTV Profit's Neeraj Shah breaks down what this means for the economy and the potential ripple effects.
Well, what's the impact of the China's NPC meet and the stimulus that they've given? Precious little, because you saw that commodities world over came off. I think the Chinese markets in the futures market also came off a little bit. But let me try and tell you what has happened. So China has unveiled an $839 billion debt swap to refinance the local government debt. Now, this is what was needed, that the central government will help refinance the local government debt. What else has been announced? Well, local hidden debt swap, total size of about 10 trillion, with 6 trillion to swap the existing debt. This is what has happened. Now, I'll tell you what hidden debt means as well. Remember, the 6 trillion yuan of debt swap quota is spread over 3 years. So now you know that it's about $6 trillion of debt swap quota. Central government will refinance or swap the local government bonds and some of the hidden debt. Now, hidden debt means off-balance sheet debt. So a lot of measures that have come in were exactly what was anticipated at the lower end. Now, let's just briefly understand this, that the street was working with a band of expectations before the US elections. After the US elections decision came out and Donald Trump came, a lot of people believed that China might actually exceed the upper end and give an even bigger stimulus. What has happened is that the stimulus is coming at the lower end of expectations, and experts say that this is not good enough to kickstart a new round of investments into some of the ailing sectors or otherwise. Because, why do I say this? Because as I said, that some experts were expecting a higher stimulus post-US election outcome. Now, if you can go to the previous plate, the reason why this is disappointment is because of the second line, that this is not good enough to kickstart a new round of investment. Now, you would expect Chinese markets to start off weaker on Monday. You would expect the metal names to be under pressure. And while Indian metal companies came off from the highs of the day, you probably expect some more pain into some of those stocks come Monday morning.
Well, moving on, the US Federal Reserve has announced a rate cut by another 25 basis points to 4.50 to 4.75%. Now, the rate cut that, of course, is in line with the market's expectations. It comes less than 2 months after it reduced the interest rates by a significant 50 basis points, thus kickstarting the rate cut cycle after a gap of 4 years. Now, along with that, the US Fed chair even talked about unemployment and inflation data and emphasized that the future rate cuts will depend on evolving economic data and that the Fed is on the path towards neutral stance for the global economy. And in fact, in today's discussions with NDTV Profit, Taimur Baig of DBS Bank revealed why Indian markets present a wealth of opportunities. Now, he also spoke about global investors continuing to view India as a top investment hub. Listen in.
The secular growth story of India is absolutely undiminished. And when I talk to global portfolio managers, whether in India or outside of India, in the Middle East or Europe or the US, there's not one big percent decline in people's enthusiasm or interest in India, whether it is related to India's sort of burgeoning supply chain of manufacturing, or the burgeoning and extremely full of vitality in the capital markets, whether it's M&A or private equity or listed equity market. There is a lot of interesting deals, interesting opportunities, and there's a lot of interest from global investors.
Well, he also weighed in on the Fed's latest rate cut and the likelihood of another one coming in September, considering the implications of Trump's election win.
We've heard the same story many, many times. Labor market marginally weak, underlying demand still pretty strong, inflation is coming down, the Fed is happy with cutting rates, and I think we can say fairly safely that the December rate cut is also on the cards. Nothing is going to happen as far as Trump's policies are concerned between now and December. He will not take office till January.
Well, the US Fed Chairman Jerome Powell told media persons that he won't resign if the president asked him to do so. But can President Trump, as the president when he takes over, fire Powell? Let's find out.
Will Trump ask US Fed Chair Jerome Powell to resign? Well, Powell has already answered that.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
The million-dollar question that's on everyone's mind: can Trump fire Powell? But which position would he fire Powell from? Powell holds 3 positions. He's a member of the Board of Governors, Chair of the Board of Governors, and Chair of the FOMC. Jerome Powell was appointed by former President Barack Obama to the Board of Governors, and it was President Trump who picked him to be the chair of the board in 2018. 3 out of the other 5 governors, Michelle Baumann, Richard Clarida, and Randall Qualls, are all Trump appointees. If Trump wants to remove Powell, he would need a reason, meaning inefficiency, neglect of duty, or malfeasance in office, according to the Brookings Institute. If Trump cites differences in policy as the reason to replace Powell, it would probably go to the Supreme Court. If this happened, it would be one of the biggest changes in administrative law in the United States in 80 years. So no, it is not likely to happen. The law, though, says nothing about whether the president can fire the board chair, meaning demoting him to being just one of the other governors. Legally, this is up in the air.
Now, NDTV's Uma Sudhir takes a deep dive into how Trump's win could affect India's IT sector with insights from Indian tech entrepreneurs.
We are here at the Hyderabad-based T-Hub, largest innovation ecosystem that the government enabled Inuka's ecosystem, in fact. And I have here entrepreneurs and the CEO as well of Math Lab here, and someone who is in fact hosting a lunch for his teammates because Donald Trump has made it. Why the celebration at this scale?
Yeah, I've been rooting for Donald Trump for a while now, and I think the sanity has restored at the US scale. And also, like, I think, meritocracy is something compared to a DEI type of environment will prevail. So that's why I think I'm as a startup and I'm in a core technology space. So I think this is what is very much needed. And I'm greatly looking forward for what is coming next.
So how is business going to change?
I think quite a bit. Because now, as a part of Indian technology space, right, most of us are, supporting, developing, the applications. But then most of us to focus on core technology. Always, it helps if somebody in US or in the West, right, is supporting a lot of merit. So that's where I think we should start looking at, how to innovate, and then move away from traditional space of, just supporting or building applications to build the innovation technology, and also with Elon Musk at the helm of things to, build the government efficiency, this thing. I think a lot will change. I think there'll be a lot of cut in government spending on, rudimentary things, and then they'll focus a lot on innovation. I think even India, like startups from here, right, would play a critical role in that.
In fact, the US President-elect Donald Trump announced that his campaign manager, Susie Wiles, will be his White House chief of staff. Now, she will become the first woman to hold this position in the US history. Trump said that Susie helped him achieve one of the greatest political victories in American history and was an integral part of his 2016 and 2020 successful campaign. Trump also gave a shout-out to Wiles during his victory speech on Wednesday. Well, in a dig at the Canadian Prime Minister Justin Trudeau, billionaire Elon Musk has predicted Trudeau's political downfall on social media platform X. Musk posted that he will be gone in the upcoming election. This was a response to a post that said Germany's socialist government had collapsed, to which a user asked for Musk's